business. Now, in the industrial space, Shakti Pumps and Oswal Pumps secured fresh solar pump orders worth over 350 crore and 235 crore respectively under the PM Kusum scheme, while Astral will also remain in focus after initiating an independent review of its proposed composite scheme of arrangement following stakeholder feedback. So these will be the stocks. Watch out in the today's trading session.
Plenty to track in today's trade. Ananya, thank you for those updates. And lastly, Sudarshan joins in with cues from the FNO space. Sudarshan, good morning.
Good morning, Humar. So if I can take just one line from your market espresso thing, that ye bhai 24,500 की दीवार टूटेगी या नहीं. So for that to happen, two things that might work out this week. That banks have given healthy quarterly updates. Even quarterly updates from FMCG stocks have been largely in line or slightly better than expectations. And apart from that, if you take a look at all the other cues too, short covering by FIs have continued for second or third straight day. FIs were buyers in the cash market after selling for fourth straight day, and crude continues to remain the levels below $72 per barrel. And after that, look at in the index future side, FIs have bought more than 900 crore. In the stock futures, FIs have bought almost 500 crore. Come to the exposure side, FIs have reduced short positions by almost 5,800 contracts, while they remain heavily shorted, but nevertheless, on the long side, exposure has increased to 10%. Now come to the options data. On the put side, 24,200 and 24,200 have seen maximum increase in the open interest, but at the same time, premium for both these put options has seen a fall, while on the call side, 24,300 and 24,400 were the most active call options. So first support for Nifty, 24,100, that's your 100 DMA, and resistance would be 24,500. For Nifty Bank, support would be 57,220, that's your 200 DMA, and resistance would be 58,700. Some of the stocks that might be in the focus, first one, amongst all the FMCG names, Godrej Consumer has given very strong quarterly update. HDFC Bank being one of the biggest contributors to Nifty and the biggest contributor to Nifty Bank, that will be in the focus after a healthy Q1 update. And lastly, Astral, keep an eye because board is going to review SOA after some of the feedback that company has received. So keep an eye on those names.
Oh yes, after this kind of fall that the stock saw as well. Sudarshan, thank you for that update there. Now, as the government battles several complaints over social media over ethanol blending in petrol, Petroleum Minister Hardeep Singh Puri said that the ethanol blending may affect vehicle mileage. However, he added that several other factors also played a role. Speaking to reporters earlier, the minister also said that there is enough room in the market for all fuel technologies to coexist. Listen into what he had to say.
Somebody is saying that fuel mileage is going to be dropped. Arey bhai, it's now well established that when you have ethanol, they use it in racing cars also. The acceleration increases. What is that thing called? The knocking. That improves. Mileage, yes, it may drop a little. But it may drop a little. Mileage can drop a little because of various things. If you're driving from here to Gurugram, and if you follow the route I follow, then there are many points at which there are toll bridge, other things. So calculate that. So we've been very open about it. My response to that is there is enough space in the growing Indian consumer market for all systems to coexist.
Now, automakers such as Maruti Suzuki and Toyota also weighed in on the use of E20 fuel. Speaking to my colleague Shivani Bazaz, representatives from the automakers said they have not received any complaints regarding the use of E20. Listen into what they had to say.
We want to give a statement of confidence that Maruti Suzuki has been fitting E10, has been, making its car compliant to E10 way back before 2010, which is more than 16 years now. And when we did that, we had sufficient factors of safety that even if we use E20 fuel on those E10 cars, they are fully, they do not have any kind of issue at all in terms of either wear and tear or corrosion or any kind of impact on the life of the components that go into the car. So we have done extensive testing and we have validated that it does not cause any problem. Not only our validation in our R&D, this is our field experience also. Cars that we have already sold to customers let's say cars in the financial year 25-26, for example, we would have serviced more than 2.5 crore cars. Out of these 2.5 crore cars, at least about 1.5 crore cars were more than 3 years vintage, which means they were made in India when E20 was not mandated, which means they were E10 compliant cars. So on these E10 compliant cars, if we use E20 fuel, they would have showed up some problem or the other if the concern was true. Having gone through these 1.5 crore customer servicings all over India, we have not noticed anything of concern. So that gives us the confidence to convey to our customers that we need not be concerned.
The E20 program is not an overnight program. There was extensive testing and certification done at all levels, whether it is the OEMs or the independent testing agencies like ARA, etc. There will be no impact, like I said, on older vehicles using E20. All vehicles that have been produced after 23 are fully compliant materially. From a fuel perspective, as per the tests, the drop in mileage is not very significant. It is in the range of, like we said internally, 3 to 4, perhaps 5%.
We'll take a short break. On the other side, get you all the commodity cues. Stay tuned.
Welcome back. You're still watching Power Breakfast on CNBC TV 18. On to updates from West Asia then. A two-day public farewell ceremony for Iran's supreme leader Ali Khamenei has come to a close, with millions expected to take part in a funeral procession in Tehran today. However, there has still been no public appearance by his successor, Mojtaba Khamenei, amid continued speculation over his absence. Meanwhile, reports suggest that Pakistan will host the next round of negotiations between the United States and Iran on July 11.
And after plenty of developments there in the commodity space, Manisha Gupta is here with all of the latest. Manisha, good morning.
Morning, and thank you for that, Hormuz. I'll start with the crude oil prices, where the prices have just about continued to decline. We are trading at a Feb lows right now, just about holding around that $71 to a barrel mark. 43% for decline from a wartime high. What the markets also are reacting to is, while of course there is recovery in the oil flows via Strait of Hormuz, it also is the OPEC plus members approving yet another increase of 188,000 barrels per day for a third straight month for the month of July. Now that means there would be more supplies coming back into the markets there. There is in any case increase in supplies from Iran, from UAE, from Iraq as well, which is now threatening if the quota is not increased or if it has to adhere to the OPEC quota. So while we are looking at a very, very jittery OPEC membership or the standing of the cartel itself, it is quite easing in sense of crude oil prices as we have seen. In the meanwhile, you also have the metal prices which have continued to gain up. The dollar index is off its 14-month highs. The U.S. jobs data has come in weaker than expected, and the probability of a rate hike, as per the CME Fed Watch, continues to decline as well. So you have gold prices, which gained 4% in the previous week. Silver gained 6%. The copper prices are back from its lows and gained 1.5% in the previous week. Aluminum has rebounded from its 4-month lows. So commodities, all of them really back, and metals clearly outperforming.
All right, thank you so much, Manisha. But remember, the US was shut on Friday, given it was 4th of July, observational holiday on Friday. But on Thursday, Hormaz, it was a mixed handover. The Dow closed at a record high after a soft jobs data. But what's happening in the Asian market? Let's get you some opinion from Sean Darby, equity strategist at Mizu Securities, on the outlook for China, India, and other Asian markets.
I think what may happen, and it comes to your point, is that we go back to look at economies again. We've been so focused on a very narrow boom. It's not a small one, of course, but a very narrow sector boom. And the reality is, with oil prices, subsiding so rapidly, it's going to be a big uplift for parts of North Asia, particularly China and India, which have been left behind in the last quarter or so. It's interesting that China's retail numbers have been very soft over the last quarter when oil prices were high. Yeah. And again, if you look back in India, a large part of the underperformance occurred as energy prices soared from the end of first quarter. So maybe the rotation that we're seeing now in the sectors is going to start to envelope some of the economies as they start to see lower CPI and the real income starting to improve again. And that's also the case in Japan as well.
Let's now get to the latest on the Trump-related developments. Vinny is here in our special segment, Trump Watch. Vinny.
Hi, morning. So first up, let's talk about US President Donald Trump in terms of headlines on the US's United States 250th Independence Day celebration, delivering a weather-delayed primetime address on the National Mall, flanked by historic American flag and Medal of Honor recipients all coming in there, capped off with the military flyover as well as fireworks. The speech went beyond the patriotism as Trump used the platform to push his Save America election bill and took an aim at the rising Democratic Socialist wave, calling it communism, and even referred his own legal battles, saying that he wasn't treated that well. Now, also President Trump took Truth Social to claim a crowd of over 4 lakh people showed up despite the storm evacuation, calling it the best fireworks show ever seen in the United States. Moving on, and in a more unusual intervention, President Donald Trump has reportedly picked up the phone to the FIFA chief, Gianni Infantino, and himself, and calling him and pushing for a reversal of a red card during one of the matches and suspension of the United States men's national soccer team player, Balogun, and took his way, thanking FIFA on social media to reverse the decision made. So that's the latest update that we have coming in here. Some usual and some unusual updates there from President Trump.
Vinny, thank you for that update there. Take a short break. All the updates from the world of AI on the other side. Stay tuned. Welcome back. It is continuing to pour in the city right now, and relentless rains have triggered an IMD red alert, prompting authorities to shut down all schools and colleges today across the city, Thane and in Navi Mumbai. The heavy rains have also resulted in a 3-story chawl collapse in Mankhurd, which has resulted in the death of 6 people, and early morning landslides in the Karjat Lonavala Bhorghat area. Now, the rains have also resulted in the cancellation of 16 outstation trains, and authorities have urged commuters to completely avoid the Mumbai-Pune highway, as traffic jams will delay the vital restoration work. Now, expect travel delays today, with flights facing a backlog from a brief runway closure. The city local trains are also running with minor delays. Officials are advising citizens to either stay indoors and avoid all coastal areas as well. And now over to Rachna, who is here with all the updates from the world of AI in our special segment AI Wrap. Rachna.
Well, first up is the Indian government, which is now investigating the Tata Electronics data breach that exposed Apple's iPhone secrets. IT Secretary S. Krishnan confirmed the probe, the first official word since the leak surfaced last month. Now, the case has been reported to India's Computer Emergency Response Team. Leaked files posted on the dark web include supplier lists and photos of the unreleased iPhone 18 Pro and Tesla. Staying in India, then, AI hiring in the IT sector rose 16% year-on-year in June, even as overall IT jobs fell 3%. That's from Naukri's JobSpeak report, which covers listings from over 150,000 firms. Infoed CEO Hitesh Oberoi says the divergence shows where tech companies are still investing. To Korea, then, Samsung is expected to flag an 18-fold jump in quarterly profit on Tuesday. Analysts see a record 86 trillion won, about $56 billion, as AI demand keeps memory prices surging. Then there's Alibaba, which will ban Anthropic's Claude Code at work from July 10, citing alleged backdoor risks that remain unverified. It's the latest twist after Anthropic's distillation acquisitions against Alibaba in June. That's all we have from the world of artificial intelligence today, but we'll get you more updates through the day.
And it is Samsung and SK Hynix that are continuing to swing the Kospi on either side, and even today the Kospi was down around 0.3% at the start of the show. It has now extended its losses to over 1%. The Nikkei is also down by a similar quantum. Business updates continuing thick and fast at the bottom of your screens. Poonawalla FinCorp has also come out with its business update just this morning. AUMs of approximately 67,000 crore rupees, liquidity as well on the higher side. So a lot of these banking, financial, NBFC updates will continue to dominate all through the trading day. Just pull up the GIFT Nifty as well before we wrap. And at the start of the show, the implied open was suggesting a 20-point downtick. Well, it continues to remain the same. Around about 25 points lower is where we are likely to open after 4 straight weeks of gains. It will be interesting to see if there is any supply that emerges around that 24,300, 350 mark. But there is a lot to track in today's session. We take your leave on this edition of Power Breakfast. From Rachna and me, thank you for watching. Bazaar Morning Call on the other side.
Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Monday morning, start of a fresh new week. It's coming down in sheets, the rain that is, especially here in Mumbai. And I hope monsoons pick up with the same gusto all around the country as well. That's going to be a focal point. But so many earnings updates for the first quarter have come through. So it will keep us busy all the way over the next few hours or so. I'm Prashant. With me, my colleagues Mangalam and Reema. Guys, hi, morning.
Hi, morning. From the driest June in a century to a deluge in the first week, at least for the city of Mumbai. And not to forget, earnings season kickstarts this week with TCS on Thursday.
Yep. So we just hope that everyone who is out on the roads is fairly safe, etc. And those who are not supposed to be out on the roads, just stay indoors. That's the one thing that we can say. When we started with pitter patter and then splish splash and then some of the animal variety, I think now the rains are just lashing out at us. That's exactly what's taking place. But the more important part, the updates are fairly strong, and that should be bringing us perhaps a deluge of earnings, hopefully.
Absolutely. I think it's raining like it should in the month of July. And
it's just heartbreaking when you hear of stories, trees are being uprooted and that's falling on people and lives are being lost.
Yeah. No, absolutely.
Like monsoon is good, but this part of it is really breaking your heart.
Absolutely. Well, I think let's just take it from the top in terms of what you need to know as we begin this new session. So Friday was, of course, a holiday as far as US markets are concerned. So the US celebrated the 250th Independence Day for the country, and cash markets were shut. I think futures were trading, but they shut early. And I think bonds traded for a bit as well. Major OPEC Plus members approved 188,000 barrels per day quota increase for the month of August. If we see another increase in September, all of the cuts that we've seen are going to be reversed. One more increase in output and all the voluntary cuts over the last, actually through the course of 2026 perhaps will stand reversed. Most financial cues, but they're not very much in terms of global markets, and I think we'll get cues as Asia trades and something happens. But so far, it's been a phenomenal last quarter. Last week was not so bad either. And in the US, for example, for the 4 days that US traded, many of the Magnificent Seven companies started to try to make a bit of a comeback. They've all been sold hard, very hard. Largest underperformance in a while, but they are starting to try to make a bit of a comeback. Now, here in India, financial updates, HDFC Bank, there was Axis, there was Kotak, there were others as well. And all broadly have seen faster loan growth, faster deposit growth as well. Although you can quibble and say that maybe loan growth is still faster than deposit growth. So, the loan deposit ratio is rising. In FMCG, Dabur, Godrej Consumer Products reported numbers, but there are others in the consumer pack as well, and we'll get to it in a bit. And broadly, again, pointing to better sectoral trends. I mean, for the sector as such. By the way, the FMCG index was up on Friday, and it's not done badly over the last 1 week. Actually, it's done quite well. In terms of rainfall, so June was, of course, dry, but July started pretty good. Especially if you're in Mumbai and you look out the window, it's giving you visual proof of what rains are like in the monsoon season. Mumbai, this is of course as of yesterday evening, Mumbai recorded about 74% of its average July rainfall in just the last 4 days. It's still raining. I mean, it rained through the night this morning, of course, and we'll get the latest numbers. We'll speak with an IMD representative in a bit. We'll get the All India numbers as well. But the point is this, and many are pointing out that the 7 lakes which supply water to Mumbai, the water levels there are still, I think the last I checked, 10%, 11% or so, despite all the... Basically, you're seeing a fair bit of rainfall in Mumbai, but it also needs to rain in the catchment areas for Mumbai's water supply, on which it basically solely depends through the year. Well, that's the rains, and as I said, we'll have the IMD representative join us in a bit from now. I'll just leave you with levels. The markets, of course, have done well. We've, on the downside, respected 23,800, which is not broken once again. And there were a few sort of, it looked like perhaps it would come into play, but it did not. Resistance is 24,000. We left off just under 24,300. 24,300, by the way, is the first resistance level. And then if the 24,300 is taken out on a closing basis, we're looking at about 24,770. The immediate support stands at about 24,060, and 23,800, of course, is the level which we came up from. So those are numbers, those are levels. I guess a lot of single stock action around the companies which reported for Q1 in FMCG, banks, and others as well. There's so much individual sectoral news flow. Transformer companies all sold off on Friday. Will we see something happen today? On the other side, IT stocks have all rebounded nicely. Again, a lot of spotlight on whether they can continue their outperformance. So enough to keep us busy. GIFT Nifty is indicating about a 30-odd point lower start. Mangalam has walked across to the wall with the F&O cues and positioning and the data in focus. Mangalam, take it away.
Well, before we speak about the F&O cues and the data positioning, let's talk about the person who's responsible for us to be positioned here and speak about the levels here. That's Shreya. She's back from her wedding leave. So from here at CNBC TV18, we wish her and her husband a very happy married life as well. Let's talk about the futures and options. You guys are each other's futures and you all have no option as well. But let's look at the market now. You have strong quarterly updates coming in, monsoon picking up pace, oil holding sub $72 per barrel. All these factors doing extremely well for the Indian markets from an outlook standpoint. And to add to that, the GIFT Nifty is actually indicating a softest start, which will actually give the bulls, an opportunity to enter as against the market seeing a big gap up itself. So that's a positive. Add to everything else, on Friday, we saw the FIs buy in the cash market as well. So 1,355 crore worth purchase. The DII sold about 2,000 crores. So the FI selling has been moderate all through this month. And now it's beginning to turn into buying. Will that continue or not is one thing that we'll be monitoring. The other thing that I'll be monitoring is that the FI started the July series with just 10% long exposure. And now as we speak, some of the short covering is beginning to show. So on Friday, they bought about 930 crores in index futures, covered 5,800 short contracts, added about 300 long contracts. Does not change the positioning too much, but definitely for sentiment, it is a positive. Clients, they've been positive through the start of this series at 80% long, now at 78%, FIs 10% long, 90% of the positions still on the short side. If they start to move, that is when we'll see the real move on the index. On index options, the fact that the Nifty sold off closer to 24,400 on Friday tells you that call writers came back into the picture. So we saw writing at the 24,300 call and the 24,350 call. Looking at the options data out here tells you that maybe around 24,350 to 24,400, there is still going to be some sort of resistance, but supports have moved higher. 24,300 put has a premium of 98 rupees. We have 24,200 put, premium of 50 rupees, telling you around 24,150 to 24,200 is where the support comes in. The important technical levels to track. And after the call writing that has come by, the good thing that bulls will feel happy about is that the put call ratio, which was higher at around 1.28, has also moderated to 1.07. So all these things leave further room for upside on the frontline index. There is strong support at the 100-day moving average. Once, if at all we do cross past the 24,350 to 24,400 mark, the next destination is the 200-day moving average, which is just shy of the 25,000 mark. And whether that happens or not, all of that depends on a couple of major indices. The IT index has found fresh signs of life over the last two trading sessions, but does it cross past the 20-day moving average or not is something that we'll be tracking. And good updates coming in from the banking sector. The banking index, which had paused for breath over the last couple of trading sessions, still holding above the 200-day moving average. So long as this happens, there's no real problem for the Nifty bank as well. Key components of the market doing extremely well right now. The bulls would be eyeing their chances on the way up.
Thank you very much for that. For starters, the GIFT Nifty is mildly lower, down about 25 odd points, but you could call it flattish. Asia, once again, is a mixed picture. The Korean markets, KOSPI, has been the most volatile index since the start of the year. It's seen multiple sharp drops and rebounds. And this morning, KOSPI straight away down 2%. Along with it, it's Nikkei dropping nearly 1%. But on the flip side, you've got some green going for the Taiwanese markets, mildly higher, while Hang Seng is soaring to a gain of about 1%. It's a mixed picture. Basically, US markets, remember, open up after a long weekend. And currently, the US futures are pointing to a bit of a positive start, especially the Nasdaq. Let me tell you the interactions lined up on the show today. So 9 o'clock, we'll be joined by Rakesh Arora of Go India Stocks to focus on Vedanta's business updates and more. 9:20, Sridhar Sivaram of Enam Holdings will be the market master for the day. 9:35, the management of Berger Paints will break down the company's FY27 outlook. Following that, a conversation on the transformer space following the government's power sector policy shift. And towards the end of the show, Lata will discuss what to expect from banks in the upcoming Q1 numbers with Macquarie Suresh Ganapathy.
Right, we take a short break, but on the other side, a lot of stock-specific action to track. We'll get to it in just a bit in our special top 10 segment. But just to give you a preview, we're looking at HDFC Bank, Axis Bank, Godrej Consumer, Dabur, Nykaa, all of them on their strong Q1 updates that have come by. We're looking at a lot of banks and NBFCs as well. Sobha too, good update coming in. On the weak side, we do have Kotak Mahindra Bank and RBL Bank that are likely to open in the red, while Astral and Vedanta, there are mixed views, and we'll tell you why.
Welcome back. You're watching Bazaar Morning Call. It's a Monday morning and we're flooded with a lot of earnings Q1 updates coming through. So our team is standing by and predominantly it's coming from the banks and the consumer sector. So straight away, let's go to Ananya to get a roundup of the Q1 banking updates.
So, well, yes, large private banks have kicked off FY27 on a strong note. Let me first start with HDFC Bank. Now, they reported a steady quarter with gross advances rising 15% YOY and deposits growing 15%, reflecting balanced business momentum despite continued moderation in CASA. So, that will be a key monitorable. Now, Axis Bank stood out with an impressive update, reporting 19% YOY growth in gross advances and 19% growth in deposits. Now, the strongest growth among the large private banks, while also witnessing healthy improvement in CASA. Now, Kotak Mahindra Bank reported 15% YOY growth in net advances and 12% growth in deposits, although end-of-period CASA declined sequentially, mirroring the broader industry trend of pressure on low-cost deposits. So, overall, the update suggests that credit demand remains healthy, while the liability side remains a key monitorable.
Right, we take that point. So that's the update coming in on HDFC Bank and Kotak Mahindra Bank. I'll look at Godrej Consumer, Dabur and Nykaa. All of them very strong updates coming in. For Godrej Consumer, the consolidated first quarter revenue growth is seen in high teens. And this is ahead of their full year guidance of double-digit revenue growth. They've also suggested high single-digit volume growth. So all these things are positive. The EBITDA growth also will be higher than their double-digit guidance, but margins would be slightly lower because of exceptional cost pressures. But that was something that the street was prepared for already. The good part here is that the input costs started to begin easing towards the end of the quarter, and they will expect margins to recover progressively through FY27. While standalone business will be strong, the important part is that their Indonesia business will see mid-teens growth, so they are coming back to life as well. That's a positive, going with green on Godrej Consumer. Not any different for Dabur too. Double-digit consolidated revenue growth. India FMCG business posting near double-digit growth. Home and personal care business doing well. Healthcare, showing signs of sequential recovery. And food business as well, showing signs of recovery with stable margins because of calibrated price hikes that the company's taken. Green on Dabur too. And for me, the toast of the earnings this far have been FSN e-commerce on Nykaa, because they're saying that GMV is seen in 30% range. Beauty segment will remain extremely strong. So in the beauty vertical, net revenue and net sales value are growing in late 20s. But look at the fashion business. Their growth is seen in mid-50s. That's a big number. Why is that? Because the partnership with Nike has delivered encouraging early results for them, and that's reflected in their business growth being at a multi-quarter high. So the headline for Nykaa will be Nykaa x Nike.
Well, nice one. Well, more banks and NBFCs with first quarter updates. Ananya is here with details. Ananya, morning.
Good morning. So yes, among other financials, AU Small Finance Bank stood out with another strong quarter, reporting 26% growth in advances and 24% growth in deposits, while also improving its CASA ratio, bucking the industry trend. Now here, Yes Bank continued to strengthen its turnaround story with advances growing 18% YOY, although deposits and CASA remain key monitorables here. Separately, the bank's board has also approved plans to raise up to 16,000 crore through equity and debt instrument. Now, investors will also watch out for that in the coming AGM. Now, L&T Finance reported an impressive update as well, with retail disbursement surging nearly 36% YOY and its retail loan book expanding 28%, led by robust growth in urban finance. Now, on the other hand, RBL Bank reported healthy 21% loan growth, while the sequential decline in deposits was due to the bank reducing wholesale deposits after the completion of Emirates NBD capital infusion. However, the sharp decline in CASA keeps the liability franchise a key monitorable across the sector.
Thank you very much for that. Sudarshan now joins in with more on the Vedanta companies.
So Vedanta Group companies have given the quarterly updates. We'll start with Vedanta Aluminium. It's the highest ever quarterly aluminum production, up 5% YOY and up 3% on a sequential basis. Alumina production was up 41% YOY, but on a sequential basis, it was down due to unplanned shutdown, and value-added production has increased by 14% YOY. Coming to Vedanta Power, Meenakshi Power has boosted the sales, and total power sales have increased by 38%. And if we just talk about the Meenakshi Energy, its sales were up 3 times YOY and up 16% on a sequential basis. Vedanta Oil and Gas, understandably, production was down both on a sequential basis as well as YOY, and gross oil and gas production has fallen 17% year-on-year and down 4% on a sequential basis. Vedanta Iron and Steel, two, Odisha and Goa have reported an increase in the production, while there was a fall in Karnataka's production, and that's the reason total production has seen an increase by 4% YOY, but on a sequential basis it was down 3%. Last, Vedanta Limited, it was a mixed quarterly update. Zinc India has reported a minor increase YOY, but on a sequential basis production has seen a fall, and ports have reported an increase in the volumes both on a sequential basis as well as YOY.
Thank you very much for that. More updates coming in on Shobha Developers, while Astral, remember the company had announced that scheme of arrangement, they were planning to demerge. Well, looks like they're backtracking on that plan. So Ria joins a bit more on Astral.
Well, yes, as you said, Astral had announced back in June of this year that they are going to demerge and transfer their chemicals business into Astral Chemi Limited. Now, post that, today the company has announced that they will be undertaking a comprehensive review of the scheme of arrangement after they've received feedback from various stakeholders regarding the demerger, and they have said that they are going to appoint any one of the big four firms as an external advisor, and they will be submitting their recommendations within a period of 30 days after the big four firm is appointed. And the company has said that they will take into consideration the recommendations of the advisor regarding any continuation, modification or deferment of the demerger, and they will then be deciding the course of action post that. Now, in terms of the impact on the company, this is largely neutral as of now. As right now, it adds certain uncertainty to the company, and also the timelines may extend. Earlier, it was expected that the demerger will be completed within 9 to 12 months, but now after this review is being undertaken, the timelines may extend further. Apart from this, Sobha will also be in focus today on the back of positive news flow. They have come out with their operational update for Q1. The sales value has seen a growth of nearly 76% on a year-on-year basis at 3,656 crores. The average price has held steady on a sequential basis at nearly 15,665 rupees per square feet. And Bangalore, which is the key market for the company, has recorded its strongest ever quarterly sales growth, with the sales value coming in at nearly 2,067 crore rupees in this quarter, and it has contributed nearly 56% of the company's total sales.
Thank you very much for that. For Astral, the stock is still trading about 100 rupees lower than the price it was, which was 1486 before the scheme of demerger was announced by the company. Though yesterday, on Friday straight, towards the end of the trading session, we did see a pickup in the share price. So perhaps the markets was expecting the company backtracking on their plans. A quick recap then of the top stocks. Stocks with positive news flow are HDFC Bank, Axis Bank, Godrej Consumer, Dabur, Nykaa, NBFCs and Shobha. While stocks with negative news flow are Kotak Mahindra Bank, RBL, Astral and Vedanta. While Astral and Vedanta are likely to open mixed. Well, that's equities. Let's talk commodities. Manisha is now joining in for a complete roundup. Manisha.
Morning, and thank you for that. Well, I'll start with the crude oil prices, where we have seen further declines coming in here. By now, we are down 43% from the wartime highs. And the further decline also comes in on the back of OPEC production increases, third time in a row, and yet again by 188,000 barrels per day. We also are looking at the traffic at Strait of Hormuz continuing to increase. It's nearly 49 to 52 ships per day that has been seen crossing the Strait of Hormuz, and that means increase in supplies in the global markets therein. The markets will now watch out for the OPEC ministerial meeting. That is on 2nd of August. In the meanwhile, you also have the metal prices, which seem to be gaining yet again. Gold has extended gains after 4% previous week. Silver gained 6% in the previous week and is trading 1% higher in the Asian markets right now. It has to do with the weak than expected U.S. jobs data. The inflationary concerns because of crude coming down also seem to be easing. And now there is less than a 50% probability of a rate hike in this year as per the Fed watch. So it's not just gold and silver, but we also have other metals trading higher. Aluminum has rebounded. Copper has gained 2% in the previous week. The Chinese factory activity expanding for the month of June also has been supportive. So almost everything working in favor of metals today.
Okay, all right. Thanks very much, Manisha, for that. That is the sort of situation as far as precious metals are concerned. We'll take a break. We are back. Dharmesh Kant of Chola Securities will be with us, and we'll address some of the sort of updates, first quarter updates, and other news flow with Dharmesh as well. Stay tuned. Coming up.
Welcome back. You're watching us here on Bazaar Morning Call here on CNBC TV 18. Among the stocks that weren't doing well on Friday were transformer companies. They were under pressure on Friday as there were concerns around competition as the government has granted a 2-year exemption to 4 China-linked power equipment firms to bid for government projects. What are the brokerages making of this, and what could the impact be? Would it be extended or would it be limited? Vinny joins in with a roundup of that. Good morning, Vinny.
Hi, good morning. So obviously the updates are coming from brokerages. First up, Namura, they are saying that the recent correction seems like it's a bit of an overreaction to the government's narrow exemption is what they are highlighting. It's a 2-year period of exemption. They said that the order is temporary, does not create a long-term concern that comes in for industrial company and expect limited impact on domestic transformers, companies and equipment players. So that is why they're saying not much of a concern. What is Jefferies saying now? They said that obviously Chinese firms allowed to supply only from Indian manufacturing facility. Import restrictions remain unchanged. They maintain and they continue to maintain the positive stance that they have on Hitachi Energy, Siemens Energy, and see correction as a buying opportunity. So two of the brokerages saying that yes, nothing to worry about. When you look at it in terms for Macquarie also, they similarly are saying that most of the exempted Chinese players have very limited capacity in India. When they're working TBA, if you look at it, they are also working at full capacity. So to expand, it's not going to be easy, right? So long-term margin risk, only if this exemption is extended for this more than 2-year time period, then it's a concern. Otherwise, right now, it's not a concern, or in terms of for the players, it's not a concern. CLSA 2 exemption, they're saying, could increase competition and pressure in terms of pricing for domestic T&D players, but they do not expect any near-term impact in terms from volumes, and they advise caution given that the elevated sector valuations are coming in. So the concern is on the valuation front that CLSA is highlighting, and a bit of a near-term challenge. Apart from that, the other brokerages still are not too worried about the situation.
Vinny, just one thing. Do all four companies, Chinese companies, have manufacturing facilities in India?
Yes, they do have. They have subsidiaries in India which are manufacturing in India. They have different. So this exemption that has come in includes, other than transformers, there are insulators, GIS switchgears which are included as well. But other than TBEA, which has a large capacity, the other ones have smaller capacity. So it's not easy for them to increase the capacity. And TBEA itself is also already working at a high utilization. So it is not going to be easy to expand that fast as well.
I mean, anyway, if there's only 2-year visibility, no one is going to put in money, right?
So that's what even analysts are highlighting, that nobody is going to put in money just for a 2-year time period. Yeah. They could expand it, but just for 2 years, it doesn't make sense to put in that much money.
And plus, even these approvals take time, right? Even if you decide to set up and make the long-term bet, it's not that the approvals are coming tomorrow. That in itself is a process.
Also, the point is that, there is a word that comes in that at least some manufacturing components, 50% of the manufacturing components have to come in from India itself as well. So that is also a factor that they will have to maybe take into consideration, right, while putting the facility. So it's not going to be easy to expand. Yes, maybe some challenges, but if that extension comes in, then it's going to be a bit more of a worry than right now.
Yeah. No, so actually you can argue it equally strongly from both sides because, that who knows 2 years down the line what happens, right? I mean, they extended for another 2 years. So we don't know. And so yeah, that's where we're at. Thanks very much, Vinny, for that. Well, here's analysts, right? So we spoke with analysts from Kotak and others on their views. And I mean, generally it's, and this was on Friday. And most of the view essentially was on the side of the argument that maybe this is not that meaningful. I mean, it is of course clear that the demand is very large, and that's the reason why the government is also allowing this to happen. And that's the bullish. You could look at it through that lens. Of course, it's about margins, pricing, etc., which is another story. Listen in.
Now, I think the next question is whether, apart from the existing capacity these 3-4 companies have, are they going to invest more, participate in future projects? Probably that is a question we have to ask. But what can happen is probably in the space like bushing, there's few companies, probably the prices were elevated and it was impacting the deliveries at the OEM, and that can be eased off. So I think the project executions and OEMs might be at some bit of ease, suppliers comes into the market.
Our sense is that this means limited things for the domestic ecosystem as such. And just to give you a context, we anticipate more than a 1 lakh crore kind of annual ordering or execution to happen in the T&D space. Against that, even if you add up the spare capacities available of the companies under question, it may just be a mid-single digit number. And again, these capacities are being used in some form or the other today itself.
Okay, that's the sectoral analyst view. Dharmesh Kant is with us with what he's making of it. Dharmesh, good morning. Good to have you with us here. So what's your sense? The debate is out there, but how would you read it? They're expensive and there's no room for error. I think that's why stocks are correcting. Otherwise, demand is better. No one is questioning. Your thoughts?
Yeah, good morning, Prashant. I think you and Rima has already put it very nicely. I mean, the demand is very robust and government doesn't want execution delay. They want to go ahead fast execution of the projects, and that is where I think such kind of a tactical move may be considered. But to my mind, in the next 4 to 5 years, nothing meaningful is going to come on the way to dent the business growth which these companies, maybe Hitachi, GE, and Siemens, are seeing. So on that count, nothing kind of a degrowth or a slow growth we see. We see the trajectory to be intact. Only thing is a valuation part. So valuation, as you said rightly, with such kind of a 100+ P kind of a multiple where you are trading, even forward is 70, 80 times. So then a question does arise that how long this growth can sustain, and eventually it will moderate over a period of time. So I think one should wait for some more time. A bit more correction, 10-15% here. Then if you are holding it for 2 to 3 years, it's still a good buying opportunity in the entire pack.
Any particular stock, or you can buy any stock at 10 to 15%?
The kind of valuations each one of them are trading at, and the type of opportunity which they have. If you club the three top, that is Siemens Energy, Power India, and GE Vernova, 40-50,000 crores of total revenue they do in a year, and the opportunity size is almost 2 lakh crore. The debate is on, some say 1 lakh crore, some say 2 lakh crore, but eventually 33 gigawatt of HVDC has to come up. These are the only companies which have this type of technology in place. So the parent company has the technology, and it should be a basket buy.
A basket buy, got that. Dharmesh, on Astral, the market reaction was very clear when the demerger was announced. The stock tanked 10-13%, there was a JPM downgrade, and I think all that has got the management, the promoter, to rethink their plans because they've sought an independent review within the next 30 days, and they will be appointing one of the big fours. What was the call you all took on Astral?
I will leave it alone. Let the management first be clear about their business, trajectory and how they want to take it. The very fact that just because of 10% kind of price correction, they are rethinking does, point out many questions as to the business valuation and the sum of part valuation. So we'll wait for the outcome and then our policy to take it. No point jumping the gun as of now.
All right, no point jumping the gun on that yet, but so many updates that came by, particularly from the financial and the consumer space. Is there anything that stood out for you and post these updates warrants a buy?
Definitely, Mangalam. The entire financial space, be it banks, private, public, or the NBFC space, reported very strong advances growth that corroborates in line with the other spaces like real estate, consumption, fashion brands. The type of growth numbers we are seeing there, it falls in line with that. And that's also in line with the direct tax and indirect tax growth, which we have seen for the entire quarter. So things are pretty strong. Monsoons are catching up. So I think there may be couple of months of transitory period, but eventually things are headed up nicely. On the banks, particularly on the private sector banking space, which I was taking note of, was the decline in the CASA deposit even sequentially. So the deposit growth was good, but the CASA growth was not as good as the deposit growth, and that will have a headroom on the NIMs. So for HDFC Bank, there was sequential decline of 3.3% on the CASA side. So that will have an impact of 8 to 10 basis point on the NIMs. So last quarter they reported 3.38% NIMs, which was less than 3.4%. So even 5-7% will pull it down to 3.3% kind of a NIM. So that's one scenario which may push the brakes on the price upside. What we liked in that entire space is one is Bank of India from the public sector space, 18% plus kind of advances growth, 15% plus kind of deposit growth. And the RAM came at 19.69%, which is very good. And valuation wise, it's 0.6 time 1 year forward price to book. From the private sector banking space, I like Crude Vaishya Bank. If you look at the numbers, 17% kind of advances growth was there. And the CASA growth was very good. That was higher than the deposit growth. So the term deposit growth was lower. CASA was better, and 8.53% kind of a sequential CASA growth was there. It's also trading fairly at the same nice 1.6 times price to book value 1 year forward, which is cheaper when compared to private sector players. So it's a smaller bank, but I think it requires a relook and valuation side. So we are looking at it from an interesting point of view from a buy perspective.
Got that. In the entire real estate space, Dharmesh, which has been beaten down, it was the top gainer last week, about 7.5% on by Friday. That is Friday to Friday change. Anything you like?
Yeah, real estate, we have been, I mean, there are a couple of ideas we have been working on, Prashant. So, as a disclaimer, I won't be able to take the name, but they are Bombay-based real estate developers and interesting valuation. In the pack, it's one of the cheapest and unknown banks. So, but anyway, we are liking the space, but more from the Mumbai MMR region kind of a perspective.
I see. So I'm assuming you're about to initiate coverage, or you're going to do it. That's what you mean?
Yeah.
Okay.
Yeah, we are about to initiate coverage. We already had a management interaction, and the pipeline looks very robust for next two to 3 years.
Pharma and healthcare, the other two areas, which both up 3.5%, 4% last week. Indices, that is. Again, I mean, that's hospitals and pharmaceutical companies. What do you like here?
Yeah, both are looking pretty good. Hospitals is a consistent kind of a play. So there we have been liking Narayana Hrudayalaya for a long time, last 2-3 years, and valuation-wise is a more comfortable play, though Apollo hospitals have been doing extremely well. The best part about the entire hospital chain is whatever they have been promising, they have been delivering. So the conversion of additional beds are happening out there. And a consistent 15 to 20% kind of a compounding is happening on the bottom line side, with margins being in place. On the pharmaceutical side, we have been liking Lupin for quite some time. And the very reason that last year was an exceptional year for Lupin, all the verticals did well, be it fixed dosage formulation or API. And the growth was more than 50% with margins going to 28-29%. So that's likely to be a trend going forward. It's again the undervalued pharmaceutical stock if you compare them with the likes of Sun Pharma, Cipla, and the others. So their valuation comfort is there, good return on equity, and diversified geographies. So 30% kind of exposure to US, India, and the other emerging markets. So that's the company we are liking, though the pack looks strong as of now.
Okay, all right. Dharmesh, stay with us. We're going to talk about the rains. Bikram Singh is the Deputy Director General at IMD, and he's with us right now to talk to us about the rains, of course, in the western part of the country, but give us an overall perspective as well. Mr. Singh, good morning, sir. Thank you very much for joining us on CNBC TV 18. Prashant here. Can you tell us the latest situation, sir, as far as the Konkan belt is concerned, Mumbai included?
Yes, if we see past 24 hours, some data has already come up. So we are seeing that over Konkan region, whole Konkan region, very heavy rains are there at many places, and extremely heavy also rains are there. Lonavala, it has reported 670 mm around rain over Lonavala. So that is the highest for, I think, today. So more data is coming after 8:30. In fact, all data comes. So, but let us say that is the thing where we have already very high rainfall activity over the Konkan as well as the Ghat regions. That will be some district covering Ghat and interior part also. So very high rain is there, and over Mumbai also continuously last 3 to 4 days we are receiving very high rainfall activity that is very heavy to extremely heavy rains. And impact is also seen on the ground. Problems, people are facing the problems.
Yeah.
Yes.
Mr. Singh, BMC yesterday declared a holiday for schools, colleges, etc. There was an orange alert. Is the IMD upgrading it to a red alert in Mumbai?
Yes, today we are upgrading it to red. Past 2 days we had the red alert for Mumbai on 4th and 5th, and today also now we are upgrading it to red because heavy to very heavy rains that will continue. There may be isolated, extremely heavy also today also over Mumbai. And winds are also very strong. That is another part due to which uprooting of trees or some damage to kacha houses, etc., that also will be there, or old buildings. So we are keeping today also red. But from tomorrow, rainfall will reduce a lot. Moderate or heavy rains will be there, but not very heavy or extremely heavy.
Can you tell us
in view these things? Yeah.
Can you tell us for the month of in July, and it has only been 7 days, right? The rain that Mumbai has received, there were some numbers. This is as of yesterday night that we've received about 75% of what we receive on an average in July. That is correct? That number perhaps, as you said.
So for Mumbai, for the season from 1st June to this date, till date, yesterday, that data is updated. So it is 60% above that normal value. So for the July and this, we have to check a little bit. So maybe it will come around that percent, but already 60% is from June to till date.
60% above 60 June 1st to right now.
From 1st June to right now, yes, it is 60% above the normal.
Got that. So what is the prognosis or expectation for the remaining part of July? Because I remember you had earlier spoken about the second half going to see weaker monsoon. So particularly for the city of Mumbai, if you could give us the forecast, what would July look like? And what does this mean for the city's water levels and even the lake levels?
For this Mumbai especially, or
for Mumbai, and then we'll get to pan-India.
Next coming week, from 7th onward, there is a reduction in rainfall activity. Along the Ghats or along the coastal areas, we will receive some rain, but interior part, it will be lesser. So next 1 week from 8th onward, we will have the lesser activities, but from 15th onward, again, there will be peak in the rainfall activity. So that is the prediction showing. Yeah.
All right. So
lake levels, sir, and the city's water supply, what is the situation?
Water supply, I think all the lakes are now filled, so water supply should be coming to normal.
Sorry, what is the situation in 7 lakes, sir? There was only about 12% or so, right?
So this, I think there more will reply on this BMC. I will not be knowing the exact position of the lakes. But as I told, most of the parts where these lakes are there, and we are receiving good rainfall last 3-4 days, and 2 more days it will continue up to 7th, right? So the lake levels will be, I think, to the normal now, and the water supply should not be a problem.
all right, we take that point. But you know, the one thing that has stood out over the last few years, Mr. Singh, is that while on a quantum basis, monsoons have either been above or below expectations, the spread has been fairly narrow and the intensity has been very high over a small period of time, which does not make it the best for agriculture. Do you think that is likely to continue this year as well? And beyond Mumbai, what's the situation been like?
So that thing is seen, that is a right point, that extreme activity we get for a certain period and then lesser rainfall activity for a week or likewise. So during monsoon, we expect that continuous rain, moderate rain that is there. So that will be much beneficial to agriculture and other activities even, like hydrological dams, etc. also. So, and recharging of the groundwater. But what is happening, we can't change that thing. Yeah.
No, we can't change. But, you know, what is the current situation in the country right now, barring Mumbai? Because there has been a lot of rains in the western part of the country. But all the other parts, do you have any update?
Yeah, country as a whole, I think Delhi, you can take the update from Delhi headquarters. But yes, up to June it was deficient. But now situation is improving. And June, in fact, this progress of monsoon was also slow. Once it took onset over Kerala, afterward this advancement was very slow. Only after 20th or so, this advancement started rapid. So in the month of June, it is a starting point, in fact. So sometime in time it comes, and sometime maybe little delayed or maybe early also. Like last year, it was early before the time. So that thing happens. So June is not very crucial, I will say. But July, August, if we get good rain, so that will be okay.
Okay. Sir, would you be revising your estimate for the month of July for the city of Mumbai and the western part of India? What does it currently stand at, and what the
July, what is given, it is up to 94%, and that is good. In fact, not very less. So it is below normal, but overall, if you see, so it will be sufficient for agriculture and all these things.
No, sir, I get that. But is there a possibility that the 94% gets revised higher given what we've seen in the first week?
No, it is revised only after a month. It is not like that in between they revise, because the data which they use for the long range forecast or for the monthly forecast, that will be available after a period of a month.
Mr. Singh, I know it's very early in the morning to talk about weather systems and technical stuff, but let me take a shot. Our colleague Santi had put out a piece on the Indian Ocean Dipole, the IOD. and
Yeah.
why that is very important, especially in an El Nino year, and how that can offset the impact of El Nino. Is there any update? Is there any update on that?
Yeah, there is not one-to-one correspondence. Even if it is on positive, the dipole, then also it may be on the lower side rainfall still. But yes, it helps a little bit that at some years we have seen that when El Nino is there and it is positive, Indian Ocean dipole, we got the normal rainfall activity. But it is not one-to-one that if it is there, then it will completely vanish that impact.
No, 100%. We thank you, sir. Mr. Singh, appreciate you joining us, giving us a sense of what is happening
You're welcome. Thank you.
Across the board. Thank you very much. And we wait for a latest. But as you say, at least in Mumbai, for today, schools, colleges, etc. I mean, holiday was declared yesterday evening, and the IMD is now upgrading their forecast to a red. I mean, I think it was an orange alert. Red, of course, is the highest warning level, and they're upgrading it to red now. We'll take a quick commercial break. I think Dharmesh, of course, is still with us. And we'll ask him, there's more stuff to discuss in terms of stocks, etc. Sudarshan and Mitesh are going to be with us as well. Stay tuned. Well, as the government battles several complaints on social media over ethanol blending in petrol, the minister, Hardeep Singh Puri, has said that ethanol blending may affect vehicle mileage. However, he added that several other factors also influence fuel efficiency. He was speaking with reporters earlier over the weekend. The minister also said there is enough room in the market for all fuel technologies to coexist. Listen in.
Somebody is saying that fuel mileage is going to be dropped. Arey bhai, it's now well established that when you have ethanol, they use it in racing cars also. The acceleration increases. What is that thing called? The knocking. That improves. Mileage, yes, it may drop a little. But it may drop a little. Mileage can drop a little because of various things. If you're driving from here to Gurugram, and if you follow the route I follow, then there are many points at which there are toll bridge, other things. So calculate that. So we've been very open about it. My response to that is there is enough space in the growing Indian consumer market for all systems to coexist.
All right, on this, in fact, our colleague Shivani Bajaj did speak with Rahul Bharti of Maruti Suzuki, who said that they've not received any complaints regarding the E20 use. So let's listen into what the industry had to say on this as well.
We want to give a statement of confidence that Maruti Suzuki has been fitting E10, has been, making its car compliant to E10 way back before 2010, which is more than 16 years now. And when we did that, we had sufficient factors of safety that even if we use E20 fuel on those E10 cars, they are fully, they do not have any kind of issue at all in terms of either wear and tear or corrosion or any kind of impact on the life of the components that go into the car. So we have done extensive testing and we have validated that it does not cause any problem. Not only our validation in our R&D, this is our field experience also. Cars that we have already sold to customers, let's say cars in the financial year 25-26, for example, we would have serviced more than 2.5 crore cars. Out of these 2.5 crore cars, at least about 1.5 crore cars were more than 3 years vintage, which means they were made in India when E20 was not mandated, which means they were E10 compliant cars. So on these E10 compliant cars, if we use E20 fuel, they would have showed up some problem or the other if the concern was true. Having gone through these 1.5 crore customer servicings all over India, we have not noticed anything of concern. So that gives us the confidence to convey to our customers that we need not be concerned.
Okay, well, huge debate on social media and elsewhere. Lots of testimonies about people sharing their experiences. But of course, I mean, you heard from the minister himself, and of course, you heard from the largest car maker in the country, that is Maruti. Dharmesh is with us. Dharmesh, just your, I don't know if you have any thoughts on this. It's does this have the impact, because this is creating so much debate online and elsewhere? Could this have an impact on sales, auto sales, especially petrol sales of petrol vehicles?
Prashad, I don't think so. This is going to have any impact on the petrol vehicle sales. So the sales will continue the way it is. But the fact remains that for consumers, the prices have gone up by 2 to 3%. That's whatever is the mileage decrease. So that has not been compensated by the government. Ideally, they should bring down the fuel prices by that count, so to compensate for this adjustment. So this is environmental friendly. That's okay line. As far as the capital depreciation is concerned, about the wear and tear and replacement, so that debate is on. But I mean, there will definitely be some impact out there, maybe earlier wear and tear. But to my mind, I don't think this is going to have any impact. It's a noise. The numbers were excellent. The last one going by for the four-wheelers and two-wheelers. It's likely to be the same scenario going forward.
And from the side that, it's a large ticket purchase, right? And when you have all this debate going on, you kind of hesitate, maybe, I don't know. And you say, well, let's just let's let it settle down. And so it's just deferment in that sense. But as you say, maybe not. We'll see. This is, of course, an ongoing issue at this point. I think Hormuz is here with the delivery numbers from Friday's movers, the big movers from Friday. Hormuz, take it away.
Big movers on the downside on Friday, of course, were these power transmission companies. A lot has been written about them today as well. All of these stocks were the top 4 losers on the Nifty 500 on Friday. GE Vernova, Hitachi, Siemens, CG Power, all of them declining anywhere between 7 to 9%, and on very strong volumes as well. For GE Vernova, the volumes are 4x the 20-day average. For Hitachi, it was almost 5x the 20-day average. Siemens as well, or close to 20 lakh shares were traded. 4.5 lakh shares is the 20-day average. And for CG Power as well, 2.5 crore shares were traded on CG Power. The average on the 20-day is only 41.5 lakh shares. But take a look at the delivery volumes as well. It was either in line or marginally below the 20-day average. For GE Vernova, it was 47. Hitachi, it was a third. Siemens as well, 44%. That was the only one that was higher than the 20-day average on the delivery front. And CG Power too saw around 43.5, rather mostly in line with the 20-day average on the delivery front. Another one that underperformed on the downside yesterday was on Friday was Avenue Supermarts. The third straight day of losses for the stock, down 9% during this 3-day period. And during these 3 days of losses, the volumes have been consistently increasing as well. On Friday's session as well, saw close to 20 lakh shares that were traded, and take in comparison to the ones done on the 1st of July when there were only 9.5 lakh shares that were traded. And in this case, the 20-day average is close to 5.5 lakh shares. 40% of those shares traded were marked for delivery, so close to 7.5 lakh shares. and the 20-day average here was around 3 lakh shares, and the stock closed below the mark of 4,000 for the first time after the 12th of June, and still down around 20% from its 52-week highs. But of course, the one stock that did well on Friday was Sumitomo Chemicals, the top gainer on the Nifty 500, the biggest single-day gain since September of 2024. Volumes were at a record high. Close to 3 crore shares were traded. The 20-day average is just 4 lakh shares. 8% of those were marked for delivery, so around 24 lakh shares. That too is around 10x its 20-day average. And among the top 10 Nifty 500 stocks on Friday, they turned positive on a year-to-date basis, but still down around 25% from its 52-week high.
Right. Thanks a lot for that, Hormaz. Let's go back for one last question to Dharmesh. Let's discuss the consumer space. Dharmesh, good updates coming in from Godrej Consumer, very strong from Dabur, and even Nykaa. But, the stocks, while they've been underperformers, they're not reacting extremely positively to any of these updates so far. That's the kind of thing that we saw on Friday as well, where Marico actually ended lower. And at a time when, there are slightly muted numbers coming in, those stocks sell off a lot more. What's happening here, and what's your view on the consumption space in particular?
Yeah, I mean, all set of numbers, be it Dabur, Marico, every Godrej consumer products, Nykaa, and even the retailers, the fashion retailers like V2 Retail, Vishal Mega Mart, V-Mart, all reported a very strong set of numbers, and the underlying tailwinds of economic tailwind has been playing out more on consumption, the pattern is happening. But the only disconnect, Magnum, here is the valuation gap which is sitting out there. Almost all of these companies are trading at more than 50 plus kind of a PE multiple even 1 year forward. And the growth more or less will stagnate between, say, 15% on a bad year and 20-25% on a good year. So Nykaa, this growth of 30% kind of a growth which they've been guiding for, it cannot continue for 2 or 3 years going forward. It may be a 1 year, 2 year kind of a phenomena. So tactical bounces may still play out, but I think this market, the last 1 year texture of the market has been resetting with respect to growth. The valuations are getting resetted out there, and that is where the concern comes by. The business may still do well, but stock prices may not do that well.
Dharmesh, we'll leave the conversation here. Thank you very much for joining in. Get into a break. On the other side, we'll get the pre-opening rates. We'll also be joined by Rakesh Arora of Go India Stocks to focus on Vedanta's business updates. Stay tuned.
Back a little over a minute to go for pre-open to set in, and around 16 minutes in particular to go for the market open. The GIFT Nifty indicates a softish start. You're watching us here at Open Exchange live from the CNBC TV 18 Motilal Oswal studio. 35 points on the lower side, but chances are that maybe these dips are likely to be bought given the sort of favorable macros that we're currently facing. Sudarshan Sukhani, proprietor at Technical Trends, and Mitesh Thakkar, our technical experts, join in as always. Sudarshan, The GIFT Nifty is indicating a slightly softer start. Do you think that this dip is something that can be viable?
Yeah, good morning. Well, it would be if we see a little more of a correction during the day. See, the Nifty has this tendency of contraction and expansion. We saw a very decent expansion last week. The chances are the Nifty will go into a huddle and spend some time, some days or maybe a couple of days or more doing nothing but moving sideways. In this sideways market, a dip towards 24, 150 approximately becomes a buying opportunity because that becomes a decent dip. So it is a buy, but not at current levels. On a sharp correction, the Nifty at 24,150 is a buy.
Nifty at 24,150 levels is a buy, Sudarshan, right? That's the view.
Right. That's
okay, got it. Morning, gentlemen. Mitesh, what about you?
Good morning, Prashant. I think I share a very similar kind of a view in the sense that one would want to either buy Nifty on a decline, which is slightly significant than what the GIFT Nifty is indicating, or if we start getting past and start closing about 24,350. So for me, the preferred level to buy on the downside would be close to about 24,200, 180. I think quite similar to what Sudarshan said. And eventually, I think once we start closing about 24,350, then I think 24,600 should be the next minimum target. But eventually, we can even look at higher levels. So the overall tone, the setup is positive over the next couple of weeks. But in the short term, yes, because we are kind of facing some supply around 24,350, you might have 1-2 days more of sideways activity.
Got that. Let's talk about individual names. Sudarshan, what's on your list?
It's mainly buying. Asian Paints is a buy with a stop under 2680. Bharti Airtel is a buy with a stop under 1870. Fortis, and see we have different sectors. There's a general upbeat mood in the market. Fortis is a buy with a stop under 955. My only short sell is BHEL, stop above 390, but it's much better to focus on the buys.
Okay, all right. Mitesh, what about you?
I have a sell on BHL too. I think in the short term, it's showing first signs of correction. So keep a stop at 391.25. Look for targets around and below 368. Also sell on PNB. And see, last couple of days, a lot of PSU banks have come on the sell, especially Bank of Baroda, Canara Bank, etc. So PNB is a sell with a stop at 107.5 for a first target of 101. And then rest of the buy calls, Godrej Consumer on a mild decline of about, let's say, about 8 to 10 points. Buy with a stop at 1,004. Look for targets of 1,070. And Hyundai Motors is a buy if it starts getting past highs of 2,000. So buy about that with a stop at 1970 for targets of 2065.
Right, Mitesh, Sudarshan, thank you so much for joining in. We'll get back to you shortly. In the meanwhile, let's put the focus back on the metal space. We've got a couple of updates that have come by. The dollar index also has been, softer overnight. So let's see, how the metals are positioned from here on. Rakesh Arora, founder of GoIndiaStocks.com, joins in now. Before we discuss the entire space, Rakesh, let's get in a conversation around the Vedanta Group, because the update for the first quarter has been understandably fairly strong. If you look at the Vedanta aluminum business, highest ever production, highest ever sale, value-added production up 14% as well year on year. What are your thoughts? I mean, the stock opened higher. You said that, it was all in the price, and from here on, you should see a bit of a decline. We did see the decline, and that's been bought into at 446 on Vedanta aluminum. What's your call?
I wouldn't want to give a call on individual stock, but generally I would say that, metal stocks have seen correction of 20 to 30%. And we are heading into Q1 results, which will be very strong. And they are a little bit oversold. So maybe some bounce can be expected. But I don't think they'll go back to the previous highs in a hurry. I'm also seeing that analysts are building in much higher aluminum prices in their model. So most of them are building $3,200 or something. We're already below that. And they're giving peak multiples to that, that kind of price assumption. So I think we will see an earnings downgrade cycle, as we move forward. It will all depend on how fast the Middle East capacity comes up, and Indonesian capacity is pretty surely coming much faster than what we were earlier anticipating. So all these things will push aluminum prices to around $2,600. and that is really going to drive the earnings downgrade. So, those who are stuck can actually use the uptick, in the as the Q1 results gets baked in, and probably look to re-enter at another 15-20% lower from current levels.
That's an interesting point that you're making.
You remember Nalco's conversation that we had just, I think a week prior?
27
to about $3,000 a ton was his estimate for FY27, but Rakesh is even lower.
Yeah, he's saying that it could go to 26,700. The interesting part is so far the models of all the analysts that Rakesh has been speaking about, they're still factoring in over 3,100 to 3,200. Yeah. And this at a time when, the war premium was there, aluminum prices went all the way to closer to $4,000. So they were pretty gung-ho about that. But look at how the night changes. Rakesh, on the ferrous space, you've given us a view on aluminum. On the ferrous space, what's your call?
So ferrous space, again, steel prices were much stronger, and we should see strong Q1. But there again, we are past the peak in steel prices. There are two other developments which have happened. One is China has returned to export market in a big way. And number two is that all the companies have been making quite good profits. So everybody is expanding quite strongly. I was just seeing, one broker report on Jindal Steel and Power. They are mentioning that they expect 21% CAGR volume growth over the next 2 years. Now, Indian demand is growing at around 10% over the last 5 years and 7% over the last 10 years. And none of the other countries are allowing free import, meaning European Union is cutting our, import quota. So I think there will be surplus steel in India, and steel margins will remain a little bit, muted. So there again, same call, wait for correction. Though steel stocks are not that expensive as compared to aluminum, but there will be some correction.
Rakesh, just to complete the point on Vedanta, so this is the first production update since the split took place. So amongst all the businesses, which one would you buy now? We spoke about Vedanta Aluminium, but what about the others? Any view?
So I think Vedanta Iron Steel has already moved up quite smartly and now factoring in the 3 million ton expansion, which is due to come in this year. And that leaves a little space for, in that company. I think the only value pick would be oil and gas, but there are so many regulatory challenges. If they get those extensions, etc., then, maybe Vedanta Oil and Gas is factoring in low oil prices as well as low probability of getting expansion approvals. So maybe that could be nearing a buy range.
But is that but in a way you're saying that's a risky bet, Vedanta Oil and Gas. It's value, but
it can be a value trap for some time. It is, but it is definitely value.
Got that. Any other stock that you would like to highlight, both on the positive or on the negative side, from the stocks that you're looking at closely?
So I can just speak generally that metal stocks would see a short-term rally heading into strong Q1, and that should be used as an opportunity to exit rather than to make any longs.
Right. Do you have a view on the copper space? We did speak to the management of Hindustan Copper as well. They were fairly bullish on the way they will go forward. In fact, the management called out that they're under-promising and perhaps likely to over-deliver on the long-term guidance that they've given as well. So your thoughts here?
Yeah, so hopefully they deliver that, because the stock price is expecting a moon out of them. And was an expensive stock and has remained an expensive stock. Despite all the, bullishness, copper prices didn't go beyond $1,500. And there's a spirit of recycled copper which is coming into the system, which is not really getting accounted too much into demand supply models. We are seeing recycling companies in India, all of them going towards copper recycling. And, with this Middle East scrap which is going to come out, expect, a lot more recycled metal to hit. So, same call for copper also. These base metals move in a pack. So copper, I'm happy to buy around $10,000 to $1,100.
All right. So basically, the short point is that you're not particularly chuffed about the prospects of this space. Any rally from here on, which is on account of the first quarter earnings, which is backdated, should be used as opportunities to sell.
Yeah, exactly. That's the call that I'm making.
All right. And what would be any of the signs that you'll be watching out for to perhaps, do a turn in that call?
So, US dollar is one of the things which has started to weaken a little bit after a smart rally. And probably the catalyst was the weak jobs data, which means that, interest rate hikes in US could get delayed. So that is the, key point to watch out for. A very weak, US dollar could mean that, commodity prices don't fall as we expected.
Got that. Thank you very much for that. Keep watching for the dollar index. The jobs data that came out last week was surprisingly weak in the United States. I think 57,000, much lower than estimates. And even the prior 2 months, when the jobs number was strong, was revised lower. And they went on to say that the monthly jobs addition in the US was just 36,000 for the whole of last year. So that's pushed back expectations. There is an FOMC minutes outcome, which we will hear on Wednesday. But I guess that's a bit backdated post the June numbers for the jobs. But let's get in 9-10 calls from Sudarshan and Mitesh. Sudarshan, you want to go first?
Yes, it's Asian Paints. Buy Asian Paints with a stop under 2680.
Mitesh, yours?
I'll go with the buy on Godrej Consumer, and if you try and get it around 1,025, 1,030, buy for a target of 1,070 to begin.
Mitesh, just stay on. I just want to quickly, can you pull up the Hitachi, look at the other names as well, how they've ended at the end of the pre-open session. Hitachi is flattish. GE Vernova should come up. CG Power will come up on your screen. Transformers and rectifiers, etc. as well. I think they're all starting undecided this morning. Not very much at all on them, even though there are some notes, as we've been highlighting earlier, which are essentially saying that perhaps the impact is not all that large. Anything here which you're watching, Mitesh?
For GE Vernova, I think, that's something which has come on my list very clearly. A big breakdown has taken place over there. Now the stock is already corrected a bit. So, there could be a chance of a pullback, but the structure has weakened. So for me, I think that's more important. And I would now, Prashant, possibly look at the stock heading towards 4,260 to begin with. And in a bad case scenario, even 4,020 is possible. So negative over here. And if you get a pullback, around 4550, 4600 would be a good level to exit or even try and initiate short positions.
Also, if got that, that's GE Vernova. If you can put up the hot boards for the result reactions, right? I mean, the banking and the consumer names. See if there are any moves which have come about with at the end of the pre-open session. So, HDFC, Kotak, Axis, etc. Of course, were the big ones which reported. I don't think there is very much. Axis is up 1%, HDFC is up 0.5%, Kotak is down about 1.7%. And of course, there's Dabur and Marico and Nykaa, etc., which had reported on the consumer side. So that perhaps should give us a quick sense as well on your screen now. Nykaa is up about 1.3. Nothing. Actually, it's very, very slow start, but higher mostly across the board. Mitesh, thanks very much for staying on. We'll talk later. Well, APL Apollo has got an upgrade from Bank of America, and there is Kirloskar Oil, which is in focus on the back of a upgrade as well. Kirloskar Oil Management, by the way, was with us, and we spoke extensively with regards to demand from the data center business. So Winnie is here with those two. Winnie, take it away.
Hi, morning. So first we have two initiations that have come in, right? So for APL Apollo, BofA Securities has initiated coverage buy rating target price of 2,170 rupees per share. They expect the adjusted PAT to deliver around a 15% volume growth over the next couple of years. What will drive this growth? Organic demand in real estate. They're expecting capacity additions in new markets as well as products will lead the growth, and better product mix will also drive the growth along with the exports for the company. What they expect also is BofA is expecting a 20% earnings CAGR growth over the next few years. They expect EBITDA margins to expand for the company to around 5,465 per ton from current levels of 5,161. Overall, they see FY27 volume growth in the range of 10% versus guidance of 15 to 20%, given that there are some bit of a headwinds that will come in on the West Asia front, but they still believe that this is at an inflection point in terms of volume. Second half is likely to be better. Now moving on to Kirloskar Oil. data center win that has come in, that's a big trigger for them as well. So Jefferies initiating coverage on this one, buy rating, target price of 2,815 rupees per share. Kirloskar Oil, obviously the second largest player in terms of power backup gensets that they make. They're moving more towards the high horsepower side of the system and segment as well. So Jefferies expects a 22% EPS CAGR growth over the next 3 to 4 years, as well as a return on equity improvement to around 20% from current 18%, and improvement in terms of margins also is what they're expecting. Currently, it's valued at around 45 times P for FY28. Current valuations, they expect that to continue, and there is an opportunity because of the data center. That is why they're positive on this one.
All right, take that point, Vinny. Thanks a lot for that. APL Apollo, and we have APL Pipes, and then we have Kirloskar Oil. Obviously, an important one. We had the management last week of Kirloskar Oil as well, saying that 25% is what they've guided the street for. 35% in their power gen business will actually be aspirational, and high voltage power is something that they are tracking going forward. All of that will be margin accretive for them. So looks positive. The stocks doubled from the start of this year and continues to hold higher.
Okay, all right. I think we've looked at some of the stocks with regards to the updates and other news flow that we've covered, and they're back up on your screens. So there's nothing outsized coming through. I mean, same time on Friday, if you remember, that entire transformer story had come through, and stocks were all down sharply in the pre-open. And this morning, it's kind of flattish across the board. Although it's positive as far as the index is concerned. So we'll start, I think, with about a 0.2% kind of a gain on the Nifty and the Sensex at least. There we go. We are starting at about 24,300. And the Nifty Bank is also, finding its feet, just settling down. I think we're about 1/3% higher than the Nifty Bank. The Midcap index is up 0.19. The small cap index will also come up, and I think there should be some. Okay, nothing, flat. Actually, last week it was the Nifty which was up 2%, the small cap index which was up 2%. Mid caps and Bank Nifty were both absolutely flat. So it was the very large and the very small which did well. That is last week. 24,310, so slight pickup in terms of pace with a 40-point gain. The Nifty heat map gives you a sense of how we're starting. There's Axis and HDFC Bank, both with reported numbers for the first quarter, the Q1 updates. And there is BEL, Adani Enterprises, Bajaj Auto, etc. On the other side, Kotak and Indigo and Tech Mahindra are some of the names. And there's TCS as well, which are starting lower. So 70 now, so picking up pace as we start this Monday morning. Rima.
On BEL, all the defense stocks actually are in focus. The Defense Acquisition Council has cleared 52,000 crore of defense acquisition proposals. So that's the reason why BEL has opened up strong. And we should pull up an HAL, BDL and some of the others. On Kotak Mahindra Bank, as we were pointing out, while the loan growth is respectable, the deposit growth is lagging in HDFC and Axis Bank. Plus, there is a quarter-on-quarter drop in their CASA, which is a negative. And that's the reason why Kotak Mahindra Bank is under pressure. Along with that, you've got the rest of the IT stocks retreating after the rally from Wednesday to Friday. So TCS down 1, Infosys, Wipro also lower by nearly 0.5%. Some of these consumption names, which had a strong week, are under pressure. So Asian Paints, Nestle, Tata Consumer, ITC, these are stocks slightly subdued in trade. On the way up, it's Axis Bank. The numbers in the private sector look the smartest for Axis Bank. The loan growth was close to 19%, higher than peers, and that's a stock getting rewarded. And today with the up move, it's crossed the 100-day moving average as well. ICICI Bank numbers are not out, but the stock is holding up well, and HDFC Bank too has opened up in the green. Then you've got Adani Enterprises, that's up nearly half. Defense stocks, as we highlighted. A couple of these auto names like Bajaj Auto are up and about in trade. L&T, Bajaj Finance, Cipla, HUL also on the gaining side. But all in all, it's a good start. 24,350 on the Nifty. Remember, Mark, this will be the 4th consecutive day of a rally, and even for the last 4 weeks, markets have managed to close up in the green. So we've been in an uptrend, and that has continued at the start of this week.
A solid start, no two ways about it. At least the updates that have come by so far. Bandhan Bank for one, 16.5% jump in loans and advances. CASA deposits as well higher by about 15.8%. That stock's opened about 2.3% higher. Look at Godrej Consumer, it's up 3%. Q1 numbers tracking ahead of estimates, the annual estimates that they'd given. APL Apollo Tubes higher. We have Hitachi Energy after a big gash that we saw on Friday. It's aiming higher. It's up about 2%, not recouped all the losses, but definitely marginally in the green. Nykaa as well. 50% growth in their fashion business. We have near 30% growth in their net sales value. That stock too, after having seen a decent rally, up around 2%. And the stock that catches your attention has to be Kirloskar Oil. It's been a big mover. Has nearly doubled from the start of this year. Has moved about 200% in the last 12 months. And this morning, up 7%. So Jefferies initiating coverage on that stock with the outlook that they have on the overall business for the high voltage wires has the street fairly excited. The stock literally on fire. Senco as well, 60% growth in their jewelry revenue. They do believe that maybe there would be some moderation in the second quarter, which is why the stock, which opened about 4% higher, has now moderated to about 2.8%. But again, nevertheless, and even in the broader markets, if you look at the one stock which is actually not doing well is AWL Agri Business. They too came out with their update. They're on the wrong side of the commodity cycle because, palm oil prices are now lower. So that stock down about 1.5%.
Okay, well, I think we're starting up with some gains, some cuts, but 80 points on the Nifty. This is looking a pretty good start, all told, after the momentum that we've had from over the last 1 week. Last week started poor, and then of course it picked up through Thursday and Friday, making up for all the losses. We have Sridhar Sivaram, investment director, Enam Holdings, and someone who's watching a lot of themes pretty carefully. Sridhar, thank you very much for joining us.
Thanks for inviting me.
How are the rains outside?
There's no traffic. I reached much before what I would have expected, so I was here half an hour early.
No schools, no colleges, lesser traffic, right?
But I think generally the drainage systems have improved, and coastal road does help. But yeah, rains are good. We needed the rains. There was a lot of hue and cry about...
We spoke with the IMD representative this morning, and they said, didn't have an idea about all India, and I think we'll get the data later, but said that western part of the country, Mumbai, Konkan, western, that's receiving good rainfall, hopefully. It got a bit of a scare in June when it was so dry, and I remember you kind of said...
But I wasn't worried because...
you were traveling through parts of India, right?
Exactly. And it was amazing how most jungles were so green, even in June, which is like peak of summer. So, as I said, I am not in the El Nino camp. And even people who were in the El Nino camp, if you just read the report, the El Nino is supposed to hit in November. By then, our rains would have got over. So, this is a delayed rain. We had in 2024 also. And not every year we get perfect rain. So, you'll have some patches which will have more, some patches which will have less. So I think we will end up reasonably fine as far as rain is concerned.
Okay. Well, there's an important variable.
Of course, it is.
So what's the market looking like now, Sridhar?
So I think, as we discussed in the past, had the war not happened, we were very positive on India. We thought that this was an inflection year for India where we would have got earnings growth come back. Apart from the GCC countries, we are the biggest collateral damage as far as war is concerned, for obvious reasons, because of oil and all the other issues that we face because of the war. It looks like it's settling down. Oil prices coming down helps us a lot. So I think Q1 may not be that great, but Q2 onwards things could look better. That's how I'll put it. So we'll have to see how the commentary is. But I think the consumption is holding well, and we have some challenges on the large cap in terms of IT and large banks. But if you remove that, I think the story is broadly below the top 50. That's how I'll put it. Even now, if you see the Midcap index is almost at its all-time high. 3-year, 5-year CAGRs are 20%. So we look at the index and we feel nothing is happening, but there's a lot happening.
No, there's a lot happening. Every day there's
That's how I'll put it. So if you have the ability, you will find winners.
Sridhar, on IT, now over the last 2 months, when I speak to the buy side or sell side, everyone seems to have come to terms that we are going to be in a low growth environment for an extended period of time. So, at the start of the year, people were talking about relative valuations, comparing it to historical and trying to make a bull case. But I think now no one's talking about relative valuation. Now, you've been negative on IT for a while and it's worked out very well. But from here on, do you think the pessimism is priced in? Because now, as I said, everyone's talking about 2, 3, 4% growth, say till FY30.
Yeah. So I just put out the data on X a few days back, showing that even during the best of time, the top 2 or the top 4 IT companies had earnings growth of only about 8%. So if you take roughly 8%, even the 10-year CAGR is only 8%. And my question is, what is the probability that the next 5 years it will be higher than 8%? And I think even the bulls agree that, 8 looks very difficult. So you're talking of 4-5% best case growth, and you want to give 15 times multiple for low growth where I don't even know what the terminal value is. So I think as I said in the past also, I don't think these companies are bad companies. They're great companies, great cash flows. I think they're going through a P derating. And when you have such strong P derating, I will look at where the US companies are trading. They're trading at single digit P. So that means these companies can go to single digit P. I really don't know. Can there be a trading rally in this? Maybe there can be. I look at growth. We are growth investors to a large extent. Value stocks that to deep value like this, I really don't understand. So maybe it goes up, but there is no earnings support. That's how I'll put it. I mean,
Still negative on it.
I'm still negative. I know there's a lot of debate on this. I don't see growth. I stay negative. But people who are bullish, best of luck to them.
Take that point. Single digit PEs is what you're targeting. Interestingly, he spoke to S. Narain as well. He said that maybe a couple of notches above what US PEs are is where the IT stocks settle as per him. I wanted your thoughts on the banking space in particular. Yes. We've gotten updates from HDFC Bank. We've got some from Axis Bank, Kotak Mahindra, not as well as the others so far. And you had this very impressive thesis around PSUs and private banks as well. Yeah. Where do you stand on that now?
So I have a contrarian view on the banking sector, and I've held this for a while now. So very early in my investing career, I learned that when there's intense competition, you're better off being a customer than a shareholder. That's what we are seeing right now, especially on the retail lending. So if you see the recent data which came out, I knew it was somewhere in that range, but I didn't know the exact number, that private banks have lost 15% market share as far as home loans are concerned, and about 10 to 11% market share in auto loans. Home plus auto is about 45% of the total retail book. That's a significant number where they're literally vacating space. So literally you have to run faster in all the other segments to keep up and to keep margins, because PSU banks are lending at rates which look very attractive, 7.25 for home loans, 7.5 to 7.75 for
the valuation
auto.
differential has narrowed, right? And in some cases, actually, it's, say, SBI, for instance, is trading above a lot of the private sector bank valuations.
My view is stay underweight on banks. As I said, the simple mantra is when there's intense competition, you're better off being a customer. So you take a loan, you will benefit more. Obviously, there are stories within that. I'm just saying there are some stocks which will do well. But broadly, I think the banking sector will underperform is my view. But within the financials, there's enough and more outside banks. So I like the NBFCs. I like the housing finance companies, which used to trade at very high multiples in the past. They've corrected a lot. So there's enough and more within the wealth management place. So there is enough and more. You don't have to just buy the banks. So that's my broad view.
Doesn't the same thesis hold intense competition for NBFCs and housing finance companies, Sridhar? Because everybody's doing everything, right? There are no real sector champions now.
Right. It does. Only difference is that the sizes are much different. They're much smaller. So there is enough and more for them. So if you look at the top 3 private banks, their loan book is about 60 lakh crore. And that's not small. That's a fairly large piece, and if you have to grow at, say, 15%, then you multiply that.
I totally agree.
So that is the challenge.
We spoke with 2 companies recently, NBFCs, very small. There was best.
That is a challenge, and the intense competition is on the prime space. And the NBFCs are not in the prime space. So it's basically for customers who are at 750 plus CIBIL score, the people like you and me. So we are benefiting because we never got loans at such low rates in the past. And obviously, in a recent conversation with a PSU bank, PSU chairman, I asked him, how can you give loans at such low rates? His point was that my NIM guidance is 260 to 2.60%, and my ROA guidance is 1%. I will meet that guidance. What is your issue? I said, no, sir, I have no issues. I'm just asking a question.
Although, Sriram, there's a one pushback, right? That PSU banks over the last 4 years have actually been able to do exactly what you say by drawing down on their SLR buffers. and now there is no more drawing down to do.
They're getting a FCNR buffer now.
Yeah. But that private banks are also getting.
Yeah, they'll also get. So all I'm
So you are near statutory kind of
the
floor
point
now
I'm making
on
is
SLR.
that the competition is not coming down.
But I
At
completely
least-
agree.
At least the feel I got meeting at least 3 or 4 different PSU banks in the last, say, 15 days. The sense I got is they're very happy with the performance and they feel there's nothing wrong with it. I mean, so then where is the issue?
Absolutely. So you said opportunity outside the 50, I would say even outside the top 100 in that sense.
Of course.
I know we can't talk stocks, maybe we can, I don't know. So how do we do this?
No,
how do
I
we
can broadly talk about sectors,
give
but
us the
stocks something we don't talk.
Give us pockets. Where is, yeah.
So manufacturing is, of course, a space. Power equipment is a space. I mean, a lot of them have run up. But there are enough and more if you look down. Pharmaceuticals is...
Our equipment with what kind of thing? I mean, what are we looking
it's
at?
the entire value chain. So you can pick anything in that.
The transformers, etc.
So I know there is some issues with the Chinese competition, but the demand is so high that you need, I don't think our companies are able to meet all the demand. So obviously you need to open up. And in my view, some bit of opening is not so bad because, the companies will become more efficient, they'll face competition. We also export a lot. It's actually a global theme. The power equipment is a global theme. So a lot of our companies are even looking at opportunities outside. If the US tariff-related issues get resolved, the EU tariff-related issues play, then we'll have a lot more opportunities. I think that's a global plus an India theme, which is electrification.
We're speaking, by the way, in about 20 minutes with transformers and rectifiers.
So they are very well positioned. They had some challenges last year, but if they do well, they are well poised to take benefits.
And you're talking
but I'm
about?
just saying that there are companies in the entire value chain which will do well.
You're talking about pharma, right?
Pharmaceutical is the other one. GLP-1 is an opportunity. There are a lot of companies which you can play there. CDMO is an opportunity. A lot of the themes actually are bottom-up. You're very difficult to find top-down now because a lot of it is played. So you do find a lot of opportunities when you're looking at from a bottom-up standpoint. So I think there's enough and more. That's
what stood out for you in the pharmaceutical space? And even when you speak about competition, when there is intense competition, you're better off as a consumer than as an investor. That plays out particularly perfectly in the quick commerce space, right?
Yes.
So what are your thoughts in the new age set of companies that are there on offer?
Yeah, so I think I will use the same view that when there is so much competition, I would rather order than be a shareholder. But we have within our office itself, we have differing views. So these are my personal views that there's intense competition, and competition now is coming from people or companies which have deep pockets. So that becomes a bit of a question mark. We're going to get another company getting listed very soon. So I think the opportunity set is very much there. The question is who are going to be the winners. Maybe 1 or 2 of them will definitely stand out there.
And in pharma, you said that GLP-1 is an opportunity. Which company is best positioned for GLP-1? Because
I'll not get into companies, but I think the entire value chain will do well. It's not just an opportunity for India. There's almost 80 countries where it goes out of patent. So it's a massive opportunity and many companies will benefit. I think most pharma companies who are on the export side, they're mostly sold out with the demand that is coming.
Canada has already opened up as an export opportunity for so many of these GLP-1 companies in India. Sridhar, what about gold? Right? We know gold moves through cycles. So it gives you solid returns and then it goes through a period when it does nothing. We've seen that from 1996 to 2002, 2012 to 2019. My question is that if someone buys today, what if they're buying at the start of a lost decade or a period of stagnant returns?
Yeah, so I think I still remain bullish on gold. Just keep in mind that last year we got 75% return from gold. So my broad view is that this is going to be a muted year. We'll get returns in line with possibly the rupee dollar depreciation. But if I take 25 years history of gold, we've had only 5 years of drawdown. So it's been a very steady asset class. Can't expect every year gold to give you 75%. 25-year CAGR is about 15%. If you ask me what will it be for the next 5 years, may not be 15, but it surely should be in the double digit, is my view.
Double-digit CAGR returns for gold for the next 5 years.
That's right.
We're not at the start of a lost decade or an extended period of stagnant returns.
At least that's not my view, but very difficult to project this. But my broad view is that given how central banks are behaving and given how much we are printing in terms of currency, I think gold becomes the opportunity for many investors to park their money.
What about real estate, Sridhar? Any strong views?
I think there is oversupply in real estate in many cities as we speak, and it also is a reflection of how much of sentiment people have. The sentiments have to be very favorable. It also plays around with how the equity markets do. And I think we've had some challenges on that. So if I think that second half will be better, which is equity markets come back, a lot of the global chaos that we are seeing plays out, maybe real estate can come back. But as of now, I'll remain underweight.
Which are those sectors, Sridhar, you think which will make a, so if markets make a comeback, as you said, in the second half, right? The private banks is out. It's not a area. IT, perhaps there are structural growth questions. So when we say markets, if they come back in H2, what is coming back is already come back, right?
Yeah. So I think what will happen is, so it's not like financials are a write-off. Okay, they will grow. The question is, will their growth be slightly muted? Like if their loan growth is 15, can their profits grow at 15? That is a question I'm asking. So even if they grow at, say, 10%, that adds to, the returns of the bank. Same with IT, it's not a write-off. So if they grow at, say, 5-7%, that adds to it. Maybe the others have to, pick up the weight. Maybe the composition of the index changes over a period. I don't know. But I'm just saying that the broader market earnings growth are still very strong. So if you take any of the brokerages who have put out last quarter's earnings summary or the last year's earnings summary, you'll see that Midcap earnings were 18-19%. And that reflects in the performance of Midcaps. So that is the point I'm making, that, the Midcaps are showing you that there is story, there is earnings, where the large caps are struggling.
Yeah. So and when you say that maybe the market makes a comeback, what you're referring to is large caps. Maybe the large caps start to come back.
I'm saying the large cap, but is India going to be a Korea where, the markets are up 100% a year? No, it is not going to be. In fact, let me just say that the last 1 year for an emerging market fund manager has been a career-breaking year, because India has underperformed by 55% in a year. 55% when a country underperforms, many fund managers would have already lost their job if you're overweight, or they'll lose by the end of the year, because it can wipe out your entire decade's outperformance in 1 year. That's how brutal this underperformance has been. So I'm not surprised with FIs selling and continuing to sell, because they were proven right. I know a lot of fund managers and many pundits came and say that if fund managers are selling, they'll have to come back and buy higher. That's not how asset allocation works. And I think unless this whole AI and this whole theme settles down, India may continue to underperform because they have earnings growth. And I think this earnings growth and this AI theme can continue for a while.
Wait, Will, is there a case for international diversification from this level? You hear a lot of calls that invest in Vanguard, ETF, then rupee depreciation also gets taken care of. At least you make that kind of a return. Considering the kind of outperformance, markets in the US are at an all-time high. How much would you recommend international diversification?
See, international diversification, as an asset allocation, my broad view is you should have international. Whether you buy it today, whether you do a SIP tomorrow or whatever, it makes sense. Whether you can buy from India, it does make sense, because there is earnings story there. So I would say that gold, international and equity all should be part of the asset allocation that anybody should do. I have that asset allocation, so I'm not really complaining right now, because I've been investing internationally from 2015 onwards. But I'm just saying, somebody starting new, I don't know whether this is the peak or not peak, so SIP or a systematic.
It's a little tricky in the US
it is
also.
tricky. It is tricky.
Just a word on the defense space,
Yes.
because there was a theme which saw a lot of fancy stocks moved up 5, 10, some much more than that as well. Then thereafter there was correction, and now as things settled, every incremental positive news is buy for defense stock. That's something that we're seeing this morning as well. The Defense Acquisition Council approving some more orders coming by, and that's actually caused a big uproar in some of these stocks as well, an up move. Earlier that wouldn't happen. When these stocks were doing extremely well, incremental news wasn't reflecting the stock price moves. Do you think that's a tell?
No, so I think defense is a theme, and with all the geopolitical tensions that we are seeing, if you look at the defense outlay that we are seeing is also going up, and I don't see this changing in a hurry. But a lot of the stocks have run up, so you have to keep in mind where these stocks are. And we've seen very high P stocks. When you get bad news, they do correct a lot. It's a very bottom up. You need to do a lot of your homework on this. So we are positive on defense, but I don't think it is like you buy every defense stock or you just buy on a defense ETF or something like that. I'm not in that camp.
So what part of defense do you like?
It's a very broad segment.
Exactly.
So we do have exposure where defense, some of these companies are they exposed to the export part of it. Some of them have drones. Some of them have, say, artilleries and supply to the Indian Army. So it's really a broad theme. Yeah.
Peter, we leave it there. Thank you very much for joining us. I hope your journey back to office is as traffic-free as it was here. Thank you for being here. 100 points, by the way, on the Nifty. 24,370 is where we find ourselves at. And, just a couple of names, right? HDFC Bank is the biggest volume-led gainer, 2.25% higher. There is Shakti Pumps with a 7% pop, which is coming up because there's an order there. The transformer companies, the Hitachi is up 3.5%, CG is up 2.5%. If you can pull these up, GE Vernova is up about 2.5% odd as well. So these are three names which we can spot at this stage. So lots of individual single stock moves which we will address as we go along. But it's a triple-digit gain on the Nifty for now. Well, consumer companies in focus, and I think we've got a paint company, Berger, in focus. Mangalam.
Yep, we have Berger. All the FMCG companies so far have reported a solid first quarter update, and with the kind of decline that we've seen in oil prices, it so appears that maybe paint companies are best positioned right now as per what the analysts are saying and what the industry is saying in general as well. And that reflects in the kind of stock price move that we've seen across the board too. So Abhijit Roy, the MD and CEO of Berger Paints, now joins us. We obviously discussed Brent crude prices being off highs, demand in competitive environment, and more importantly, Berger Paints, by virtue of being headquartered in Calcutta, is that a theme to play in Bengal as well, as the GDP is expected to grow faster out there post the recent political change? So all these factors we do discuss with Abhijit. Thank you so much, Abhijit, for joining in. I remember when oil prices were over $100 per barrel, you had taken a price hike of around 15%. You said that the rule of the thumb is whatever the oil price rise, you increase it by a third. Now as we speak, oil prices are down about 36% from the peak. To apply the same rule, your raw material prices should ideally be down by about 12%, but you're still sitting on a 15% price hike. So my question is, how's demand held up in the first quarter so far? And what kind of high price inventory have you exhausted? What's the margin outlook as you go forward?
So Mangalam, good morning. The price hike was about 11%, 10 to 11% actually, not 15%, just a correction there. So the prices have come down from the peaks. Obviously, it takes time for it to pass through in the system. As of now, we are sitting on that high cost inventory, but it will start coming down, in terms of 3 to 4 months down the line. We will have, the current prices which are there operational. That will become, evident from the raw material prices will come down then after 3 months. So as of now, there is no great change. The prices that we had taken up will suffice for the price increases in the raw material that had happened. So we will be sort of, profit neutral for the next 2 months. Then we will start gaining a little bit in terms of profit. We will have to see, wait and watch. These prices keep fluctuating. You never know when again it will start spiking up. But we will have to observe, and in case this price trend persists, then after Diwali season, maybe we will have to take at a price correction.
All right, so you may consider a price correction, but up until Diwali, you are not considering, the industry is not considering a price correction, which probably over the next few months, if the prices stay the way they are, that would be profit accretive for players like you.
Somewhat, yes, because I think, we will wait for these prices to stabilize. As you have seen, the statements come, sometimes again it deteriorates. So we are not very clear, as to what the prices will be, and it takes time for the pass-through to happen. So, if the prices drop now, it's not like immediately the prices drop, for the attendant raw materials which are linked to crude. So it takes a little bit of time for that to happen. And then the production has to happen and then it has to go into the market. So there is a 3 to 4 month time lag which is there, which is why, as of immediate basis, we are not going to do anything. It will happen only after some time.
What about the first quarter? It was a long summer. Obviously, monsoons being delayed, not particularly good for rural, but it's great for paint sales because the longer the monsoons take to come, the more window you have for people to paint their houses. And this is something that wasn't happening last year because you had an adverse base. Monsoons came in earlier. How has demand been in the first quarter? What's the kind of volume revenue number that we're likely to see from the industry, and will you outdo that?
Yes, Mangalam. So you are right, and that the delayed rain has been helping the paint industry at large, because last year it was a disaster in terms of monsoon. It started from somewhere around the end of May and it continued right up to end of October almost. This time, with lesser rains, the exterior paint category, which was heavily impacted last year, will not happen this year. In addition to that, what we see is a little bit of a lessening in the intensity of competition which is there. As a result, both the two things combined together, I would say that the industry, the incumbent players, should see, good growth, as you said, double digit possibly is there. And we would expect that, Berger, as we have been incrementally better than the industry, we will continue that.
So mid-teens growth for you, not ruled out in the first quarter. Just a follow-up on that. You had earlier said that for the full year, given the price increases that you've taken, with high single-digit volume growth, you guys could do mid-teens revenue growth as well. Now, if the industry were to consider price cuts in the second half of this year, does that revenue guidance stand revised downwards? If yes, by how much?
So it depends, Mangalam, when we take, what is the percentage, typically we would have covered about 60 to 70% of the sale of the year by then. So it will be about 35-40% which will be left. And even if that 2-3% decline of prices do happen, that won't impact, too much. So it's about 1% at the most, in terms of impact, in terms of the revenue growth rate. So that will still remain in double digit. At what point it will end, only time will say.
Sir, Berger is also seen as a proxy to play the Bengal GDP resurgence post the change in the state government there. So particularly in the last 3 months, if you can give an indication in Bengal what's happened for your volume growth, the industry, I mean, you're the dominant player there. So your volume growth and what the demand outlook is looking for Bengal, is there a discernible change?
So it is positive news, because after 49 years almost, there is a double engine sarkar as they call it. So a lot of announcements have been made of infrastructure projects which are going to kick off, and some of which which was already in existence, which will get speeded up. So there is a positive news there. There are industrial policy, the new one, and with the incentive policies to be announced in a month's time as per the government. So that should also boost the economy. Overall, things look very positive. Initially, the 3-4 months, there is a bit of a turmoil because the change of government happens, and there are a lot of rules and regulations which change. So it's not, the impact is not felt immediately, but 3-4 months down the line, I think it will be hugely positive.
All right, usually positive 3-4 months down the line, and you can see early signs of that already. Competitive intensity, has that fizzled? You said that price, is at parity for all the players now, but below the line, and given the now, decline that we've seen in raw material prices, do you expect it to come back?
So, it has not fizzled. It has reduced in its intensity, definitely. That's visible. In terms of the, as I said, the price parity is now there, at least on the DPL. There will be some amount of, rebating happening, possibly going forward. Increase a little bit, in the sense that, if the prices remain at these levels, then obviously, there will be some rebating. But that is par, of course, in the case of any competitive category like ours, this will be there. But we are seeing a lessening in the intensity, as I have said, in the competition.
All right, lessening intensity in competition. Non-decorative paints doing well. Things are looking up for you. Just a final question before we let you go. On margins, you said that you are covered for the next couple of months. Thereafter, it will be accretive. What's the idea that you have where you'd like to end this year? Last year, on an EBITDA basis, you did about 15.5% margins. The fourth quarter, the exit quarter, which obviously benefited from the low-cost inventory that you had, you were closer to 17%. At what rate do you expect to end this year?
So we have always maintained that it will be in the range of 15 to 17%. We will have that, in that band itself, depending on, how the market behaves and how the competition behaves. We will be reacting, but we will be in that range of 15 to 17%, marginally ahead of last year, possibly.
All right, take that point. Always a pleasure speaking with you. Good times for the paint industry. Last quarter has been good, at least double-digit growth for the industry. You are looking at slightly better than that, and thereafter you expect by the end of this year to be margin accretive as well. Maybe in the second half, there could be price cuts that would be announced by the industry. The street likes that. The stock at the high point of trade, along with the market as well, which is now currently holding just shy of that 24,400 mark for the frontline index. But take a short break now. On the other side, we do have an interesting discussion lined up for you. Satyen Mamtora of Transformers and Rectifiers, along with him, Harshit Kapadia of Elara Securities joining in to discuss the power sector policy shift and, all those stocks which were in focus. We discuss the outlook on that.
Welcome back. 120 odd points on the Nifty. 24,390 is where we are at. I just want to quickly take a look at market breadth. 1,500 up, 1,350 lower. So this is, more evenly matched, but still more up than down at this stage. The transformer companies are all, of course, doing well. When I say doing well, after the 10%, 12% kind of cuts that we saw on Friday, they're bouncing back. Hitachi's up, and there's CG, which is up, and GE, which is up. So the ones which get highlighted the most, TD Power Systems is up about 7%. So there is some recovery which is coming through. Maybe we should look at transformers and rectifiers as well, which is up about 1.6, 1.7%. Or so. So that's the pack on the power transformer side, and that was the big story on Friday, that these all stocks sold off on the government giving a two-year exemption for these companies, for Chinese companies to be able to sell here in India. The other name where there's a bit of a move is Kirloskar Royal Engines, and we put this up as part of our standard brokerage report piece right before markets open, 3.6 higher. So we actually put out two names. There's Kirloskar Royal Engines, and of course the other one was APL Apollo. APL Apollo is also up about 1.5% or so, but there is, the Kirloskar Royal stock is doing much better at this point. Paras Defense is another one, Actually, defense is a space, right? I mean, Paras Defense, Bharat Dynamics, Data Patterns, these smaller defense names is another area which is quite buoyant at this point in time, early morning, in terms of all these trades coming through. Well, let's just go back to Vinny, right? And let's just listen into the other side, because markets, of course, sold all these names on concerns, but there are lots of opinion coming in with regards to what this could mean. JP Morgan and others all coming in. Vinny's got details. Vinny, take it away.
Yes, so for the power equipment players, mainly we have opinions that have come in from a lot of brokerages this morning. What Nomura is firstly highlighting, they said that the recent correction is an overreaction to what the government's extension has come in for these Chinese companies. They said this is a temporary order. It does not create a long-term effect and impact on this. So they're expecting a limited impact on the domestic T&D players or power equipment players. Jefferies, too, a similar view. They believe that these Chinese firms are allowed to supply from Indian manufacturing facilities. There's that import restriction that remains unchanged as well. So a lot of those components still have to come from India. That's why they maintain their positive view on these power equipment players, Hitachi Energy, Siemens Energy, among the other names. And this correction, they said, is a buying opportunity that comes in for them. Macquarie too is maintaining their stance on this one. They said the long-term margin risk is only if the exemption is extended. As of now, they don't see it as a major risk. Now, on the flip side, you have CLSA that is saying that this exemption could increase some bit of a competition, increase some pricing pressure for these domestic T&D players. They do not expect major impact in terms for the near-term volume impact, but some pressure in terms of pricing is what they're expecting. What we have coming in as an opinion from Elara as well, they too are saying that yes, they do not think there's a near-term risk on the competitive intensity in these power equipment segments. Manufacturing capacity would at least take 2 years to revive as well. So near-term, they're not expecting any risk on this one as well.
Thank you very much for that. Satyan Mamtora, MD and CEO of Transformers and Rectifies India, is now joining in. Thank you very much, sir, for joining in. This is Rima here. You want to tell us the impact that you see? Vinny was just telling us that CLSA sees increased competition and pressure pricing for domestic T&D players. For the industry, for you, what is the impact going to be on account of this 2-year exemption to 4 Chinese companies?
As far as we see as T&R, we don't see any major impact in terms of pricing or in terms of, if you look at it, we are also booked pretty much for the next 13 months. So we don't see any pricing impact on the products that we offer on the transformers. But yes, there would be some upside for us in terms of bushings, in terms of other raw materials that we are, like Taika and everybody else who has been also approved Nanjing bushing. So we will see that, there will be a slight release in pressure on terms of our deliveries to the customers.
Right. Mr. Mamtora, so you're, good morning.
Good morning.
So you're saying little impact over overall business? Order you booked out, capacity is booked out for the next 13 months?
30 months.
30.
30.
Sorry, 30. Yeah. That's more like it. And you're also saying that there perhaps is some upside in some areas.
Yes, there would be, because we are also facing a lot of shortage in terms of raw material for the transformer industry. So some of these factories will be supplying us the raw material. So that would be, we would be able to manufacture more. So that is the upside for us.
Is this, on the transformer side, just to go back to the broader question, is this about the kind of transformers you make? And maybe these 4 Chinese companies are not in those segments?
No, the Chinese companies are in those segments. We are into UHV and EHV transformers, ultra high voltage and high, so they are into this manufacturing. But, how much can a plant manufacture is what the question is. And from what we've heard and what we've looked at, a maximum of 144 transformers which can go out of the system for the Indian market, for this Indian transformer manufacturers, Chinese Indian transformer manufacturers. So I don't see a lot of pressure on the price or a lot of pressure on the orders also.
Sorry, that was a very specific number, 144 transformers from the Chinese manufacturers.
We are considering about 12 transformers a month, so 144 transformers a year.
So you're saying across these 4 companies?
Only one company is a transformer manufacturer. Rest of all are ancillary units.
Ancillary
for
units.
transform-
Okay.
for manufacturing.
Got it. And that is where the upside for you comes in. Where there's Okay. So 144. And how many transformers do Indian companies make?
So per plant, you can say between 15 to 20 transformers a month.
15 to 20 a month. And what's the industry sort of capacity, industry output? What has it been, say, last year? I mean, just a broad number.
I wouldn't have the figures right now with me, so I wouldn't like to.
Okay. Just wanted to put that 144 number in context that you said.
So it's just something that we are assuming. It's nothing that concrete. It's just that's something that we are assuming. I could be wrong.
Sure.
And broadly, the value of 144 transformers would be, assuming.
Ma'am, it will depend on the kind of transformer and the rating of the transformer.
Okay. Got that. So for you, sir, for FY27 then, since you are completely booked out, I presume there is no change or, to your revenue guidance of 3,200 crore, EBITDA margins of 15 to 17%?
Yes, ma'am, there is no change, but I would not like to comment on this because we are under SEBI things.
Got that.
And as long as board meeting doesn't happen, I would not like to comment anything.
Right.
And you also recently, sir, won an ultra mega order exceeding 1,000 crore rupees, which was your largest ever win. So what would the order inflow pipeline look like? Because in Q4, it was a bit subdued. What's the pipeline for you?
The pipeline total order inflow this year is around 2,300, 2,400 crores.
You've seen already, 2,400 crore has already been booked by the company in this year.
In the Q1. Ma'am, I would not like to comment anything on the company's performance as long as the board meetings are not over.
Sure.
Thank you.
All right, we take that point. Just a final word on this then. You do believe that, you said that there could be cases for an upside coming in for players like you because of the current order and the kind of demand, the higher demand that we've seen. Would you be able to quantify what is the possible upside that could be?
We are still in the process of understanding the whole situation. After board meeting, I'll give a brief about what is going to happen.
Okay. Sir, because of this incentive, do you see the 4 Chinese manufacturers looking to increase their capacity in India? Or it's not an incentive enough? Because it's only a matter of 2 years.
How would I comment on what Chinese would think, ma'am?
No, just asking for industry feedback.
They could, depending what their Indian outlook is, they could. And anyways, this is only for 2 years and still there are issues everywhere going around. So we don't know what is going to happen.
Got it. And from a business standpoint, not particularly asking you about the quarter that went by or, anything that would put you into any sort of regulatory, problem. Just wanted to understand how's execution been so far, especially with the Middle East crisis. Is the worst behind you? And going forward, what's your plan on diversifying beyond India, increasing exports?
So execution is as per plan. Everything is going smoothly. What we had envisaged has happened. So we are pretty much happy with what our performance is this quarter.
Mr. Mamthura, without going into any numbers, qualitatively, top down, can you give us a sense of, you booked out for 30 months. How strong is the tailwind for the sector, sir? The
tailwind, from what we have been looking at, it will last until 2037.
2037?
Yeah, 2037.
Okay. And sir, currently, what is the extent of the industry demand versus the supply to understand the mismatch?
Ma'am, like I said, we are booked for 30 months, so you can understand what the supply and demand looks like.
And what's the opportunity for exports from India, given Indian domestic demand is strong enough?
We at T&R are always, if we start exporting, then Chinese will come and, put up their plants here and they will start. So, we have to make sure that India's requirements are met first. Then we will see the world.
Okay. All right, take that point. Thanks a lot. But just stay on, Mr. Mamthura. We'll probably come back to you for a couple of questions as well on the industry. We also have Harshit Kapadia of Elara Securities joining in on the phone now. Harshit, what do you make of what took place on Friday? And now we have a lot of details out as well. It so appears that maybe the impact could be limited, and that's what the stock prices are suggesting as well. Would you say the same? And do you have any numbers to put into context?
Yeah, morning. So if you are absolutely right, if you look at the near-term risk for this particular order which has been passed by the Ministry of Finance is extremely limited because only one of the 4 companies are operational in India. The other 3 are presently non-operational, and for them to again restart it will take some time. And the moratorium period which was given was only for 2 years. So it at least will take around 1.5 years for these guys to restart, get employees back, and get the technology as well, which is right now in the market. So all these things are going to take time, and by that time probably will be closer to the exemption. Only if the exemption is, let's say, extended, there could be some competition, but presently in the near term, we do not see any risk at this point in time.
Harshit, Mr. Mamtora of TRIL was just telling us that he estimates about 144 transformers coming in 1 year from the 4 Chinese companies. That's about 12 a month. You want to put that, is that the number, ballpark number you've heard? And if you could put that 144 annual number into context for us.
So I think Mamtora sir would be a better, in giving the numbers. But at this point in time, what we are looking at, it's close to around 120 plus transformers, which is coming to into the market. That's the number that we are working on a backward calculation basis.
Okay, so 120 transformers should come in from the Chinese companies in the next 1 year. On account of this increase, there should be an incremental 120 because of the exemption. Is that correct? And what would be the value of this?
Yeah, so partly it would be, largely it would be TVA who has this capacity. The other 3 are completely non-operational. So, and what we understand, TVA capacity has been largely booked. They have a capacity of some 20,000 MV of transformers. So that could play up to close to around 500 to 1,000 odd crores kind of a number that right now we are building in.
And 120, which is your estimate, as a percentage of India's overall supply would be, broadly?
Very minuscule. That would be in single digit, yeah.
Okay, that's why you believe that it's not going to be too much of a threat. Thank you, Harshit, for joining in. Let's get back to the market. Technicals going is strong, up 0.5%. Nagraj Shetty from HDFC Securities is now joining in. Nagraj, the trade that you're recommending, and can someone buy at these levels?
Hi, good morning. Yes, market has been in a good shape, having moved up very well at from about 200 levels. I'm expecting a decisive breakout from here onwards. There may be a hurdle somewhere around 24,500, 600 level in terms of 200-day EMA and the previous swing highs. The way market has bounced back from the lower levels, it is indicating that in the short term, we are likely to see some sharp breakout on the upper side. The near-term upside target would be around 25,000, 25,100 once it breaks about 24,600. On that context, I have 2 stocks from a long side. First one is a BL defense stock has witnessed a buying from the lower levels after formation of a higher bottom reversal. I think for these stocks, the pain seems to have over, and the stock has formed an important bottom reversal, and I'm expecting more upside. From the current level of around 425, I'm expecting this to move towards the 445, 450, where the next hurdle could come in. The second stock is HEG. The HEG was moving in a consolidation phase recently after a sharp downward correction. The bottom reversal has formed around 500, 510 levels. The stock has moved up, currently placed at the edge of moving about 200-day EMA. The overall chart pattern is looking positive. I'm expecting further upside from here onwards, currently trading around 538. The next resistance to be watched for the stock price is around 570 to 575 levels in the near term.
Thank you, Nagraj, for joining in. Get into a break on the other side. Manisha Gupta will talk commodities. Stay tuned.
Welcome back. I think markets, of course, holding with a 100-point plus kind of gain, but we'll shift focus to commodities. Manisha is here for that. Manisha, morning.
Morning, and thank you for that, Prashant. Well, some of the gains in the markets are also coming in from the fact that you have the crude oil prices, which have continued to decline. So last week was 3.5% of a cut, and we've started nearly 0.3% on the lower side, continuing to hold below $72 a barrel. And with that, we are nearly 43% down from the wartime high on what we saw in sense of crude oil prices at $120 a barrel at one point in time in April there. Well, the recovery in oil flows via the Strait of Hormuz is one major reason for that. And this is following the 17th June US-Iran peace deal therein. The OPEC production meeting that happened on 5th of July, also on expected lines, by the way, has improved output by 188,000 barrels per day. This is exactly the same quantity that they did in June and July and in the month of May as well. And if you look at the total output increase in sense of quota additions that we have seen since war has been to the tune of 940,000 barrels per day. So that's additional oil now coming into the markets. This is as we look at traffic at Strait of Hormuz continuing to increase. The data comes in from Maritime Intelligence, which says that between 15th to 21st of June, it was 223 commercial vehicles that passed via Strait of Hormuz. The next fortnight or the next week, which is 22nd Jan to 28th, the number was upped to 343 commercial vehicles. So we're looking at more numbers passing through. And in the current markets, when you look at the current run rate, it is nearly 32 to 50 ships that are passing every single day. Much lower than 130 to 150, which was pre-war, but the number clearly seems to be increasing therein. Again, the higher supplies are not just because of OPEC and because Strait of Hormuz is functional yet again, but the UAE, remember, left OPEC on 1st of May and since then has recorded for the month of June a 3.7 million barrels per day. So UAE clearly increasing production. Russian exports have hit record numbers in the month of June. You have Iraq pushing for higher OPEC quota or has threatened to leave OPEC as well. And then you have Saudi Arabia exports, which are nearly 80 to 90% of pre-war numbers. Markets are looking at increase in Iranian oil supplies as well. Expected that 44 million barrels since US-Iran peace deal already has passed Strait of Hormuz. So the oil really seems to be flowing from everywhere, major producers, including Canada, Guinea and US as well. So you are looking at perhaps a supply glut kind of a situation coming back by the second half of this year. The OPEC ministerial meeting that is on 2nd of August is something that the street will now watch out for, and whether or not Iraq is leaving OPEC will be finalized by then. But more importantly, it is the crude outlook, and that is my final plate as well. Citi says that the Brent can slide to nearly 85 in this year and 75 by the next year. Yeah, that is coming in from Goldman Sachs. UBS has put it 83 for this year and 75 for next year. ICICI puts it at 79 this year, much lower than others, and 65 to 75 next year. And then you have JP Morgan, quite bearish really, 60 this year and 57 in the next year as well. Saxo Bank talks about 75 as well. Crystal Energy is talking about sub-60 levels, but it is Citi which says 60 to 65 by end of this year where the crude prices could come in. So that means another 10% of a decline coming in for the crude oil prices in the next 6 months perhaps.
Okay, all right. Well, Manisha, thank you very much for that as always. Well, we'll take a break. We're back. Latha discusses what to expect from banks in the upcoming first quarter results. Macquarie Suresh Ganpati helps her with that discussion. Stay tuned. Coming up.
This quarter, the banking sector results are going to be tricky to guess. The loan growth numbers are very positive at 18% in the month of May, YOY, for the industry. Deposits growth is a bit disappointing at about 12.2% for the entire sector and even less for public sector banks. But the cost of funds has fallen for everyone in June after the FCNR deposit scheme was announced. And the cost may fall further. Also, banks may make mark-to-market gains on their investment book, on the bonds they hold, because yields have risen and yields have fallen and bond prices have risen from April to June. To get a handle on how banks are likely to perform in the Q1 numbers and in the year ahead, basically a general outlook on the banking system, I have with me Suresh Ganapathy, the banking expert from Macquarie. Good morning, Suresh. Thank you very much indeed for joining us. Well, first, let me handle the quarter. Like I said, the cost of funds is already showing a bit. Mark-to-market gains are showing. What's your overall expectation from the banking system?
Yeah. So, Lata, this FCNR thing will not flow into the numbers in June because it's going to be a very small number and it won't move the needle. The way you should look at here is that because the credit growth is strong and all of them have reported rising LDRs, if you look at the recent update, that itself can cushion the margins, point number one. And also the rising LDR is largely on the back of, I would say, retail loans. As we understand from a lot of banks, retail disbursements have been pretty strong in the April to June quarter. And that means you're going to have a portfolio mix shift a bit towards retail. And on top of that, rising LDR means that your margins, at least on a base case basis, is going to be flat on a QOQ, and certain cases maybe even slightly up. Okay. So we're looking at a strong growth, loan growth. We're looking at a decent margins. And we're also looking at treasury profits being relatively strong. So net, it's going to be, I would say, actually a good quarter for the banking system. June is going to be turning out to be a good quarter, and asset quality anyways, as you know, is very fine.
And markets always look for the next quarter as well. Your expectation is the current July, September, October will be even better?
Correct. So the way it works, of course, the way it works here is that we'll have to see the amount of FCNR mobilization, and bulk will happen in the July to September. So that also will be put in government securities, and maybe there is a further downside to the bond deals, at least from a very interim basis. So net, I think we are looking at a decent outcome even in the July to September quarter for the banking space, and even second half. Specifically with respect to banks, Lata, if I were to just address your slightly longer term picture question, the Fed's comments, the new governor's comments have been a little bit more hawkish. We ourselves are expecting, Macquarie itself is expecting 2 Fed rate hikes. If that indeed is going to be the case, then the pressure for the RBI to raise rates also increases. So that is positive for private sector banks. So, the entire banking system for that matter. So net, I think a reasonable outlook for the banking system heading into FY27.
Yeah, only our governor said too premature to talk about rate hikes, so we don't get it in August. Yeah, but you're right that if we are heading into a 6% inflation because of food in the third quarter, we should expect perhaps a rate hike. Suresh, let me come to individual performances. The one that we have to start with is HDFC, because their results can check only one box. There are other boxes. Are you positive on the stock and vis-a-vis other PSU other private banks?
Sure. So look, I think if you look at the quarter itself, Lata, the pre-quarter update that they've reported, they have had a pretty strong both loan growth as well as deposit growth. Usually, Lata, the 4Q is so strong that 1Q turns out to be flattish in terms of deposit accretion or very marginal. They have managed to add 70,000 crores of deposits in 1Q itself. So the market has taken it well. As you know, the stock is up 3%. And I guess you have to look at it in this way that there are things which are getting sorted out in terms of the chairman and the CFO appointment, or the CEO extension is also due. And in our view, so she gets an extension for another 3 years. So net, I think things are falling in place. The eventual outcome is going to be what happens to margins. It's going to be a slow progress, but there also we believe the margins have bottomed out at fourth quarter level. So things are looking to improve further going forward for HDFC Bank, and for that matter, many private sector banks. Even Axis has reported a pretty strong loan growth and deposit growth numbers. So things are looking good for the private sector banks.
Okay, and so your hierarchy would be?
HDFC Bank, Axis Bank, and ICICI. See, we are sticking with the large top three names. Kotak is slightly lower down the order because there is, of course, as you know, uncertainty surrounding the CEO succession, and typically stocks don't do well under that kind of an environment. So we are sticking with these three names: HDFC, Axis, and ICICI at this point in time.
Fair point. And their deposit growth is a shade lower compared to other private sector banks. What about a RBL? I mean, it seems to be a dark horse having raised so much capital. Do you cover that stock at all?
So we don't cover the stock, so we won't be able to give a particular, what I would say, subjective view on the name. But having said that, look, I think the point here is that, with having raised so much of capital, if you look at it, the deposit growth was down 10% QOQ because they let go of a lot of these wholesale bulk deposits, right? And I think you have to look at it in this way that when you have about 37% of your deposits in wholesale, the right strategy is to get the right mix of retail and wholesale. And 37% is too large a number compared to, say, 15% for HDFC Bank. Now, HDFC Bank is not necessarily the right example for RBL, but nevertheless, we have to bring down the proportion of wholesale deposits. And with so much capital being raised, what's the need to keep taking recourse to some of those high-cost wholesale deposits, right?
Yeah, so therefore, in the non-large banks, what is your pick? First, private sector. I'll come to the public sector in a bit.
Oh, no, we'll still sit with the likes of City Union Bank. See, today what has happened, Lata, here is that we do see the large, the smaller private sector banks trading at a similar valuation compared to the large cap private sector banks. And large cap private sector banks do report a much better ROA compared to the smaller cap private sector banks. If that indeed is the case, why pay the same multiple for the smaller ones? And especially in an environment where deposit competition still remains and the large cap guys are doing a way better job compared to the smaller ones. So we are sticking still with the large ones relative to the small guys. And within that, as I said, we have been big fans of City Union Bank, and City Union Bank continues to do pretty well.
Okay. Now let me come to the PSU banks. They clearly upfront tell us to the face that we are not going after high cost deposits because we have a much better loan deposit ratio than the private sector banks. As you point out in your report, that cushion is eroding. But for the moment, it is there. So are they buys?
That's a too myopic a view, Lata, that one takes, that you just for the moment. Yes, indeed, for the moment, the cushion is there. And also, as you know, from April onwards, the new LCR rules come in. And as we hear, the public sector banks will be slightly based on the, slightly better placed on the LCR front compared to the private sector banks because they may assume a lower runoff on the internet banking deposits and land up having a higher LCR number, right? So, and of course, the FCNR money comes in, though it will be more for private sector banks than PSUs, but there is a temporary liquidity, let's put it this way, reprieve for them. So therefore, from a very near-term basis, yeah, things are looking okay from an LDR perspective. But remember, LDR is at all-time high levels at 83%, right? And at a system level, loan growth is running at about 17-18% deposit growth at 12%. Look at the current quarter update itself, right? PSU banks deposit growth is way weaker than private sector banks. And 500-600 basis points, Lata, is simply not sustainable. At some point in time, they have to converge. You may have a 200-300 basis points gap, but 600 is too high a number, which I see converging in the second half of this financial year.
Okay, but is there a pick among the PSU banks itself? Because you point out that BOI and BOB, I think, are doing better on deposits.
No, SBI should do better. I mean, in the sense that, we also saw that episode with BOB where we'll have, there is going to be a 25 to 30% impact on earnings. Almost the quarter's profits is going to get wiped off. I mean, look at it in this way, right? I mean, SBI lands up getting gains from the NSE stake sale, SBI mutual fund. There is a lot of cushion for SBI this year. And on top of that, I think margins at 2.8% last quarter have bottomed out. So we would definitely prefer SBI than any of the other PSU banks at this juncture.
Okay. But is there any bank that you're picking up in the... SBI is the only one you pick up in the PSB?
Yeah.
Okay. Now, if you go towards the second half, are you expecting banks to get a look in? Ultimately, the HDFC Bank, of course, suffered for leadership reason, uncertainties, etc. But the big reason why they suffered is FIIs left India. When they leave India, they have to leave HDFC Bank because that was the most large liquid stock that they possessed. Do you think overall from a market angle, which is the set of banks to bet on?
So So, Lata, if you look at it, just now we wrote a report saying that FIs finally in the last couple of weeks of June have bought India to the extent of 15,000 crores net inflow, and 14,000 crores have come from income in banks, right? Financial services, right? So, if they are going to buy anything in India, when they start coming back, they have to start buying the largest proportion of the index, which is financials. And within that, private sector banks are best placed. We have seen a lot of queries over the course of the last couple of weeks, some from value funds, from some long only funds on HDFC Bank, Axis Bank, even ICICI for that matter, right? So you are seeing interest coming back in financials after a lull of about 12 months. I mean, I've been covering the sector for 25 years with a lot of interaction with FII. So finally, I think it's good news. Monsoons are back, and we've also seen FIIs back. Hope they sustain both monsoons as well as FIIs. And if the buying continues, it is going to be in financials, within that private sector banks, within that the likes of HDFC, ICICI and Axis, how we look at it. So that's where the buying is going to happen, Lata.
Yeah, valuations wise. Just a word on NBFC. I won't have time, but immediately they are the beneficiaries, aren't they? Look at the market rates. They are going to borrow 1 percentage point cheaper.
Yeah, but Lata, it's already there to some extent in the price, right? So look at the kind of relative outperformance in the last 2-3 months. NBFCs have very clearly outperformed the banking, the private sector bank space, So more or less, I would say in the price, we are looking at a tougher second half, let's put it this way, in terms of normalization of bond deals, and perhaps we don't know what Sanjay Malhotra does to the RBI governor does to the rates. So there are several moving parts there. So while the current quarter and maybe the subsequent quarter looks to be okay, I think still from a 12-month perspective, you buy banks or NBFCs, especially the fact that we are expecting normalization of the rate cycle, both on the bond yields as well as on the repo front.
If you can make a brief answer, asset quality is not at all a problem for anyone?
Not at all. I mean, even the RBI's latest gold finance report talks about, report on what you call FSR talks about gold lending, which is now the second largest lending, having LTVs of as low as 60% or below. Sufficient margins exist, Lata. Overall, at an NPL level, things are looking to be very, very fine for the overall system. We also have this credit guarantee scheme, which has come for the SMEs. Fortunately, the war also seems to be resolved. Oil prices are down. So a lot of things are working in that favor. So whatever little pains here and there, which we had on asset quality, also doesn't seem to show up in any way. So yes, we are looking at a very strong asset quality outcomes. RBI's FSR also talks about slightly an uptick in NPL, but RBI's FSR has been way more conservative than the actual outcomes going past track record. So if that means we are looking at a reasonably good NPL scenario even in FY27. Yeah.
Okay, but you're also leaving the market on a very optimistic note. Thank you very much, Suresh, for prepping us for not just this quarter, but for the quarters ahead. The market on a slight incline and Bank Nifty is leading. So taking cues from Suresh Ganapathy, perhaps. Wrap up on Bazaar on that note. Chartbusters after the break.
आया वो ट्रेल वाले ने. Banking bellwether HDFC Bank's first quarter loan growth comes in at a 5-year high over 30 lakh crores. Axis Bank posts an over 18% growth in deposits and advances between April to June. Stocks of both lenders upbeat in early trade.
Kotak consumer perks up following expectations of top-line growth in the high teens and EBITDA ahead of double-digit guidance for the June quarter. Meanwhile, Nykaa's fashion vertical top-line comes in at a multi-quarter high for Q1 FY27. Both stocks eke out gains on the back of strong Q1 updates.
Kotak Mahindra Bank's shares skid in early trade despite posting steady advances in deposit growth in the June quarter. An over 170 basis points fall in CASA ratio triggers concerns around continued weakness in the lender's liability franchise.
BofA Securities initiates a buy rating coverage on APL Apollo Tubes with a target price of 2,170 rupees a share, citing company's leadership position in India's structural steel tubes market, while Jefferies sees a material upside building in for Kirloskar Oil on the back of the data center opportunity, both gain in grade.
Defence pact firing away in trade. Defence Acquisition Council clears decks for purchases worth 52,000 crore rupees. The move is aimed at enhancing operational capabilities of the Indian Army, Navy and Air Force. Shares of Bharat Dynamics, Data Patterns, Paras Defence and, among others, BEL are higher on the back of this announcement. But it's a new week, but still the same result. The Nifty is doing extremely well. 24,400 now on the frontline index, 140 points higher. The Nifty Bank's actually doing a lot better, so that should be updated. Up for you on your screen. 23,702 was long ago. Right now, as we speak, it's 24,400 on the frontline index. We have the Midcap index, which is gaining not as much as the frontline index, but largely in step out there with slightly more number of stocks which are advancing than the number of stocks which are declining. The story of the day, however, has to be the Nifty Bank. 2 days of pause, the Nifty Bank actually has now come back in roaring fashion, up above that 58,350 mark as well. The important part, however, is the IT pack, which is doing extremely well for the last 2 days when the Nifty Bank took a bit of a breather, is now taking a bit of a breather. Let's see where that goes as well. So the IT index in the red, the Nifty Bank is supporting the cause of the frontline index. Hi, Vinny.
Hi Mangalam, good morning. Today is actually the fourth day of gain that we're seeing coming in for the markets as well in terms of the Nifty. And obviously the July month has started on a positive footing. We've seen the rains come back and so is the market trading in the green as of now. The day's highest point is what the Nifty is trading at. What's also doing well today is going to be those capital good names, right? On Friday, we saw that fall coming in for most of these names. Hitachi Energy, Siemens Energy, CG Power, and that was because of the exemption coming in for some of the 4 Chinese companies. But it's not as much of an impact is what brokerages are highlighting. So today, capital good companies making a comeback, and we said a whole host of Q1 updates that have come in that are keeping some stocks in focus as well. But on that note, let's also bring on board Shivangi Sarda for a technical check on the markets. Shivangi, good morning. Thank you so much for joining us on the show. We've managed to continue to see that momentum in the markets. Green continuing on the screen. What are the levels now we are keeping an eye out on for Nifty as well as Bank Nifty?
Very good morning, Vinny and Mangalam. Thank you for having me. We've seen that the markets have cheered quite well as we, commenced the July series. And positive rollover from the June has also kind of added the momentum. Now we're looking at 24,500 on an immediate basis next for the index, but the levels that we're actually looking out at is 24,700 levels positionally. Now, support has been shifting higher, which is a good sign, and we've kind of recouped all the losses of the previous session as well, holding very well at the higher zone. So buy and decline to continue with the support pace of 24,200 levels immediately on the Nifty index. Now, talking about the Bank Nifty, we've seen that this index had kind of a lackluster move from the last 2 sessions, but today a good amount of recovery and comeback can be seen here as well. Thanks to some of the heavyweight private names which are holding strength, and we've seen that slow and gradual OI buildup can be seen in some of the names which are adding to this one. So we're looking at 59,000 next for Bank Nifty with a support base at 57 and 950 levels.
All right, there are updates coming in on the rain as well. The Maharashtra SDMA has said non-essential government offices advised to be closed. Citizens are advised to avoid unnecessary travel and follow official updates. This morning we spoke with the IMD as well, saying that today is likely to be a red alert day before monsoons recede from tomorrow onwards to return from the 15th. So hope wherever you are safe right now. And while we started the show, we had news coming in from the local trains as well. Between Virar and Vasai, there have been travel services which have been disrupted on the local trains. But back to the market, no disruption on the up move that we're seeing on the Nifty right now. Shivangi, you did say that the market continues to do well. Right now, as we speak, we have a fresh bout of buying in Reliance as well. That stock's moved to the high point of trade. So if the Nifty Bank continues to do well, we have Reliance as well, which is doing well. What other individual stocks would you bet on right now?
Absolutely, Manglam. The engine of the stock market are doing the heavy lifting. And stock-specific action on my radar is first up is Realty space, which has done quite well with the kind of order inflows here. This entire space has a lot of tailwinds, and I'm looking at Lodha currently, which has given a breakout on the monthly basis after a consolidative 2 months. And on the daily frame as well, we've seen from the last 5 sessions it is continuously making higher top, high bottom. So this one's looking quite positive, and recommending a buy here. And the next targets that I'm looking out is 1135 levels for Lodha, with a support base of 1050 zones. And the second pick on my radar is Apollo Hospital. Of course, diagnostics have been the drivers in the previous series, and in this one as well, technically, we're seeing that it is holding on to the key exponential moving averages as well, on the monthly as well as on the daily time frame. Looking quite positive. Any small declines are being absorbed by the buyers, and I'm looking at the next targets of around about 93.50 here for Apollo Hospital, with a support of 8,700 levels.
Okay, Shivangi, thank you so much for joining us on the show this morning, giving us your individual bets as well as in terms of levels to watch out for the market. But let's focus now to a special segment where we will get you a few ideas for profit from Money Control Pro. Lekha, who is joining us from moneycontrol.com, and she's going to be talking about a stock that she's been tracking closely. Lekha, over to you.
Yes, thanks. So my stock pick is SGS Enterprises, which is emerging as one of the most compelling premium auto ancillary plays. Now, unlike conventional auto component manufacturers that rely primarily on vehicle volumes, SGS is expanding its share of value per vehicle through a growing portfolio of high-value products such as optical plastics, cover glass, in-mold labeling, in-mold decoration, in-mold electronics. These are witnessing increasing adoption across premium ICE and electric vehicles. Now, a key growth catalyst is its partnership with BOE Veritronics to manufacture automotive display solutions in India, significantly expanding its addressable market. The company is also strengthening its customer base with marquee additions such as Hero MotoCorp, Autoliv, Whirlpool, and Visteon, while targeting an increase in export contribution from 10% currently to 14 to 15% by FY28. Importantly, SGS is investing aggressively in capacity expansion across chrome plating, optical cover glass, and advanced surface solutions. And these investments are backed by a strong balance sheet, a healthy cash conversion, and return on capital, thus enabling it to fund the expansion almost entirely through internal accruals. Now, looking ahead, management expects SGS to continue growing at 1.5 to 2x the underlying automobile industry and expects EBITDA margin to remain around 28-29%. Now, we believe SGS is well positioned to deliver sustained earnings, and the current valuation of 26 times FY28 estimated earnings, the stock appears attractive.
Right, Lekha, thanks a lot for that. So that's an idea for profit coming in from our colleagues at Money Control Pro. On that note, what we'll do is take a short break, come back on the other side. We'll get you more on the markets and a lot of other stock-specific action. Keep it with Chartbusters.
Thanks for staying tuned into CNBC TV 18. You're still watching Chartbusters. Let's keep it going with individual names in the market that are moving around as well, right? While the Nifty is just slightly below 24,400 mark as of now, names like Aegis, Wopic Terminals, that has picked up pace in the last 30-odd minutes, 40-odd minutes. And you've seen names like Clean Sciences, that's also picked up pace, as well as Tube Investments are some of the names that are buzzing in trade. But apart from that, you have defense companies that are in focus today as well. On prospects of higher ordering, Ria is getting us more updates on this one. Ria, good morning.
Well, good morning. On Friday, the DAC had approved AONs worth nearly 52,000 crore rupees, and this was across the Army, Air Force and the Navy. So let's take a look at some of the key approvals and also the companies that will benefit from these approvals. First up, for the Army, they have approved the Akash Tarang Anti-UAV Electronic Warfare System, and for this, Bharat Electronics, Apollo Micro as well as Data Patterns are expected to benefit from this order. They've also approved the Man-Portable Anti-Tank Guided Missiles, for which Bharat Electronics as well as Bharat Dynamics both will see certain ordering coming in from this. Apart from this, they have also approved the medium-range surface-to-air missile as well as the very short-range air defense systems, for both of which Bharat Dynamics as well as Bharat Electronics will see benefit. And lastly, for the Army, they have also approved the jet-based kamikaze drone system, for both of which BEL as well as Solar Industries will see some ordering. Apart from this, for the Navy, they have given the approval for the multi-influence ground mines, for which Apollo Micro as well as Bharat Dynamics will benefit, and they have also approved the naval ship-borne unmanned aerial system, for which Hindustan Aeronautics as well as Bharat Electronics are expected to contribute. And lastly, for the Air Force, the approval has been given for the fixed-wing high-altitude pseudo-satellite, for which Hindustan Aeronautics, Data Patterns, BEL, Astra Micro as well as Paras Defense all are expected to see some ordering on this front. And in fact, all of these defense stocks have been buzzing in trade today, with Paras Defense being the highest gainer, nearly a 5% gain on that one. Bharat Electronics also seeing a 1.5 to 2% gain, and the entire defense index is also up over 1% today.
All right, take that point. AON is acceptance of necessity, which the Defence Acquisition Council has put out, which implies that from here on there will be a lot more orders on these products itself. But the top Nifty loser is Kotak Mahindra Bank, and this after their business update that came by. Ananya joins in to tell us what is it that the street does not like so much about Kotak Mahindra Bank. Ananya.
Well, yes, Kotak Mahindra Bank is under pressure following their Q1 business update. Now, if we see, there's a healthy loan growth that is going on, with net advances rising 15% year-on-year and 3.2% sequentially. But the liability side is disappointing. Deposit growth came in at 12% year-on-year and remained largely flat sequentially, while end of the period CASA declined sharply by 7% quarter-on-quarter to 40%. Leading to an increase in the credit to deposit ratio to 89.4% from 86.6% in the previous quarter. Now, Motilal Oswal has maintained its buy rating with a target price of 397, noting that the loan growth was broadly in line with expectation, but weaker deposit growth and the sharp decline in CASA were the key disappointments here. Now, the brokerage values the stock at around 1.6 times FY28 estimated adjusted book value and 11.7 times FY28 estimated earnings. So, going ahead, sustained improvement in deposit mobilization and CASA will be crucial for investors.
Okay. Thank you so much for that, Ananya. But let's move on and talk about a couple of names that are buzzing around. This is on the back of some orders that they've received. One is Shakti Pumps, the other one is Oswal Pumps. Now, Shakti Pumps, the company has received a 353 crore order approximately. This is from the Maharashtra State Electricity Distribution Company Limited, that is MSEDCL. And this order is mainly to supply 15,000 off-grid solar photovoltaic water pumping systems across Maharashtra. This is an important update for the solar water pumping systems for them. Other one is Oswal Pumps. They've also secured an additional order of around 235 crores. This is also from the Maharashtra State Electricity Distribution Company, and this is under the PM Kusum B scheme as well. This is for 10,000 off-grid DC solar photovoltaic water pumping systems. Both these companies are into the solar water pumping systems. They provide for a lot of drainage systems and drainage pumps as well. And that is why an important update coming in for both these companies. Stocks are holding on to gains of around 5% in the trading session, Mangalam.
All right, so those are a bunch of stocks which are buzzing around. What we'll do is take a short break. On that note, come back and focus on a lot of other stock-specific action as well. Welcome back. L&T is actually moved higher right now. That's currently at the high point of trade. In fact, from its 52-week low, the stock's seen a fair amount of recovery, nearly 23%, and now just less than 10% away from its 52-week high as well. Had been one of the bigger casualties of the war, and now seeing some recovery. And as we speak, we have the auto pack as well, which is doing extremely well. The auto index comes up for you at the high point of trade. But we have Vedanta Group companies. They're reacting to their first quarter business updates. So joins in with the details of what the street like, what it didn't.
So it's a mixed reaction that we are getting from Vedanta Group companies after all the companies have released quarterly updates for Q1 FY27. So we'll start with the company which is trading with gains. First one is Vedanta Aluminium. Company has reported highest ever quarterly aluminum production. It was up 5% year on year, up 3% on a sequential basis. But alumina production has fallen on a sequential basis due to unplanned shutdown. For Vedanta Power, Meenakshi Energy has seen an increased production, and that has boosted overall sales. So total sales were up 38% year on year, and if you just talk about Meenakshi Energy sales, it was up three times YOY and up 16% on a sequential basis. One stock that is trading with like sharp cuts, it's down almost 8%, that is Vedanta Oil and Gas, and understandably production was down both on a sequential basis as well as year on year. So gross oil and gas production was down 17% year on year and down 4% on a sequential basis. Next one, Vedanta Iron and Steel. Odisha and Goa have seen an increased production, while Karnataka in the state of Karnataka production was down, and that's the reason total production has increased 4% year on year, while it was down 3% on a sequential basis. Last one is Vedanta Limited. It has seen a mixed production update. Zinc India has reported a minor increase year on year, but was down on a sequential basis, and ports have seen an increase in volumes both on a sequential basis as well as year on year.
Okay, thank you so much for that, Sudarshan. We'll keep an eye out on those names from the Vedanta basket. But let's move on and talk about a couple of other names. We've seen some brokerage notes that have come in on APL Apollo Tubes and initiation coverage from BofA Securities. They're initiating coverage with a buy rating, target price of 2,170 rupees per share. BofA expects APL's adjusted PAT to deliver a 15% growth over the next couple of years. What are going to be the drivers for the company? Organic demand in real estate and infra is expected to see an improvement. Then you have capacity that will be added in the newer markets, newer products coming in there as well. So that will lead the growth. You have rich product mix as well as exports. All these are the factors that will drive the profits of the company. Apart from that, they said that it's expecting its EBITDA margins also to grow to around 5,465 per ton from the current levels of 5,161 per ton. That's around a 21% earnings CAGR growth expected here as well. Overall, they believe that there is an inflection in terms of the volume, particularly in the second half, and that is likely to be the key growth driver and key catalyst for APL Apollo Tubes going forward. The other one is Kirloskar Oil. We've seen the stock buzzing in trade. We have an initiation note, I beg your pardon, coming from Jefferies. They are initiating with a buy rating. Target price is 2,815 rupees per share. Recently, obviously, the data center order that came in from Hypernext for Kirloskar Oil was the reason for the buzz. Now, obviously, Kirloskar Oil is the second largest power backup generators in the market. So big company there. They're moving the value chain upwards as well. High horsepower side of the businesses. Now they're focusing a lot more. They've spoken about capex over there. What is Jefferies expecting? They say that there could be a 22% EPS growth in the next 3 to 4 years. Margins expected to improve as well. And currently, the stock is trading at 45 times PE to FY28. And current valuations, they expect that to sustain for the company. Data center is obviously going to be a big key positive trigger for them going forward as well. And today, also, the stock is holding on to gains of around 2 to 3%.
2 to 3% indeed. It's been a big mover, has doubled in the last few months. But let's talk about some important developments as the government battles several complaints on social media over ethanol blending in petrol. Petroleum Minister Hardeep Puri has said that the ethanol blending may actually affect vehicle mileage, and he also added that there are several other factors that play a role. Speaking to reporters earlier, he also said that there is enough room in the market for all fuel technologies to coexist. Listen in.
Somebody is saying that fuel mileage is going to be dropped. Arey bhai, it's now well established that when you have ethanol, they use it in racing cars also. The acceleration increases. What is that thing called? The knocking. That improves. Mileage, yes, it may drop a little. But it may drop a little. Mileage can drop a little because of various things. If you're driving from here to Gurugram, and if you follow the route I follow, then there are many points at which there are toll bridge, other things. So calculate that. So we've been very open about it. My response to that is there is enough space in the growing Indian consumer market for all systems to coexist.
On that note, automakers such as Maruti Suzuki, Toyota also weighed in on the use of E20 fuel. And speaking to my colleague Shivani, representatives from the automakers said that they have not received any complaints regarding the use of E20. Listen in.
We want to give a statement of confidence that Maruti Suzuki has been fitting E10, has been, making its car compliant to E10 way back before 2010, which is more than 16 years now. And when we did that, we had sufficient factors of safety that even if we use E20 fuel on those E10 cars, they are fully, they do not have any kind of issue at all in terms of either wear and tear or corrosion or any kind of impact on the life of the components that go into the car. So we have done extensive testing and we have validated that it does not cause any problem. Not only our validation in our R&D, this is our field experience. We would have serviced more than 2.5 crore cars. Out of these 2.5 crore cars, at least about 1.5 crore cars were more than 3 years vintage, which means they were made in India when E20 was not mandated, which means they were E10 compliant cars. So on these E10 compliant cars, if we use E20 fuel, they would have showed up some problem or the other if the concern was true. Having gone through these 1.5 crore customer servicings all over India, we have not noticed anything of concern. So that gives us the confidence to convey to our customers that we need not be concerned.
The E20 program is not an overnight program. There was extensive testing and certification done at all levels, whether it is the OEMs or the independent testing agencies like ARA, etc. There will be no impact, like I said, on older vehicles using E20. All vehicles that have been produced after 23 are fully compliant materially. From a fuel perspective, as per the tests, the drop in mileage is not very significant. It is in the range of, like we said internally, 3 to 4, perhaps 5%.
All right, the stock that is surging right now is Reliance, and as a result of which the Nifty is at the high point of trade. So what we'll do is, on that note, take your leave from this edition of Chartbusters from Vinny and me. Thank you so much for watching. The team of Trading Hour comes up after this break.
Good morning. It's time for Trading Hour. We are coming to you live from the CNBC TV18 Motilal Oswal studios. I'm Hormuz Fatakia. Joining me today is Reema Tendulkar. Reema, good morning. Carrying off from where we left off last Friday, in fact last week as well. And in 4 trading sessions, the Nifty is well over a 500-point uptick.
Well, indeed. And actually, the gradual uptrend began about a month back, because even last week, when we wrapped up on Friday, it was the fourth consecutive week of gains for our markets. And this week, too, we've started off on a strong note. And this comes at a time when there is weakness across most of the Asian markets. So the Korean markets are down 1.5%, recover from the day's low, but the Japanese markets, too, down by nearly 0.8%. Once again, it's the large caps where you are seeing a bigger momentum. The mid-cap index is up 1/3 of a percentage point. And right now, at least, the advanced decline ratio is slightly in favor of the gaining side. Considering that we have a 500-point rally in the Sensex, I guess we would have wanted a better advanced decline ratio on a day like today. But the focus is all on individual names. Lots of quarterly updates have come through as we kickstart the earnings season later this week with TCS on Thursday. Hormus has walked over to the big wall and he's going to put the spotlight on all the big movers at 11 o'clock.
You know, almost the entire market came out with business updates over Friday and over the weekend as well. But the Nifty is the focal point right now because it is now at or is nearing very, very important levels. 24,420 is where we are. So now we are almost 60 points away from the intraday high of the 7th of May, which was 24,482. That's the first level that needs to be seen on the upside. Of course, 24,500 is the bigger barrier, but that's the intraday level that needs to be crossed first up. So around about 60 points away from those levels. Of course, at the highest point of the day is the index. Yet another strong start to this trading week, possibly the week of earnings season beginning as well. And the Nifty Bank is the one that's doing well today after 2 days of underperformance, taking a bit of a break, and now the Nifty Bank is up 370 points in today's session, back above the mark of 58,000. 58,700 is the higher end of the trading range, which is a very broad one for the banking index. Take a look at the banking updates as well. Very, very strong banking updates barring one or two. HDFC Bank is now up 3% and it's good going for India's largest private lender. After all the news flow that has been surrounding it, the stock has seen it's recovered almost 100 rupees from the 52-week lows. AU Small Finance Bank, IndusInd Bank also doing well. The update showing a sequential improvement, even though on the YOY basis the advances were still lower. But the one drag today is Kotak Mahindra Bank. We'll talk about that in just a bit as well. 3.5% lower on Kotak Bank after its business updates. Look at the FMCG business updates as well. They also are ones that stand out. Radico Khaitan, after the update that it gave with regards to the number of cases it sold during the quarter with regards to one of its premium brands, beg your pardon, 4.5% higher there as well. Godrej Consumer is mildly off the highs of the day, but a very strong update there as well. And Senco Gold, after a 60% revenue growth year on year, stock up around 4%. The power transmission names are rebounding in today's session after declining anywhere between 7 to 9% on Friday. GE Vernova has snapped a 9-day losing streak, is up around 3.5%. Siemens Energy is up 4%, Hitachi is up 3%, CG Power 2 trading with gains of around 3%. The defense stocks as well, all the announcements made on Friday. Zen Technologies is up 5%. Paras Defense is the top gainer on the defense index today. Dynamatic Tech, Data Patterns, all of them seeing good gains in today's session. And lastly, at 50 stocks at 52-week highs, another day, another 52-week high for Aegis Logistics, another 4% added to the stock today. Manappuram, after the news flow with regards to its top management, is up 3.5% as well. Granules India, after a US FDA approval, is up 2%. And Spark, among the small cap buzzers today, 8% higher on the stock, and of course at a 52-week high as well. Rima.
Thank you very much for that. Let's move on then to the consumption pack. It's in the spotlight on account of the various business updates, and they're looking good. Whether it's Dabur, Godrej Consumer, or Nykaa with a more than 30% top-line growth expected. Mangalam now joins in with his analysis.
Well, the consumption index is definitely the sector of the day, and we got strong updates coming in over the weekend. So let's start with Godrej Consumer. Consolidated revenue growth seen in mid to high teens, in fact, which is ahead of the full year guidance of double digit, and this is led by high single digit volume growth as well. They expect the EBITDA growth to also be on an absolute basis higher than the street expectations, in fact their own guidance, and as a result of which the stock is higher in today's trading session so far. Margins would be lower on account of exceptional cost pressures, but they did say that input costs have begun to ease out towards the end of the quarter, so that means there would be progressive margin improvement as we go along in the year as well. FSN e-commerce, or Nykaa as we know it, strong performance out there as well. Consolidated GMV growth in early 30s, overall growth would be about near 30s as well, with the beauty vertical growing in late 20s. The growth this time around will be led by their fashion business, where growth is seen in mid-50s, which is a multi-quarter high, and a large part of that could be attributed to their partnership with Nike. We have Dabur. The update is strong, but the stock has come off highs because the street wants to understand a little better the prospects of business coming in for their healthcare as well as their food and beverages business. Double-digit consolidated revenue growth, with India business posting near double-digit growth. Home and personal care has grown in near teens, so that's a positive, no problems out there. Food business will deliver a record high double-digit growth with recovery in beverages quarter on quarter, so that's a positive. And healthcare as well showed signs of recovery in the second quarter. EBITDA margins expected to remain stable because of the price hikes that the company has taken. Finally, we do have Senco Gold, a solid update coming in. Revenue growth at 60%, retail revenue growth at 48%, same-store sales growth at 38% as well. Strong performance from both the wedding season and festive demand season. Good performance coming in from their old gold exchange and the diamond business as well, which may support margins. But my sense is for a lot of the jewelry players in the first quarter, you will have an exceptional gain coming in as the customs duty was hiked during the quarter. So those factors are keeping Senco Gold higher in trade today as well.
Thank you very much for that. Get into a break. On the other side, we'll discuss bond markets. Manisha Gupta joins in as always. Stay tuned.
Welcome back. A lot of movers in the broader markets in today's session. Of course, we just spoke about the defense names, but take a look at Dixon Technologies as well. Investec has raised its price target today on the stock. It was 4.5% higher in today's trading session. Among the top gainers on the Nifty 500. So at the highest point of the day now is Dixon, back above the mark of 13,000. in today's trade. So a sharp rebound from its recent lows that it fell to sub 10,000 levels, and now it's back at 13,000 is Dixon. But Aegis Vopak 2 has now moved to the highs of the day, 8% higher on that one, continues to move on from where it was at the start of last week. And so the top gainer on the Nifty 500 today is Aegis Vopak. And a couple of names from the small cap space. Diamond Power is in a 10% circuit after multiple order wins that it had received, and TD Power 2 is trading with gains of close to 8%. Over to Manisha now, who is here with all the updates from the bond markets. Manisha.
Well, thank you so much for that. Well, I'll start with the overall numbers that we have seen into the bond market this time around, and very, very bullish onto that one really, because when you look at the overall issuances, they have been quite on the stronger side there. This is, and we after very strong June as well, when you look at the month of July, that continues to be on the stronger side even now. So when you look at the numbers therein, we've seen strong issuances come in for at least almost every day, especially in the second half of the June. And there have been various contributors to this one as well. If you look at Bajaj, that of course has seen a strong number. NABARD numbers have been on the stronger side as well. So on a daily basis as well, when you look at all of these numbers, they have contributed to higher there. As you can see, 8,000 crores from NABARD, 1,800 crores from IFCL, and you have nearly 5,300 crores coming in from Bajaj Finance as well. The numbers have been on the stronger side also on the back of the fact that we have seen stronger measures come in from RBI in sense of liquidity and measures as well. And then apart from that, it is about the lower crude oil prices that have supported the markets therein. Expectations are that you could be looking at stronger numbers continuing in case of July as well. And then there are expectations of India's inclusion in the Bloomberg Global Aggregate Bond Index that is keeping the hopes higher. But let me take you through the bond issuances, and there are quite some stronger names and numbers coming in from this one. To top it all, you have NTPC, which is looking to raise 25 billion, and they're doing it via issuances of 10-year bonds maturing in July 2036 there. And then it also is about Bajaj. We have seen that one come in. Tata Capital should come in on your screen as well, because we're looking at stronger numbers on that. And this one is Bajaj, as I told you, 15 billion onto that one. Tata is looking at 37.50 billion through two bond issuances of various maturities therein. There are 4 or 5 issuances that coming in today and tomorrow itself. Within that, you have Geo Credit as well. 10 billion rupees, 3-year bonds maturing in 2029 is what Geo Credit also seems to be bringing on. The street is anticipating that you could be looking at more names continuing here. L&T Finance has done 10 billions. They are looking at a bid or issuances tomorrow, and they're doing it via 2 bonds with different maturities therein.
Thank you very much for that. We will get into a break. On the other side, Somil Mehta, Head of Retail Research at Mirae Asset Sharekhan, will join in with his top trading bets. Welcome back. Real estate stocks are in focus on the back of the Q1 business update. Sonal now joins in to get us the latest and compile them for us. Sonal.
Well, yes, some of them are real estate updates, some news flow as well. Let's start with Sobha, which was the most recent one, where the company has reported their best ever quarterly sales. Their pre-sales are up 74% on a YOY basis. This is Sobha's share in overall sales. Volumes, they are up 64% on a YOY basis. Realizations have also improved to by 8.7%. The company says this strong show was driven by the launches that happened in the quarter, 6.9 million square feet in the quarter gone by itself. And overall for the year, they are looking at launches of around 10 million square feet. So going good for that company. For Oberoi Realty, remember they did launch a project in Gurugram last week. And now they have the numbers as well. Approximately around 8,100 crore of sales is what they've booked in the first week itself. And this is for approximately an area of 13.5 to lakh square feet. Remember, they had said the gross development value here will be 16,000 crore rupees. So more than half has been achieved in a week already for this particular project. We did get some updates Friday during close. Raymond Realty, where the update was really strong. Pre-sales up 129%, collections up 47%. Company said that gross borrowings increased in the quarter gone by to 1,097 crore rupees. They took borrowings of around 200 crore rupees in the quarter gone by. Net debt stands at 827 crores, but they have an EBITDA margin guidance which they maintain between 17 to 19% for the year. For Max Estates, remember they did not meet their guidance in FY26. They've started this year on a strong footing. Pre-sales have come in at 1,100 crore rupees, volumes at 487 units. Strong sustained sales basically from existing projects is what they achieved at around 600 crore rupees. And they saw collections of 500 crore rupees as well in the quarter gone by. They aspire to add 2 million square feet of residential projects every year, and the major launches are planned in Noida and Gurugram in Q2 and Q3, from where they expect additional growth to come by. So looking good as far as Q1 updates for real estate companies are concerned.
Sonal, thank you for those updates. There are plenty of them coming in for a lot of these real estate companies. Taking this conversation forward with Vijay Agrawal, the Managing Director and Sector Lead of Infrastructure at Equirus Capital, who is joining in. Vijay, good morning. Thank you for taking out time. There was a lot of concern with regards to whether the real estate cycle has started to plateau out now after very strong moves seen over the last 4 to 5 years. Do these updates give the street some bit of assurance that it may not have plateaued out just yet and there is some steam still left in the sector?
Yeah, I think the steam was always left. We were all misreading the steam. If you see the numbers of the listed players, they were always reporting a strong numbers. Definitely in calendar year 25, everybody has reduced their launches, looking at the market, broader market conditions, and which at the later part of the CY 25, they have started to launch, and we are seeing the results now. Where, like, if you see Oberoi also delayed the launch, but now you see the 8,000 crores number is 50%. It's like 150% of their last year pre-sales number from a single project. So how the companies will perform will be very different, but I believe that the companies will perform much better. We have a good line of launches in this year, which has been launched last year and this calendar year also, and we should see a strong numbers. The market is also shifting from the unbranded to branded players, and that is also helping the listed players. And I think the listed players have also started working like a manufacturing, where they are creating their launch pipeline. So you have to start working on the land 1.5 years back, then approvals. They are doing that, and then you will see a sequential launches coming. It will not be like 1 year you have a launch, another year you don't have a launch. Now you will see a launch every quarter coming from large real estate players, and which is bumping their pre-sale number and their overall numbers.
Vijay, there has been a lot of buzz. Let's get stock specific now. But I want to talk to you about Raymond Realty, the update that it put out. One, how do you read that? And what do you see as the prospects for the company going forward? Simply because there is a lot of infrastructure development that's happening in the eastern suburbs, and there is a metro line that's coming up as well. And there is and that is an area where the company is set to have a lot of land parcels as well. How do you read Raymond Realty? Do you have a positive view on the stock?
So I think I have a positive view on the companies who are holding land on the eastern corridor, because a lot of infrastructure development is coming and they are going to benefit from there. See, western side is already congested and you don't have a big land parcels unlike eastern part of the Bombay. So they will be all benefited, including Raymond's and other players. Godrej also have a large land parcel there. They will also be benefited there.
Vijay, you know, one of the experts we were earlier chatting with a couple of days back said that many of the real estate projects which were, you know, in construction for the last many years, they approach possession right now, from now to in the next 12 to 18 months. So this is the time where typically there is a surge once you hit year 4. That's the time when you get a surge in the bathroom fittings and the sanitary ware. So it's a positive for those companies. And they went through, you know, a lot of data. Is that something that you are also seeing?
So we are seeing the surge in the building material sales definitely, but unlike the last half year of the launch, now those days are gone. All the projects are working parallelly. So if you do the structure, your block work will come, then your sanitary fittings will come. These things are happening parallelly. Definitely, if you see, since last year was not that great for the delivery and these things, the building material companies' sales have plateaued. This year, you should be seeing a more good, robust sales from them also, because the flat delivery is happening now. Your furniture fit outs will happen, and that will boost the sales across sectors.
What about the southern players, Vijay, be it Sobha? Many others haven't come out with their updates yet, but a lot of these southern players, particularly so Prestige, are expanding into other parts of the country as well. Prestige has some very large projects coming up in Mumbai itself. Your take on the southern players? Is there a pecking order that you have amongst Sobha, Brigade, Prestige?
So see, I think Prestige has really done well. I think he has really outgrown himself from southern market player to a pan-India player. If you see there, they have a big presence in Hyderabad, big presence in Mumbai, and they are trying to create the same in NCR market also. And probably another 3 to 4 years, they will definitely do that. And good part for them is their strategy. It's not they are dependent on land acquisition. They are doing a partnership with the local developers and taking over their large land parcels to launch their projects. And they are doing a joint branding also, joint advertisement. They say that the land is owned by so and so, and like that. So they are taking the differentiated strategy, and definitely it is helping them. Like if you see in Bombay, they had taken a lot of projects from DB Realty.
Okay, do you want to leave us with, Vijay, the valuations of the stocks in your coverage and put those valuations in context and leave us with your top recommendations?
Sorry, it will be from my restricted things. So okay. I may not give you a stock specific recommendation, but from the overall sector perspective, I can tell you that this year should look good for all the real estate companies. And we are seeing that in their stock prices also. See, last year their stock prices came down drastically and now they are on a recovery path. This is because the new launches numbers are coming very strong for them and it is helping the sector overall.
Vijay, pleasure having you today. Thank you for taking out time and joining us with your views on the real estate.
Thanks for inviting me. Yeah, thanks.
And a lot of the developments there are coming in from the real estate space. Of course, not many companies have come out with business updates, but the ones that have been fairly strong for the quarter. By the way, the markets continue to remain strong. 150 points higher on the Nifty. 24,425 is where the index currently stand, and the IT index now is seeing a bit of a cool off after that very sharp 2-day rally. Over to Mangalam now, who is here with the latest trends from the FNO desk. Mangalam.
Well, it's a good-looking screen. If you look at the Nifty, it's above the 24,400 mark, doing extremely well, and it's been led by the stronger index. It is the Nifty Bank. Remember, the last couple of trading sessions, it was the Nifty IT index that bounced back, but a lot were skeptical on the sustained move of the IT index. And during that period, it was the Nifty Bank which took a bit of a pause, and now, backed by strong quarterly updates, that index has actually bounced back once ahead. And, the IT index actually technically saw some resistance around the 20-day moving average, while the Nifty Bank continues to see support at the 200-day moving average. Right now, the third pack in the element is actually Reliance. Just look at the intraday chart of Reliance. That's the one which is also swiftly moving higher and currently at the higher end of today's trading range so far. And if this big boy continues to move, then there are further upsides for we see for the frontline index by the sheer weight that the Nifty has. The only thing that bulls will have wanting today is a better advanced decline picture. So the Midcap index is a slight underperformer today in the sense that it's not gaining as much. And we have a little more number of stocks which are declining than the number of stocks which are advancing. But given the sort of move that we've seen a lot of put writing. So 24,400 put writers, fairly active. These are options that expire tomorrow. 24,300 put writers, equally active as well. 24,250 put writers, all of them active. That tells you that between 24,300 to 24,400, we are seeing strong support come in for the market. So the supports have moved higher from 23,850 in the earlier part of last week to around 24,100 on Friday to now, as we speak, 24,200 to 24,300 itself. However, resistance comes in likely around the 24,500 mark. The reason why I say that is because 24,400 call writers are still fairly active in trade today, 50 rupees offered in premium. So between 24,450 to 24,500 is where you are likely to see some supply. And the other part that corroborates with this is the put call ratio, which has moved to 1.49, which is slightly overheated right now ahead of expiry. So let's monitor that very closely as well. And finally, we do have Radico Khaitan and Manappuram Finance, which has a lot of long positions added, short covering seen on Bajaj Auto, and fresh shots seen on Angel One.
Thank you very much for that. Somal Mehta, Head of Retail Research at Mirae Asset Share Khan, is now joining in at the show. Somal, thank you very much for joining in. Going is strong. And it's HDFC Bank right on top today. It's up 2.5%, nearly 3%, crossed the 100-day moving average. And this is a stock which is underperformed. So year to date, HDFC Bank is 17%, while an Axis Bank is up 6%. With this move that we're seeing today, are you sensing more upside? And then take us through your Nifty call.
Good morning to everyone. Absolutely looking for more upside. Markets have been making high tops, high bottom formations. The move which we saw on Friday was a little disappointing, but we've crossed that high, which is a great sign for the markets. We are above the previous swing high. We are just close. Very, very close to 200 daily exponential moving average, which is around 24,400, 24,420 levels. So very close to that. I'll be expecting a close above that, which will confirm more upside for the markets. There is a small hurdle around 24,600, which is the previous swing high. My medium-term targets would be 25,100, 25,200 in the medium-term outlook. Overall, markets Nifty is trading about 20 and 40 daily moving average. And the most important part, that markets Nifty has taken support at 23,000 and started moving higher. 23,000 I'm highlighting is because it is a 61% retracement of the previous swing, where we've consolidated for a little while, and that consolidation has broken on the upside with a higher top, higher bottom formation. Even on the higher degree time frame, if we look at weekly, monthly charts, we started making higher tops, higher bottom formations, which is a great sign for the markets. And now I think I would be expecting more upside for Nifty and Bank Nifty both. For Bank Nifty, my targets would be around 59,200 and 59,600. So these are my two targets for Bank Nifty. So overall, the strategy should be to stay long, buy on declines.
The fifth day when we do a higher top, higher bottom on the Nifty. So positive calls coming in from Somil. So in light of that, Somil, what are your stock recommendations?
So my first one would be Dixon. Dixon is doing great. Started making higher tops, higher bottom formation. It has taken support at 200 daily exponential moving average and given us a very good move today. I'll be expecting a very good move in the medium term outlook. Short term, it's already moving up. Short term, it is looking very strong. Even in the medium term outlook, I'll be expecting very good levels on the upside. In the very short term, keep a stop loss around 12,350, and I have a target of 13,800, but that will be a short term target. In the medium term outlook, if we sustain about 13,800, the next level would be 14,300, 14,400 for Dixon. The second stock which I've chosen is BEL from the Defense Pack. Defense Pack is already doing great. BEL has been consolidating exactly around 200 daily exponential moving average. And today it has opened above 40 daily moving average, which is a very good sign. Now I'll be expecting a target of around 460 for BEL with a stop loss around 415.
Thank you very much for that. We will slip into a very short break. On the other side, we'll invite Gopal Jain, MD and CEO of Gaja Alternate Asset Management. Stay tuned. Welcome back. For the markets going strong, one stock on EMI or Kish is up nearly about 4%. This is on the back of reporting a strong Q1 update where the company's assets under management have surged 61% on a year-on-year basis to 8,000 crore rupees. Loan disbursements are up 37%. The registered user base is up 33%. This is one of the recent listings. And on EMI or Kish, as it's called, a small NBFC does retail secured, unsecured lending. That's a stock which I'm talking about. And that's seeing a gain of close to about 4%. Diamond Power, on the back of an order win, is locked in an upper circuit of nearly about 10%. Even Avenue Supermarts is recovering after Friday's sell-off on the back of that weak Q1 update. Today, the stock is holding up with a gain of about 1.5%, seen a bit of a lift. But let's invite here on the show Gopal Jain, MD, CEO of Gaja Alternate Asset Management. He's here with us in the studio. Gopal, thank you very much for joining in. So tell us a little bit about how big is Gaja Alternate Asset Management? What is the philosophy? Where are you making your investments right now?
Sure. So we are a 22-year-old firm, and for the past 22 years, we've been focused on India's mid-market. And we principally invest in technology-led and technology firms across sectors such as financial services, consumer, education, software products. Now we're looking at AI. We've invested in AI services recently.
So tell us about the AI services, because everyone says India doesn't have AI players.
Well, AI is a 5-layer cake, as I often say, and India has a huge potential in AI. Applications is one area, services is one area in which we at Gaja Capital believe India has a very good future. India has a very strong talent pool.
Any of these are the listed players, or are you looking at the private market over here?
So we invest in private markets.
Private
Equity thinks in years and decades, not months and quarters. And sometimes our companies go public. I personally believe that companies that are focused on AI as an opportunity, which is helping large enterprises, or for that matter, medium-sized enterprises, leverage AI for enterprise productivity, I think that's a huge opportunity for India in the short term. We have 20% of the world's chip designers. So in a number of areas, I think eventually India will play a role, whether it is intelligence, whether it is middleware. I believe even chips. I think what we're seeing in India 10 or 15 years ago, it was about entrepreneurship. Today we are seeing the making of an innovation economy. We see this as India's deep tech moment, and AI is a big part of that deep tech moment.
Gopal, beyond this, there's this AI supply chain opportunity as well. There's been a lot of conversation with regards to the data center supply chain, and the fact that we may not be producers of AI, but we could be suppliers of AI, and we could help in the AI value chain.
Yes.
Is that a significantly big opportunity as well? Because a lot of these listed players have run up significantly this year on the back of this opportunity.
Going back to your question and not commenting on public markets, this is what I meant by applications. So the application layer is what conveys the productivity of AI to enterprises. That needs to be done. At the heart of AI are three things, which is customization, co-location, and cost. Right? I mean, you need to figure this completely for every enterprise. For an enterprise to get the benefit of AI. Enterprises are not going to come up with AI technologies. They're not going to come up with AI models. And there is a surfeit of models. So how do you convey the inherent productivity that is available through AI to enterprises? This is, in my mind, an opportunity for Indian companies, because, I mean, look at the way the Indian IT talent force is repurposing itself to AI. So I think very soon we already have one of the large populations within the AI workforce, but I think that's some way to go. In terms of the supply chain to AI, I mean, when you say the supply chain works at various levels, right? Of course, data centers is a part of it. And there are various other parts of the supply chain. And some of these supply chain areas we may currently seem to be a little behind the curve. But maybe it's a matter of time. I think the low-hanging fruit is applications. I think that's where we will see. Then there are some areas which require us to move for sovereign reasons. I think foundational models is an area which requires us to move for sovereign reasons. This is where private equity can play a very important role, because finally, who's going to invest in sovereign? It's going to be domestic private equity, right? There's enough happening in the US. I think the government has done a great job with RDI. There's 15-year concessional capital. What's missing in the market is growth, is private patient growth capital. And I think, so there's a dearth of it. India doesn't have billion-dollar funds, right, which can align itself to sovereign needs. So in some of these areas, going back to what I was saying, for sovereign reasons, we'll have to move forward and create the building blocks of some of these technologies, the foundational models. The government has made a start, and the private sector needs to come in and do its role through patient, long-term, large volume capital.
How much has Gaja Capital invested so far in India in the last 22 years? And right now, how much are you looking to invest in this year?
Given where we are, we can't talk about these numbers. These are forward-looking numbers. But I think, let's talk about the industry. I think the industry is about 15 lakh crores right now. And, many believe that the industry will grow to about 100 lakh crores by 2036. India has two problems: capital without talent and talent without capital. So the capital without talent is the capital allocation problem. We have lots of savings, but right now those savings don't flow to alternatives. And because they don't flow to alternatives, they don't flow to budding entrepreneurs. They don't flow to mid-market companies.
What is the IRR if someone does invest? I mean, how does one go about a normal retail investor who's putting money in mutual funds via SIPs? If he wants to explore, making investments in an alternatives like yours.
Retail investors cannot invest in AIFs. Right?
Correct. Unless you have 1 crore, or at the seed stage, you need at least 25 lakh.
Right. Retail investors. So AIFs have some issues in the sense that mutual fund Sahi has been a huge, very successful campaign for mutual funds. There is no AIF Sahi campaign, right? And in some ways, an alternative AMC going public is like AIF sahi hai, but investing in an AMC is different from investing in an AIF. There is an awareness problem in the industry. Most investors don't know about AIFs. And there is an access problem in the industry, which is that most investors, even if they are aware, cannot invest in an AIF. Investing in an alternative AMC is one way of accessing alternatives. In many markets, this has become a very attractive way for people to access alternatives, especially given the fact that retail investors have an access issue, they have a liquidity requirement, their ability to manage complex products is low. And the way to look at any alternative AMC is the way you look at any stock, which is what is its earnings per share and what's the EPS growth, right? So that's the way alternative AMCs anywhere in the world are valued. And this is what takes the complexity of an AIF. You can have all that complexity and can reduce it to very simple numbers, which is what's the TAM.
There's no minimum requirement to invest in an alternate AMC like yours?
It's not about like ours. In any company, what's the minimum requirement to invest? My sense is you can pretty much buy one share of a company if you want to. So this is what it does. It reduces the complexity. So you have all these questions, metrics, IRRs, when does it end, when does it start? The complexity reduces, right? And the access, which is the barrier. You no longer have to be an accredited investor. You no longer have to do a minimum of 1 crore. You could buy one share. This expands access, increases awareness, brings transparency, brings regulation. So this is what will help mainstream alternatives in India. And we hope will be there'll be many more to follow.
Pleasure having you today, Gopal. Thank you so much for
Thank
spending
you.
time and
Thank
joining
you.
us today on the show. Take a short break. Back with more on the other side. Stay tuned. Welcome back. The market continues to do well, and a big factor behind that is the rise in the Nifty Bank, and almost every bank that you could think of, banks, NBFCs, all of them came out with quarterly updates post-market hours on Friday and over the weekend. Ananya is here to put the spotlight on a whole host of them. Ananya.
So, well, yes, a lot of banking and NBFC stock buzzing today. Let me first start with HDFC Bank. Now, if you see, they reported a strong set of numbers with gross advances rising 15% YOY and deposits growing 14.7% YOY, reflecting healthy and balanced business momentum despite continued moderation in CASA that we have seen across the industry. Now, what is encouraging the street for the street is even more is improvement in the bank's funding profile. Now, Now, if we look at the brokerages, now Bernstein believes HDFC Bank is striking the right balance between growth, margins and liquidity, while Jefferies highlighted the improvement in the loan-to-deposit ratio, that is LDR, to 97% and expects FY27 loan and deposit growth of 13% and 15% respectively. Now, this suggests that post-merger, funding concerns are gradually easing, giving investor greater confidence that the bank can deliver sustainable growth without sacrificing profitability. That is one of the key reasons that the stock is outperforming today. Coming to AU Small Finance Bank, stood out with another strong quarter. Now, the bank continued to outperform peers, reporting 26% growth in advances and 24% growth in deposits, while also improving its CASA ratio, bucking the industry trend. Now, coming to Bandhan Bank, the bank reported a mixed Q1 FY27 if we see, with advances up 16% YOY, deposits up 6.6% YOY, while the CASA ratio remains steady at 29.4%. Now, if we look at the brokerages, now Motilal Oswal maintained its buy rating with a 300 target price, valuing the stock at 1.2 times FY27 and 1.1 times FY28 adjusted book value, though it noted business growth was slightly below expectations. So these are stocks that are currently buzzing in trade today.
Ananya, thank you for all of those updates there. The Nifty Bank continuing to do well courtesy of all of these business updates, barring Kotak Mahindra Bank. That too is slightly off the lows of the day, still around about 3% lower. As the government now battles several complaints on social media over ethanol blending in petrol, Petroleum Minister Hardeep Singh Puri has said that ethanol blending may affect vehicle mileage. However, he added that several other factors also play a role. Speaking to reporters earlier, the minister also said that there is enough room in the market for all fuel technologies to coexist. Listen into what he had to say.
Somebody is saying that fuel mileage is going to be dropped. Arey bhai, it's now well established that when you have ethanol, they use it in racing cars also. The acceleration increases. What is that thing called? The knocking. That improves. Mileage, yes, it may drop a little. But it may drop a little, mileage can drop a little because of various things. If you're driving from here to Gurugram, and if you follow the route I follow, then there are many points at which there are toll bridge, other things. So calculate that. So we've been very open about it. My response to that is, there is enough space in the growing Indian consumer market for all systems to coexist.
Okay, and automakers such as Maruti and Toyota also weighed in on the use of E20 fuel. Speaking to my colleague Shivani Bajaj, representatives from the automakers said that they have not received any complaints regarding the use of E20 and the fact that there will be an impact on the mileage. Listen in to what they had to say.
We want to give a statement of confidence that Maruti Suzuki has been fitting E10 has been, making its car compliant to E10 way back before 2010, which is more than 16 years now. And when we did that, we had sufficient factors of safety that even if we use E20 fuel on those E10 cars, they are fully, they do not have any kind of issue at all in terms of either wear and tear or corrosion or any kind of impact on the life of the components that go into the car. So we have done extensive testing and we have validated that it does not cause any problem. Not only our validation in our R&D, this is our field experience also. Cars that we have already sold to customers, let's say cars in the financial year 25-26, for example, we would have sold, we would have serviced more than 2.5 crore cars. Out of these 2.5 crore cars, at least about 1.5 crore cars were more than 3 years vintage, which means they were made in India when E20 was not mandated, which means they were E10 compliant cars. So on these E10 compliant cars, if we use E20 fuel, they would have showed up some problem or the other if the concern was true. Having gone through these 1.5 crore customer servicings all over India, we have not noticed anything of concern. So that gives us the confidence to convey to our customers that we need not be concerned.
The E20 program is not an overnight program. There was extensive testing and certification done at all levels, whether it is the OEMs or the independent testing agencies like ARA, etc. There will be no impact, like I said, on older vehicles using E20. All vehicles that have been produced after 23 are fully compliant materially. From a fuel perspective, as per the tests, the drop in mileage is not very significant. It is in the range of, like we said internally, 3 to 4, perhaps 5%.
Okay, we'll get into break. More on the markets on the other side.
Welcome back. The one thing that has been the talking point all over the weekend has been the incessant rains in the city of Mumbai that has brought the maximum city to a grinding halt. Now, the IMD has issued a second red alert for Mumbai, warning of heavy rains and strong winds. The issued warnings cover Mumbai and adjoining suburban areas, Thane, Palghar and Raigad, where rain is expected to continue all through the day. Now, deteriorating weather conditions has led to multiple landslides, one on the Mumbai-Goa highway near the Chiplun district. Movement on both sides is at a standstill for over 12 hours now. Meanwhile, another landslide took place on the newly constructed Missing Link project on the Mumbai-Pune highway. The MSRDC has urged citizens to not undertake travel between the two cities until further notice. The MCGM has also declared a holiday for government offices, schools and colleges, urging residents to remain indoors unless absolutely necessary. Earlier, we spoke to Bikram Singh, the Deputy Director General at the IMD, to discuss the heavy rainfall in Mumbai. Listen to what he had to say.
Past 2 days, we had the red alert for Mumbai on 4th and 5th, and today also now we are upgrading it to red because heavy to very heavy rains that will continue. There may be isolated, extremely heavy also today also over Mumbai. And winds are also very strong. That is another part due to which uprooting of trees or some damage to kacha houses, etc., that also will be there, or old buildings. So we are keeping today also red. But from tomorrow, rainfall will reduce a lot. Moderate or heavy rains will be there, but not very heavy or extremely heavy. For Mumbai, for the season from 1st June to this date, till date, yesterday, that data is updated. So it is 60% above that normal value. July, what is given, it is up to 94%, and that is good. In fact, not very less.
The IMD on the rains in Mumbai in today and across the weekend as well. By the way, Zensar Technologies has now moved to the lowest point of the day after very sharp moves seen last week, 6.5% lower on the stock. So some profit booking that is setting in on the stock today. At the lowest point of the day is Zensar. What's also at the lows of the day is Varun Beverages. That stock is down 4% as we speak. Supriya Life Sciences is down 10% in today's trading session. So it's the top loser on the small cap index today, 10% on Supriya Life. PC Jewelers is down 8. Ikeo Technologies is down 6. Electronic Mart is down 5. So a lot of movers on the small cap side are trading with losses as well in today's session, even though the market continues to remain near or at the highs of the day. Just before we close, let's pull up Welspun Corp. That has also moved to the highs of the day now. Is the second best performer on the Nifty 500, 6.5% higher on Welspun Corp at the day's high in today's session. Take your leave on this edition of Trading Hour from Rima and me. Thank you for watching. Halftime report on the other side.
Stocks gain with large caps taking the lead on positive Q1 updates by several heavyweights. Realty as well as consumer discretionary lead the charge, while IT and healthcare drag.
HDFC Bank perks up on healthy Q1 credit and deposit growth, but Kotak Mahindra Bank slides on a sharp dip in its CASA deposits ratio. Some smaller lenders like AO Small Finance Bank and L&T Finance post a sharp pickup in credit flow.
Godrej Consumer grows ahead of guidance. Dabur eyes double-digit uptick. Nykaa sees a growth accelerating in fashion, and Senco Gold sees no let-up in sales. And Berger Paints tell CNBC TV 18 that delayed rains have supported paint sales.
Government clears defence procurement worth 52,000 crore rupees for Air Force, Army and Navy. Stocks of key defence suppliers perk up on expectation of significantly large order inflows.
The government has rolled back its restrictions on supply of gas imposed in March following closure of the Strait of Hormuz. Fertilizer units, refineries, city gas distributors and other industrial consumers will get a relief.
Hello and welcome to Halftime Report live from the CNBC TV 18 Motilal Oswal studio. I'm Sonal Bhutra and with me as always Vinny Motiwala. It is raining here in Mumbai and it is raining a lot of green in our markets. The markets are at the day's high. They've picked up pace. The Nifty is above the 24,400 mark for now. Mostly all the indices are participating. The mid-caps are underperforming by a wee bit, but there's nothing really big to worry about as well. As I said, we are at the day's high currently. The mid-cap index is up at 0.3%. A lot of quarterly updates are keeping the markets higher, especially from the banking front. So we do have the banking index, which is up around 0.6%. Beat the Realty pack, oil and gas, metals, energy, all of them are in the green today, barring media, IT and pharma. PSU banks also not participating in the rally today.
Absolutely. So that's the update in terms of the markets. Advance decline ratio, just let's have a look at that, right? We're seeing a bit of an underperformance versus benchmark indices for the broader end of the market. But advance decline ratio is still largely in the favor of declines now versus advances. So we have seen that crisscross happening at around 11 again. We'll watch out for where it's headed, but the gap is not too far away from each other. So what's going to be happening in the second half of the trading session will be key to watch out for. And like we mentioned, right, a lot of individual names are moving around on the back of their Q1 update. So we'll keep you updated through the next 1 hour on all of this as well. But what's lined up on the show for you? Let's talk about that as well. Banking stocks that are reacting to their Q1 FY27 business updates. We'll talk about all the big updates coming in from HDFC Bank, Axis Bank to Kotak Mahindra Bank. Then move on to some of the top stocks that are moving around in the trading session. Vedanta Oil and Gas, we have Kirloskar Oil, Shobha, all of these in our movers and shakers segment. We'll talk in detail about that. We'll be putting the spotlight on some of these other big movers like Spark, Radico Khaitan, APL Apollo Tubes. Crude prices, they've remained steady near the $71 per barrel mark, and we'll have a conversation around that with Christoph Ruel on the Commodities Corner segment, so stay tuned for that as well.
Okay, all right. So this is the time for our movers and shakers segment. So let's get going with that. A lot of quarterly updates which are coming by. Vedanta Oil and Gas Business, which was the demerged entity from the overall Vedanta Group just a while back, reported a quarterly update which was disappointing. They have seen decline across the board. Their average daily gross operated production is down 17% on a sequential basis, is down 5% versus the FY26 average. If we go on the working interest production as well, it is down 16% sequentially, down 5% versus FY26 average. And if we talk about gross oil and gas production, that was down 17%, and we do have the working interest production which is down another 4%. So it was a decline all over. If we talk about the internals, Rajasthan, which is Vedanta's largest producing asset, that is where the decline really came in from. It was 63.1 thousand barrels of oil equivalent per day, which is down 6% versus the FY26 average and 15% below the last quarter. Rava production also declined 17% on a sequential basis. It was Cambay which was actually a bright spot for the company this time around. The production was 21% higher than the FY26 average that they saw in the year gone by. However, it was still a decline on a quarter-on-quarter basis. OALP production remained broadly stable at the 3.1 thousand barrels of oil equivalent mark. So a decline on a quarter-on-quarter basis, most importantly versus the FY26 average as well. And that is something that Street doesn't seem to like. And that's why that big decline that we are seeing in the stock price today.
Absolutely. So that's about Vedanta Oil and Gas. But let's talk about a stock that's moving around and holding on to gains of 3 to 4% in the trading session right now. That's Kirloskar Oil. Now, why is this so? Obviously, we've seen the stock moving around in the last few weeks as well. One, they had that big data center order win that came in for the company. So that was a key trigger and a key positive. Now, post this today, we are seeing a note that's coming from Jefferies. They're initiating coverage on this one. They're giving a buy rating. Target price is 2,815 rupees per share. What they're highlighting, Kirloskar Oil Engines is the second largest player in the power backup genset segment. And in that market, so yes, they have that market over there as well. Now, in terms of value chain, they're moving up the value chain. First, it was mainly known for low power to medium horsepower side of the generator sets. Now, they're focusing on the high horsepower side as well. That's the big move that's coming in. They're focusing in terms of the capex over there. So that is one positive reason in terms of moving up the segments and higher value, higher margin segment. That is the high horsepower segment. What Jefferies highlights that they believe that they could see a 22% EPS CAGR growth over the next 3 to 4 years for Kirloskar Oil. Return on equity expected to improve going forward as well. Margins expected to see an improvement, and in terms of capital allocation, that is also something that is a key focus area. Data centers should add a material upside for the company as well. And currently, when you look at the valuations, it's at around 45 times P for FY28 earnings. Current valuations, they expect that to sustain for the company. But triggers coming in on the data center point of view are clearly a big positive for them, Sonal, and that is why we're seeing the stock is managing to hold on to good gains in the trading session even today.
All right, that's Kirloskar Oil, has been in focus in a while. Let's talk about the realty space. That's one of the top gainers, the Nifty Realty, that is, surging by 1.5%. We do have some updates which are coming by. We did see some on Friday during the closing session, and we do have some coming in from Sobha, which reported the best ever quarterly update this time. Their pre-sales, that is the Sobha share, is up 74% on a YY basis at the 3,000 crore mark. Volumes at 2.3 million square feet, which is up 64% on a YY basis. They did see some realization growth as well, 8.7% higher on a YY basis at 15,655 rupees per square feet. The strong show was driven by strong launches that the company undertook, 6.9 million square feet in just one quarter, and they are targeting 10 million square feet of launches in FY27. So good show. The stock has come up from the highs of the day, but the entire Nifty Realty pack is doing really well, one of the top gainers, and the update from Sobha was strongest as well. But let's move on now to the consumer space. Mangnam is joining us now with all the updates that he got from Godrej Consumer. Mangnam, tell us more.
Well, it's a good update that is coming from Godrej Consumer. In fact, they've said that this time around the business has grown in late teens, and that's higher than what they had guided for the start of this year. They had looked for double-digit growth. So the first quarter itself, it's been tracking ahead of their expectations, and there is a likelihood that they may revise their expectations or guidance going forward in this year itself. Add to all of that, it's been led by high single-digit volume growth, and the EBITDA is also, on an absolute basis, expected to land ahead of the double-digit growth guidance, though on a margin basis, because of higher than expected revenue and exceptional costs, margins may remain under a wee bit of pressure. But here too, the company has provided assurance that, towards the end of the quarter, they did see some moderation in input costs, and as a result of which, margins will progressively recover through FY27. What really stands out for me this time around is, even though the India business is doing well for them, the largest part of their business outside of India is Indonesia, which had been struggling for a while. Now they expect mid-teens revenue growth to return to Indonesia as well. Out here, the operational performance will be extremely crucial because this was a geography which was facing extreme competitive pressure. Now that growth has come by, will margins come by as well or not, will be the big question. The street is happy on these. The stock had been a bit of an underperformer and now currently sitting with a gain of 2%.
Okay, Mangalam, thank you so much for giving us the update for Godrej Consumers. But let's move on, talk about Dixon Technologies. Today, this stock is also managing to hold on to a strong shade of green. What is the reason for this? We have a brokerage note, and Ria is here to give us the details on this one. Ria?
Well, yes, Dixon is in fact holding on to strong gains today after Investec has come out with a note on the stock. They have a buy call on the company with a target price of rupees 16,200. Now, they have raised their FY27 EPS target on the stock by 6 to 8% after incorporating the management's earlier volume guidance, wherein they had guided for a flattish volume growth for the year. But this is excluding the contributions of Vivo. Now, this EPS upgrade that the brokerage has given reflects their checks with retailers which have said that the mobile sales have now started to stabilize as consumers have started accepting the increased prices. And in fact, their checks also suggest that Chinese EMS companies are now ceding market share to their Indian counterparts. So that is also a big positive for Dixon Technologies. They do expect the company to deliver flattish YOY EBITDA growth in the first half of FY27. But from the second half onwards, they are expecting the company to see strong earnings growth. And in fact, they also see potential for Dixon's mobile exports to pick up going ahead, and also see opportunities for the company to foray into the specialty EMS business via acquisitions. And this is what they believe will lead to further earnings upgrades for the stock. And on the back of this positive brokerage note coming in from Investec, the stock has seen gains today, up nearly 4% at this point.
4% higher on this one. Thank you so much, Ria, for joining us with all those details. That's about Dixon Tech. It's time to slip into a short break for now. When we come back, Vivek will join us. He'll focus on a whole host of stocks that are moving around in the broader market. Stay tuned for that.
Welcome back to Halftime Report on CNBC TV 18. While the Nifty continues to hold on to that strong shade of green, we have a lot of stocks that are moving around in the trading session. Let's go across to Vivek to take us through the moving stocks today. Good afternoon, Vivek.
Well, good afternoon. Well, we opened slightly flattish, but post which we've actually seen an improvement as far as the advanced decline ratio is concerned in the broad end of the markets. You are seeing some stocks, backed by strong volume activity as well. First on the list is Spark or Sun Pharma Advanced, one of the top gainers as far as the NSE 500 index is concerned, up 6% on strong volumes today. Radico Khaitan, the company has gone ahead and given an update as far as vodka segment is concerned. That particular stock high by almost 4%, very encouraging Q1 numbers. The other stock on the radar is APL Apollo Tubes. Now, BofA Securities has gone ahead and initiated coverage on this particular stock, cooled off a little bit from the day's high, but that stock high by over 1%. And banks, of course, continue to remain in focus. On the other hand, Zensar Technologies from the broader end of the markets is the top mid-cap laggard in the session. Remember, a lot of IT stocks, mid-cap IT names had rebounded very sharply in the week gone by, but today it's Zensar seeing almost a 6% sell-off. Warren Beverages, this particular name, no development as such, but the stock continues to languish lower today, low by almost 4% and amongst one of the top F&O laggards in the session. And Acutaas Chemicals today on very strong volumes, this particular stock too is seeing quite a bit of price downtake.
Okay, all right. Those are some of the stocks which are buzzing in trade today. But the list does not end. We do have a lot of other stocks which are on our radar. Quarterly updates, of course, keeping the market very active. But from the broader markets, we do have Omex, which is higher. We are talking about the realty space. This also is an NCR-based player, which spoke about a shift into the hospitality space last week. The stock is up around 14.5%. We do have Aegis Vopak, which is up around 9.5% as we speak. Allied Blenders is the other one, 7.5% higher. Even Radico Khaitan in trade doing really well. We do have Welspun Corp, which is higher in trade as well, 6.5% higher on that one. Cupid, that's the other stock which is doing well in the broader market, 6% higher on that one. So it's a very buzzing screen. So let's continue with that and put spotlight on the quarterly updates coming in from the banking and the financial space. Let's start with banks first up. Ananya, give us the lowdown.
Well, yes, private banks are buzzing today. Now, HDFC led the pack after reporting 15% YOY growth in advances and 15% growth in deposit. Now, more importantly, the street is encouraged by improving funding profile. Now, brokerages, Bernstein and Jefferies believe the bank is striking the right balance between growth, margins and liquidity, with the loan-to-deposit ratio improving to 97%, suggesting that post-merger funding concerns are gradually easing. Now, coming to Axis Bank, also delivered a strong update. If we see, reporting 19% growth in gross advances and 18% growth in deposits. The strongest growth among the large private banks here. Now, along with healthy improvement in CASA ratio, Kotak Institutional Equities has a strong buy rating with a target price of 1600, expecting further improvement in operating performance, supported by NIM recovery, healthy loan growth and better execution on the liabilities side. Now, in contrast, Kotak Mahindra Bank, if you see, is under pressure despite delivering 15% loan growth. Now, the reason was the deposit growth lagged at 12% and the CASA ratio fell sharply to 40.3%, while Motilal Oswal has retained its buy rating with a target price of 1397. It believes improvement in deposit mobilization CASA will remain a key monitorable for investors here.
Okay. Thanks so much for that, Ananya. But do wait on, because there are a lot of other banks also that have reported their Q1 business updates. Many small finance banks also coming in there. Take us through that list as well, Ananya.
So, well, yes, moving on to other financials. Here, Kish, that is on EMI Technologies, it stood out. It is one of the top gainers today, if you see, after delivering one of the strongest growth updates in the fintech and the NBFC space. Now, AUM surged 61% year-on-year to 8,000 crore, backed by 37% growth in disbursements. Now, investors are also encouraged by the company's increasing focus on secured lending, with the loan against property, that is LAP, portfolio rising to 7.7% of AUM, which should support asset quality over the period of time. Now, coming to AU Small Finance Bank, also impressive numbers, 26% growth in advances and 24% growth in deposits, while improving its CASA ratio, a standout performance at a time when many banks are witnessing pressure on low-cost deposits. So, it is one of the key, highlight here for the AU Small Finance Bank. Now, coming to Bandhan Bank, however, they reported a mixed quarter. If you see, while advances grew a healthy 16.4%, deposits remained subdued at 6.6%, prompting Motilal Oswal to retain a buy rating. But note that the business growth was slightly below expectation, the brokerage mentioned. Now, coming to fresh updates also came in today from Poonawalla FinCorp. The company reported AUM of 67,000 crore and maintain a healthy liquidity buffer of around 4,000 crore, indicating it is well funded to support future loan growth. Now, the stock is also seeing buying interest today on back of this news.
Okay, all right. Thank you so much, Ananya, for joining us. So those are some banking and financial updates. It's time for a break now. When we come back, Ajit Mishra of Reliance Broking will join in with some trading strategies on the other side. Welcome back. You're still tuned into Halftime Report. The markets continue to trend higher. The Nifty is at the day's high, and big names which are contributing to that. Of course, HDFC Bank on the back of its quarterly update. Some of these auto names are contributing now as well. We have Bajaj Auto, M&M, which is higher as well. ONGC, there's an upgrade that has come by, so that stock is higher 2%. ICICI Bank is the other one. We do have Reliance Industries as well, which is contributing to the gains that we're seeing on the Nifty, and that continues to do really well. L&T is the other one which is higher in trade, but it's largely, of course, the financials which are keeping the markets very upbeat. So it's a good time to get a technical check on the markets. Ajit Mishra, SVP Research at Reliance Broking, is joining us now on the show. Ajit, good afternoon. Thank you for joining us. Do you expect this momentum to continue on the back of banking names, especially considering the move that we are seeing today? The next important level to watch out for in the Nifty?
Yeah, good afternoon,
I think we have, okay, all right, Ajit, I think we have a broken connection. We'll try repatching that. But for now, as we've been pointing out, it's the banking index which is contributing to the gains that we are seeing currently. But even from the broader markets, we do have some stocks which are not doing so well, actually. PC Jeweler is one of them, 8.5% lower on that one. The entire Vedanta Group stocks are not doing so well. We spoke about Vedanta Oil and Gas. There's Vedanta Power, which is lower. Vedanta Iron is also lower in trade today. Ola Electric is the other one, which is declining in trade today, 4% lower on that one. Varun Beverages is the other one, lower by 4%. Tejas Networks also lower by 4%. So while the headline index and the Midcap index doing really well, there are some stocks individually not doing so well.
Yeah, individually a lot of stocks, that are going to see some bit of a downtick, right? As of now, though, the Nifty is still managing to hold on to 24,440 levels, almost near the day's highest point. Broader end of the market, a bit of underperformance there. But let's bring back Ajit. He's connected back with us. Ajit, Sonal was asking in terms of the Nifty levels, Bank Nifty, something that's supporting the growth. What are your levels? What are you watching out for now?
Yeah, hi, Vidhi. So, see, we have started the week on very strong footing, means we are crossing the long-term averages, 200 days after almost 1.5 months of consolidation. Banking, as you rightly pointed out, is leading from the front. In fact, we were seeing the outperformance continuing in the banking. The others were playing the rotational part. Now, after this recovery above 24,400 mark, we are anticipating the Nifty to test 24,600 level next, the previous swing high, and then gradually towards 25,000 marks. So it's a buy and dip market now. 24,000, 24,100 is the base area. So with that as a positional stop loss, one can continue to look for buying opportunity in dips. For banking, we are anticipating a break above 58,500 can trigger the next leg of the up move towards 60,000 mark. So both indices looks firm on chart, and one can continue with buy and dips approach.
Okay, buy and dips approach for both Nifty Bank is what you're saying. Ajit, individual names that you're looking at now in the market?
Yeah, so first name from the banking space, IDFC First Bank, after a corrective trend. Now we are seeing gradual recovery, and the stock is set for further rebound and look to fill the gap that we have on the daily chart. Close around 86 is what we are eyeing as the immediate target. So with stop at 79, one can accumulate fresh IDFC First Bank. And then we have Glenmark from the pharma basket. So pharma as a pack is outperforming, and we anticipate Glenmark also to witness a catch-up move. So 2340 is what we are eyeing as a target, with stop at 2220.
Okay. Ajit, a couple of names that are today, seeing a lot of moves on the back of volumes also. We have Welspun Corp. If you could look at the charts for that also for us, any thoughts on what we should keep an eye out on now?
So, yes, Welspun, and in fact, we were seeing the other counters from the textile space were doing well, and Welspun now is at the record highs. So marginally, there was some bit of profit taken in the last trading session, and again, we are seeing the stock has been witnessing strong recovery. So overall momentum is intact, but looks slightly overbought. So one can continue with trailing stop loss at 1450 and continue to hold the position. Upside is open. We are at the uncharted territory. So keep on trading your stop losses on rise.
Welspun Living, right? That is the one you were talking about.
Yeah, Welspun Corp.
Welspun Corp. Okay. Thanks so much for that, Ajit, and thank you so much for joining us on the show as well. And individual bets as well as in terms of the markets levels to watch out for. But let's also talk about what's happening in the world of F&O. Mangalam is here to to take us through that. Mangalam, afternoon.
Well, it's a solid session that's underway right now. The bulls are clearly on top. The Nifty closing in on the 24,450 mark right now. And as we speak, it's been led higher by the Nifty Bank. Though the Midcap index, the bulls would have wanted it to outperform a little more as well. But we'll take what it comes. The advanced decline still in favor of declines. The contribution chart tells you, the top heavyweights are batting for the bulls. We have HDFC Bank doing extremely well. And through the course of the day, we saw Reliance move higher as well. So both those counters are actually among the top contributors on the way up for the frontline index. But if you're looking at so the active options, because we've conquered the 24,400 mark, those put writers are fairly active in trade as well. So the 24,400 put actually one of the most actively sold options at around 70 rupees, and we have the 24,300 put as well, which is equally active. What this basically tells you is that the support of the market has moved higher from 23,850 last week to about 24,000 earlier in the morning to now, as we speak, 24,250 to 24,300 as well. But the 24,450 call writers are fairly active in trade, telling you around 24,500, 24,550, we might see some sort of resistance or supply come by. And that is understandable as well, given the sort of rally that we've already seen from the lows. And at the same time, the put-call ratio has now become overheated at around 1.58 versus 1.05. Amidst all of this, it makes sense to look at individual stocks rather than just the index. A lot of long positions added on Radico Khaitan. Realty is the space of the day, so Lodha developers seeing a lot of long positions added as well. But on the short covering side, we have Dixon Tech, where the shots have been caught on the wrong side. The stock is up around 4% with open interest contracting. So that's another stock which we're monitoring.
Okay, all right. Thank you so much, Mangalam, for joining us. So those are some stocks which are on our radar. Lodha, remember, is CLSA's big breakout stock as well. We spoke about it on Friday, how some of the fundamentals are catching up as well. And that surge continues on Lodha, apart from the big move that we're seeing on the realty space as well. Time for a break now. On the other side, Manisha Gupta joins us with Christophe Ruel of Crystal Energy. Stay tuned for that conversation.
Welcome back. Joining us now is Christoph Ruhr. He's Global Advisor at Crystal Energy. Christoph, hi. Thank you so much for joining in. What is your sense, first of all, on the numbers that we are looking at from Strait of Hormuz? The weekly data from the maritime satellite suggests that we're looking at stronger numbers month on month and almost 32 to 50 ships perhaps passing on a daily basis.
Yeah, I think that's pretty obvious. It's a rocky road as expected, but it's moving into the right direction. There's still a big backlog, as everybody knows. But I think as long as the trend is one of more ships and not one of disruption, it's good news for consumers of oil because it's good news in terms of bringing prices down.
It is. Many banks and brokerages are now expecting that we are looking at perhaps a surplus, a glut by the fourth quarter of this year and most part of next year as well. What are the numbers that you're working with?
I tend to agree, although it might not happen so early. I think there was two sort of common mistakes in the analyst community in the last few weeks. One was to underestimate the speed with which things would return to normal if they were allowed to, in terms of the price adjustment being much faster than the quantities restored. And the second one is that all along, there was the markets has an amazing ability to work on workarounds and have some ships going through, even while the disruption lasted, and in triggering reactions and on the demand side. So I believe that we will be surprised by the amount of excess production over consumption in oil markets we will see for the rest of this year, always assuming nothing else bad happens. And that will then depend how that feeds through to prices. That will then, to a large extent, pretend on the same player who absorbed this excess of oil production over consumption before the crisis in the Strait of Hormuz, and that's China. If China goes back to building up its strategic storage, which it will at some point, then price levels will stay more elevated. If China doesn't do that, hypothetically, they would easily sail through 60, I would think. Now, when China will interfere will depend on prices itself, so it's a bit of a guessing work here. I think that they will continue their policy, tried and tested, of refilling these apparently enormous reserve capacities they have built up, of refilling them when prices are low.
So you're saying that $60 a barrel is a possibility, and until what time?
Everything is possible always is one half of the truth, and the other half of an analyst's truth is never to put a price forecast on that point in time in the same line. But I think, I said 60 by the way, but I think it's possible that they will go through 60 before the end of the year, if China has the patience to wait, yes.
I also want to talk to you about the OPEC meeting that just went by, and we've seen yet another 188,000 barrels per day added to this. How are you looking at OPEC bringing now most of its cut production that we saw in 2023? But it's not just about OPEC. UAE leaving OPEC, Iraq threatening to do that. How are you looking at OPEC as an entity now?
I think this is a really interesting implication of what has happened. What most people still don't underestimate, I think, is that the possibility when in a few years' time we look in the rearview mirror of 2025 having been the year of peak oil. If that's true, it's going to happen at some point now. If that's true, then that would be a real game changer for the way the market is structured, and one of the prime victims of it would be OPEC. Because it's a different thing if the market is shrinking and falling from the usual oil market, which we all have been used to for the last almost 100 years, which is constantly rising. If you try to manage prices, or as they say, manage volatility by curbing and then releasing production again, then you can do that relatively easily in a rising market, where even if you cut production, demand will make sure that prices don't, those prices adjust, and that you have the possibility later of releasing the spare capacity you've created. In a falling market, that picture is completely different. No one protects players in a falling market. The only way to increase your profits in a shrinking market is by selling more volumes, even if the price is lower. How do you sell more volumes? You have to compete with other producers. By definition, in a shrinking market, even to keep your sales volumes constant requires an increase in market share. And to get an increase in market share, again, you need to engage in price competition. And that would be difficult to impossible to sustain for a producer association like OPEC or OPEC Plus. So that would change things for good. Whether it happens or not, we'll have to wait and see. But even if markets just plateau or grow very slowly, it will makes that job more difficult. That's one point. Then there's a self-feeding mechanism, of course. You have now one big producer, the UAE, leaving OPEC. That means they can produce more. That increases the pressure on the remainder of the members. And that will happen again if more people are more countries are leaving.
Oh, absolutely. Not pushing you for a price, Christoph, but what is your, perhaps a worst case scenario and a best case scenario for the crude prices, given the kind of increasing supplies that we're looking at, and not just OPEC, UAE, Russia, Iraq numbers are increasing. Saudi Arabia is almost back to pre-war levels. Iranian oil has been flowing via Strait of Hormuz as well. So what is it that you see crude prices taking support at?
When you say best and worst case, I assume you speak from the perspective of a consumer, where the low price is good and the high price is bad. Okay. I always have to check. I think there's no limit to the upside. There could always something bad happen, and that would bring prices up again. We have seen, however, that oil is much less important. Oil intensity has declined. So the run-up in order for prices to meaningfully increase is much longer. And the probability that this happens has accordingly gone down. On the downside, I already said, it really depends on how fast generally markets are, inventories are being refilled, because when you look only at the flows, we are in a situation where production exceeds consumption. And that question, how fast inventories are being refilled and strategic reserves, which has been exploited, to the biggest extent depends on China. And I think that China will sort of trying to buy back oil when it falls below 60. And so 60 is probably a meaningful boundary, as it has been before the attack on Iran happened.
Okay, $60 per barrel, that's an important level. That's where China could look at buying more crude oil. Christoph, always a pleasure speaking with you. Thank you so much for joining us with those insights. Manisha, thank you so much for taking us through that conversation. So that's about the commodity space. We'll slip into a short break. When we come back, we'll get you more on markets and stock-specific action on the other side. Welcome back. You're still tuned into Halftime Report. One segment that was in focus on Friday was the capital goods space and the transformer space as well. This is our Inside Edge segment. The spotlight is on transformer companies. Remember, the government has granted a 2-year exemption to 4 China-linked power equipment firms and has allowed them to bid for government projects. What does this mean for the sector? How are brokerages interpreting the move? Winnie is breaking us down for that. Winnie is breaking all this down for us, and then we'll have a management commentary as well.
Absolutely, Sonal. So rightly mentioned, right? Friday we saw all these stocks, T&D players, transformers and rectifier players, all of them seeing a sharp fall in the trading session. Like you mentioned, it came in after there was an exemption given to 4 Chinese companies. Now, what a brokerage is saying, they're saying that the recent correction, obviously, that we saw on Friday is an overreaction to the government's exemption that's come in for a time period of 2 years. Nomura furthermore highlights it and says that the order is temporary, does not create a long-term impact on any of these companies, and they expect limited impact on domestic T&D equipment players. Jefferies too, they said that, they continue to maintain their positive view on Hitachi Energy, Siemens Energy, and they see this correction as a buying opportunity as well. With CLSA, which is giving a view that, the exemption maybe could increase the competition, which is a fact. But there could be some bit of a pressure in terms of pricing for domestic T&D players. And they do not expect near-term volume impact coming in, but they're giving an advice of caution given the elevated valuations that we're seeing for the sector. Now, we have the management of Transformer Rectifiers India Limited joining us on the channel today, who spoke about the impact as well. They said that they do not see a major impact coming in terms of pricing for transformers. They said that their capacity is booked out for the next 30 months as well. And these Chinese companies which are manufacturing, the number could come in at 144 transformers for the full year from these players. Now, obviously, TBEA is the only player which has currently got those active capacities. So, they are not expecting much of an impact. Instead, they're expecting an upside that comes in also for the raw material that is used in terms of making transformers, which is facing a supply issue, and that is why this rule is coming also for India. So yes, that is what they're saying. They're talking about tailwinds coming in for the transformer industry till 2037. On that note, let's listen in to what they had to say furthermore in terms of this.
We don't see any major impact in terms of pricing or in terms of if you look at it, we are also booked pretty much for the next 13 months. So we don't see any pricing impact on the products that we offer on the transformers. But yes, there would be some upside for us in terms of bushings, in terms of other raw materials that we are, like Taika and everybody else who has been also approved Nanjing bushing. So we will see that, there will be a slight release in pressure on terms of our deliveries to the customers. The Chinese companies are in those segments. We are into UHV and EHV transformers, high voltage and high, so they are into this manufacturing. But, how much can a plant manufacture is what the question is. And from what we've heard and what we've looked at, a maximum of 144 transformers which can go out of the system for the Indian market, for this Indian transformer manufacturers, Chinese Indian transformer manufacturers. So I don't see a lot of pressure on the price or a lot of pressure on the orders also. We are considering about 12 transformers a month, so 144 transformers a year.
Okay, that's the word coming in on the transformers side, what is happening in the industry as well. Going to sip into a short break on that. No, don't go anywhere. We'll be back with more stock-specific action, more on the market on the other side. Stay tuned in.
Welcome back. You're still tuned into Halftime Report. Let's talk about an exclusive story now. Sources tell CNBC TV 18 that Prudential is in no hurry to pare its 22% stake in ICICI Pru Life after the stock sharp correction. Yash is joining us now to give us more details on what he's picking up.
Well, you know, after Prudential announced its acquisition of 75% stake in Bharti Life Insurance and the move to become a promoter there, of course, you know, there were all kinds of reports talking about how it will have to pare down its stake in ICICI Prudential Life Insurance, where it's currently the promoter and holds about 22% stake, bring that stake down to 10%. But what we've been given to understand is that Prudential is likely to retain its entire 22% stake in ICICI Prudential Life Insurance. For now, Prudential, as an investor in ICICI Prudential Life Insurance, is likely to look for a higher or a better exit at a later stage wherever it feels it's the right time, the right value to offload part or that entire 22% stake, not any time immediately as of now. What we've been given to understand is that Prudential is set to apply with IRDAI for two things. One is declassification of itself as a promoter entity in ICICI Prudential Life Insurance, and the second one, removal of its nominee director from the board of ICICI Prudential Life Insurance. These two things are very, very important because though on one side SEBI regulations require declassification of promoter as having stake less than 10%, but the insurance regulations, IRDAI regulations, say that you can be declassified as a promoter entity in an insurance company if your stake is A, less than 25%, B, you don't have a nominee director on the board of the insurance company where you want to declassify yourself as a promoter. And that's exactly what ICICI Prudential Life, or rather Prudential, is expected to apply with IRDAI for, that is declassification and removal of its nominee director on the board of ICICI Prudential Life Insurance. If an approval from the regulator under these regulations of IRDAI does come through for the declassification of promoter entity, then Prudential will be able to hold on to its 22% stake entirely and at the same time be a promoter in another life insurance company, that is Bharti Life Insurance, having 75% stake there.
Okay, Yash, important updates there. Thanks so much for that. So as of now, Prudential said that they are not looking or not keen to sell their stake, is what we understand. So let's watch out for that. As of now, the stock is seen a spike up and now again almost in that flat line. We'll watch out for ICICI Prudential Life and more updates that come in on this front as well. But let's move on, talk about two other names, that is Shakti Pumps as well as Oswal Pumps. Both of these stocks are buzzing in trade and this has come in after they've received an order. Both these are actually solar water pump makers, manufacturers as well. This order is actually coming from the Maharashtra state government. For Oswal Pumps, this is an order that they've received of around 235 crores, which is under the PM Kusum B scheme. It's 10,000 off-grid DC solar photovoltaic water pumping systems across Maharashtra. This is what they'll be giving, as well as Shakti Pumps has gotten an order also from the Maharashtra State Electricity Distribution Company for around 353 crores. 15,000 off-grid solar photovoltaic water pumping systems is what they'll be focusing on. So that's the update coming in for both these names. Order wins coming in here, and that's the reason that they are holding on to gain in today's trading session. Sonal.
Okay, all right. That's about the pump stock. But we do have ONGC in the Nifty pack also, which is doing well. So there's a note coming in from Motilal Oswal, and the brokerage is quite positive for ONGC. They have upgraded the stock to a buy, have a target price of 288 rupees a share, and they talk about various reasons why they like the stock. One is inexpensive valuations. The second is decent volume growth pickup. The third is beneficiary of multi-year government focus to turn the sector around. There have been royalty cuts. There's more focus on indigenous production. There's a lot more on self-sufficiency as well. They've also raised their Brent price assumption to $84.2 per barrel for FY27 and $75 per barrel for FY28. This despite the fact that now the war premium is done away with in crude oil prices. This Brent price assumption revision leads to a 9% rise in FY27 consolidated profit and 18% for FY28 as well. They expect the premium to the uptick to continue for the stock overall, and that's why the stock is higher as well. And despite, as I said, despite no war premium anymore, they talk about how the stock will continue to benefit because there's strong dividend yield as well.
Okay, we'll keep an eye out on ONGC. Thanks so much for that, Sonal. But, here's some opinion that's coming from Sridhar Sivaram also of Enam Holdings on IT sector, manufacturing, power equipment players, as well as corporate earnings outlook. Listen into what he had to say.
Even during the best of time, the top 2 or the top 4 IT companies had earnings growth of only about 8%. So if you take roughly 8%, even the 10-year CAGR is only 8%. And my question is, what is the probability that the next 5 years it will be higher than 8%? And I think even the bulls agree that, it looks very difficult. So you're talking of 4-5% best case growth, and you want to give 15 times multiple for low growth, where I don't even know what the terminal value is. So I think as I said in the past also, I don't think these companies are bad companies. They're great companies, great cash flows. I think they're going through a PE derating. And when you have such strong PE derating, I will look at where the US companies are trading. They're trading at single digit PE. So that means these companies can go to single digit PE. Q2 onwards, things could look better. That's how I'll put it. So we'll have to see how the commentary is. But I think the consumption is holding well. Earnings growth are still very strong. So if you take any of the brokerages who have put out last quarter's earnings summary or the last year's earnings summary, you'll see that Midcap earnings were 18-19%. Manufacturing is, of course, a space. Power equipment is a space. I mean, a lot of them have run up. I know there is some issues with the Chinese competition, but, the demand is so high that you need, I don't think our companies are able to meet all the demand. So obviously, you need to open up. And in my view, some bit of opening is not so bad because, the companies will become more efficient. They'll face competition. We also export a lot.
All right, that's some market opinion coming in. For the markets, they continue to trend higher. So on that note, we'll take a leave on halftime report. But Business Lunch will take all the action ahead.
Stocks gain with large caps taking the lead on positive Q1 updates by several heavyweights. Realty and consumer discretionary lead the charge while IT and healthcare drag.
HDFC Bank perks up on a healthy first quarter credit and deposit growth, but Kotak Mahindra Bank slides on a sharp dip in its CASA deposits. Some smaller lenders like AU Small Finance Bank and L&T Finance post a sharp pickup in credit flow.
Godrej Consumer grows ahead of guidance. Dabur eyes a double-digit uptick. Nykaa sees growth accelerating in fashion. Senco Gold sees no let-up in sales. And Berger Paints tells CNBC TV 18 delayed rains have supported paint sales.
The government has cleared defence procurement worth 52,000 crore rupees for the Air Force, Army and the Navy. Stocks of key defence suppliers perk up on expectations of significantly large order inflows.
The government has rolled back its restrictions on supply of gas imposed in March following the closure of the Strait of Hormuz. Fertilizer units, refineries, city gas distributors and other industrial consumers will get relief. Hello and welcome to Business Lunch, live from the CNBC TV 18 Motilal Oswal studio. I'm Arundhati Ramlin and with me is Hormaz Patakia. Good afternoon, Hormaz. You know, the Nifty near the high point of the day. It's looking good for the markets as we speak.
Good afternoon to you as well, Arundhati. And it's a very, very strong start to this trading week, which is also the start of the earnings season as well, starting Thursday with the TCS starting off proceedings for the Nifty 50 companies. But for now, the index doing very well for itself. 24,440 is where it currently stands. So we are 40 points away now from a very important level, the first of the two important levels on the upside, one being 24,482, which is the high of the 7th of May. And then, of course, we move to the recent swing highs of 24,601. So, of course, the 24,482 and 24,500 are the two important levels to watch on the upside as we go into the second half of the trading session. The Nifty Bank, after a couple of days of taking a bit of a break, has now stepped on the gas yet again. It's 450 points higher now on the banking index, back at the higher end of the trading range, above the mark of 58,000 yet again, closing in on that 58,500 mark. The broader markets, well, if you look at the moves on the index, the broader markets would feel as if there is a little more left to be desired. Just 0.33% for the mid-cap index, and for the small-cap index too, it's a similar quantum. There are a lot more stocks on the downside in comparison to those that are advancing in today's session, even though the market, the benchmark index, has done fairly well for itself, 0.4% higher for the small cap index as well. Absolutely no reason to complain, even as the gap between the advances and the declines is slightly widening, but the Nifty bulls would be a happy camp today.
Absolutely. And you know, a lot of this, Philip, has come from those business updates that we've seen today, positive for a lot of stocks, right? So the Realty pack is the top gaining index. That index up about 1.3%. We've got Lodha up 3%, Godrej and Prestige, both of them up 2%. Prestige right now 1.5% in the green. Auto stocks in the fast lane. We've got M&M, Bajaj Auto and TVS Motor, all of them higher by about 2% in trade. But who's not participating in today's rally? It is those IT names, right? After last week's run-up, they're feeling some pressure today. Infosys, TCS and Wipro, all of them down over 1% in trade. PSU banks also falling. Bank of India, PNB, Indian Bank, all of them in the red as we speak today. But let's put the spotlight on the quarterly updates trickling in from a whole host of banks. Ananya Singh is here to take us through all of those updates. Ananya?
Yeah, so well, private banks are back in focus. Let me first start with the HDFC Bank. It is a top gainers, if you see. They delivered a steady quarter with advances growing 15% YOY and deposits rising 15%. Now, what has impressed the street here is the improvement in the bank's funding profile. Now, Bernstein and Jefferies believe HDFC is successfully balancing growth with profitability, while the loan-to-deposit ratio has improved to 97%, signaling the post-merger funding concerns are gradually fading. Now, coming to Axis Bank, also they reported an impressive set of numbers with gross advances up 19% and deposits increasing 18%. Now, this is the best among the top large private banks. Now, the bank also saw healthy improvement in CASA, and Kotak institutional equities remains positive with a target price of around 1,600, expecting further gains from margin recovery and strong execution across both asset and liabilities. Now, meanwhile, Kotak Mahindra Bank, however, has come under pressure if you see after its update. Although loan growth remained healthy, double-digit loan growth, here we see of 15%. Now, deposit growth, but the deposit growth was softer at 12%, while the CASA ratio declined to 40.3%. So that is also weighing on the sentiment today. Now, Motilal Oswal has maintained its buy rating and a target price of 397, but believes improving deposit mobilization and rebuilding CASA will be the factors to watch out going forward.
Ananya, thank you for those updates there. HDFC Bank at the highest point of the day now, 3.5% higher on the stock, and offsetting that is Kotak Mahindra Bank down by a similar quantum. But of course, the day indeed does belong to HDFC Bank, a full 100 rupee recovery from the recent lows that you've seen on India's largest private lender. But the other segment that's done well today are the defense companies, and they are buzzing on the prospects of higher ordering. Ria is here with more updates on that. Ria.
Well, yes, defense stocks are buzzing today, and this is after the DSE has approved AONs worth nearly 52,000 crore rupees. Now, this was on Friday after the close of the trading session, and today defense stocks are buzzing on the back of that. They have approved these procurement approvals all across the Army, the Air Force, as well as the Navy. First up, looking at the approvals given for the Army, they have approved the Akash Tarang anti-UAV electronic warfare system, and for this, Bharat Electronics, Apollo Micro, as well as Data Patterns are set to benefit from this. They've also approved the man-portable anti-tank guided missiles, for which Bharat Electronics as well as Bharat Dynamics are expected to show some contribution. Apart from this, there's also the medium-range surface-to-air missile as well as the very short-range air defense system, for both of which Bharat Dynamics as well as Bharat Electronics again will likely see some ordering. And for the Army, they've also approved the jet-based kamikaze drone system, for which Bharat Electronics as well as Solar Industries can see some benefit. Moving on to the approvals for the Navy, they have approved the multi-influence ground mine, for which Apollo Micro as well as Bharat Dynamics can see some likely benefit. They have also approved the naval shipborne unmanned aerial system, for which we can see some contribution from Hindustan Aeronautics as well as from Bharat Electronics. And lastly, for the Air Force, they have approved the fixed wing high altitude pseudo satellite. For this, a whole group of stock can see some benefit. There's HAL, Data Patterns, Bharat Electronics, Astra Micro, as well as Paris Defense, and all of these stocks are buzzing in trade today. In fact, Paris Defense is one of the biggest gainers among the defense pack, up nearly 6 to 7%. BEL also seeing gains of nearly 2% today, and the entire defense pack continues to tick higher, up nearly 1.5% today.
All right, Ria, many thanks for taking us through those details. Now, the consumption pack is in focus on the back of business updates from Dabur, Godrej Consumer and Nykaa. Mangalam Malu is here with all of those details. Mangalam?
Well, good updates coming in from Godrej Consumer, Nykaa, Dabur, as well as Senco Gold. But let's start with Godrej Consumer and then speak about Nykaa as well. For Godrej Consumer, it's a late teen sort of growth that the company has reported, with high single-digit underlying volume growth, which is actually tracking ahead of their annual guidance, which at the start of the year the company had given to be double digits. So that's something that the street is liking. Even on an EBITDA front, you know, the absolute EBITDA growth is likely to track ahead of their double-digit EBITDA growth guidance. On the margins, however, they said that they could be slightly shy of their guidance, and that's largely because, one, the revenue growth has been faster. Secondly, there has been that exceptional raw material inflation that we've seen. But to that as well, they've given us assurance that towards the end of the first quarter, there was some moderation, and they expect margins to progressively increase. While the standalone India business is doing well, for me, the heartening fact is that outside of India, the biggest business is Indonesia. That too has come back after many quarters of underperformance. So teens growth in Indonesia is something that the street is liking in particular, which explains why the stock is higher. For Nykaa as well, you know, the overall gross merchandise value growth has been in 30s, and the net sales value growth has also been in 30s. If you look at their fashion business and their beauty business, the beauty business growth has been fairly good, tracking in the 20s, late 20s sort of bit. But fashion has really stood out this time around, and that's largely because you know, their partnership with Nike has seen a great encouraging response as per the company. So 50s is the growth that the company has reported in their fashion business, which implies that it's a multi-quarter high. That explains why both these stocks are standing out in trade today.
Nykaa and Nike, a good pair between there. Mangalam, thank you for summarizing that for us. Take a short break. Back with more on the other side. Welcome back. Now, incessant rains have brought the maximum city to a grinding halt. The IMD has issued a second red alert for Mumbai, warning of heavy rains and strong winds. The issued warnings cover Mumbai and the adjoining suburban areas, Thane, Palghar and Raigad, where rain is expected to continue through the day. Now, deteriorating weather conditions has led to multiple landslides, one on the Mumbai-Goa highway near the Chiplun district. Movement on both sides is at a standstill for over 12 hours now. Meanwhile, another landslide took place on the newly constructed missing link on the Mumbai-Pune highway. The MSRDC has urged citizens to not undertake travel between the two cities until further notice. The MCGM has also declared a holiday for government offices, schools and colleges, urging residents to remain indoors unless absolutely necessary.
Earlier today, we spoke to Bikram Singh, the Deputy Director General at IMD, to discuss the heavy rainfall in Mumbai, and here's what he had to say.
Past 2 days we had the red alert for Mumbai on 4th and 5th, and today also now we are upgrading it to red because heavy to very heavy rains that will continue. There may be isolated extremely heavy also today also over Mumbai. And winds are also very strong. That is another part due to which uprooting of trees or some damage to kacha houses, etc., that also will be there, or old buildings. So we are keeping today also red. But from tomorrow, rainfall will reduce a lot. Moderate or heavy rains will be there, but not very heavy or extremely heavy. For Mumbai, for the season from 1st June to this date, till date, yesterday, that data is updated. So it is 60% above that normal value. July, what is given, it is up to 94%, and that is good. In fact, not very less.
Let's now go across to Santhya for all the latest updates on the rainfall and the forecast. Santhya, over to you.
Torrential rains continue to lash Mumbai metropolitan region and Konkan area. IMD has upgraded its warning from orange to red for the day for Mumbai, Palghar, Thane, Raigad, Navi Mumbai. Now, keeping the current situation in mind, all the schools, a holiday has been declared for all the schools and colleges in the entire Mumbai metropolitan region, and Mumbai University has postponed their exams, which was scheduled for today. Maharashtra government has also advised private offices located in Mumbai to give work from home to its employees wherever possible, and the state government has also declared a half day for non-essential government officials. Other than that, BMC has also issued an advisory for builders, supervisors and contractors at construction sites to ensure safety of workers and pedestrians, ensuring that no hazardous material at the construction site should be left unattended. Other than that, BMC has also claimed that over 15,000 employees of BMC and other state government departments are deployed on the ground, keeping the current situation in mind. Since last night, 4 incidents of landslides have been reported, and other than that, one chawl in Mankhurd collapsed, claiming 6 lives and injuring 1 person. According to IMD, in the last 5 days, that is first 5 days of July, Mumbai has received 90% of July's average rainfall. The lake levels stand at 16%. Despite all the heavy rainfalls, catchment areas, rainfall over catchment areas could have been better. So at present, the lake levels for Mumbai are 16%. BMC has also advised people to stay away from beaches, sea fronts and waterlogged areas. Let's talk about train services. Local train services between Virar and Vasai are disrupted. But after on the western line from Vasai to Churchgate, there are trains which are running with a delay of over 10 minutes. On the central line, the trains are running again with a delay of 10 to 15 minutes.
So red alert issued in Mumbai, and that's the latest on what's happening around the city. Thank you so much for those details, Santhya. Torrential rains have also resulted in a landslide on the Mumbai-Pune Expressway, halting the flow of traffic. Efforts are underway to clear the debris and restore normal traffic movement. News 18's Vivek Gupta filed this report.
मुंबई पुणे एक्सप्रेस वे पर जो कनेक्टिंग लिंक था वहाँ पे लैंडस्लाइड हुआ है। ये देखिए कितने बड़े-बड़े पत्थर यहाँ पर गिरे हुए हैं और इस पत्थर को और ये जो लैंडस्लाइड की जो मलबा है उसे हटाने के लिए युद्ध स्तर पर काम चल रहा है ताकि जो मिसिंग लिंक का जो टनल है जो पुणे से मुंबई की तरफ जाता है उसे सुचारू रूप से ठीक किया जा सके। बड़ा हिस्सा जो है वो गिरा हुआ है और साफ तौर पर पूरे जो पूरा टनल है उसको बंद किया गया है। अगर मैं दिखाना चाहूँगा, साफ तौर पे देख सकते हैं कि किस तरीके से ऊपर का हिस्सा जो बना हुआ था उसे वो बारिश की वजह से जो लैंडस्लाइड हुआ था वो टूटकर नीचे गिरा हुआ है और बड़े बड़े पत्थर आप साफ तौर पे देख सकते हैं कि किस तरीके से यहाँ पर जो मलबा है वो यहाँ पे गिरा हुआ है और पूरी कोशिश की जा रही है कि इसे अब जल्द से जल्द यहाँ से हटाया जा सके और जो टनल है उसको यहाँ से शुरू किया जा सके। बारिश बहुत ज़्यादा है, इसलिए ये सब जो टीमें हैं उनको बड़ा चैलेंजेस हैं कि इस तरीके से हटाए। देखिए किस तरीके से ऊपर का जो हिस्सा है वो चारों तरफ से टूटकर नीचे गिरा हुआ है और बारिश तेज होने की वजह से बड़ा चैलेंज हो रहा है सबके लिए कि इस जगह को यहाँ से ठीक से हटाया जाए।
Latest visuals there from the missing link project. Now, crude oil prices continue to hover around $72 a barrel as energy flows through the Strait of Hormuz have increased. Meanwhile, the OPEC Plus members have announced plans to boost oil production as energy markets show tentative signs of recovery amidst the fallout from the US-Iran war. Now, 7 core members of the OPEC have agreed to lift quotas by 1.88 lakh barrels per day starting August, taking the total increase to almost 8 lakh barrels a day since April. Now, this is the 5th straight month that the group has opted to increase crude oil production.
Now, here's some opinion from Sean Darby, the equity strategist at Mizo Securities, on the outlook for China, India, and other Asian markets.
I think what may happen, and it comes to your point, is that we go back to look at economies again. We've been so focused on a very narrow boom, it's not a small one, of course, but a very narrow sector boom. And the reality is, with oil prices, subsiding so rapidly, it's going to be a big uplift for parts of North Asia, particularly China and India, which have been left behind in the last quarter or so. It's interesting that China's retail numbers have been very soft over the last quarter when oil prices were high. And again, if you look back in India, a large part of the underperformance occurred as energy prices soared from the end of first quarter. So maybe the rotation that we're seeing now in the sectors is going to start to envelope some of the economies as they start to see lower CPI and the real income starting to improve again. And that's also the case in Japan as well.
Moving on then, Tehran has come to a standstill as millions gather for the funeral of former Supreme Leader Ayatollah Ali Khamenei, who was killed alongside 4 family members in a US-Israeli strike that sparked the war with Iran. Mourners waving red flags filled the streets, chanting "Death to America" and "Death to Israel," while US President Donald Trump said that both sides have agreed to hold ceasefire during the funeral proceedings. According to Press TV, officials have described the event as the largest public gathering in the country's modern history.
Well, on that note, it is time for us to head into a short break, but more news and updates on the other side. Stay tuned. Welcome back. You're still with us on Business Lunch. China's property slump is deepening. Home prices have now slid back to 2006 levels in real terms, with a downturn spreading to a record number of cities. Sonal Bhutra joins us now with all of those updates. Sonal?
Thank you for that. Well, yes, China's home prices are now at a decade low. And if we talk about it in real terms, they've fallen back to around 2006 levels. In nominal terms, they are back to levels that we saw in 2016. So the prices are at a decade low in nominal terms. The decline is actually also becoming very widespread. In June, 88 of China's top 100 cities recorded a fall in resale home prices. This number was 86 in May. So the number is only increasing, where we are seeing a big fall in resale prices. And it's just not that the prices are falling. We are seeing that they are falling faster. Average resale home prices declined 0.75% on a month-on-month basis in June, which compares with 0.71% fall that was seen in May, marking the steepest monthly drop in nearly 8 months. The slowdown is, of course, visible across the entire sector, the entire value chain actually. Between January and May, real estate investments fell 16.2% on a YY basis. New construction starts dropped around 22.6% and completions dropped around 23.4%. Now, this does matter, right? And why does that matter? Because China's property sector has been a big driver of the economy, and buyers are still waiting that there could be more price fall, and that's why demand is also not picking up. So most experts are also expecting that pressure could continue throughout 2026, will make real estate one of China's biggest economic problems, because a decade low prices is something that we don't see every day.
Indeed, and so big updates there coming in from the Chinese real estate market. Sonal, thank you for that. Now, Prime Minister Narendra Modi has departed on his 6-day, 3-nation visit to Indonesia, Australia and New Zealand, with a packed agenda aiming at deepening India's engagement across the Indo-Pacific. The visit is expected to focus on expanding trade and investment, strengthening defense and strategic cooperation, advancing partnerships in critical and emerging technologies, and enhancing people-to-people ties. Now, in his departure statement, the Prime Minister said that the tour will reinforce India's Act East policy, Mahasagar vision and its commitment to a free, open and inclusive Indo-Pacific. He will also interact with the Indian diaspora during each leg of the visit.
The FIFA World Cup round of 16 is delivering plenty of drama, with 2 of the 3 host nations now crashing out of the tournament. Canada's campaign came to a disappointing end after a heavy 3-0 defeat to Morocco, while Mexico bowed out following a thrilling 3-2 loss to England, ending the hopes of 2 co-hosts in the knockout stage. Meanwhile, Norway has scripted history by reaching the FIFA World Cup quarterfinals for the first time after a stunning 2-1 victory over Brazil. Erling Haaland scored both goals and now has 7 goals in the tournament, level with Lionel Messi and Kylian Mbappe. The Golden Boot race is shaping up to be one of the most exciting in World Cup history. And Mbappe continued his fine form, scoring the winner as France edged past Paraguay 1-0 to book their place in the quarterfinals.
It took a lot of courage for Brazil fan Arundhati to read that. But we take your leave on this edition of Business Lunch from Arundhati, and we thank you for watching. The markets continue to remain around the highs of the day. Midcap radar on the other side.
Good afternoon. Welcome to Midcap Radar. We are coming to you live from the CNBC TV 18 Motilal Oswal studio. I'm Sonal Bhutra, and with me, as always, Vivek Iyer. Monday afternoon actually. It's been such a rainy day in Mumbai, but markets continue to be above the 24,400 mark. Midcaps are participating too, but they are underperforming the benchmarks for now. Bank Nifty is doing very well, and we do have a lot of updates coming in from the quarterly performance that we saw in the quarter gone by.
That's right. Good afternoon, Sonal. So banking pack as well as the entire consumer pack, whole host of companies going ahead and sending out their pre-quarter updates, but a lot lined up on the show. So let's start off with the top headlines. Market extends gains into a fourth straight session. Nifty reclaims 24,400 levels. Mid and small caps underperform larger peers. Solid gains across autos, real estate, consumer durables and oil and gas. PSU banks and IT, however, on the back foot.
Consumption stocks surge. Nykaa sees growth accelerating in fashion. Senco Gold sees no let-up in sales. And Berger Paints tells CNBC TV 18 delayed rains have supported paint sales. Radico hit fresh 52-week high.
A whole host of banking and NBFC names like Bandhan Bank, Poonawalla FinCorp and On EMI Technology are reacting positively to the Q1 FY27 business updates.
Dixon Technologies gains over 4% after Investec raises its price target to 16,200 rupees from 14,500, citing potential for mobile exports to pick up.
Three recently listed Vedanta Group stocks see profit booking for the second straight session after their June quarter business updates deliver a mixed showing compared with last year.
Okay, all right, those are the top headlines that we are tracking. Most of the stock-specific moves are on the back of these quarterly updates that are coming by. So we'll keep discussing that for you. But before everything, let's go across to our technical analyst, Ruchit Jain, who is joining us from Motilal Oswal Financial Services. Ruchit, good afternoon. Thank you so much for joining us. Do you expect this trend to continue? What are the next important levels on the Nifty?
Yeah, hi, very good afternoon. Well, no, the trend is expected to continue because we have already seen a couple of weeks of time-wise corrective phase, during the last month. And the 20-day MA has been respected and the stock index seems to have resumed its broader uptrend. So 24,550 to 600 is the first hurdle that were the previous swing highs that we are watching out. If that are taken out, then market has potential to rally even towards 25,000 in this series itself. So the momentum continues to be on the positive side, and some of the index heavyweights are also looking attractive from the risk-reward ratio perspective, which should help the index go higher. So 24,200, 250 would become an immediate support base. Till this is intact, 24,600 followed by 25,000 are the levels that could be expected.
Okay, Ruchit, and what are your individual trading calls for the day?
So a couple of recommendations, mixture of large caps and the mid cap space. From the large cap space, we like Bharti Airtel over here. We have already seen a good time-wise as well as price-wise corrective phase over last few months. After forming a good support base, the stock seems to be giving a breakout from a symmetrical triangle pattern on the daily charts. So Bharti Airtel from the large cap stock space looks good over here to buy for a short-term trading with a stop loss below 1880 for potential targets around 2020. And Azad Engineering is the mid-cap name that we like over here. The stock did give a breakout a couple of months ago, then went into some consolidation phase, formed base around its weekly 20 EMA, and now seems to be resuming its broader uptrend. Now, the good thing is that the price up moves of late are getting supported by good volumes compared to the volumes that we are witnessing when the stock is going down. So Azad Engineering positional traders can look to buy over here with stop loss below 2100 for potential targets around 2400.
Okay, Ruchit, thank you so much for joining us with all those names. But let's move on and talk about a segment, Midcap Movers. We have Ria to take us to the midcaps that are moving around in trade. Ria.
Well, yes, a lot of stocks moving around in today's trading session. Let's start off with the gainers first. The first one is Aegis Vopak gaining in trade today. There's also Welspun Corporation hitting its all-time high today. In fact, the stock is up 90% on a year-to-date basis. Allied Blenders also hitting its all-time high, as well as Manappuram Finance on that list. Chem India Projects also seeing a strong gain today. In fact, the stock has also doubled on a year-to-date basis. Also looking at some of the stocks that are on their 52-week high as well as their all-time high today. There's Zensar Technologies, Radico Khaitan, Chola Finance, as well as Anand Rathi, and even Granules seeing a big gain today. On the flip side, looking at some of the losers in today's trading session, there's Zensar Technologies, which is also down nearly 43% just in the last 1 year. Acutaas Chemicals also taking a cut today, but this stock is up nearly 200% in the last 1 year. Ola Electric also taking a cut today, and the stock has almost halved since its IPO in 2024. Varun Beverages also seeing some cuts today, as well as Belrise Industries, but this stock has nearly doubled in the last 1 year.
Well, thank you so much, Ria, for joining us and giving us all of the cues as far as the broader end of the markets are concerned. Well, it's now time for a short breather. When we return, Oberoi Realty makes a blockbuster NCR debut, clocking over 8,100 crore in sales at its Gurugram project. Chairman and Managing Director Vikas Oberoi joins us to discuss the big NCR bet and the company's expansion roadmap.
Welcome back. You're still tuned in a Midcap radar. Well, the stock on our radar is Oberoi Realty. The company has just made its first big move outside the Mumbai metropolitan region, booking over 8,100 crore in gross sales at its 360 North project in Gurugram, out of a total project value of around 16,000 crore rupees. That NCR entry comes at a time when the company is also scaling up its commercial leasing portfolio, expanding into hospitality and pursuing a string of redevelopment deals across South Mumbai. To talk about the NCR bet and where the business goes from here, joining us now is the Chairman and Managing Director of the company, Mr. Vikas Oberoi. Mr. Oberoi, good afternoon. Thank you so much for joining us. Let's talk about the NCR foray first. The response has been great. It is the first big bet for Oberoi out of MMR. Tell us more. What made Gurugram the market to break that pattern? How will you be going about this market? And will this be a big bet for you going forward as well? How big of a contributor will it be going forward?
Hi, good afternoon. Thank you for having me at CNBC. Gurgaon was always on our radar, and it fits the bill for us. It's got the right demographics. We have the price points in Gurgaon that we typically, follow in Mumbai. And to answer your question, plain and simple, I think Gurgaon can be equally or even bigger than the Mumbai market for Oberoi Realty.
Oh, okay. Bigger, maybe bigger than Mumbai market. How soon do you think that would happen? Would it be next 4 to 5 years where more investments would be made in the Gurugram market and it would become bigger?
We are seriously looking at Gurgaon and the land parcels that will be made available. And we'll pursue business development like we do in Mumbai. So we are not going to treat it like, like our expansion or a second city. We really want to make it like a twin city for us. And it'll be like we'll have equal focus on Mumbai and Gurgaon going forward.
So you are going big on business development as well, Mr. Oberoi. The pipeline is strong. Give us a sense of what is the capex that you have outlined for investments both in Mumbai and the Gurugram market.
So, as a company, we don't strategize by setting certain capex. We are opportunity driven, and we are now going to seriously look at opportunities available in Gurgaon. And for that matter, the entire NCR. We also want to focus on the Noida area. And so we are really open. For us, capital deployment is not an issue. And we are willing to take big bets. We actually like large land parcels. So we'll actually follow the Mumbai model.
Okay. Mr. Oberoi, coming back to this specific project, which is the 360 North, you've booked over 8,000 crore out of the total GDV that you had mentioned of 16,000 crore. Now, number one, what is the timeline that you've set for yourself to go ahead and sell the remaining, inventory that you have over there? And also a word on the pricing as well as the payment terms. We understand that, you've deliberately done this in a manner so as to discourage speculators from entering this particular project.
So, firstly, we were never into this game of wanting to sell a lot on day one. We've never done that in Mumbai. But, we're a listed real estate company, keep getting a lot of feedback from our investors. And it's like we wanted to tell them it's not like we don't know how to play this game. We know it and know it really well. And this is exactly what we did. We thought we'll, try and play the volume game here. And we've been able to do that. We have the margin. So hence we could actually offer a very attractive price to buyers and the outcome is in front of you.
Yes, that's the difference, right? We have seen that the broker community being quite active in other projects, but that was not the case for you. How different is the NCR market from Mumbai other than the broker part? What was the differential in the business process that you took in the NCR market? Anything that stood out for you?
Frankly, we simply followed the Mumbai model. We just brought ourselves there. And I guess that was the differentiator, really. The market there is not that transparent. We came in with our processes. We, nobody literally announces the price beforehand. Nobody, shows you the plan or whatever. So as soon as we got our ERA, we announced our price first. We showed them what we're going to build. We actually got EOIs with serious money. And only after that, we got in people to come and close the deal. And we had 100% conversions. So literally, we had over 1,000 people wanting to buy these apartments. And literally, the first 300-400 got the apartments. It's like that.
Okay. Mr. Oberoi, my colleague Vivek just asked you on the pricing bit as well. I just wanted to follow up on that. One, whether the rest of the project will see some pricing increase now that you've seen good demand in some of the units. And the second part on pricing in general in the realty industry, because we just came out of West Asia crisis where commodity prices were higher. None of the builders really increased prices. Do you think that is a trend that could happen going forward, or there'll be more consolidation in the industry?
See, firstly, let me tell you about our project. We came in with an attractive price, much lower than what the market expected, much lower than what we actually wanted for ourselves as well. So obviously, the next phase will be at a higher price. We won't be opening bookings until I mean now, not this financial year for sure. And yeah, so this is where we are.
How much higher would the pricing be? How much higher would the pricing be for the next phase?
That I haven't really thought, but it certainly will be a lot higher. And so that's one part. And with regards to what's happening in West Asia, I think it's, like the entire, all the industries are facing that. So it's like real estate is not alien to that.
Right.
And there will be cost increase, obviously, but that's marginal, I feel. And, we all factor in this sort of increase, we all factor in this sort of increase when we are planning for a project.
Okay. Mr. Oberoi, in the last few years, we've actually seen fewer launches coming in from your stable, pre-sales at approximately 8% CAGR from FY22 to FY26. In fact, FY26 was just about 3%. With the launch pipeline now, with the entry into the Gurugram market, analysts are penciling in a 22% CAGR. Is that something that you can reach, or what is it that you are targeting?
Frankly, if you add what we've sold, we are more than doubling our sales for this year. So, and again, a few of our launches got delayed because of approvals, but we know how to execute. We know how to, build. So this is just a part of our growing up.
So pre-sales FY27, what is it that you're targeting?
Like I said, this year, if you simply add what we sold last year and you add Gurugram, we are 2.5x of what we sold last year.
The analysts were penciling in around...
That's where we are.
Yeah, the analysts were penciling in around 3,500 crores from this project in this year. You've done around 8,000 crore rupees within a week of the launch. So that sets the bar a little higher, Mr. Oberoi. Last few questions before we let you go. Beyond Gurugram, you've added some redevelopment projects in Mumbai as well. Just wanted to understand the business sense here. Is this something how you will be expanding in Mumbai? What kind of margins do redevelopment projects have versus, say, land buying outright land buy, or the greenfield expansion that you do?
So, given the policy the Maharashtra government has come up with, it's very encouraging for people to go in for redevelopment. And, it also makes an attractive proposition for developers to get into redevelopment. We are doing close to 10 or 12 of them. And these are in very prominent parts of the city. So, very excited about it. And there are decent margins, I would say. Again, there are very decent margins here as well.
Okay, all right. Last question before we let you go. You had guided for annuity income to reach 5,000 crores by FY31, FY32. Which are some of the projects that you'll be expanding into or doing more capex into to reach that level?
So we have a mall coming up in Thane. We are literally building 5 hotels. We will be doing office buildings in Worli, in Borivali, in Mulund, and in Thane as well. So a lot happening on that front as well. So yeah.
Okay, thank you so much, Mr. Oberoi, for joining us and giving us all of the details as far as the foray into Gurugram is concerned, and the successful foray at that. Well, we'll now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned. Welcome back to Midcap Radar. Well, we are now shifting focus to a CNBC TV 18 exclusive. Sources tell us that Prudential is in no hurry to pare its 22% stake in ICICI Prudential Life after the stock's sharp correction over the last 3 months. The UK insurer is also set to approach IRDAI for a declassification as a promoter. Yash joins in with more details.
Well, you know, this does take that entire supply overhang away as far as ICICI Prudential Life is concerned. Of course, when Prudential decided and announced acquisition of that 75% stake in Bharti Life Insurance, they had mentioned that the regulations in India require them to pare down their stake to about 10% or less than that in the existing company where they're invested, that is ICICI Prudential Life Insurance. But what we've been given to understand is that Prudential is now expected to reach out to the insurance regulator IRDAI with two important requests. The first one is declassification of themselves as the promoter entity in ICICI Prudential Life Insurance, and second one, removal of the nominee director which they have on the board of ICICI Prudential Life Insurance. Now, there's a very important reason why they do that, because once IRDAI approves declassification of promoter entity of Prudential into ICICI Prudential Life Insurance, and of course the nominee then gets removed from the board, in that case Prudential would be allowed to hold its 22% stake as is in ICICI Prudential Life Insurance, and it would be entirely the company's call when it wants to divest it, if it wants to divest it also or not, or continue with it till the time it sees a higher exit or a higher price. This is that little discrepancy between SEBI regulations, which has a 10% threshold for declassification of promoter, and IRDAI, which has a 25% threshold for declassification of promoter, whereby being an insurance company, Prudential is likely to reach out to IRDAI for declassification under that 25% rule and retain its entire 22% stake for now as far as ICICI Prudential Life is concerned.
Okay, all right. Thank you so much for joining us with all those details, Yash. So that's an update from the insurance space. For the markets, the uptick continues. We do have the Nifty Realty pack, which is really surging in trade, 1.5% higher on that one. Nifty Oil and Gas doing well as well. ONGC, there's an upgrade coming in from Motilal Oswal. But media, IT, PSU banking space not doing so well. So that continues to be a pain point for the markets, but really not complaining apart from the fact that the rains are crazy in Mumbai.
That's right. A bit of a cool off, especially as far as some of the private financials are concerned. Axis Bank, Yes Bank, these stocks near the day's lowest point. And Bank of Baroda too. That particular stock down for the third trade session after the hit they've taken as far as its overseas operations are concerned. But with that, it's all the time we have on this edition of Midcap Radar. Your stocks when we return.
Hello, good afternoon. You've tuned into Your Stocks coming live from the CNBC TV 18 Motilal Oswal studios. I'm Vinny Motiwala. With me is my colleague Arundhati Ramanan. Arundhati, good afternoon. And again, a day of green coming in for the Indian markets. We're managing to hold on to 24,400 levels in today's trading session. Come off slight bit from the day's highest point right now in the last half an hour or last 15 odd minutes, we could say. Some bit of that cooling off from the day's highest point, but nonetheless today, there's green on the screen. It's pouring outside. There is no grays, there is no blues, just green. So yes, that's positive. But IT pack, that's seeing a bit of a decline in today's trading session. That's down almost 1%. Banks managing to hold on to good gains in the trading session today. We have a lot of Q1 updates that came in over the weekend as well, right? Whether you talk about banks, whether you talk about real estate space, as well as in terms of FMCG players, consumption side, we've seen those updates coming in. So those are some of these individual movers that are there in the trading session. Broader end of the market today, bit below in terms of the up move that we're seeing versus the benchmark indices. Yes, they're holding on to gains in terms of the mid cap as well as the small cap. But today still, the line of advance decline ratio, Arundhati, is still very close to each other. Neck to neck is what we could say. We've seen a crisscross line coming in at one point of time. Right now also, it's more in favor of declines versus advances as well. So we'll watch out for where that's going to be headed, Arundhati.
Absolutely. That gap sort of slowly widening through the day, right, as we speak. And if you take a look, strong start to the week. We've got the Realty pack that's leading from the front. And then we've got that Auto pack that's also doing well. All of them, M&M, Bajaj Auto, TVS Motor, all of those stocks gaining in trade. As Vinny pointed out, this banking updates that came in was also a big positive. We've got, on the top, HDFC Bank that's doing really well. It's a top Nifty gainer after its business update came out. And on the losing side, we've got those PSU banks that are not doing very well. And we've got that IT pack after the run-up it saw in a couple of the sessions last week. That index is now under pressure today. So that's how the markets are shaping up this afternoon. But it is time to answer all of your stock queries. And joining us today are Lancelot D'Cunha, Chief Executive Officer at ValueX Wealth Connect, and Ashish Kyal, the Chartered Market Technician and author at Wave Strategy Advisors, to answer all of your stock queries. Gentlemen, good afternoon and thank you so much for joining us on Your Stocks today. Let's get straight to it. The first query coming in from Praveen, who's writing to us from Chennai. He wants to invest in ONGC for the long term and wants to know the right time to accumulate. So, Lancelot, let me come to you first. What are the fundamentals for ONGC looking like, especially in light of all the West Asia tensions and all of that? So, is ONGC a good stock to buy in this current time?
I think, when the crude prices were higher, because ONGC is the producer of crude and they are in the oil exploration business, they would stand to benefit. Now that crude prices have come down, they would stand to probably get lower realizations for their output as it stands, and so that should not be very favorable for them in the near term. However, if you look at it from a perspective of a longer term, I think ONGC is fairly well equipped in terms of taking the advantage of the higher growth that you'll see on the crude space. And so from a long-term perspective, ONGC can be accumulated at a little bit of lower declines. Whenever the stock corrects a bit, it may be worthwhile picking it up and building a longer position. It has a decent dividend yield and it's trading at about seven times earnings, which is a fairly reasonable earnings for a company like ONGC.
Point taken there, Lancelot. Ashish, what's your view on the charts and technicals? Is it a good bet to invest in currently at these current levels? If not, then what is the level that they should keep an eye out on? Also, do not forget today, viewers, we had that upgrade that came in for ONGC from Motilal Oswal as well. So we'll watch out for that. But on the technical level, Ashish, what are we watching out for?
Hi, Vinny, and afternoon to all the viewers. If you look at the overall chart, the stock has corrected sharply from 300 levels, made a low of around 230 just recently. But 230 is a very important price action support because that's the level where it has traded for most of the 2025. And it has showed a reversal on the upside. So there is a possibility we can see the retracement for the stock back towards the level of around 260, which is an important swing low pivot level of 260 can be the target. That's a resistance. And on the downside, the support for the stock is going to be around 236 levels.
Okay, we'll keep an eye out on those levels over there for ONGC. Let's move on to the next query for today. This is coming in from Saji, who's writing to us from Kerala, holding 280 shares of Vari Energies. This is at a price of 3,387. They're making a loss on this one. He's a short-term investor and wants to know whether to hold or square it off and book his losses right now as well. Lancelot, we have a couple of issues that have come in. Then there are clarifications that come in on the US front, the tariff front as well for them. What is your view for Vari Energies? Should the viewer book out their losses right now?
So, if Vinny, if you look at Vari Energy, the stock they are basically one of the largest non-Chinese manufacturers of solar panels, etc. But and given that there is an impetus to increase the coverage of solar capacity in India, you will see some growth. But on the other side, there was a lot of supply from them to the US, and that could be subjected to new tariffs, as well as there could be a disruption in that part of the business. And so since it is trading a little higher multiple, the risk reward ratio at the moment is not favorable, because any negative impact on their earnings or sales growth could see the stock re-rating on the downside. So one should be a little cautious and probably book out the losses, especially since he was a short-term investor. He should exit from the position. And if he really wants to look at it from a longer term, wait for a serious correction in price.
All right, so wait for a serious correction from the long term, but from the short term, book his losses is what you're saying. Ashish, what's your view on Vari Energies? He is a short term investor, so is this the right time for him to book his losses, or should he wait for a bit?
See, I would suggest that anyone who is trading short term, there has to be a complete plan along with stop loss and what are the targets and what is the backup plan. So it's very important because the stock has moved down sharply. The hurdle was around 2970 levels, and that hurdle has been taken out on the downside. So that looks like the overall pullback on the upside is going to be short-lived. So my suggestion would be it's better to be out and always trade with a stop loss. And on the downside, there is a possibility the stock can even move towards the level of 2770.
All right. Okay, the next query is coming in from Srinivas, who writes to us from Guntur. He wants to know if this is the right time to invest in Maharashtra Seamless at current levels for the long term. The stock is currently at 600 rupees. Its financials have been more or less fine. It's seen steady, margins, and even their order book seems pretty steady. So is this a good bet, Lancelot?
So I think the company is one of the major manufacturers of seamless pipes and tubes, and they also are in the business of renewable energy power generation. But if you look at the the earnings growth, the profit has degrown in the last year, and I think costs are also catching up with them. So while there appears to be reasonable growth as far as steady growth, I think earnings impact is definitely going to have an impact on the price. And so from a long-term perspective, one can look at other alternatives in the similar space rather than buying into Maharashtra Seamless.
Okay. There are other alternatives you can look in the space than Maharashtra Seamless. That's the word coming in on the fundamentals for the long term. Ashish, on the technical level, would you still suggest Maharashtra Seamless at current levels, or you would also suggest another name, long-term investor?
No, I would not suggest Maharashtra Seamless at these levels also, because if you look at the overall trend in the chart, the stock has not given any kind of return since 2024, and it has still not showing any kind of positive pattern formation. Rather, if it actually breaks below 587, I think there is a possibility the stock can move further on the downside. So it's better to be out from here and invest something into like a Finolex cables or those kind of stocks, which looks much better than Maharashtra Seamless right now.
Okay. There are better stocks which you can look at, both on the fundamentals and technicals. That's a view coming in from our experts. Let's move on to the next query then, and this is from a capital goods space name that we have. Sriram Raghuraman is writing to us from Chennai. He's a senior citizen. He's holding 10 shares of ABB India. This is at a price of 913. So he's holding it for a while. Long-term investor wants to know the fundamental view now on the stock for a time period of 1 year. From here on, good investment levels coming in for ABB India from the viewer, Sriram. Lancelot, what's your view for this one?
So I think, while ABB is a great company, it's going to be beneficiary of all the data centers and the backup power systems, as well as to some extent on the, in the railways, they also supply a significant amount of equipment there. But if you look at the valuation, it's almost trading at 98 times its earnings. And when you have such a highly, a company that's priced so highly, any negative surprise in terms of growth in earnings or order book, etc., could mean serious re-rating. So at this point in time, risk reward is high. And while it's a good company to accumulate, it's always better to accumulate on a dip or a pullback.
Okay. So, but then right now, should they book their profits? They've invested at 900, so at least some part of it, should they book it?
But I think he's only purchased a smaller quantity.
Yeah.
So if you are a long-term investor, then one should look at accumulating and building more quantity over the longer period of time.
Okay, accumulating over a longer period of time is what you're saying. Ashish, should this viewer, he is a senior citizen, so at this point, should he book his profits or should he continue to hold ABB India at the price that he bought it, which was at 913?
First of all, I would like to congratulate him because he has been riding from that level of 900 towards 7,000 now. So if he bought 10 shares, I think he bought somewhere around 9,000 worth. It's now 70,000. That's fantastic, right? And I would suggest to continue to hold because this is what it takes to create wealth and value. So overall, the undertone is still positive. I think the stock can move towards the level of 9,000 and possibly higher from here on as well. And on the downside, the support is going to be around 6,200 levels. So continue hold on to the stock. It's very rare to see such kind of a holding from as a multi-bagger at 10 times.
All right, so continue to hold is what you're saying. Gentlemen, on that note, it is time for us to head into a quick break, but we'll continue to answer all of your stock queries on the other side. Stay tuned. Welcome back to Your Stocks on CNBC TV 18. Still with us, we have Lancelot D'Cunha of ValueX Wealth Connect and Ashish Kyal of Wave Strategy Advisors to answer all of your stock queries. The next query is coming in from Subramaniam, who writes to us from Bangalore. He holds 36 shares of New India Assurance at 385 rupees. The stock is currently at 185. He is making a loss on this, and he wants to know if he should sell or hold it for another 6 months. Lancelot, the viewer is looking to hold for another 6 months if he should, or should he just book his losses and look at something else at this point in time?
I would think so because, if you look at the business of New India, it has been under pressure, especially due to higher competitive intensity from the private sector players. And, the profit growth as well has not really been significant over the last 3-4 years. And even if you look at, the last 3 years, maybe the profit has been better, but thereafter it has been a bit weak. So considering that there's not much of growth on the immediate visibility, immediate future, it's better to, if you're holding for 6 months, better to book out and maybe look at other companies in the same sector. If you want to stay invested in the insurance sector, you can look at other companies where there is significant growth and add into those rather than sticking to New India Assurance.
Okay. Can look at others than sticking to New India Assurance. That's a word on the fundamentals. On the technicals, what should they do, right? They bought it at higher levels, Ashish, from the current one. So time period is just 6 months now from here on. Does it merit holding it? Should we expect a bit of an up move in the near term?
See, if you look at the overall stock movement, it moves very fast and very quickly. We can see that movement happen from 149 levels in just few days back to the high of 220, and then the stock retraced back nearly 50% of that rise. So I would suggest hold on, but be cautious because volatility is very high. The stock has tendency to move very sharply. The stop loss on the downside is going to be 178. If it breaks that, then be out of it. There is a possibility the stock can move back towards that 210 level, and that's where the exit should be there.
Okay, surely point taken there. We'll keep an eye on those levels over there for New India Assurance. Let's move on to the next query for today. This is a caller query that we have right now. Mr. Ramakrishnan is calling us from Guntur. Mr. Ramakrishnan, thank you so much for calling us this afternoon. What is your query on? Is it investment and what levels if you've bought it at?
I have invested in Cupid at the rate of 84 rupees.
Okay.
So I would like to hold it, but is it the right time to book the profit or can I continue the same?
Okay, you bought it at 84 rupees. You're making a profit on this one right now. Today the stock is up 7% as well. Lancelot, what is your view coming in for Cupid? Should Ramakrishna hold it now for a longer period of time?
If you look at the financials of Cupid, it's trading at a multiple of 263 times its earnings. And that's very expensive because that means the company has to grow at almost 100% every year. And this is a business which is a lot is dependent on the overseas, orders that they receive from various, various charitable organizations engaged in prevention of AIDS. And so they seek, these male and female condom supply from Cupid. So it's a business that can be lumpy in terms of revenues, and any negative surprise can really seriously dent the stock price. So my point is that if you are making money, it's better to exit at this high multiple.
All right, so better to exit at this high multiple is the view coming in from Lancelot. Ashish, what's your view on Cupid? The caller is making a profit, but is this the right time to book their profits or continue to hold?
See, right now, the momentum is ongoing. The stock is overstretched, overbought for quite some time with RSI rating around 91. But having said that, if you look at the past 18 days, the stock has not given a close decisively below the prior candle low. Now, since 18 days, that's the momentum. So I would suggest ride as much as possible over here right now. Do not expect much, but 225 is the level where he should look out to exit. On the downside, maintain 200 is a very strict stop loss because that's the low of today. If it closes below that level, then be out.
All right, so 200 is a very strict stop loss. The next query coming in from Devarajan, who writes to us from New Delhi. He has 300 shares of Kaynes Technology bought at 4,453 rupees. He is making a loss. The stock is currently trading at 3,353. And he wants to know if he can exit the stock right now. Lancelot, is this the right time to exit or should he continue to hold for some more time? We seem to have lost that connection with Lancelot. But you know, Ashish, let me come to you. Lancelot, can you hear us?
Yes, I can.
Okay, just to repeat, it's Kaynes Technology, bought at 4,453 rupees and currently making a loss. The viewer wants to know if he should exit the stock now or if he should continue to hold.
So I think, if you look at the fundamentals, the stock is trading at above 60 times earnings. And its major reason for basically valuation was that it invested in Kaynes Circuits, which is a company that is implementing semiconductor projects and electronics projects. But the investment is almost 10,000-12,000 crores across the spectrum. And the return on investment is going to take significantly long period of time. So given that you are looking at a highly priced company, and the expectations from these projects will come up only after 2-3 years time. It's better to book your losses and exit at this point in time.
Okay, better to book out the losses and exit at this point of time. That's the fundamental point of view coming in for Kaynes Technology. Technical chart for this also, what's the indication here? Should they book their losses, Ashish?
See, if you look at the overall sector, I think there has been a pressure on the downside, but I think this sector should start reversing back on the upside. So overall, we are consolidating in a range. The broad range is 3,018 on the downside as a support, and the hurdle on the upside is 3,415 levels. My suggestion would be to hold here. Let's see if it can manage to break that hurdle of 3,415 and sustains above it. Then there is a possibility the stock can go towards 3,750. Hold with a stop loss on the downside at 3,111.
Okay, we'll keep an eye out on those stop loss over there for Kaynes Technology as well. But our next query for today then, this has come from Rajiv, who's writing to us from New Delhi. He wants to know the six-month view on Transrail lighting. Short-term query, short-term your indication is what he wants in terms of target price as well. Lancelot, what is your view on this one? Does it merit entering Transrail lighting right now? They've not mentioned whether they've already bought it, but this is a 6-month view. So I believe they look to enter here right now.
So Transrail Lighting is a company which has a market cap of about 7,000 crores. It's engaged basically in putting up, transmission and distribution poles manufacturing. So it's a turnkey EPC company. Profit growth has been reasonable. It's grown as profits about 20%. But if you look at this company, the business is not really going to grow that much compared to, there are so many other players in this transmission and power distribution segment. So with competition hotting up, I think it's going to be challenging for the company to maintain the rate of growth that it has. And being a small cap company could get negatively impacted, whenever there's competitive pressures, intensity increases. So I would think that if you can book profits, better to book profits and exit.
All right, so if you can book profits, better to book them and exit. Ashish, your view for Transrail lighting, any targets to watch for?
See, the stock has been an underperformer, honestly, and it has not managed to even break above the hurdle of 530 levels. So my suggestion would be it's better to be out, to avoid buying something like this, which is stuck in a range since many, many months, and it has not done anything. So avoid buying Transrail. If you already have an investment, then maintain a stop loss on the stock at around 500 on the downside. But we exit from at current levels.
Exit from current levels if you are holding it. Do not buy at this levels right now. That's a word coming in from the technical point of view as well. But Ashish as well as Lancelot, thank you so much for joining us. This was the last query for today. Hope to connect it again very soon. Thank you so much for that. But viewers, do not forget, you have to email us your queries. You have to send us the queries on the email address as well as the phone number that will be at the top of the screen for you all. So do send us your queries, and the last hour of trade is still left. So don't go anywhere. Closing bell is up next to take you through all that action.
approved headlines. To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Asia, the handoff has been quite strong from Friday. Japan and Korea led the rally.
It may drop a little. Mileage can drop a little because of various things.
OPEC Plus members approved 188,000 barrels per day quota increase for the month of August. We are starting at about 24,300.
I think I still remain bullish on gold.
He had approved AONs worth nearly 52,000 crore rupees.
Vedanta Aluminium Company has reported highest ever quarterly aluminium production.
Now, the IMD has issued a second red alert for Mumbai.
There is a likelihood that they may revise their expectations or guidance going forward in this year itself.
Prudential is likely to retain its entire 22% stake in ICICI Prudential Life Insurance.
It's been such a rainy day in Mumbai, but markets continue to be above the 24,400 mark.
What a strong start to the trading week. It's a Monday afternoon, 1 hour to go, and the Nifty is comfortably above 24,400. We had a positive start. And strong banking updates, particularly from heavyweights like an HDFC Bank, that's propelling the markets higher. And Reliance Industries too has contributed to the up move. So throw it all in. We've got the Nifty, which is up more than 100 points, hitting a century, 133 points. And at no point of time did you see the markets falter. The Sensex is higher by nearly 450 points. The only fly in the ointment, perhaps, is the fact that the Midcap index is trailing the frontliners, though it's positive. The advanced decline ratio is in favor of the losing side. So we've got about 1,400 stocks advancing for 1,700 stocks declining. You're watching Closing Bell. We're coming to you live from the CNBC TV 18 Motilal Oswal studio. I am Reema. Let's quickly tell you what's on the show today. The Indian markets start the week on a strong note. The Nifty scales past 24,400, led by banks, realty stocks. Broader markets likely underperformed. The bullish note from Investec sees Dixon rally 5%. Ria joins in to tell us what triggered the bullish call. Defence stocks also up and about as the Defence Acquisition Council clears orders worth more than 50,000 crore rupees. Stocks across the sector surge. We'll get chatting about it. The banking index is rallying, led by HDFC Bank, which reported a strong business update. Advances growth of more than 15%. Kotak, though, is the outlier. That stock is under pressure, nearly lower by 4%. The street is disappointed by the CASA performance there. And Goldman Sachs' Timothy Moore joins in just a bit to discuss his outlook for emerging markets. He's very bullish on Korea, Taiwan. Does that continue? And if that continues, what does it mean for the Indian markets? All this and more coming up in the next 1 hour. Let's get to the equity calls then. Mitesh Thakkar, as always, is joining in with his closing strategies for the last hour. Mitesh, first, do you want to quickly give your assessment for the day so far? Where are we headed? And then the stocks.
Yeah. So, good afternoon. I think one important thing is that the Nifty remains about 24,350. And the corresponding level in the Bank Nifty was around 58,450. We're just hovering around that. So, if the Nifty starts closing above 24,350, I think we should look at the next target, which was the highs made in August, 3rd week of August, around 24,586. I think that should be the next target. And then 24,800 is the next supply level. So I think these two levels can be tested in the upside. And I would want to see if the Bank Nifty can also get past 58,450, then we might look at slightly more aggressive target on the upside.
58,400. That's the level on the Nifty Bank that you're watching. And if that's crossed, then higher levels are in store. Is that right?
That's right.
Okay, so that's the watch point. What about stocks?
Yeah. On the stock side, I have two buy calls right now. Glenmark Pharma, after a good consolidation, is reversing and breaking out on the upside. So that's a buy with the stop at 22.48 for targets of 23.20. And Dixon Tech is a buy with a stop at 12,840 for targets of 13,950.
Got that. Actually, we got a bit of a sort of view coming in on Dixon in just a bit. By the way, Mitesh, good afternoon. Welspun Corp, you have a view. It's a massive move on very large volumes today. It went sideways for a while, but big volumes.
So Welspun Corp, I've been tracking the stock. I've been tracking the stock, and it's been doing very well. And now I think it's just showing signs of some kind of continuation. I'm not able to load the chart. If you can give me a minute, I think I should be able to do that.
It's a new high. It's a new all-time high.
Yeah, the chart is not loading. Just give me a minute so that I can just be on that. Just be tracking that.
Okay. So let's do one thing. We'll come back to you. You load up the chart and we'll come back on that. But Dixon is something that Mitesh has on his list as well. It's extending gains on the back of a bullish Investec note. Ria has got details here. Ria, take it away.
Well, yes, Dixon is in fact holding on to strong gains today after Investec has come out with a note on the stock. They have a buy call on the company with a target price of rupees 16,200. Now, they have raised their FY27 EPS target on the stock by 6 to 8% after incorporating the management's earlier volume guidance, wherein they had guided for a flattish volume growth for the year. But this is excluding the contributions of Vivo. Now, this EPS upgrade that the brokerage has given reflects their checks with retailers, which have said that the mobile sales have now started to stabilize as consumers have started accepting the increased prices. And in fact, their checks also suggest that Chinese EMS companies are now ceding market share to their Indian counterparts. So that is also a big positive for Dixon Technologies. They do expect the company to deliver flattish YOY EBITDA growth in the first half of FY27. But from the second half onwards, they are expecting the company to see strong earnings growth, and in fact they also see potential for Dixon's mobile exports to pick up going ahead, and also see opportunities for the company to foray into the specialty EMS business via acquisitions, and this is what they believe will lead to further earnings upgrades for the stock.
Got that. So that is Dixon for you. I think Mitesh has got that chart up of Welspun Corp. Mitesh, you have it?
Yes.
Go on.
Welspun, yeah, sorry. So Welspun Corp, I think yesterday and today, I think the lows, if you look at them, Prashant, 21-day exponential average has been the low, and also pivot of 1425. This is already bounced back, made a new high. I think they should see more momentum, and possibly 1650 to about 1700 should be the near-term target, and then we'll take it from there.
How do you buy these on smaller dips that we had in the last 3-4 days? These kind of names which have had such strong momentum. Or you just buy fresh breakouts?
Yes. That's why I said I think there is good chance that the stock will head towards 1650, 1700. And if somebody wants to buy right now, the recommended stop loss would be around 1510.
Okay, got that. Real estate, that's another sector of strength today. The Nifty Realty Index is up 1.5%. This follows the 2.5% rally that we had in Friday's trading session. And now the Nifty Realty Index has been inching higher for the 5th consecutive session. It was just in the month of April when things were looking really dismal. The Nifty Realty Index had tanked 50% from its 52-week high. And since then, the Nifty Realty Index has recouped 40% from the lows. So it's still about 10% away from the peak levels. But it's been a phenomenal rally from the April 2nd low on the Nifty Realty Index. 40% rally since that level. And even in the last few days, if you can pull up a 1-week chart, a 2-week chart, you would see the kind of up move that we've seen in that. Even, the stocks which were under pressure last week on Friday, Hitachi, GE Vernova, TND, they're all holding up with their gains. So there is a bounce back of 4-5% visible on Hitachi Energy, GE Vernova. And even on the consumption side, I think FSN Ecom, that's Nykaa, has hit a fresh 52-week high. Avenue Supermarts rebounds from Friday's losses, so that's gaining close to about 2%. Godrej Consumer, Dabur in the green. And banks, of course, we've been talking about it for a long time. I think we have Ananya now joining in to just quickly recap how the banking updates looked. Ananya? Ananya, can you hear me? Go ahead with the banking updates.
Yeah, okay. So financial stocks are in focus today after their Q1 update. Let me first start with HDFC Bank. So one of the top gainers today in the private bank segment, they after reporting a steady quarter, we can see the advances were up 15% and deposits rising 15% year on year. Now, the key positive was the improvement in its funding profile, if we see, with the loan-to-deposit ratio declining to 97%. Now, both Bernstein and Jefferies believe the bank is striking the right balance between the growth and profitability here, and while also indicating that post-merger, funding concerns are gradually easing. Now, when we look at Kotak Mahindra Bank, the stock was under pressure today despite delivering double-digit loan growth of 15%. Deposits growth came in at 12%, while the CASA ratio slipped to 40.3%, keeping investors cautious. Now, Motilal Oswal has maintained its buy rating with a target price of 397 here, but believes stronger deposit mobilization and recovery in CASA will be the key triggers to watch over the coming quarters. Now, when we look at the fintech and NBFC space, Kisht is one of the biggest gainers after delivering one of the strongest business updates. Now, AUM surged 61% year-on-year to 8,000 crore, backed by 37% growth in disbursements. Now, investors have also welcomed the company's increasing focus on secured lending, with the loan against property portfolio, that is LAP portfolio, rising to 7.7% of AUM, which is expected to support asset quality going forward. Now, fresh updates also came in from Poonawalla FinCorp today, which reported AUM of 7,000 crore and maintain a healthy liquidity buffer of around 4,000 crore, highlighting its strong funding position to support future loan growth. Now, the stock has also witnessed strong buying today after this news. Now, coming to Bandhan Bank, meanwhile, they reported a mixed quarter if we see. While advances grew a healthy 16.4%, the deposit growth remains subdued at 6.6%. Now, Motilal Oswal has retained its buy rating, but noted that overall business growth was slightly below expectations, with liability growth continue to remain a key monitorable going forward.
Thank you very much for that. Dipan Mehta, Director, Elixir Equities, is now joining in on the show. Dipan, up until now, it was PSU banks stealing a march over private sector banks. But this quarter, maybe the picture is changing a bit. Many of the private sector banks, including the large ones, whether you look at HDFC Bank, Axis Bank, all reported a good showing. Indices Bank is another one, 2.5%, 3% up, I think. What's in the battle between PSU, privates, NBFCs, which one tops?
Yeah, Reema, good afternoon. Thank you for having me on your show. I must admit that the numbers which have come from the banking industry, especially private sector banks, are very impressive. I think better than what we had expected. And I think this tug of war between public and private is going to keep on happening. End of the day, you have to buy the best bank or the best lending business. And in our opinion, we are better off with the NBFCs. And I think NBFCs also come out with good pre-quarter releases. Very impressed with Bajaj Finance, also a company which we and our clients are invested in. And overall, I think the increase in market share by the NBFCs, I think that particular trend will continue. So while I think overall banks have delivered a good set of growth in terms of deposits, but from a returns perspective, from a risk return profile, we prefer the NBFC, especially multi-product NBFCs, Bajaj Finance, L&T Finance, Poonawalla, Cholamandalam. I think all of those may give higher returns, because banks at the end of the day is becoming highly competitive as well. So one needs to keep that risk factor in mind.
Yeah, no, absolutely. Point taken. Lots of action and names like, I was just discussing Welspun Corp on the technicals with Mitesh. Dipan, good afternoon. Any thoughts? Do you own this one?
No, this is the home textile company, right?
No, this is the pipe company.
The pipe company. Yeah. I think there's a good story around this pipe company. That considering the kind of investment take place into oil and gas because of the risk factor that has opened up because of the closure of the Strait of Hormuz, I think all countries are looking at investing in their oil and gas installations. And I think Welspun Corp plays a very important role. They've got some good overseas orders as well. Within India also, I think we want to expand our oil and gas transportation through pipes, that entire infrastructure. And it's a reasonably well-managed company, and I would say very attractive valuations as well. So I think prospects are pretty good for a company like Welspun Corp. And it's been kind of a very low-profile company, but yet continues to deliver on the revenues and profits front. So very positive on that entire industry, which is basically oil and gas infrastructure-related businesses. And certainly that company is doing quite well, Welspun Corp.
All these defense names, right, are rallying. So there's Paras Defense, smaller ones actually. There's Paras, there is Zentech, and a bunch more. which are all buzzing. Actually, the Nifty Defense Index, I think we had a technical view coming in earlier on the Nifty Defense Index saying, well, maybe is it a double top? Is it not? Certainly not a double top anymore. We've basically made a new all-time high on the Nifty Defense Index. It's not a very old, it doesn't have too much history, but the history that we have is clear that it's a new all-time high. It's a fresh breakout here on the sector. Anything here, Deepan, that you like?
No, I have a theory, and that is that all these defense companies, especially private sector defense, if you notice the common thread, last few quarters have been exceptionally good, better than street expectation, and certain amount of pre-quarter release buying is taking place over here. It's like a nice trading opportunity, whether it's Paras Defense or whether it's Zen Technologies or some of the PSU defense companies. If the number is good, this June quarter number, which will be out sometime around end of July, beginning of August latest, the numbers are good. Generally, these companies are given a good pop when the results have actually declared. So some amount of pre-quarter result buying is taking place over here. And nonetheless, I think these companies have got great long-term prospects sitting on multi-order book position. And this investment theme continues to attract a lot of investors. End of the day now, there's a scarcity of good quality defense stocks also, and existing ones also. I think the liquidity within them also has dried up with a lot of influential high-profile investors and institutionals tanking up on these stocks. So there's not much of supply also available. I look at the IPOs coming, there's hardly any paper as far as defense stocks are concerned. And this is still an industry which has got good earning visibility, and the geopolitical risks haven't subsided. In fact, new opportunities have emerged for these companies in light of what we have seen in the Gulf and in Ukraine-Russia war.
Okay, let's quickly get the news in on defense. There are prospects of higher ordering with the Defence Acquisition Council clearing proposals worth 52,000 crore rupees. Ria joins in with the details. Ria.
Well, yes, defense stocks are buzzing today, and this is after the DAC has approved AONs worth nearly 52,000 crore rupees. Now, this was on Friday after the close of the trading session, and today defense stocks are buzzing on the back of that. They have approved these procurement approvals all across the Army, the Air Force, as well as the Navy. First up, looking at the approvals given for the Army, they have approved the Akash Tarang anti-UAV electronic warfare system, and for this, Bharat Electronics, Apollo Micro, as well as Data Patterns are set to benefit from this. They've also approved the man-portable anti-tank guided missiles, for which Bharat Electronics as well as Bharat Dynamics are expected to show some contribution. Apart from this, there's also the medium-range surface-to-air missile as well as the very short-range air defense system, for both of which Bharat Dynamics as well as Bharat Electronics again will likely see some ordering. And for the Army, they've also approved the jet-based kamikaze drone system, for which Bharat Electronics as well as Solar Industries can see some benefit. Moving on to the approvals for the Navy, they have approved the multi-influence ground mine, for which Apollo Micro as well as Bharat Dynamics can see some likely benefit. They have also approved the naval shipborne unmanned aerial system, for which we can see some contribution from Hindustan Aeronautics as well as from Bharat Electronics. And lastly, for the Air Force, they have approved the fixed wing high altitude pseudo satellite. For this, a whole group of stock can see some benefit. There's HAL, Data Patterns, Bharat Electronics, Astra Micro, as well as Paras Defense. And all of these stocks are buzzing in trade today. In fact, Paras Defense is one of the biggest gainers among the defense pack, up nearly 6 to 7%. BEL also seeing gains of nearly 2% today. And the entire defense pack continues to tick higher, up nearly 1.5% today.
Dipan, is there any stock that you're watching very closely in terms of earnings in the upcoming earnings season? If yes, which one?
No, I think, Reema, first of all, this earnings season is not going to turn out to be as bad as I expected. I think, we had this entire disruption because of the Gulf War, the Iran war, and yet the pre-quarter releases have been very impressive across the board. Even FMCG companies, which have been the gross underperformers, they are also reporting a good kind of volume growth. And there are challenges as far as the monsoon is concerned. And yet, I think, whether it is auto companies, whether it is banks, whether it is FMCG companies, certain select infrastructure companies also, all showing that things are not as bad as we expected. So I think that's very positive, and I think quite excited about this. Far more excited. I was a bit cautious about this upcoming earnings season. And no specific name that we're looking at, but generally I think it's a great time to evaluate existing investments, and new stock ideas always emerge based on what the actual performance is and what managements have to say in terms of guidance, in terms of commentary, and any industry related information that they part with us.
I've got that. We'll watch the earnings season. Should be there'll be margin pressure, of course, because of what has happened. That is already locked in, higher input prices, etc. But I mean, as FMCG has shown, as financials have shown, on the top line, there seems to be little problem. There's been no wobble per se. Those are, of course, just based on the first quarter updates that we have from these companies. Deepan, thank you very much for joining us. Good speaking with you. Appreciate your time here on CNBC TV 18. It's a pleasure. Well, I think we can bring in Hormuz now, who's standing by with the buzzing names and just what he wants to put the spotlight on. Hormuz, take it away.
Multiple gainers on the upside, multiple gainers in today's list. Start off with Welspun Corp, and the stock is doing well today. And the 8.5% up move is the biggest single day gain that the stock has seen since May of 2025. We've had more than 51 lakh shares that have been traded, and that is 10x. It's a 20-day average of just around 5 lakh shares. And even if you take a look at the delivery volumes as well, very strong delivery volumes. More than a third of those shares have been marked for delivery today on Welspun Corp. So good going for that stock. And even in today's session, the stock has continued its up move ever since it's made its low, and it's been above its key moving averages since mid of April. And the stock from its 52-week low has surged more than 100%. It fell to a 52-week low in February. That was around about 700 rupees. From there, the stock has surged over 120%. Now, and of course, so far for this year, the stock is up 90%. It's delivered positive calendar year returns since 2020, turning out to be the best year since 2023 for Welspun Corp. Of course, the day undoubtedly belongs to HDFC Bank, the one stock that has been the top contributor to the index gains today, the biggest single day gain in almost a month for the stock. And even in today's session, is a second straight day of gains, yes, but take a look at the premiums as well on the F&O side of things. On the 820 call option, the premiums have gone up by 90% in today's session. Very, very strong volumes today. 5.5 crore shares have been traded. The 20-day average is 2.5 crore shares. And look at the delivery volumes as well, equally impressive. 70% of those shares traded so far have been marked for delivery on HDFC Bank. The stock has now moved above its 100-day moving average, which was at 809. The next level on the upside is the 200-day moving average, which is at 892. And undoubtedly so, the stock is the most traded one on the Nifty 500 today. And the last one on the list is Manappuram. That's not only today, but for the third straight day now, the stock is up 5% in today's session. And during this 3-day period, the stock has gained more than 10%. And even if you look at the premiums on the F&O side of things, the 340 call option has seen its premiums go up by 133%. Today we have had 95 lakh shares that have changed hands so far, almost 4x its 20-day average. Close to 40% of those shares, or close to 50% of those shares, have been marked for delivery on Manappuram. And the stock too is above its key moving averages since the month of June. And in today's session, the stock has turned positive for 2026 as a result of this 3-day up move.
All right. Thanks very much for that. So there's lots of interesting names there. Started with Welspun, ended with Manappuram. Thanks, Hormuz, for that. We return with Goldman Sachs view. Timothy Moore of Goldman Sachs will be with us, and we discuss global markets, his view now with regards to India in the Asian cohort. Stay tuned. Okay, welcome back. Timothy Moore is co-head of macro research in Asia and chief APAC regional equity strategist at Goldman Sachs. Timothy, great to have you with us here on the program. Thank you very much for joining us. You know, India has been perhaps one of the most sold markets by foreign investors. Little love over the last 2 years now, and all the love for Korea and Taiwan. So the consensus has been that maybe the AI rocket fuel has to end for people to pay attention to markets like India. I just wanted you to address it. Is it likely to happen? Is that logic flawed? What's your sense?
So those are all great questions, and let me try to address those somewhat sequentially. First, just to maybe give a slight ray of hope for Indian investors, I would just note that there's actually been a lot more foreign selling in Korea this year than there has been in India. For reasons we can get into if you wish, there's been close to $100 billion of selling by foreign investors in Korea year to date. And then we've got about 26 or thereabouts in Taiwan and a comparable amount, mid-$20 billion of selling in India. So India's had its fair share of selling, but actually Korea's had more for some technical reasons relating to market concentration. Just to sort of make that point from the outset. But the broader answer to your question in terms of the AI trade, I think it really revolves primarily around earnings. And that's, I think, probably the most important point for your viewers to take on board, is that the markets are actually being very rational right now in terms of rewarding where the earnings are being delivered, and then being less focused and less forgiving in terms of areas where the earnings are falling short. And to give some quantification around that, we're expecting 320% earnings growth in Korea this year, which is an extraordinary number. It's the fastest earnings growth for any market we cover in Asia at any point in time, going back to the mid-1980s, with one exception being the 1999 recovery from the Asian financial crisis. But that was off a really devastated level of earnings. So off a normalized base of earnings, we've never seen this amount of this profit growth before. And Taiwan is delivering 48% earnings growth this year. And not surprisingly, these are the markets that have done the best in the first half. India has not been delivering earnings as well, as I'm sure you and your viewers are aware. And I think that's that plus rich valuations that help to explain conveniently why India has not performed as well. But the ray of sunshine, I think, is that there are some favorable deltas which are coming into the picture here, which is that to the extent that India was under selling pressure because of the onset of the Iran war and the increase in oil prices and India's sensitivity to that, as oil prices have come back down, there should be some compensating effect. And in fact, we've raised our numbers from 8% earnings growth for Nifty for this year back up to 10%. Now, we were at 16% before the war. We brought it all the way down to 8. We brought it back up to 10. Not everything is as good as it was before the war now. So we still are somewhat below where we were before. But the rate of change, the delta, is favorable. And I think we're seeing that start to show up in terms of India's performance, both in absolute and relative terms in the past few weeks.
Timothy, hi. Morning. This is Rima here. So 320% earnings growth for KOSPI this year. What would the forward valuation multiple look like for Korea, Taiwanese markets, and for India with a 10% earnings growth? What, according to you, is fair valuation multiple?
So Korea right now is trading, this may sound like an astounding figure to you and your viewers, is trading at 6.6 times forward 12-month earnings. And we just put out a piece this morning. We showed a 20-year time series of that. And that level is has only been as low or slightly lower at the end of the global financial crisis. So very, very low levels of forward multiples. Now, the pushback on that is that the argument would be, well, look, the memory stocks, which are the dominant part of the market, are super cyclical, and therefore you want to sell them when they're cheap. We've got a whole raft of reasons I can get into if you wish regarding why we think the profit cycle for the memory stocks will be longer than it typically has been, and why they should deserve higher multiples. But I think it's very hard to argue that Korea is expensive here. And so as long as the earnings come through and the market is inexpensive, we think that it can go higher, which explains why we're overweight. Now, the other interesting comparison to flesh out the last part of your question is between Taiwan and India. because both markets are trading at roughly around 21 times earnings. India, as I checked as of today, is trading at 20.5 times 12-month forward consensus earnings. Taiwan is a tad higher, about 21 times. But Taiwan, we think, is delivering 48% earnings growth this year and 30% next. In India, in our numbers, we think will deliver 8% this year and 13% next. So if you've got both trading at sort of 20 times earnings, but one is delivering much faster earnings growth, then I think that explains why why we're overweight Taiwan and market weight on India at this point.
Got that. Timothy, what's the, how much of the global sort of growth is and this is your estimates in some of these markets, right? Which is, in US and some of the other markets where AI, CAPEX. I mean, the checks are being written by all the 7 companies in the US. Everybody else is a beneficiary downstream. How much of the growth is supported by this spending? Because it's in the hundreds of billions of dollars.
Right. Look, the simple way I think to frame this is that overall global demand for compute with computational capability, we think will grow. If you proxy that, for example, with token demand, we think that will grow 24 times by 2030, which is obviously a very large number. That rapid growth in demand for computational capability, which is really a function of the transition from the inference AI economy to the agentic AI economy, where the early proliferation of agents is driving a very rapid increase in demand. We think that continues for some time. That is what is impelling the hyperscalers in the US to spend increasing amounts of CapEx to build the data centers to provide that computational capability. Our numbers for next year, we think that the hyperscalers will spend over $1 trillion. And it's that spend, that demand, which is then going upstream into Asia, particularly into Korea, Taiwan, parts of Japan, and so forth. And that is what's driving this exceedingly favorable environment for the AI hardware supply chain, and what is propelling those markets. So that really is sort of the concept behind what is creating this extraordinarily favorable profit growth environment for these North Asian markets at the present time.
$1 trillion in terms of a capex spend by hyperscalers next year. But Timothy, because hyperscalers are now increasingly funding their capex via debt and not the free cash flow, so next year the debt raise is going to be even higher. So what if the capex number is not as high as $1 trillion that you're anticipating? What if it's similar to what they've done? 2027 capex number looks similar to 2026 at $750 billion. Will that shake up the entire AI trade? How big a risk is that?
If things happen the way that you've just said, Rima, then I think that would be clearly a negative surprise for the market, and stocks are going to trade off in the back of that. I mean, I think it's hard to argue against that. So really, what's at the heart of your question is whether the capital markets, both debt and equity markets, will be able to provide the incremental funding. Because you're quite right that we've gone from a situation with hyperscalers where they're spending both cash on the balance sheet and free cash flow to where now they're spending most of the free cash flow, and they've run down a good portion of the cash on the balance sheet. So that's why they're in the capital markets raising both debt and equity. Now, if the appetite for that it diminishes or is not able to fully satisfy the funding requirements, and that leads to a lower level of capital expenditure, then I think the market will have to reduce its expectations. And given how well the stocks have performed and how much profit is on the table, I think it's pretty clear that would impel some degree of correction in the stocks. So without doubt that is a risk. And then I'm sure that if we're connecting the dots back to India, if that sort of takes all the limelight off the North Asian markets, then it might shine a more favorable light on what's taking place in India, especially if India's finding its feet, both in terms of macroeconomic terms as well as earnings delivery terms, now that oil prices have come back down. So, I think that when we connect all these things together, that would be a more constructive argument for India if things turn out the way that you've hypothesized.
In April, when crude prices were at $120 per barrel, rupee was sliding every single day. Perhaps India's inflationary problem looked difficult, challenging. And maybe the RBI would have had to resort to rate hikes to stem it, especially the rupee depreciation. But now that picture has changed. You still expect the RBI to go ahead and hike rates by 50 basis points in Q4 of next year at a time when the Fed is likely to cut, according to Goldman's own estimates?
Well, so we do think that the RBI will tighten further, but I also want to be clear that we now think with the rupee having backed off to the extent that it has, that among the so-called higher yielding currencies, we think that the rupee looks attractive in terms of some relative spreads. And in fact, our FX strategist just published on this just over the weekend and articulated that view that at current levels and where we think fair value is, as well as the yield pickup that one's getting, we think that against some of the perhaps less attractive, lower yielding Asian currencies, that being focused on picking up that extra carry in the rupee now looks attractive. So I do want to note that that is a more constructive view that we've come to following the evolution of the fundamentals that you've just well described.
What will help what will help India get back on the overweight list? We are expecting a 13% earnings growth next year. Is that good enough?
Oh, I mean, really, you've hit the nail on the head in our view. I think it really is all about earnings. And then, of course, evaluation relative to earnings. So one of the metrics that we find has been helpful in terms of explaining relative performance and indeed absolute performance is the price earnings to growth ratio, the so-called PEG ratio. And that's really, how much you're paying for a given percentage amount of earnings growth. Now, given the outsized earnings growth that's being delivered in Korea and Taiwan, and the lower valuations, particularly in Korea, you've got some exceptionally low PEG ratios. Korea's is 0.6 and Taiwan is 0.8. India's higher. And so I think that what would obviously make that ratio look more attractive, that metric look more attractive, ideally would be higher earnings growth coming through, which we'd be optimistic about. And, as you said, we think that there will be improved momentum in Indian earnings. The absolute level of 13% is certainly very credible, and I think it justifies a market weight in our view. But if we're looking at 35% growth next year, once we get through this supernormal growth that I've been mentioning in Korea and Taiwan, those are still meaningfully higher rates of change. So that would naturally impel us to be somewhat more constructive in those markets. But we're sort of leaning more positive in our India stance, but just feel we need to see a bit more evidence coming through before we'd want to be thinking of turning more constructive.
Okay, all right. Thanks very much, Timothy, for joining us. Good speaking with you. It's a pleasure having you here on CNBC TV 18. Thank you.
Thanks very much.
Okay, we'll take a break. We're back with more markets on the other side. I think 160 points is where we are, how much we have on the upside, 24,300 and actually 24,430 on the Nifty. Take a break. We are back in just a bit.
Welcome back. Let's get in Nimesh now for finding out what's happening in the dealing rooms and what the chatter is right now. Nimesh.
Hi, Remira. Today seems to be a day of large caps. So large rally is driven by the financials and select large cap names, and that's backed by FI buying as well. Interestingly, the Nifty Bank Index is up nearly 0.7%, largely on back of very strong Q1 update from most of the financials, whether it's NBFCs or private banks. Barring Kotak Bank, I think virtually everybody has reported a strong Q1 update. Technically, 24,400 is a level to watch. If that gets taken out, you will see further short covering rally. And remember, the FIs are still net short of almost 90% on the Nifty level. So a further short squeeze is quite possible if that levels are sustained. And the rate sensitive seems to be back in action as well. The real estate stocks have been buzzing into all of last week and this week as well. And also a bit of buying is back in the auto name. So rate sensitives are favored. And largely this rally today is driven by large cap names, whether banks or some of the select large cap stocks.
Nimesh, what about stocks? What's on your list?
So first couple of names where I'm expecting large block deals, Biocon and Delivery. Both have been consolidating in a narrow range of late, but in both the names, Citi is anticipating large blocks very soon. Biocon is quite interesting because, again, just to clarify, the non-promoter entities are going to be sellers in both those names. Biocon is interesting because there I understand the foreign holder, the foreign company is going to be a likely seller, so and they own a large stake. So that could be a large block in Biocon very soon. So that's something to track there. Second couple of names where there is delivery-based buying today. SEM India project, which is erstwhile IT cementation, as well as Grasim. Expect high delivery volumes in both these names as on the back of FI buying. So a bit of institutional interest is back in those names. Third, a couple of stocks which are buzzing in trade, both GE Vernova as well as Siemens Energy. Both stocks have very sharp correction, a bit of a bounce back today. To me, it looks like more of a short covering rally because there is still selling and a bit of supply in both these names from large institutions. So at higher levels, there is a bit of selling coming in those names. And last is Adani Power. Even that stock is recovered from the intraday lows after multiple block deals. I believe it was a clean out trade from a leading long only fund, so that's cleaned out. And some domestic mutual funds would have bought. So if there is any disclosure, it could be interesting. But my sense is there was a clean out trade in Adani Power, and hence we've seen a bit of an intraday recovery in that name as well after multiple blocks.
Okay, all right. Interesting names there, Nimesh, as always. Thanks very much for that. Well, Mitesh is with us with some near-term trading ideas in terms of what he'd want you to do. Mitesh, what do you have?
Yeah. So, Prashant, I have BTST on 361. It's the financial. So BTST will stop at 1120. Look for target of roughly around 1155 over there. And the second call which I have is BTST and ICICI Bank. And the private sector banks have picked up in the last few days. We earlier had by the National Bank. Now ICICI Bank is also picking up. Also BTST with a stop at 1417 for targets of 1445.
Okay, thank you very much for that. Let's get the latest then on the IMD. In fact, earlier today, as rains continue to lash the city of Mumbai and the western part of the country, we had a chat with representatives from IMD and SkyMet to discuss the heavy rainfall and what the forecast is going to be ahead. Listen in to what they had to say.
Past 2 days, we had the red alert for Mumbai on 4th and 5th, and today also now we are upgrading it to red because heavy to very heavy rains that will continue. There may be isolated, extremely heavy also today also over Mumbai. And winds are also very strong. That is another part due to which uprooting of trees or some damage to kacha houses, etc., that also will be there, or old buildings. So we are keeping today also red. But from tomorrow, rainfall will reduce a lot. Moderate or heavy rains will be there, but not very heavy or extremely heavy. For Mumbai, for the season from 1st June to this date, till date, yesterday, that data is updated. So it is 60% above that normal value. July, what is given, it is up to 94%, and that is good. In fact, not very less.
The monsoon fury will definitely reduce in the 3 to 4 days itself. As the system which has formed in the Bay of Bengal has moved inland already, it will travel across the central parts and gradually should weaken. By about 10th or so of this month, I think we see minimal rains in those pockets, particularly where it has been pouring, there has been downpour. So it should be reducing there. Yes, the rainfall belt will shift to the northeast India and possibly close to the foothills. First 15 days of July, the rains are going to be like this only. That means normal or more than normal for the country. And therefore, the rainfall deficit, which is still hanging around 24%, that will reduce.
Okay, all eyes on monsoon so far, at least in the city of Mumbai. The gutsy winds continue, so it's pretty much brought the maximum city to a standstill today. Ambrish Baliga, independent market expert, is now joining in on the show. Ambrish, thank you very much for joining in. Good day. But before we get to some of the business updates, you want to tell us the stock that you're looking at?
Yeah, my stock pick today is KAC International, which is a global engineering, procurement and construction company, which is called EPC, with operations across more than 110 countries. And they execute projects across power transmission and distribution value chain, including transmission lines, substations, and related infrastructure. They're also into industrial buildings and oil and gas pipelines. And along with EPC business, they manufacture transmission towers, cables, and conductors through their own production facilities, supplying both to external customers as well as supporting their project execution. And customers are basically utilities, governments, and private sector clients. And high demand for renewable energy expansion and grid upgrades. I think these are big opportunities for them. And the new opportunities are also opening up in West Asia, Africa, CIS countries, and US. And the high voltage towers for data centers, that's another big opportunity. So nearly 40,000 crores of order book is what they have. And the Union Cabinet recently approved an additional 30,000 crores investment in National Investment and Infrastructure Fund, which is positive for KAC. Current year, we are seeing a decent momentum already. And the expected EPS for FY28 is 35. So my target price for this is 630.
And the stock is almost at a 52-week low, which is great news if you are a buyer out there. What are valuations like, Amrish?
Yeah, I mean, see, like currently sitting at about 16 times, less than 16 times my expected EPS for FY28, which is 35. So I think valuations are quite decent. I mean, if you look at the historical average, it's lower than that.
Okay. We, by the way, recently had the management of KEC with us, talking to us about, business prospects, etc. They seem pretty. There's a lot of ordering which is happening. Tenders opening in the next few weeks, and they're also, of course, participating in the HVDC, the high voltage, segment. Not for the the converter part of the project, which is where GE and Hitachi sort of competes, but in the rest of the 40%. But it's a very, very large order. The bidding is on, as they told us. I think it was just last week. Amrish, stay with us. On the power transformer side, we had transformers and rectifiers with us earlier today. And this was on the back of the sell-off we saw on Friday in many of these names, with news that Chinese competition, perhaps for the next 2 years, is going to take a hit. Transformers and rectifiers believes that that is not true. Listen in.
We don't see any major impact in terms of pricing or in terms of... See, if you look at it, we are also booked pretty much for the next 13 months. So we don't see any pricing impact on the products that we offer on the transformers. But yes, there would be some upside for us in terms of bushings, in terms of other raw materials that we are, like Taika and everybody else who has been also approved launching bushing. So we will see that, there will be a slight release in pressure on terms of our deliveries to the customers. The Chinese companies are in those segments. We are into UHV and EHV transformers, ultra high voltage and high, so they are into this manufacturing. But, how much can a plant manufacture is what the question is. And from what we've heard and what we've looked at, a maximum of 144 transformers which can go out of the system for the Indian market, for this Indian transformer manufacturers, Chinese Indian transformer manufacturers. So I don't see a lot of pressure on the price or a lot of pressure on the orders also. We are considering about 12 transformers a month, so 144 transformers a year.
Okay, well, that was a sector conversation, Amrish, but like KEC, this is another one. I mean, actually, if you analyze stocks in that area, which is transformer makers, it is the cheapest, transformers and rectifiers. I mean, the company itself. Any thoughts? Have you looked at this one?
No, I've not looked at transformers and rectifiers very closely, but other stocks in this, for example, CG Power as well as Voltam transformers, I think those could be looked at. And overall, when you talk of power ancillaries, which includes, companies like KEC, which is into transmission lines, as well as the other suppliers like transformers, I think the visibility is excellent because, clearly, India would still be slightly power deficit. So, going ahead, I'm talking of the next 5-10 years. So there would be still a decent amount of focus as far as setting up the power utilities and ancillaries around that. So, clearly that, demand would be there, no doubt, for all these. I think the only issue which was there in the past as far as transformers and other ancillaries was concerned was regarding the cash flows, the payments coming from utilities. Even that has improved now. So I think most of the issues are over. I think one should possibly buy now and just hold on for the next 4-5 years.
For TRIL, that's transformers and rectifiers, last year, the company got an HVDC transformer repair order. So not a manufacturing order, but what the company said in the conference call is that with this repair order, they sort of get into the HVDC mine space. And if they're able to, execute well, and the order had come from Power Grid, then it sort of paves the way for the company's larger presence in the HVDC space. It's not there right now. It was a repair order. But, they said that maybe we could be empaneled going forward if things go well. So that's also an additional trigger. But of course, it all depends on the execution. Amrish, stay on. We need to slip into a very short break. As we do that, here is some opinion that we got from Sridhar Sivaram of ENAM Holdings on the IT sector, manufacturing, power equipment, the spaces that he likes, and the corporate earnings outlook. Stay tuned.
Even during the best of time, the top 2 or the top 4 IT companies had earnings growth of only about 8%. So if you take roughly 8%, even the 10-year CAGR is only 8%. And my question is, what is the probability that the next 5 years it will be higher than 8%? And I think even the bulls agree that, it looks very difficult. So you're talking of 4-5% best case growth, and you want to give 15 times multiple for low growth where I don't even know what the terminal value is. So I think as I said in the past also, I don't think these companies are bad companies. They're great companies, great cash flows. I think they're going through a P derating. And when you have such strong P derating, I will look at where the US companies are trading. They're trading at single digit P. So that means these companies can go to single digit P. Manufacturing is, of course, a space. Power equipment is a space. A lot of them have run up. I know there is some issues with the Chinese competition, but, the demand is so high that you need, I don't think our companies are able to meet all the demand. So obviously, you need to open up. And in my view, some bit of opening is not so bad because, the companies will become more efficient. They'll face competition. We also export a lot.
Welcome back. We've got about 4 minutes to go. Kotak Mahindra Bank will go home as the biggest loser. It continues with its underperformance from last week. Last week's weakness was an account of the CEO succession uncertainty, and this week it's on the back of the Q1 business update. The stock has slipped nearly 15% plus from the recent peak levels. Amrish, Kotak Mahindra Bank, a buying opportunity, or do you think there is some turmoil ahead?
No, I think we should wait because even the deposit growth, which they showed, I think 11.7% was below market expectation. Plus, there's a change in leadership, I mean, which was quite surprising. It came on all of a sudden last week. So I think one should wait at least till about August, September, when we'll know possibly as to who would come in place of Ashok Vaswani. I think that's the time to again look at it.
Okay. Manappuram and Muthoot are also having a good day. So these are gold financing companies. Manappuram Finance has hit a fresh high. Muthoot not at the day's high, not at the 52-week highs, but it's still up nearly 2-3%. Any trades here?
No, not really, because I'm not bullish on gold as of now. And if the gold prices fall going ahead, I think the margins as far as these companies are concerned would be under pressure. And I believe there are too many, top-up loans which have been happening, which I think would be right at the bottom of the pyramid. And that's the other risk which most of them carry. So I would be a bit cautious at this point of time.
You know, last week it was all about IT stocks, first down, then up. Any thoughts here? Because we'll get reporting. I think TCS reports on Friday. Thursday it'll report. Yes, Amrish.
No, I mean, like as of now, I would wait possibly for a quarter or two more as far as the IT stocks are concerned. And more than the earnings, I would be concentrating more on the management commentary and what are the thoughts as far as the integration of AI is concerned. So based on that, one should decide going ahead as to the IT stocks to work.
Yeah. The fact that stocks have fallen so much, I mean, it keeps coming back up as well. What if they're able to regain some of the growth rates? What if? Lots of what ifs, right? But that is what it is. What if? But, you know, stocks are up on your screen. Infosys, TCS, HCL Tech, Wipro, Tech Mahindra. These are, of course, all part of the Nifty. Where there's a whole host.
Sorry, just on
stocks.
just on IT. You know, when I looked at all the preview notes this time, right, there is, I think, at least 7 or 8 of them out of 10, 70 to 80% have slashed their PE multiples down to 13, 14 times, marking it to inline. And all of them have brought down their growth estimates, say 2 to 3% over a longer period of time. So till now, till 3 months back, people were talking about relative valuations. They always said, well, we're now at 15 times. This looks good compared to 10-year average. There would be those bulls in the camp. But I just feel this time there is consensus now, realization that things are going to be weak. And is that a contrarian signal? Sometimes when everyone aligns to the fact that, okay, now this is a really tough sector that's not going to grow right now. And when consensus builds up in that way, could that be a contrarian signal? So we'll have to wait to see. But clearly Q1 is going to be a weak quarter. Okay, let's count down to today's trading session. It's going to close above 24,400, a gain of 150 points on the Nifties. This would be the 4th consecutive day of gains. Sensex higher by 500 points. Midcaps picked up towards the end, but the advanced decline ratio was still in favor of the losing side. The Nifty Bank was higher, led by HDFC Bank. Axis Bank also had a good trading session, but Kotak Mahindra Bank was under pressure. IT was subdued after Thursday-Friday rally. The Nifty IT index down over 1%. The biggest gainer today sectorally was Realty, 1.7% up on that. Autos had a good session. Metal index was up over 1%, and we spoke about banks. A quick run through of the gainers then. It's HDFC Bank right on top. Top gainer, 3.5% rally. Hindalco, Bajaj Auto, ONGC. I'm just running through some of the large cap winners. M&M, BEL, Reliance Industries was a big contributor. Eicher Motors, Grasim and ICICI Bank. And on the way down, if you exclude Kotak and IT names, you've got a Max Healthcare and Coal India, Bajaj Finserv with cuts in excess of 1%. The mid-cap screen was alive with so many business updates, but at an index level, it was a gain of about 0.5%. We're going to take your leave on closing bell. Thank you very much for watching. Don't go anywhere. On the other side is Markets Forward.
Dalal Street starts the week on strong footing. Nifty and Sensex gain for the fourth straight session. Realty and Auto bat for the bulls, while IT stocks were under pressure.
HDFC Bank perks up on a healthy first quarter credit and deposit growth, but Kotak Mahindra Bank slides after a sharp dip in their CASA deposits ratio. From the consumer side, Godrej Consumer grows ahead of guidance. Dabur eyes a double-digit uptick. Nykaa sees growth accelerating, especially in their fashion business.
The government clears defense procurements worth 52,000 crores for Air Force, Army and Navy. Stocks of key defense suppliers perk up on expectations of significantly large order inflows.
Good evening, you're watching us here on Markets Forward. This is your go-to show where we aim to get you all the key data points to get up for your next trading session while recapping trade today. I'm Manglam Malu, with me Vivek Iyer. Was a very good trading session that we saw on D Street today. The Nifty 24,400. We had strong updates coming in from the consumer and the banking space, and as a result of that we saw the market move higher. We saw the Nifty bank lead from the front, and after taking a pause for breath over the last two trading sessions, that index ended about 0.2% higher. The mid-caps could have done a little better, but no real complaints. There's monsoons which is picking up, the fundamentals are picking up. All hopes are now on whether the FII flows continue to pick up as well.
Well, the key question is whether FIIs once again find India attractive or not. And like you mentioned, it's been a wet start, especially as far as Mumbai is concerned, this particular Monday afternoon. Well, we've got you covered for the next 20 minutes with all the big news and key developments on Dalal Street, top corporate voices, as well as the events to keep track ahead. So let's start off with the day's market action. Here's the lineup of what we have in store for you today. We start with the top movers and shakers of the day with Sudarshan. A whole host of companies, from banks to FMCG players, released their Q1 business updates today. Also, we'll take stock of the government's latest boost for defense stocks. And last but not the least, we'll delve into the key market events to watch out for in tomorrow's trading sessions. So now on to our first segment of the day. Sudarshan Kumar is standing by the big wall with all the top movers. Sudarshan, over to you.
It was a good start to the week, and thanks to the big gains that we have seen in the heavyweights like Reliance Industries, and HDFC Bank has seen gains of more than 3% after a healthy Q1 update. Now, in contrary, Kotak Mahindra Bank was top Nifty loser, fallen almost 4% after Q1 update. Hindalco, following the rise in the aluminum prices, saw an up move of almost 3%, and TCS, amongst all the IT stocks, was top loser. Talking about the Q1 update impact, all the financial names, Bandhan Bank, L&T Finance, RBL Bank, all these stocks have closed higher with a gain of almost 2 to 3% after healthy Q1 updates. And if you talk about the real estate names, Oberoi Realty has provided with healthy update for Q1, and that's the reason this stock too has moved higher almost 1%. And lastly, Radico Khaitan too on Q1 updates has moved almost 6% higher. Some of the other mid-cap, notable mid-cap gainers, Manappuram Finance, both the names, Manappuram and Muthoot Finance, have moved higher, tracking gold prices. Dixon Technologies has seen a sharp up move, closed with a gain of almost 7% on an expectation of the approval related to Vivo JV. Hitachi Energy, CG Power, you remember all these names were sharply under pressure on Friday, but today these stocks have closed with gains of almost 3 to 4%. Chola Investment, on positive brokerage note, has closed with a gain of almost 3%. And two major mid-cap losers, Varun Beverages, because Maharashtra government has banned use of Sting near to the schools, and that's the reason this stock was under pressure. And MCX tracking trading volumes has closed with a cut of almost 3%.
All right, Sudarshan, thanks a lot for that. A bunch of stocks which were on our radar, which were buzzing around. Sudarshan had that list, and a large part of that was contributed by the financials as well. So, of the banks that came out with their first quarter business updates, Ananya joins in with a snapshot of all the key numbers. Ananya.
So, well, yes, financials were in focus today following their Q1 business update. So, first, let me start with HDFC Bank. So, they were the top gainers if you see in the private bank segment. Now, they reported a 15% advances growth and deposits, rising 15% year on year. Now, the key positive here was the improvement in its funding profile, if you see, with the loan to deposit ratio declining to 97%. Now, both the brokerages, Bernstein and Jefferies, believe that the bank is striking the right balance between growth and profitability here, while also indicating that the post-merger funding concerns are gradually easing now. Now, Kotak Mahindra Bank, however, was under pressure today despite double-digit loan growth of 15%. Now, deposit growth came in at 12%, while the CASA ratio slipped to 40.3%, keeping investor sentiment cautious. Now, here Motilal Oswal has maintained its buy rating with a target price of 397, but believes stronger deposit mobilization and recovery in CASA will be key monitorables going forward for the investors. Now, when we look at the fintech and NBFC space, here Kish was the top gainers after delivering one of the strongest business updates. Now, AUM surged 61% year-on-year to 8,000 crore, backed by 37% growth in disbursements. Now, investors have also welcome the company's increasing focus on secured lending with the loan against a property portfolio, that is LAP portfolio, rising to 7.7% of the total AUM, which is expected to support asset quality going forward. Now, fresh updates also came in from Poonawalla FinCorp today, which reported AUM of 67,000 crore and maintained a healthy liquidity buffer of around 4,000 crore, highlighting its strong funding position to support future loan growth. Now, the stock has also witnessed a lot of buying interest today. Coming to Bandhan Bank lastly, meanwhile, they reported a mixed quarter, while advances grew a healthy 16.4%. Deposits remained subdued at 6.6%. Now, Motilal Oswal has retained its buy rating, but noted that overall business growth was slightly below expectations, with liability growth continued to remain a key monitorable year.
Well, thank you so much, Ananya, for joining us and giving us a neat roundup of all of the BFSI updates that came in over the weekend. Well, to take the discussion forward, we are now joined by Amrish Baliga, who's an independent market expert, and Jay Thakkar from ICICI Securities. Thank you so much, gentlemen, for joining us. Well, Jay, let me come across to you first. Well, we started off the week on a strong footing, 4 straight sessions of gains. Where do you see markets headed from here on?
Hi, very good afternoon to you, Vivek and Mangalam. Well, see, Nifty has been shifting its base higher, and that is what we have been mentioning since last couple of trading weeks, is that, bias remains positive for the market. In fact, close above 24,200 last week, Vivek clearly indicated that, the probability of Nifty heading towards 24,600, which was its previous swing high, is quite high. So those levels are the first target, 24,600, and eventually beyond that you will be seeing the psychological mark of 25,000 as the next target in the July series, is what I think. And now the base seems to have shifted higher from 23,800 to 24,000. Now, if you look at the cumulative put base for this July series, I mean, for all the weekly expiries, it comes to 24,000 levels. I think until those levels are held, the overall trend should be positive. If at all there is a negative, it should be utilized as a buying opportunity, because what has happened, Vivek, is that the ATM strategy has come down to 110, 120 in today's trading session, with the PCR jumping to 1.46. That is what happened in the last trading session, when the PCR had a move to 1.45 and beyond. We saw intraday profit booking. So if at all there is any profit booking due to the overbought condition in Nifty, that should be utilized as a buying opportunity, and that cannot be ruled out. So for tomorrow, for the weekly expiry, the range could be 24,400 to 500 to 24,300. But eventually, Nifty should be utilized as a buying opportunity for the positional targets of 24,600 to 25,000 levels. And yes, the good thing is that we have seen those sectors which were not performing, like Nifty Oil and Gas, Nifty Metal, now they are coming back, which is clearly indicating that there is now a short covering seen from the FI as well. The index shorts have come down by 10,000 contracts in the last 3 trading sessions. And we have seen the HDFC Bank as also now coming back strongly with the business update, as well as, with the short covering that has been seen, which was actually lagging. It was not closing above 800 levels, and now that has happened. So I think eventually things, all of these indicate that going forward, we would slowly and gradually see Nifty heading higher only.
Take that point. Amrish, of all the numbers that have come by from the financial space, is there something that stood out for you? And would you be a buyer in Kotak Mahindra Bank after this dip? Do you think the street is overreacting to the CASA drop?
No, I think the numbers are decent. I mean, especially if we're talking about HDFC Bank, even Axis Bank, I think the numbers are decent. I think Kotak, there was a bit of a disappointment because of the deposit growth. And at the same time, the overhang is there about the exit of the CEO. So I think at least for the next month and a half, 2 months, I don't think there'll be too much of interest in Kotak unless we know as to who, could be the next CEO. And I think we should possibly have some understanding of that towards the end of August, early September. So till then, I really don't see much of a action coming back to Kotak. So at this point of time, I would surely wait. But HDFC Bank is the one which I've been suggesting people to buy since the last month and a half, 2 months, especially when the controversy was raging. And I clearly said that this controversy will surely die down at some point of time or the other, because at the end of the day, HDFC Bank is an institution, and that's much larger than any individual. So the fall which we had seen was a buying opportunity, but I think it was a two-decade low valuation.
All right, take that point. Let's move on from the financial space to the consumption space. It's in the spotlight. A good performance coming in from Godrej Consumer, Nykaa with their first quarter business update. If you look at Godrej Consumer, teens sort of growth, which is tracking higher than their, double-digit revenue growth that they've targeted for this year, led by high single-digit volume growth. So these factors working well for Godrej. Even on the EBITDA front, it was actually a shade higher than what the company had guided for the start of this year. Though on the margins, it will be slightly below expectations on account of two things. One, because the revenue, which is the denominator, which has grown faster. And secondly, there have been input cost pressures, which the management believes will start, mitigating as the year progresses. So the margins do well for them. Beyond India, Indonesia also is back on the growth path, and that kept investors fairly happy. The other one is Nykaa. That too ended higher in today's trading session, and that's because the company reported a GMV growth in the early 30s, with beauty segment remaining strong. Beauty segment, if you look at it, grew in the late 20s, so no problems out there. But fashion, that's where the real kicker came in. The fashion segment will deliver mid-50% net sales value growth, and a large part of that, the company said, is because of the encouraging response that they got to the tie-up with Nike, and as a result of which that number has been at a multi-quarter high. So let's go back to Ambarish actually. Ambarish, two swathes of the spectrum. On the one side, you have staples, some of them doing extremely well. Dabur wasn't particularly bad either, Marico neither in the last week. And then you have the discretionary names, which aren't doing bad either. You had Senco, which saw 60% growth. You have Nykaa, which is growing in 30s at that base as well. So what are your thoughts on the consumer space right now, staples versus discretionary? Is there anything particular that you like?
So discretionary is something which I would prefer at this point of time as compared to staples, because even as of now, although we have seen, extremely good sort of rainfall in the last couple of days, but I think only by the end of July we'll know as to how good the spread is. So till then, I would be a bit cautious as far as staples is concerned, whereas the distance where action would be. And because of which something like a Nykaa, has shown extremely good sort of numbers. And even going ahead, I think the growth will be excellent.
Well, thank you so much, Ambarish, for your views as far as the consumption space is concerned. Well, moving on, APL Apollo Tubes and Kirloskar Oil Engines gained in trade after brokerages bet bigs on the stocks. Winnie Motilawala joins in with more details.
Right, so absolutely two stocks, that's APL Apollo Tubes as well as Kirloskar Oil. Both of these were in focus today. First up, APL Apollo Tubes. Your BofA Securities that has initiated coverage on this one. Buy rating, target price of 2,170 rupees per share. They expect the adjusted profit of this to deliver around a 14% growth over the next couple of years. That's till FY28 is the estimate. Now, what is going to drive this growth? Few factors that I mentioned. One, organic demand in real estate and infra is improving, so that will be a driver. You have capacity that comes in new markets, the addition that comes in new markets as well as new products that will be driving the growth. Richer product mix as well as exports. All of this will support the profit growth of the company. Apart from that, they also said that there are some headwinds that are there in terms of West Asia conflict in Q1, but overall for FY27, they expect to see a volume growth of 10% versus guidance of 15 to 20%. So that's where maybe there's a blip that they expect. But they believe that overall volumes are at an inflection point, particularly in the second half of this year. They expect to see key growth drivers and key factors coming in, and that will be a key catalyst for the company going forward. So that is why APL Apollo Tubes initiated coverage with a buy rating. Now, for Kirloskar Oil, you have Jefferies that's initiated coverage on this one, initiating a buy rating, target price of 2,815 rupees per share. Kirloskar Oil recently, received that big data center order, and that's when we saw the stock run up as well. Now, Kirloskar Oil as a company is the second largest player in terms of power backup generator sets, and that's a very big market, and that's what is supporting their growth. They expect the company to start moving up that value chain that they're talking about, right? Move more towards the high horsepower, which is better margins, and that's what the company has been
investing on as well and investing in. So because of this, we could see a 22% EPS growth over the next 4 to 5 years. ROEs are expected to improve as well. Valuations, yes, 45 times FY28 PE. But still they believe that this valuation is going to continue going forward, and data center is a big opportunity.
All right, we take that point. Let's move on. And another set of stocks, let's address them. The defense stocks. The government has cleared defense procurement worth nearly 52,000 crore rupees for the Air Force, Army and the Navy. And as a result of which, stocks of key defense suppliers, which is the likes of BEL, Bharat Dynamics and a bunch of others, saw a spike on expectations of significantly large order inflows. Ria Bhatia joins in with the details of that. Ria.
Well, yes, defense stocks are buzzing today, and this is after the DAC has approved AONs worth nearly 52,000 crore rupees. Now, this was on Friday after the close of the trading session, and today defense stocks are buzzing on the back of that. They have approved these procurement approvals all across the Army, the Air Force as well as the Navy. First up, looking at the approvals given for the Army, they have approved the Akash Tarang anti-UAV electronic warfare system, and for this, Bharat Electronics, Apollo Micro as well as Data Patterns are set to benefit from this. They've also approved the man-portable anti-tank guided missiles, for which Bharat Electronics as well as Bharat Dynamics are expected to show some contribution. Apart from this, there's also the medium-range surface-to-air missile as well as the very short-range air defense system, for both of which Bharat Dynamics as well as Bharat Electronics again will likely see some ordering. And for the Army, they've also approved the jet-based kamikaze drone system, for which Bharat Electronics as well as Solar Industries can see some benefit. Moving on to the approvals for the Navy, they have approved the multi-influence ground mine, for which Apollo Micro as well as Bharat Dynamics can see some likely benefit. They have also approved the naval shipborne unmanned aerial system, for which we can see some contribution from Hindustan Aeronautics as well as from Bharat Electronics. And lastly, for the Air Force, they have approved the fixed wing high altitude pseudo satellite. For this, a whole group of stock can see some benefit. There's HAL, Data Patterns, Bharat Electronics, Astra Micro as well as Paris Defense, and all of these stocks are buzzing in trade today. In fact, Paris Defense is one of the biggest gainers among the defense pack, up nearly 6 to 7%. BEL also seeing gains of nearly 2% today, and the entire defense pack continues to tick higher, up nearly 1.5% today.
Thank you so much, Ria, for joining us and giving us a sense of all of the defense updates that have come in, especially as far as the DSC is concerned. Well, Jay, let me come across to you first. As far as the defense space is concerned, which is your top pick and what kind of targets have you set yourself there?
Recently, since defense sector overall, since April month, we have seen a good short covering first of all initially, which we had seen in defense, because this was one of the major hit sector, I would say, in the initial fall, wherein we had seen this sector overall falling by more than 20%. But the recovery has been phenomenal. We have seen good short covering happening, and there has been major short covering because of which stocks like HAL or maybe BDL have bounced back quite sharply. Although BEL has been consolidating since a couple of trading sessions, I would say, but it has found a good support around the lower end of 410 range. So I think that BEL, until those levels are held, it can again go and visit the levels of around say 460, 475 on the upside. I'm bullish out there, but then apart from that, HAL is also likely to see a good continuation of an uptrend. We were from here on, wherein the stock can test the levels of 4650 to 4800 going forward positionally. These are the two stocks which have been, I would say, relatively outperforming the overall defense pack from the FNO space. However, there are two stocks, and I would say Cochin Shipyard and Mazgaon Dock, which have seen a good short build up there as well, and there is still some more short covering room still pending out there, both in terms of Cochin Shipyard and Mazgaon Dock particularly. So I think that Cochin in this short covering can witness the levels of almost 1800 to 1900 as well positionally, until the 1350 1400 levels are held. So there is a good risk out there on Cochin Shipyard, since it is trading around the lower end of the range away. And similarly with that of Mazgaon, we can see the levels of almost say 2800 to 2900 as well, until 2450 levels are held, because that too is trading around the lower end of the range. We have been seeing short covering out there happening, but it has not happened fully. So there is still much more scope from here on till the overall defense sector momentum on the upside continues.
All right, take that point. Thanks a lot, gentlemen, for joining in and giving us your views on a whole host of stocks and sectors. We've gone on for a bit. What we'll do is take a short break, come back at you a lot of the corporate voices that joined us on the channel today, and also the key market events that you need to watch out for ahead of trade tomorrow. Stay with us.
Welcome back to Markets Forward. Now time for the big corporate voices of the day. Berger Paints MD and CEO Abhijit Roy told CNBC TV 18 that the company remains confident of sustaining profitability over the next few months despite a competitive market. He said Berger expects to stay profit neutral in the near term and may consider price correction around Diwali season. Roy also said that the company is on track to deliver better than expected double-digit industry growth this year and reiterated its FY27 revenue growth guidance of 15 to 17%, slightly ahead of last year's performance.
Oberoi Realty Chairman and Managing Director Vikas Oberoi joined us here on CNBC TV 18 exclusively. He said that the Gurugram market could eventually become even bigger market for them than Mumbai. He said Oberoi Realty is making a long-term bet on the city and will replicate its Mumbai playbook in the NCR region. They added that the company saw a 100% conversion in its first Gurugram project, with the next phase likely to launch in FY28 at much higher prices. Also said bookings are expected to more than double in FY27.
And before we wrap, we bring you the key market events to watch out for in tomorrow's trading session. Ananya Singh is standing by with all the key events to focus for tomorrow's session.
So let me first start with the global events. So globally, biggest focus will be on the Bank of England's financial stability report and the OBR's fiscal risk report, which could provide fresh insights into UK's economic outlook and financial stability. Now, investors will also track the US May trade balance data for clues on global growth. Now, another key event is SpaceX inclusion in the NASDAQ 100, which is expected to trigger significant passive fund buying by index tracking ETFs. Now, markets will also keep an eye on ECB chief economist Philip Lane's speech later tonight for any signals on the European Central Bank's policy outlook, while geopolitical attention will remain on the NATO leaders summit. Now, back home, investors will watch Prime Minister Narendra Modi's bilateral talks with Indonesian president for any announcement on trade, investment and strategic cooperation. Now, the 8th Central Pay Commission will continue its consultations with employee unions and pensioner associations, while heavy rainfall alerts across Maharashtra and several other states will also remain on the radar for any economic or infrastructure related disruption. So these will be the key events that the investors will watch out going forward.
All right, take that point, Ananya. Thanks a lot for that. So those are a bunch of events that you need to track tomorrow. With that, we'll wrap up on this edition of Markets Forward. Don't go anywhere. We'll be back with more news and updates on the other side.
Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. Sensex and Nifty gain for the fourth straight session. Nifty reclaims 24,400 led by automobile and real estate stocks. Rupee weakens by over 18 paisa against the dollar to stay above the 95 mark. Crude oil prices slip after oil lobby OPEC and allies announce plans to raise its output targets from August, marks fifth straight monthly increase as shipping activity around the Hormuz Strait starts recovering gradually. Brent crude trading near $72 a barrel, well off its wartime highs. From FMCG to fashion to paints, consumption companies see an uptick in sales. Dabur expects double-digit growth. Godrej Consumer beats its own guidance. Nykaa, Senco Gold and Asian Paints are also seeing green shoots. India's automobile industry defends the 20% blending on ethanol with petrol. Executives from Maruti, Hero Motor and Toyota say even older vehicles can run safely under E20 fuel despite public concerns over fuel efficiency and engine safety. Red alert in Mumbai as heavy rain disrupts normal life. 6 people including 5 children killed in a 4-story shanty collapse in Mankud. A section of the 7,000 crore rupee Mumbai-Pune expressway crumbles in just 9 weeks. At least 13 people have died in Mumbai over the last 4 days. Millions thronged the streets of Tehran for the funeral procession of slain former Iranian Supreme Leader Ayatollah Khamenei. State TV shows 3 of his sons praying beside his coffin. However, Mujtaba, the son who succeeded him as Iran's new Supreme Leader, did not make an appearance. Home prices at a decadal low in China. Data shows that resale home prices fell by nearly 1%. In 88 out of 100 large Chinese cities, there has been a 22% drop in new constructions in the first 5 months of this year. South Korea's most valuable company, SK Hynix, hopes to ride the AI wave on Wall Street, launches a $28 billion Nasdaq listing. The company will go public this Friday. FIFA allows US striker Balogun to play against Belgium despite a red card. This comes after President Trump called FIFA chief Infantino to review the decision, sparking a controversy at the World Cup. Erling Haaland scores twice against Brazil to power Norway into the quarterfinals. The 5-time champions exit from the event marks their first World Cup performance in 36 years. England beat hosts Mexico on their home turf to enter the quarterfinals. Right, let's start with the markets. Dalal Street started the week on a strong note. The Nifty and Sensex closed near the day's highs, extending their winning streak to a 4th straight session. Realty and auto stocks led the rally, while IT shares came under pressure. The Nifty IT index snapped its 2-day winning run. Prashant Nair is here with the details. Prashant.
Well, in a way, it was a repeat of last week. The Nifty and the small cap index, those are the 2 areas which did the best. The mid caps did well, but of course, subpar compared to the small cap part of the index. The Nifty Bank also participating, largely led, of course, by the private bank space. Lots of earnings, trading updates for the first quarter, and HDFC Bank, of course, having an outsized impact. We'll get to the specific stocks, etc. there. But the Nifty ending above the 24,400 mark in terms of trade today. The big gains as far as the sectors are concerned, coming from the real estate index. That index was up almost 8% last week, so it continues its winning ways, 1.6 higher. The consumer and the auto indices were at the number 2 and the number 3 position, 1.5% each. On the downside, there was capital market index, which was down about 1%, and the PSU bank index was down about 0.9 odd percent as well. The large cap Nifty stocks, and how they performed really. So the gains coming through in HDFC Bank, 3.5% higher. Stocks at about 830. Hindalco was up 3%. Bajaj Auto, ONGC and Mahindra were the other 2% moves that we had. On the downside, Kotak Bank was the largest cut, 4% here. Max Healthcare was down 1.9%, and there was a TCS and a Coal India which were down about 1.5%, 1.6% as well. Now let's come to the broader market, the broader universe of names. And here, losses coming through in, by the way, advanced decline was negative, more down than up. MCX down 3%, Supriya Life Sciences, big volumes, but big price cut as well, 11% lower. Acuitas was down 5%. Max Healthcare did well last week, down 2%. There was Tejas Networks, which was down 4%. Stocks back at about 570. Aurobindo Pharma, Premier Engines, Premier Explosives was down about 5%. RR Kabil, Arvind Limited, Skipper, Axis Cades are some of the losses that we had in the broader space. On the upside, Dixon was the big mover, 7% on Dixon, 13,000 rupees, 13,300 actually. Shakti Pumps was up 8 in the morning, ended 5% higher. Welspun Corp was a big mover, 6% here. The Hitachis, GE, Vernova, CG Power, all of those did well. And many of these smaller defense names, like Paras Defense, participating. I mean, there was a, Zentech, Data Patterns. So smaller, more niche defense companies also participating. All in all, a pretty good session after what we saw last week.
Right, thank you, Prashant. And staying with the market, exchange platform NSE is expected to begin IPO roadshows this week. We learned from sources that the National Stock Exchange is likely to launch its IPO by September this year. This after NSE filed its DRHP on 17th of June, involving an entire offer for sale of 6% of NSE's paid-up capital. Right, let's talk about the defense stocks that rallied after government-approved procurement plans worth 52,000 crore rupees. The approvals are expected to create significant order opportunities for domestic defense companies, with stocks including Bharat Electronics, Bharat Dynamics, Hindustan Aeronautics and others rallying in trade. And let's talk about the top global story this evening. Thousands of people gathered in Iran for the funeral procession of late Supreme Leader Ayatollah Ali Khamenei after the two-day public farewell. Streets of Tehran were filled with people waving flags and carrying posters with images of the late leader. According to Iranian state media, officials have described the event as the largest public gathering in the country's modern history. The funeral procession was expected to last about 10 to 12 hours. Earlier, the late leader's three sons, including Mojtaba Khamenei, was seen mourning beside the coffin. The current Supreme Leader Mojtaba succeeded his father after he was killed in the joint strikes by US and Israel in February. However, he hasn't made any public appearance so far. Amid the state funeral, the Iranian embassy thanked Indian government for the participation of the official delegation, as well as political and religious leaders from India. The embassy called the gesture, and I quote, a powerful expression of mutual respect, end of quote. In the oil market, Brent crude prices have eased slightly as movement in the Strait of Hormuz is recovering. Oil prices have also retreated as the Organization of Petroleum Exporting Countries has raised its oil output for August to 1.8 lakh barrels a day. This marks a fifth straight monthly increase as the cartel continues to unwind production cuts. And here's a special report on Khamenei's funeral.
As thousands of Iranians streamed into central Tehran to pay their respects on Sunday, three sons of slain leader Ayatollah Ali Khamenei were seen mourning beside his coffin. But Mojtaba Khamenei, who succeeded his father as supreme leader, did not appear. State TV showed Mustafa, Maysam and Masoud Khamenei praying behind the coffins laid out at Tehran's Imam Khomeini Grand Mosala. The elder Khamenei and several family members were killed in an airstrike after the United States and Israel launched their war on Iran on February 28th. The Islamic Republic has organized a week of funeral ceremonies for Khamenei, with plans to take his remains to religious sites in Iraq. After lying in state indoors for senior officials and foreign dignitaries, his coffin was moved outside on Saturday. It was displayed under glass alongside those of his daughter, son-in-law, daughter-in-law, and 14-month-old granddaughter. On Sunday, thousands of mourners, including soldiers, seminary students, and civilians, filed through the mausoleum. Some waved flags and banners with promises of revenge against America and Israel. There has still been no public sighting of Mojtaba, and no images of him have been released. People close to his inner circle told Reuters his face was disfigured, and he had suffered a significant injury to one or both legs. He is said to have been injured in the attack that killed his father and other relatives. A ceasefire has paused the 4-month war. Iranian authorities say an interim agreement with Washington could bring major economic benefits, including access to frozen assets abroad and relief from some financial sanctions.
The Indian government has withdrawn the emergency curbs on natural gas supply, signaling a return to normalcy after disruptions caused by the West Asia conflict. The decision comes after LNG shipments through the Strait of Hormuz resumed, easing supply concerns. The Petroleum Ministry has now amended the natural gas order issued in 2026, withdrawing the emergency provisions that were introduced in March to prioritize gas allocation to key sectors. Right, let's talk about the big national headline. Incessant rains have disrupted normal life in Mumbai. The weather department has issued a second red alert after the monsoon showed no signs of easing over the last 4 days. Several roads are waterlogged in the city and its suburbs. Local trains are functioning, but the frequency has been restricted. Places like Virar have been cut off after trains were cancelled due to waterlogging on the railway tracks. The Mumbai airport is functioning with some delays to flights. The local civic authorities have declared holiday for schools and college today. Residents have been warned against unnecessary travel. 6 people were killed when a 4-story shanty collapsed in Mankhurd. This includes 5 children. The mayor of Mumbai termed the building as illegal. Rescue efforts continue at the site of the building collapse. 2 people are dead and 1 other is missing near Pune after a landslide. Several houses were buried in Mewal village in Pune district due to the landslide. 37 passengers were rescued from a private bus which was stranded. Another landslide on the newly constructed missing link at the Mumbai-Pune expressway has also disrupted traffic. The 7,000 crore rupee road crumbled in just 9 weeks after its inauguration.
मुंबई पुणे एक्सप्रेस वे पर जो कनेक्टिंग लिंक था वहाँ पे लैंडस्लाइड हुआ है। ये देखिए कितने बड़े-बड़े पत्थर यहाँ पर गिरे हुए हैं और इस पत्थर को और ये जो लैंडस्लाइड का जो मलबा है उसे हटाने के लिए युद्ध स्तर पर काम चल रहा है ताकि जो मिसिंग लिंक का जो टनल है जो पुणे से मुंबई की तरफ जाता है उसे सुचारू रूप से ठीक किया जा सके। बड़ा हिस्सा जो है वो गिरा हुआ है और साफ तौर पर पूरा टनल है उसको बंद किया गया है। अगर मैं दिखाना चाहूँगा साफ तौर पर देख सकते हैं कि किस तरीके से ऊपर का हिस्सा जो बना हुआ था उसे वो बारिश की वजह से जो लैंडस्लाइड हुआ था वो टूटकर नीचे गिरा हुआ है और बड़े-बड़े पत्थर आप साफ तौर पे देख सकते हैं कि किस तरीके से यहाँ पर जो मलबा है वो यहाँ पे गिरा हुआ है और पूरी कोशिश की जा रही है कि इसे अब जल्द से जल्द यहाँ से हटाया जा सके और जो टनल है उसको यहाँ से शुरू किया जा सके। बारिश बहुत ज़्यादा है इसलिए ये सब जो टीमें हैं उनको बड़ा चैलेंजेस हैं कि इस तरीके से हटाए। देखिए किस तरीके से ऊपर का जो हिस्सा है वो चारों तरफ से टूटकर नीचे गिरा हुआ है और बारिश तेज होने की वजह से बड़ा चैलेंज हो रहा है सबके लिए कि इस जगह को यहाँ से ठीक से हटाया जाए।
Heavy rains continue to wreak havoc in Mumbai metropolitan region, Konkan and other parts of Maharashtra. Total 4 incidents of landslides have been reported since last night and 1 portion of a slum collapsed in Mumbai's Mankhurd area, causing 6 deaths. Since the beginning of this particular rain episode, total 10 deaths have been reported in Mumbai so far. 3 people died due to tree uprooting incidents. 6 people died in Mankhurd's slum collapse, chawl collapse incident, and 1 person died because he fell in an open manhole. Now, BMC every year claims that it has made all the arrangements to ensure that people are safe during monsoon season, but that's not the reality. That's not what the reality is. Right now, we are on the Western Express Highway, and this is the road that goes towards Mumbai University. And this particular patch, as you can see, this was an open manhole, so they have covered it with a sheet now. Now we don't know how permanent or temporary it is. Now this particular patch was full of rocks and stones, and as you can see, the gentleman here in the frame, the moment he saw the TV news cameras, he started, I'm assuming he's from the BMC because he's claiming that he had come to do this only. So he has started removing all these stones. This barricade that you can see right now, till 5 minutes ago, it was not there. The moment they saw the TV news camera, our camera, he came into action and he's now removing all these stones. But we can imagine that given the rainfall and given the visibility issues caused by the rainfall, what kind of danger, what kind of threat these stones were posing to pedestrians, to vehicles, especially two-wheelers, auto rickshaws. So as I said, BMC every year it claims that this time the monsoon is going to be smooth, but it's not the case once again.
All right, what we'll do is on that note, we'll take a short break. Coming up next, India's automobile industry defends the 20% blending of ethanol with petrol despite public concerns over fuel efficiency and engine safety. Stay tuned. Welcome back. You're watching Business 360 in a rare show of unity. Three of India's leading automakers addressed a government-hosted press conference over the weekend to defend the centre's ethanol fuel mandate amidst rising concerns. Maruti Suzuki, Hero MotoCorp and Toyota Kirloskar claim that years of testing and service data showed no evidence of widespread vehicle damage due to rollout of petrol blended with 20% ethanol. Remember, social media has been rife with allegations that use of blended petrol led to a drop in mileage and engine damage. Shivani Bajaj, who attended the press conference, joins us now. Shivani, the government trying to quell the public backlash over the ethanol mandate?
Well, yes, what began as a scattered complaints over lower mileage has now snowballed into one of the biggest public debates around India's ethanol blending program. The trigger was clearly the viral claim linking E20 petrol to vehicle damage following the remarks made in court describing E20 as an experiment, a comment that rapidly amplified public anxiety despite subsequent clarifications by the government. Since then, social media has been flooded with posts alleging engine damage, corrosion, fuel pump pump failures and a sharp drop in fuel efficiency, with many motorists questioning whether pre-2023 vehicles are safe to run on E20. It is against this backdrop that the country's biggest automobile manufacturers took the unusual step of jointly addressing the media over the weekend. Maruti Suzuki, Toyota, Hero MotoCorp, Hyundai and other OEMs categorically rejected claims that E20 causes engine damage or corrosion, saying the fuel has undergone years of testing by manufacturers as well as independent agencies before rollout. Maruti cited service data from over 2.84 crore vehicles across the nation, including more than 1.5 crore pre-2023 cars, to say it has found no E20 related damage, while Toyota said it has not received a single complaint directly attributable to E20 since the program began. The industry did acknowledge that E20 can reduce mileage by around 3 to 5%, but argued that the trade-off is outweighed by gains in energy security, lower crude imports and higher income for the farmers. Whether these assurances are enough to restore consumer confidence remains to be seen. For now, while the auto industry has firmly backed the government's E20 program, the storm on social media shows little sign of subsiding.
We want to give a statement of confidence that Maruti Suzuki has been fitting E10, has been making its car compliant to E10 way back before 2010, which is more than 16 years now. And when we did that, we had sufficient factors of safety that even if we use E20 fuel on those E10 cars, they are fully, they do not have any kind of issue at all in terms of either wear and tear or corrosion or any kind of impact on the life of the components that go into the car.
The E20 program is not an overnight program. There was extensive testing and certification done at all levels, whether it is the OEMs or the independent testing agencies like ARA, etc. There will be no impact, like I said, on older vehicles using E20. All vehicles that have been produced after 23 are fully compliant materially. From a fuel perspective, as per the tests, the drop in mileage is not very significant. It is in the range of, like we said internally, 3 to 4, perhaps 5%.
India's automobile dealers have reported healthy growth in June. Car sales grew by nearly 30%, hitting 4.1 lakh units. More than 18 lakh two-wheelers were also sold, clocking a growth rate of over 21%. Three-wheelers, tractors and commercial vehicles also saw robust growth, hitting their highest ever sales figure in June. All right, moving on. South Korea's most valuable company, SK Hynix, has launched its $28 billion Nasdaq listing. Rachna Dhanrajani is here with more on SK Hynix and its rapid rise to the top. Rachna.
Well, the biggest ADR offering in history kicks off today. SK Hynix, the world's second largest memory chip maker, opens book building for its Nasdaq listing, with pricing on Thursday and a trading debut on Friday under the ticker SKHY. Now, the company is selling 17.79 million new shares, just 2.5% of its stock, to raise up to $29 billion. That tops Alibaba's $21.8 billion New York debut in 2014, and it is the largest overseas fundraise ever by a Korean chip maker. Now, this is not an IPO. SK Hynix already trades in Seoul. This is a second listing, giving American investors direct access to a company at the center of the AI build-out. SK Hynix controls 57% of the market for high bandwidth chips. Those are HBM. Now, these chips stacked next to every AI accelerator, with NVIDIA and Google as anchor customers. And that dominance is showing up in the numbers also. Last quarter, the revenue tripled to $35.5 billion. Operating margin came in at 72%, higher than NVIDIA's. So where does the $29 billion go now? Well, it goes straight back into capacity. A mega fab cluster in Yongin, fast-tracked by 12 years, advanced packaging in Chengdu, and a $4 billion plant in Indiana. It's first in the United States. Now, this listing also isn't just about valuation. A Nasdaq ticker would unlock US index money and could close the gap with one of its biggest rivals, that's Micron. HSBC sees a 20% boost just from access, and the dominoes are lining up already. Kioxia plans its own ADR next year. Now, investors are already asking, is Samsung next? Yes, we'll have to see what happens there, but we will keep an eye out as this AI race has now reached NASDAQ.
All right, thank you, Rachna, for that. We will be in touch because all eyes are on this listing. Moving on, India's largest airline, Indigo, is seeing one of the biggest leadership transitions in its history. After a series of high-profile exits over the past few months, the airline has brought in seasoned aviation leaders from both India and overseas as it prepares for its next phase of growth. Madhiha is here to tell us what's changing. Madhiha.
Well, clearly a new top team at Indigo now. Let's start with the exits first. Former CEO Peter Albers had stepped down in March this year. Operations Control Center head Jason Herter exited in February, while Chief Human Resources Officer Sukhjit Pasricha left the airline in July. July will be his last serving month at Indigo. Now, who is filling these key leadership positions? The big one, outgoing IATA Director General and former British Airways CEO Willie Walsh is set to join the airline as its new Chief Executive Officer in August. He brings decades of experience in running global airlines as well as navigating regulatory and policy issues. His appointment is expected to strengthen Indigo's global strategy as the airline expands its international footprint. The airline has also brought back one of its own. Indigo veteran KS Bakshi has been appointed Group Head of Human Resources. Bakshi led the airline's human resources function between 2006 and 2013 and returns with deep institutional knowledge of the company. Former Air India Express CEO Alok Singh has joined as Chief Strategy and Transformation Officer. Singh is credited with leading Air India Express through a period of integration, privatization and expansion. At Indigo, he is expected to lead strategic initiatives and transformation projects as the airline prepares for a much larger global network. So why do these changes matter? The leadership transition comes months after the operational disruptions that hit Indigo in December 2025. Following its investigation, the DGCA pointed to lapses in oversight, manpower planning and roster management as contributing factors to the crisis. The appointments now signal that promoter Rahul Bhatia is putting in place a new leadership team as Indigo moves beyond that episode and shifts its focus towards transformation and international expansion.
All right, thank you, Madhiha, for that update. With that, it's a wrap on this edition of Business 360. News and updates continue right here on CNBC TV.
Thermax is one of India's most respected engineering companies with a market cap of 55,000 crores, headquartered in Pune, 18 facilities that they have as well, and the company builds invisible backbone of Indian industry from boilers that generate steam, chillers that cool massive facilities, and systems that treat water, control air pollution. So in short, what does it mean? Everywhere energy is generated, used or cleaned up, Thermax has got its position there. Now business segments that it runs, right? It's across 4 segments. First one, the industrial product segment, which contributes to around half of their revenues. What does it make in industrial product segment? It makes heating and cooling equipments, boilers, you have water treatment machines, you have pollution control systems for sectors, whether you look at pharma, whether you look at cement, you have steel, and increasingly now even data center is the one that's coming into play. Let's pull up the next segment. You have industrial infrastructure. This accounts to around 40-42% of the company's revenue. Now what does it handle? Handles large engineering projects. Think massive and supercritical boilers, and this is going in for power plants. This is what comes in this segment. You have fuel gas desulfuration systems. That's what comes in here as well. And then there is the chemical specialty segment as well. So specialty and performance chemicals are sold globally. This is what they look at as well in this segment. That is around 4-5% of their business. General and green solution business, which is the one where Thermax is making a very big bet on Indian energy transition. And this is through solar assets, through bio-CNG, accounts around 6% of their business. And that's where the story is, right? That energy transition piece is where the story really gets interesting for Thermax. Is no longer just an industrial equipment maker. It is positioning itself as an energy transition company. From bio-CNG plants that convert agriculture waste into clean fuel, to cooling and boiler solutions for data centers, you have solar power assets companies are chasing, and that's the next big wave of industrial growth in India and globally is what the company is chasing. Now looking at FY26 in terms of numbers, the revenue 10,694 crores for FY26, a single digit growth that we saw there. But in terms of the order book, strong double digit 27% growth, and 13,600 crores is where the order book stood at. International market is leading the growth as well. They're seeing good orders coming in from that front, driving the pipeline for the company as well. We want to discuss all of this with the company. We want to discuss what's the strategy of the company going forward, and we're going to be doing that at the Thermax facility in Nagpur, bio-CNG facility, and we'll be joined by Ashish Bhandari, MD and CEO of the company. Nice meeting you. Hi, nice meeting you.
Good to see you.
We're excited to be at the plant.
Absolutely, come.
Ashish, thank you so much for inviting us here. It's a pleasure to be here. And let's start by talking about the next phase of evolution. We, as a country, are in a phase where we need energy transition, where we are talking about a balance that we need between renewables, the new form of energy versus old, right? How are you seeing things that have changed in the industry for this next phase of energy security and energy transition?
A lot is changing in India. And at the heart of it, India's energy problem right now, or the energy story, has got 3 primary elements. First, India needs a lot of energy. Our power needs, our energy needs are growing upwards of 5% in a year. Over the next 25 years, globally, India will be the place where energy needs will rise the most. More than China, more than any other country in the world. And so energy availability and associated with that, energy security, both of them become very important aspects of what India needs to take care of.
Now, in a challenging time, especially when you talk about the last few months, after the West Asia war, we've realized the need is even more. Have you seen more changes coming along? Have you seen that coming from the policy side as well? You know, last time we spoke, you said there are policies coming in place, but is the pace enough? And now has the pace increased?
The expectation, so first there's this very strong realization all around that the pace needs to increase. Yeah, we are here today at a bio-CNG plant. There was a time when it was expected that India could have 3,000 plus bio-CNG plants. We are not even at 1/10 the number. And that is because some of the initial plants had difficulty achieving commercial viability and the economics were marginal. And there were also some policy decisions that the government was working on. As I understand, in the next couple of months, there are some very big policy decisions that are expected that will really make this industry go on a growth path like never before. I expect bio-CNG to be equivalent of India's next ethanol story with hundreds of plants coming up all across the country.
What would be that market size if we talk about it?
So India today imports more than 50% of our needs for natural gas is imported for India. And what that means is for everything, city gas distribution, industrial use, even without using gas for power, there are multiple applications, transportation, all of these applications are growing fast. So India's natural gas needs are growing very, very fast. Within the energy mix, it's one of our fastest growing energy needs. Bio-CNG plants address this. Done well, the industry is worth several $1 billion in India, maybe even $10 to $20 billion worth of business annually for the nature and the size of the business India can do. Overall, I think as much as 20% of India's natural gas needs can come by this domestic deployment.
And you said economies of scale in the past, given there were challenges, there were mistakes you make, the right proportion has to go in all of this, right?
Yes.
Have they started improving economies of scale for this business?
So the economies of scale, technology have both started to improve considerably. For Thermax, we took 14 plants and those were taken 3 years ago as orders. In the first year, they were just learning. Every day it felt like, wow, will we ever learn this and will we ever come across? But in the last 1 year, our stability has improved tremendously. All our plants are going through commissioning and performance tests. This plant, as an example, has gone through that performance test successfully. And we've got one more big plant in Punjab, which is right now going through performance tests. So we are now getting to the point that we understand the technology very well. We think the economics are also very close to making these commercially viable. And with this last couple of decisions that are expected from the central government, that is the only thing that this industry needs to really break out into something special.
And that is hopefully soon, given that everybody's...
That is hopefully very, very soon.
So now bio-CNG for Thermax is how much of the portion?
So we are doing about 14 plants. In the last 2 years, we haven't taken really any new orders. We have taken some orders which are largely like adding digesters at existing plants. We all also learned, for example, initially that with 3 digesters, you could do the work. Over time, we realized we needed more digesters. So at many of our plants, we added digesters. Beyond that, we really haven't added more. But if the industry takes off like we expect, this could be one of the biggest areas of Thermax.
How does the revenue come for this? It's annuity or?
So we have got 2 parts of revenues. One, when you construct the plant itself. Which for a typical 20 tons per day plant is about 100 to 150 crores of plant setup, etc. And then you get an annuity for O&M, which is maintenance of the plant and operating the plant and taking care of things. Tomorrow, there could also be a service stream for sourcing the biomass, bringing it in, taking care of digestate, a lot of other things that are out there. I think with the right policy decisions that are expected, this could easily be 1,000 to 2,000 crore business for Thermax.
Oh, wow. And that's by when?
So we will see when the policies come in. But I do think over the next 2 to 3 years should be very, very exciting for this industry.
Okay. Ashish, while we're talking about numbers, all of it, but I want to understand that process a bit more in detail.
Sure.
So I want you to take me inside and explain me that full process as well.
Would love to do that. Why don't we go to the other side and we will start to look at the process itself.
Absolutely. This is, I think, step one of all the processes.
So yeah, a bio-CNG plant has 5 parts.
Okay.
And to explain to someone, I'll again use the thing that we do. We eat our food and we chew it.
Yeah.
Yeah, why do we chew it? Because we need to break it into smaller parts before we can take it inside. So the first thing that you do is to shred it and break it.
Okay.
Okay, and you break it because all these raw materials that you see has got something called lignin.
Okay.
Okay, and lignin is something that is tough for the bacteria to digest.
Okay.
So you want to break it in smaller parts because inside is cellulose. Cellulose is what the bacteria is looking for to convert into gas, and cellulose is what our stomach looks for as well. So what you do is break the rice straw or whatever comes into small parts. The first part is that.
Okay.
The second part is where you send it to a mixing tank.
Okay.
In the mixing tanks, what you do is you mix it with water, create a slurry.
Okay.
And that slurry is important, just like we do in human body. What our throat does, it gives moisture, makes it wet as you take it in. Then it goes to the digesters.
Okay.
Okay, the digesters are the stomachs of the human body. And this is what takes the slurry and creates gas out of it. Okay, and which is why they are structured like this, because the gas is lighter, it goes to the top, it gets collected.
That's why the balloon shape.
That's why the balloon is there, yeah, and it collects. When it gets sufficient pressure, you take the gas out, but at that point, the gas is unclean gas.
Okay.
And when you hear CBG, anybody can. You can make CBG at home as well. Yeah, you take your food, put it in a compost, CBG aa jayega. The difference between CBG and bio-CNG is bio-CNG is pipeline grade gas. Which means you can put it into your CNG car, you can put it into an industrial plant. It meets all the characteristics that CNG meets from.
So you can use it. It's
anything.
absolutely accessible for.
So the fourth step of the process is cleaning the gas.
Okay.
Okay, you clean it so that what you get has only got 50% methane.
Okay.
By the time you clean it up, it has 96% methane.
Okay.
And that 96% methane, pure methane, you can use it for anything. In our case, it goes to the 5th process, which is compression. You take this because the gas takes a lot of space, but eventually you need to be able to put it into your car, you want to be able to put it into bottles, you want to be wherever you want to. So you compress the gas, which is the last stage which is out there. Everything else that you do see is actually supporting for these 5 elements.
Ashish, what I want to understand, we've understood the whole process. We've said that this is a big market size as well, right? This comes in as a part for Thermax and green solution
Green
side of
solutions.
it, right? Last time we spoke, you said the margins are not as great as the other business.
Yes.
When do we see that improvement, or are the margins for this business going to be at these levels? Is there a possibility or scope of improvement?
It has got two parts of my answer. Like many things, it depends. Some of it depends on Thermax, some of it depends on the external environment. First is if the external environment improves, which is expected with the pricing change, and this is now a Prime Minister topic. The highest body of India is expected to provide the right incentives. So if the whole industry becomes bigger and grows fast, then the ability to make money also improves. So that is the first part. Second is the Thermax's ability to build differentiation into the solution. All these plans that we have done has taught us a lot. And there are still at least 3 major areas of innovation that we are working on, which we think can give us significant differentiation.
In bio-CNG?
In bio-CNG. So if both the first part and the second part happens, the opportunity to make margins out there is significant. If the first part happens but the second part does not, then the volume comes. The profitability, we'll have to see how good and profitable that is. But we are certainly working towards making both of those things.
You know, I just want to understand, opportunity for carbon capture. Where does that come?
Carbon capture will come, but the time is not immediate. Now is the work to work on technology, do demonstration projects, and in 3 years from now, by 2030, I expect India to have a very evolved carbon capture market and a carbon capture trading mechanism, carbon capture projects that are commercially viable based on the government's carbon trading mechanism, and getting ready for a full-blown market in 2 to 3 years from now.
Ashish, some numbers now I want to know.
Sure.
Order book FY26 and 13,600 crores. Good growth. 30% approximately growth we are seeing, right? How do you see the order mix change from here on, given there is so much that is happening? How do you see this change for the whole conversation that we have had?
I'm not going to get into the ask of forecasting what the future looks like. And you can see, you know, the war, it's just gotten over. What may change? India is just coming out of a tough cycle in a way with, it was tariffs first, then the war. Now we don't know what the monsoons are going to look like. So it's tough to say, look, this is what you would be. I can say I am extremely bullish on almost every part of Thermax. We have a very good international pipeline right now. Domestically, our large boiler business is seeing and projects business is seeing a big recovery on the thermal side. In our industrial products, the need for water-based solutions, the need for cooling solutions, broad-based heating, pollution control, all of those, we are seeing tremendous opportunity domestically and internationally. And things like bio and the entire green solutions business, with just a couple of tweaks, can really become rockets for the future. So I think this last year was an example of what Thermax can do. I expect to see similar possibilities and opportunities, at least for the foreseeable future.
But order book looks good, right? You all are getting a lot more inquiries across the board for your segments. All the 4 segments we talk about, you all are there. Chemicals too?
Chemicals too, all across, I would say, and because we are just finishing the quarter, it's not right to share numbers either.
No, absolutely.
But overall, continue to be bullish. We have got commodity price increases that are going in. You have to be
factor all of that in.
You have to factor all that. But from an order book and opportunity pipeline,
and the long-term story continues to stay intact.
The long-term story is India's long-term story. And India needs to build 2 to 3 Indias in the next 20-25 years of what we have done in the first 75. And I do feel this is the time for Indian companies and Indian technology.
You know, 2 important points I want to highlight. Last time we spoke a lot about data centers because that continues to be in focus, right?
Big time.
You had spoken about 2 areas that you all are in, 2 revenue streams for you all, cooling as well as boilers. Now, analysts are saying that this cooling opportunity alone itself for Thermax could double in the next few years. Would you agree with that case?
I would easily agree. Could be double or more, but it requires Thermax to be able to seize that opportunity. And this opportunity is in all aspects of the data center market, but it is especially relevant to the US data center market. Okay. So for us to establish our capability, convince customers in the US that this is technology that is important and relevant, to make sure we deliver products with quality and service and all that, that is the ask of Thermax. The opportunity size is extremely large.
And Ashish, from the last time we spoke 6 months ago, have you seen more orders come in, or how has it been given the current global scenario? I want to understand how is orders for data centers moved as well, or inquiries for data centers?
So inquiries for data centers has moved substantially. Okay, it has moved substantially, I would say multifold. From an opportunity closure perspective, in this last quarter, we closed one opportunity for supplying boiler pressure parts for data centers, again to the US. Okay. But overall, the pipeline is much stronger. And
conversion may be a bit of a delay right now, given the process with the clients?
So conversion is the longer part of the process. And that is where I think I talked about. It depends on convincing customers that Thermax has the technology, the capability, and the wherewithal to service their needs.
Okay. Ashish, one more question. Exports, how has exports changed? Where does it stand for Thermax right now? And given the West Asia war and the current crisis that we were seeing, how have things evolved now?
So the West Asia war, I'll start with that first. I'll talk about the rest later. In the short term was a negative and continues to be a bit of a negative impact, because you can't ship products out there. Customers are taking just a little bit longer to finalize orders. But in the medium term and the long term, I see that as a positive, because there'll be a big reconstruction effort that will come in, and new effort that will come in, because many of those countries have got money to spend and will now look to do projects, even in response to some of what happened during the war itself. Overall, exports is an area that I'm very bullish on for Thermax. Over the last few years, we have invested a lot in improving our capabilities. We have started legal entities in multiple countries, ability to do projects in those local countries. Our manufacturing plant in Indonesia is also starting to scale up. So with all these investments that we have done, I'm personally very, very bullish on our ability to compete, and there being a market that is ready for Indian
What would exports be in the next 5 years for Thermax?
So exports are growing right now at good 20 to 30% for Thermax. I expect that rate to continue.
That rate to continue. And overall, Thermax, FY26, around 10,600-700 crores we closed at. Let's talk about 5 years down the line. What would it look like?
I don't know what what India would look like, but our goal is to grow 2 to 3x of India's GDP.
2 to 3x of India's GDP. Okay, so could we expect around double-digit growth, right?
Of course.
To continue for Thermax.
Of course.
In a CAGR term.
Of course.
Okay, Ashish.
Thank you.
Thank you so much for joining us.
Thank you.
Thank you so much for taking us through the opportunity that lies for bio-CNG, coal gasification, and overall opportunity for Thermax as well. Thanks so much.
Thank you, Vinny, and to the CNBC team to come out here and walk the plant with us. Thank you so much.
Thank you.
Thank you.
Hello and welcome. You're watching News Center. I am Ashmit Kumar. Now, in a rare show of unity, three of India's leading automakers addressed a government-hosted press conference over the weekend to defend the centre's ethanol fuel mandate amidst rising concerns. Maruti Suzuki, Hero MotoCorp and Toyota Kirloskar claimed that years of testing and service data show no evidence of widespread vehicle damage due to rollout of petrol blended with 20% ethanol. Remember, social media has been rife with allegations that use of blended petrol led to a drop in mileage and engine damage. Shivani Bazaz, my colleague who attended the press conference, joins us now. Shivani, tell us, the government trying to quell the public backlash over the ethanol mandate. What exactly did the industry heads tell you when you met them over the weekend?
Well, yes, what began as a scattered complaints over lower mileage has now snowballed into one of the biggest public debates around India's ethanol blending program. The trigger was clearly the viral claim linking E20 petrol to vehicle damage following the remarks made in court describing E20 as an experiment, a comment that rapidly amplified public anxiety despite subsequent clarifications by the government. Since then, social media has been flooded with posts alleging engine damage, corrosion, fuel pump failures and a sharp drop in fuel efficiency, with many motorists questioning whether pre-2023 vehicles are safe to run on E20. It is against this backdrop that the country's biggest automobile manufacturers took the unusual step of jointly addressing the media over the weekend. Maruti Suzuki, Toyota, Hero MotoCorp, Hyundai and other OEMs categorically rejected claims that E20 causes engine damage or corrosion, saying the fuel has undergone years of testing by manufacturers as well as independent agencies before rollout. Maruti cited service data from over 2.84 crore vehicles across the nation, including more than 1.5 crore pre-2023 cars, to say it has found no E20 related damage, while Toyota said it has not received a single complaint directly attributable to E20 since the program began. The industry did acknowledge that E20 can reduce mileage by around 3 to 5%, but argued that the trade-off is outweighed by gains in energy security, lower crude imports and higher income for the farmers. Whether these assurances are enough to restore consumer confidence remains to be seen. For now, while the auto industry has firmly backed the government's E20 program, the storm on social media shows little sign of subsiding.
We want to give a statement of confidence that Maruti Suzuki has been fitting E10, has been making its car compliant to E10 way back before 2010, which is more than 16 years now. And when we did that, we had sufficient factors of safety that even if we use E20 fuel on those E10 cars, they are fully, they do not have any kind of issue at all in terms of either wear and tear or corrosion or any kind of impact on the life of the components that go into the car.
The E20 program is not an overnight program. There was extensive testing and certification done at all levels, whether it is the OEMs or the independent testing agencies like ARA, etc. There will be no impact, like I said, on older vehicles using E20. All vehicles that have been produced after 23 are fully compliant materially. From a fuel perspective, as per the tests, the drop in mileage is not very significant. It is in the range of, like we said internally, 3 to 4, perhaps 5%.
डीलर मार्जिन को 6 महीने में बढ़ाऊंगा। वो डीलर अभी तक 2024 के बाद एक 10 पैसा भी नहीं बढ़ा है। और जो पब्लिक के लिए जो E20 जो अभी चल है, उसके जो डीलर लोग जो फेस कर रहा है, उसका जो प्रॉब्लम है, वो उसको अभी सरकार को हम निवेदन करते हैं, उनको पुनर्विचार के लिए हम बोलेंगे कि इंडिया को छोड़कर बाहर में सब 10% है थ्रू आउट द वर्ल्ड। ये इंडिया में ओनली 20% है।
Well, that was Mr. Sahu from the Petrol Dealers Association based out of Odisha, raising concerns about what people are saying to them and creating problems for them at the petrol pumps, citing issues with the engines. Let's begin this conversation now. Joining us now is with us Mr. M.K. Surana, former CMD of HPCL. Also with us is Ashwin Durai. He's the founder of ICD Tuning, and also Hormaz Sarabji, editor with Autocar India. To all of our panelists, thank you so much for joining us. Mr. Surana, let me come to you. Over the weekend, we saw industry heads, Maruti, Toyota, assuring that over the last couple of years, they've not seen a single complaint, that there is no reason to fear that there will be wear and tear on account of use of E20. However, these comments that were made over the weekend were met with outbreak of outcry on social media. A lot of commentators, a lot of influencers, a lot of people raising concerns, citing their own personal stories as to the damage their vehicles have suffered. So again, to what would you attribute this panic? Why is there a mismatch between what the industry seems to be saying and what the people are saying on social media?
Yeah, good evening, and thanks to you for inviting me on your show, and thanks to the panelists as well. See, why there is an outcry on social media, there is no answer to that, because it is the problem of the over communications or the availability of the platforms where anybody can comment anything. And as you know it well, the negative news transmits faster than the positive news. So we cannot I cannot comment on why there is an outcry, but what I can comment is on the facts of the thing. So some of the things you already mentioned in your initial narration, but let's go back to the genesis of it. That why ethanol at all? So basically the ethanol blending program is coming from a national priority. And why national priority? Because that we are 90% dependent on our import, and energy independence is important for us. And in that case, a substitution to import cannot be a substitution. If you see the total energy basket, probably biofuels is one item which is purely indigenous. Rest everything has got an important dependency. That is one aspect of it. The second aspect of it, if you see a barrel of crude, the products that if we see, around 15% is what is a naphtha and petrol component, 45% is HSD component, around 3 to 5% LPG component. Now our growth, if you see, around diesel growth is around 3 to 4% or 5%, but petrol growth is around 7 to 8% per year. And if we do not find an alternative to the petrol, for the same requirement of petrol, we have to import more crude and maybe exporting diesel. And therefore, it is important that we balance our crude slate or the product slate such that we have got an alternative where the petrol requirement has got additional substitutions. The third part is the petrol component, which is naphtha, also goes in petrochemicals. So why do you not use a molecule which can be put to better use? Otherwise, you will be importing that again. So that's one aspect of it that is national priority, and therefore it is important. I don't think that anybody can deny the importance of the biofuel or ethanol in our national priority as such. Then comes the question, how do we meet it?
Sure.
So basically the enablers, the OMCs are, the distilleries are making the ethanol. The OMCs are blending and actually rolling out the blended petrol as per a specification which is given by the standard agencies. And OEMs have, as you already said, has confirmed that their equipment are compliant and for this type of fuels. And the third thing, it is today, it is going on since 2001. Maybe that even E20 petrol was first, I think, rolled out in 9 states somewhere in 2023 or so, 9 states. And it was after a lot of consultation between all the companies, the OEMs and the research institute, a lot of discussion, deliberations happened on that. So now all of a sudden cry, maybe that somebody gets hurt and then he puts in media, but the question is we cannot be deciding the national policies based on the whims and
sure.
Also. At the same time, we need to take care of the...
let me also bring in...
Yeah, just 1 minute. So
let me also bring in Mr. Sarabji. Sure, Mr. Surana, I understand. Let's also get in Mr. Sarabji in on this conversation. Mr. Sarabji, I just want to draw your attention to a report, a Niti Aayog report of 2021, which cites a SIAM letter as an annexure. In that letter, SIAM has batted aggressively
for discontinuation, warning rather, that discontinuation of E10 may cause material degradation, fuel efficiency loss may not be acceptable to consumers. And then SIAM goes on to say that it strongly recommended continuing dispensation of E10 even after E20. Are we missing something here? We don't have access to E10. E20 has become the standardized fuel. Is that the way forward, or do we need options here before the consumers?
I think what we are missing here is the poor motorist who's facing the brunt of this. And, some of it overblown on social media, but there is genuine concern. Look, I think what Mr. Surana said, honestly, I'm all for biofuels for all the reasons, energy security. And I think what we are forgetting is environment. That one molecule of oxygen does wonders, be it at the tailpipe or even in terms of, CO2 emissions, because clearly with biofuels, the crop is absorbing the CO2 and then putting it back. So there's a circularity to it. And for me today, CO2 is public enemy number one. It is a reason for climate change. We are facing it right now. We've seen what's happening in Europe. We've seen what's happening in India. El Nino, all this is just creating complete havoc. So for our future generations, we have to be promoting something that is CO2 negative. But I think what has been forgotten in this is the motorist. Now, it is, whatever, I think what the CM saying is right. And right now, while there may not be any cases of immediate let's say widespread engine damage. And engine damage, I'd also like to clarify, it's not that your engines are suddenly going to implode. It's a fact that the corrosive effects of ethanol over time will cause some degradation. Now that window typically starts between 10 and 20,000 kilometers. So there you've got a fuel efficiency loss. In our own real world testing, we found a drop of between 4 and 12% with new cars. And when we tested on BS4 cars, it was slightly more. So fuel consumption, fuel efficiency loss is not slight. It is there. I think, to be honest, the way this could have been handled is with just taking care of the motorist interest, which is the fuel efficiency loss and a higher maintenance over the life cycle of the car, especially for cars before E20. And a drop in fuel prices would have just solved a lot of the issue. We should have had lower fuel prices. We are led to believe that ethanol itself is, much cheaper, but then we know there's an MSP over there, which is, pretty high, which again supports the agri sector and the farmers. But I think in all this, we are taking care of everything except the motorists, and all that should have been done is just lower the price. It would have taken care of all these other factors of a drop in fuel efficiency and increased maintenance over the life cycle program. I will say that maintenance, it's not going to be catastrophic, because the way you just go by the science, it's a slow degradation. It's limited to the fuel delivery system. Sure. Those parts can be changed. Doesn't mean your engine does blow up, though there are other issues which are ethanol related, which I'll just come to. And it could be that on older cars which have not been used, right, ethanol sometimes is too clean for its own good. It kind of dislodges sludge, which then gets into the injector, and that causes problems. And again, which I'm sure Mr. Ran will bear me out, is that QC at the pumps is very critical, because ethanol is very, very hygroscopic. It attracts water. Once water gets into the petrol, it can damage fuel pumps and things like that. So those are more ethanol related, but ethanol as a fuel is very clean. It's very good for the environment, very good for our economy. But I think in all this, the motorist interest should have been met.
But speaking of the motorist interest, Mr. Sarabji, one of the points that you raised was also, in fact, published as a part of the recommendations of the Niti Aayog in 2021, saying that given the fact that ethanol blended petrol has lower calorific value, should it be priced at a discount as compared to regular petrol?
That's exactly what I was saying. It should have been priced much cheaper, because you're losing out on efficiency and there's a potential maintenance increase as well. And you have to do a lot more preventive maintenance with ethanol. You have to change your filters faster. You have to clean out the injectors once in a while. You have to budget for maybe on older cars, fuel pump failure on GDI engines, a high pressure pump, that's more expensive. You just got to factor these things in. Again, as I said, it's limited to the fuel line. So, these stories of cars just engines just imploding and stuff like that, that's just, kind of just blown out of proportion. But there is a potential chance. And while the manufacturer have said that right now that we don't have any cases, the window of something happening is yet to come. But again, it is quite manageable. It's just the maintenance, a little bit of a nuisance, a little bit more of a cost. Cars will run absolutely fine. Soon you will even get E20 kits where you've got, the fuel delivery parts which are resistant to ethanol degradation. It can get sorted out. I think we have to go back to when we switched from leaded to unleaded petrol. There was no social media then, but the damage unleaded petrol could have done on the valve seats, that was absolutely real. Of course, we got past that. The auto industry is very, very innovative right now. So, I mean, it just should have been a little better.
Right, Mr. Sarabji. On that note, let's head into a very short break, but do stay on with us. We have Ashwin Durai. He's authored a blog post called Madras Mechanic, where he says he will dispel any misconceptions the public may have with respect to the impact of E20. We'll come back to him as well as our other panelists, Mr. Surana, Mr. Sarabji, on the other side of this short break. Welcome back. Still with us, Mr. M.K. Surana, former CMD of HPCL, Ashwin Durai, founder of ICD Tuning, as well as Hormaz Sarabji, editor of Autocar India. Mr. Durai, let me come to you. We've gone through your post online, which is, of course, addressed as Madras Mechanic. You've given your own personal experience, your own anecdotes, your experience. You, of course, have a tuning center based out of Chennai. From your experience, you've talked about how you've gone over 2,500 vehicles over the last couple of years. Tell us, there are increasingly reports and claims being made that there is incremental damage being caused to the fuel line, to the carburetor, to the engine. How valid are some of these concerns, or are they perhaps misplaced? Is this a case of panic within the consumers?
So most posts which you see online are actually over-exaggerated, and I see a lot of online posts where people are claiming BS6 bikes having failures, and they show throttle body and say it failed because of the E20 fuel, whereas there is no fuel involved in a throttle body. It just processes air. So those are the kind of videos which I keep seeing, and that is the main reason I even wrote that post.
But Mr. Durai, let me come back to you again. What Mr. Sarabji was telling us is that no one is making a case that the engine will suddenly explode today because you're using E20. The argument being made is that gradually, over time, as this fuel gets used, comes in contact with the fuel pipes and the engine, the corrosion that is likely to be caused will be at an comparatively higher pace as compared to regular petrol, and therefore that could result in higher maintenance costs going forward.
Yes, correct. That can happen, but if your car is BS4 and above, that the chances of that happening is less because these cars are already, most of the cars are E10 compatible, and when you use E20 on E10 compatible cars, there is virtually no much damage or wear and tear compared to E10. But on older cars, yes, and the only major part which you might need to replace quickly is your fuel line, because those cannot handle the higher concentration of ethanol. But otherwise, engine corrosion is something which cannot, I mean, in most cases cannot happen, because the engine is going to burn the fuel and send it out. Okay, the only place where it's the components around the engine, the pump, the high pressure pump, the injectors, or the rail. These are the ones which can have accelerated wear, but not on BS4 and above cars.
So BS4 and above should be safe as far as E20 is concerned. BS3 and lower cars may perhaps need some kind of mechanical inputs. Let me also ask you one more question, Mr. Darai. We heard from the heads of Maruti as well as Toyota over the weekend. The language they said was that vehicles are designed with a safety margin beyond E20 compatibility. Break that down for a layman. What does that mean? Are the vehicles configured to handle fuel such as E20 and beyond?
Yes, everything that is manufactured has a engineering tolerance. We have all seen trucks on the highway carrying weight way more than what it can actually carry, right? So, and it didn't break into two. The reason is engineering tolerance, and that is exactly how the manufacturer manufactures cars also. Because not everyone gets good fuel, not everyone lives in a metro city, not everyone maintains the car well. So they have to consider all of this to, give a wider range of compatibility. So this is the reason E10 cars can process up to E20, or in some cases, in some cars, up to E30, and E20 cars can, run higher ethanol also. So this is it's engineering tolerance which helps these cars run higher blends also.
Right. Let me get some thoughts in from Mr. Surana. Mr. Surana, when we compare it with some of the global best practices that we've seen, countries such as Brazil, countries such as the United States, they had the implementation of ethanol blended petrol, but in a staggered fashion spread across very many years. In India, as far as the leapfrogging to E20 is concerned, we've seen that compressed into a timeline of 3 years. Did we rush it or did we move too fast, Mr. Surana?
Just one, before I answer your question, I just wanted to make one comment on the corrosion, etc. See, apart from what the OEMs have mentioned, all the three major companies, that is the Maruti did make mention that out of 1.6 crore, there were more than 2.3 crore, 1.5 were before 2023. 2023, the year from which the car and the fuel both are E20 compliant. So they didn't find any appreciation. But before that, in 2014, there was a study carried out, a detailed study was carried out by Indian Oil, Automatic Research Association of India, IIP Dehradun, and CM. And they have found that they didn't find any material compatibility issues, or the drivability issue, or the startability issue with E20 fuel use in the cars. The only thing was related to some rubber and the gasket materials of the older cars. So as far as the engine or the metal part is concerned, there were no compatibility issues was found. So, and that was after a test of around 40,000 kilometers of accumulated kilometers on four-wheelers and around 20,000 kilometers on two-wheelers component. That's one part of it. As far as India is concerned, as you know, that Brazil had been using almost up to E37 and the flex fuel, or the US had been using, and they are also trying to put it to next stage. But in India also, if you see the first national biofuel policy which came, it did talk about 20% biofuel by 2017. But the problem was even we could not reach at that time even 5%, 10% because of the availability of ethanol. And so in 2018, it was revised to get it to 2030. And then there was subsequently in 2020, an interministerial group under the Niti Aayog has re-studied the whole. By that time, we had already crossed 10%, and the availability with number of initiatives the government has taken for the feedstock for ethanol blending, the incentive to distilleries, the incentives for interest subventions, etc. The ethanol availability increased, and then it was decided it can be rolled out by 2025-26. And actually, the first in the 9 states were rolled out in 2023. So it is not a rushed affair. It has happened over a period of time, with the ethanol program starting somewhere in 2001. So the question is the only impediment was the availability of ethanol. And so the focus was, a lot of focus was taken after this government came on availability of ethanol and increasing the raw material which is going. It was only otherwise molasses based, then the food grain, maize, everything was increased. And as the availability increased, the ethanol blending program got an acceleration.
Sure. Let's also, since we are talking about alternate fuels and what that does, not only from an energy security standpoint, but also what it does in terms of perhaps the carbon footprint, let's also get Mr. Sarabji in on this. Mr. Sarabji, this debate regarding blended petrol is, of course, being looked at in context of the push for electrification as well. Is this an either-or situation? Do we need to pick one or the other, or do both go hand in hand, or should perhaps there should be a bias in favor of electrification, no tailpipe emissions at all?
That's a problem, actually. It's not never either or. There's no silver bullet right now. You should lay down the regulations, and however best the regulations may, let the OEMs choose the technology. We've got CAFE coming in. That's automatically going to push the EV fleet much higher. But again, I think, coming to biofuels, I think flex fuel is one way to go. But again, that has to be properly managed. We just did a test of an E85 vehicle. And to be honest, the E20, it was cheaper to run it on E20 than E85 because the difference in price was not as big as the big difference in fuel efficiency. It's 20% cheaper, but the difference between E85 and E20 in fuel efficiency is 24%. So I think pricing needs to be rethought of. I think flex fuel is fantastic. That's the way we should go. I think we should follow the Brazil model. Also, I'd like to say that in a way, we've dodged a bullet with E20. I think it's manageable. A lot of hoo-ha around it. Yes, maintenance costs have gone up, but in our kind of estimate, I think over 10 years, the additional cost on a MPFI engine, if you even change the fuel pump once, is about 21,000 rupees over a 10-year lifespan of a normal non-turbo car. You take a GDI, which has injectors which might need walnut blasting to clean them and all, that could go up to about 60,000 over 10 years. That is the level of impact we foresee in terms of maintenance. So I think E20, we've got away with it. My worry is that a higher blend as a base fuel, that could really lead to a problem of older vehicles. And there's a push towards E25. We know that. I think maybe pause at E20, push heavily on biofuels. I think it's on flex fuels. That really is, I think, has got a lot of legs, makes a lot of sense, especially in our situation where we have a strong agri sector. We are very dependent on imported crude. Foreign exchange reserves get depleted because of this. We can follow the Brazil model. Let's do it with flex fuel, E85, and keeping E20 as the base.
Well, that certainly seems to be the policy direction we're heading in. But speaking of policy direction, Mr. Surana, one quick question to you on the issue of sustainability. There are questions that are asked that as far as crops such as sugarcane are concerned, rice are concerned, which act as feedstock for ethanol, again, hugely thirsty crops have very high consumption of water per acre. Is there a need for perhaps a policy push, a reconfiguring of how we make ethanol here in India?
No, actually, there is also little bit of misconception is there that we are assuming that all the ethanol is being made out of sugarcane molasses. But currently, 40% of ethanol which is coming, it is coming out of maize and out of the surplus rice or the broken rice or the damaged rice or those type of things. So for that, the water footprint is already there when the crop was mowed and for the food security, and only the surplus crop, which is anyway to be procured at the MSP based on the policy, either it will remain in government godowns or it goes to some other use. But as far as maize is concerned, that is not that water thirsty. In fact, if sugarcane uses 350 liters for 1 kg of sugarcane, maize needs only 360 to 400 liters for 1 ton of maize. So that we need to keep in mind. And the second thing is that actually we need to see that the overall impact of it, the water footprint is one thing, but all these things, they use 2 to 3 liters of processed water for 1 liter of ethanol as far as the ethanol part is concerned. And all these distilleries are supposed to be zero discharge distilleries now. So we need to concentrate on the recycling of the water and the use and the efficiency of water uses in these distilleries as well. And use the crops which are less water thirsty rather than depending on more water thirsty crops like sugarcane. And that is what the government is doing. And that's why the maize MSP was increased from 1,300 rupees a quintal to 2,400 rupees a quintal. So that part is already there. Just the second part, as far as the emission part is concerned, the ethanol actually reduces the carbon monoxide emission almost by 30 to 40%, and the unburned carbon emission by around 20%. So there is a huge emission as Mr. Sorabji has also mentioned, there is a
Right, Mr. Surana. I'm afraid I'm just going to have to interject there for want of time. But like Mr. Surana was pointing out, a huge impact in terms of carbon monoxide as well, and perhaps relying on crops such as maize, which are not as thirsty as perhaps sugarcane, may be a more sustainable approach. But clearly a multifaceted debate. I'd like to thank all of our panelists for joining us, Mr. Sorabji, Mr. Durai, Mr. Surana. But with that, it's a wrap on this edition of News Center. More news and updates will continue right here.
Grabbing the headlines, but data is powering the revolution. At the heart of that transformation is NetApp, a $30 billion intelligent data infrastructure leader, helping enterprises unlock the value of their data across cloud and AI. After a landmark year driven by record financial performance and growing enterprise AI demand, CEO George Kurian believes data, not chips, will define the winners of the AI era.
When we last spoke, which was about 3 years ago, it was all about the cloud. And now it's all about AI. What do you make of this massive transformation and shift that's taking place?
I think it's built on the foundation of large-scale digital technology being available with an important couple of other ingredients. One is sophisticated computer models, and of course, the ability to harness the power of large amounts of data, which is where we come.
Your thesis on data being at the center of everything is proving right today.
Thank you. Yes. We've long held the view that in addition to talent and understanding your business or your clients deeply, data becomes the competitive moat of an industry. You know, everybody has access to the same chips, everybody has access to the same models, and the models themselves are largely trained on the same data. And so your ability as an organization to deeply understand your business, your clients and employees using your data becomes the competitive moat.
So that is the competitive moat, as you point out. But I want to understand from you, it's been what, a little over 10 years for you here at NetApp. Right. So you've seen many cycles. What is specific to this particular wave that we are seeing, the AI wave that everybody wants to get on top of? What is different this time around?
I think it has the promise of a platform shift in a broad sense. Certain industries are already experiencing that, digitally intensive industries. I think for that to become a reality, the technology has to prove out its promise. I think, the organizations that use the technology need to have an understanding of how the technology works. It can't just be a black box.
Yeah.
And you need to be able to change the way people and businesses fundamentally operate. So lots of promise, but lots of work to do.
I started by saying that you've had a landmark year. How do you build on that? How do you top on that? Because you've had a record-breaking quarter in many ways.
I think it starts with strategic clarity, which is what can you do and be the best in the world at? And that gives you the clarity of understanding, the humility to rethink your ecosystem so that you can build complementary capabilities and serve your customers really well. I think the second is customer centricity. To be able to help clients, you also have to understand how to use the technology yourself. And then the third is culture. We have a belief that whenever there's a transformation, that you have to understand its relevance to your business.
Yeah.
And if it is relevant, then you want to lean into it and encourage adoption. And I think in that case, trust beats policy all day long. It's much easier to have a workforce that you can trust and that loves our company and wants to do right for the company. And it encourages use and adoption versus having a big policy manual of to-dos, what to do and what.
So there is no big policy manual of a long to-do list? No? And what has it done in terms of workforce and workflow for you inside NetApp?
I think we have two perspectives on that. The first is, we're trying to build an enduring institution. And I think at the fundamental heart of every institution and professional organizations is the idea of apprenticeship. And in this case, we actually really believe in bringing young talent to the company because they will be the future generations. And in some ways, what has been interesting is the mentorship in this case has been reversed. The new talent is much more facile with the technology than the more senior talent. And so it's really encouraging and interesting to see the new generations teaching the older ones how to use it. And so that's one view. It's sort of a long-term view of the talent pipeline and the opportunities there. And then the second is you need to be able to get people to think about the skills needed now that they have these powerful tools. So for example, it used to be in software development, the idea was that, the entry-level person would write code and then would have a more senior person teach them how to review code. Now you've got an agent writing the code for you, and as an entry-level employee, you have to be able to learn how to review the code. So you have to upskill people. And then once you do that, you can see enormous power. The third thing we have done is to really measure business outcomes rather than just usage. So, in software development, for example, rather than look at naive indicators like token use, we're actually seeing, hey, are people able to deliver better, higher quality code to the system? In customer support, we're measuring do our customers actually get the information they need better, faster, easier.
It's interesting that you talk about bringing young people in and how young people are a lot more agile with this technology particularly and understanding it and using it. But what does all of this now mean as far as the workforce is concerned from a jobs point of view? And I think that is what is causing a great degree of anxiety at this point in time. I mean, if you've looked at the graduating ceremonies and what's going on with tech CEOs and the kind of backlash that we're seeing at this point in time, how do you respond to that? What do you believe the workforce of the future is going to look like if we do have this hybrid model where digital labor and human labor will coexist?
I think there are broad implications, and I think it begins with having a deep understanding of the technology itself. Aristotle says the most dangerous thing is the illusion of knowledge.
Yes.
And today, I think broadly based, including the tech industry, we have an illusion of how this technology works and learns and understands itself. So we've got to be able to get a lot deeper in terms of truly understanding where it is useful and where it's not. I think the second is, as a member of the technology industry, we haven't always gotten it right. I think social media, remote working have been examples where the tech industry sort of highlighted the promise of something that had downstream consequences of, very negative consequences, right? Mental health and all of these other negative consequences of those technologies. And so we need to be more balanced in our view. And then I think thirdly, you've got to make sure that we cross the digital divide. This is where, particularly in India, there is an opportunity for India to lead the world, where I really believe the application of this technology to make available affordable healthcare or better food security or mitigate catastrophic risks from happening is perhaps more important than gloating about how powerful the technology is. And I think we have a responsibility to make sure that the next generation doesn't feel as much despair as they feel right now.
One of the other things that I think is now sort of becoming part of conversations is the fact that you need partners. You need to create an ecosystem. It cannot be one individual company or a few companies that are going to drive this and lead this, or it should not be left to a few companies to drive and lead this. How do you respond to that? And do you believe that will policy or regulation force the ecosystem, or is enlightened self-interest going to force this ecosystem to collaborate much more?
We've been in the data center business for a long time, and data centers are multi-vendor, and we've believed always that it's better to harness the power of collaboration and community to build a better outcome for clients. I think that's true across the globe. And I think that, it probably requires a combination of regulation to protect against some of the risks, but also enlightened self-interest. Platforms are better when more people contribute to the value of the platform than a single controlling individual.
So, speaking of partnerships, I mean, you've done a bunch of them through the course of this year, including with Google Cloud, Nutanix, and a whole bunch of other companies as well. What's exciting at this point in time? You've got a pretty solid pipeline of launches. You've launched many products as well. What's happening on the innovation engine that has you excited?
I think it's really to help our clients use their data and to be able to deliver amazing outcomes. We've been fortunate, for example, to work with the European Space Agency to map the universe, right? And I think that that work does not happen alone with us. It certainly starts with the knowledge and insight of our clients, but also the partnerships that we strike with other organizations to be able to deliver amazing breakthroughs. And I think that for us, the importance of partnerships are because it allows us to bring the world's best capabilities that we have, but also to work with other industry leaders. And the joint work brings a much better outcome.
you've been very bullish on the Indian market. But how has India changed for NetApp since we last spoke, which was about 3 years ago?
In multiple ways. Certainly we've always believed in the talent in India. We have our largest development center, which is now close to 4,000 employees.
And you think that will continue to be the case? Because everyone's talking about, the agentification of the workforce, and that would probably lead to less hiring or maybe not so much offshore work. How do you respond to that?
We think India is a great place for talent, and we are increasing our employee population there. We have highly skilled employees, and so they will be a cornerstone of our research and development organization for many, many years to come.
Okay.
I think the second is we're working with the innovation ecosystem in India, both through our accelerator program, which has been very successful. It's one of the top 10 accelerator programs in the country, and we've seen both women-owned businesses as well as other innovative startups kind of learn and benefit from our experience, and so that's a contribution to the innovation ecosystem. Plus, we're working with NASSCOM around how to enhance digital literacy. And then certainly we've been privileged to work with large public institutions as well as commercial institutions to help bring capabilities to the Indian population. I think that some of the large digital and mobile platforms, certainly many of the largest government agencies and the large banks and financial services institutions.
So given the opportunity, where does India figure? I mean, outside of being an incubator of innovation as well as a talent hub for you, in terms of growth in the market, where does India stack up?
We see it as one of the fastest growing IT markets in the world. We are fortunate to be the #1 share player in our segment of that market, and we are bullish. We are expanding our investments there. We are working with the local ecosystem in addition to the global ecosystem. So we're excited to be in India.
You said you're expanding your investments. Is there a number that you can share with us in terms of what we can expect?
We've grown our investment in India across all of our functions, and we'll continue to grow that. Over the last several years, we have steadily grown and outpaced the overall pace of investment in the company.
One of the other factors that's weighing on decisions at this point in time is geopolitics. And I think, sovereignty and what that means as far as AI is concerned is gathering momentum. And I don't think there are easy answers. There is a complex problem. How do you look at that issue today? And what will NetApp do when it comes to issues like sovereignty? Do you see that as an opportunity for you?
Yeah, I think, first of all, we are hopeful that there is a uniform sort of commercial and regulatory framework for AI. We think that having a harmonious framework across the countries and across the globe makes it easier for everybody to build safer technologies while continue to bring innovation. And I think there's still work to be done there. With regard to, kind of the fundamentals of how we see the ability to foster sovereignty, I think there's certainly multiple elements to that. There's data residency, which is foundational. We have done that in so many organizations around the world, and part of the partnership with Google Distributed Cloud, for example, is to facilitate data residency without having some of the concerns about, kind of my data crossing national boundaries. The second is we have tools that allow organizations to be able to go beyond data residency to maintain data sovereignty, which is the ability to use the data alongside the innovations that are being available, global set of innovations, but to use the data in compliance with national mandates. And then over time, by contributing to the ecosystem in countries like India, we think that you can bring more technologies to the world. Today, if you think about the AI ecosystem, it's primarily led by 1 or 2 countries. And I think over time, for sovereignty to become possible, you need to be able to have more countries have, kind of supply chain independence for these technologies, and we're part of helping make that happen.
Supply chain independence is a great point, but speaking of countries benefiting and also creating their own competitive moat, what will India's competitive moat be in an AI era?
I think India's greatest contribution to the world in AI is actually to lead the world in the applications of AI. You have a young population, you have a large amount of data that can be harnessed because of the role the government can play in fostering that. You have innovative, entrepreneurial, digitally savvy innovators. And I think that my hope is that India leads the world in that, making it affordable, making, responsible AI be able to reach a large population. And by doing so, you can teach the world.
Will that be enough? Because the question being asked is, if you're not playing across that 5-layer cake, AI cake, will you be out of the race?
I think different countries in the world are adapting AI to their national strategies, right? So I think when you look beyond the technology itself, I think you can build a competitive moat, for example, by using AI to be the best in the world at advanced manufacturing, or using AI to build the most cost-effective pharmaceuticals. And so when you think beyond the technology industry, I think the way that you build a competitive moat is to lead the world in specific industrial applications of the technology.
So, since we're talking about the future, 10 years on, what are you most excited about now as far as NetApp is concerned? And how different do you believe NetApp is going to look in the next 5 years as you grapple with all of the stuff that AI is bringing to the table?
I think, for me, what's been encouraging is that at NetApp, we have believed in one or two long-term theses, which is that we want to help our clients harness the power of their data to unleash the competitive advantage, the innovative possibilities for their business. And that has been true over the 30-year history of the company, and especially true now.
Yeah.
I think the second is we have navigated major platform shifts and have taught the company how to lean into those shifts without fear or without the pride that comes from having succeeded in one era. And navigating the first one successfully, which is cloud, gives you the confidence that you can do more. And I think that my hope for NetApp is that, looking 10 years out, that we continue to be an organization that helps our client harness the possibilities of whatever next technology shift there is, but also be seen as a player that knows how to work with the ecosystem, is best in the world at doing something, and has the confidence, the quiet confidence, that when technology transformations or platform shifts happen, that we can lean into it and be successful.
From your origin story, or where you started coming to the US, for a young founder or a young CEO who's watching you today, what's the message that you'd like to send out?
I think that you need to be willing to learn and adapt to the environment you're in. When I came to the US, the kind of social environment in the US was far more different than India. The development gap was wide. And so I learned to adapt. I learned to respect what America was all about, but also to keep connected with my roots, and what made me the person I was. I think that you want to learn from the people around you. I was fortunate to learn from the people around me, and I think that you want to know that many people paved the path for you. And what that does is it brings respect and gratitude when you're successful, and conversely prevents you from being totally down on yourself when things don't work out, because you know that it's not just about you, that there's an ecosystem around you that made you who you are.
Well, speaking of your roots, how often at tech conferences are you asked about Google Cloud?
Quite often.
Really?
And I would point out that the Google relationship started before my brother got there and will endure after he or he leaves our current roles.
What is it like to have your twin doing exactly what you're doing in a different company? I mean, you know, it's probably, is there any other combination? I don't know of any.
I'm not sure. I think it's an honor to work in the roles that we have. And I think that, you know, there's a sort of a mirror transformation that we are dealing with. we are trying to take NetApp and make it a cloud and AI company. And Thomas is trying to take a cloud and AI company and make it an enterprise business. And so we share notes about what it's, you know, what's involved in allowing organizations and enabling them to make that cultural shift.
Yes, well, you know, it's been an absolute pleasure. Thank you so much for your time, and we look forward to seeing more of you in India, and wish you all the very best with NetApp and all that you've spoken to us about.
Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. Sensex and Nifty gain for the fourth straight session. Nifty reclaims 24,400 led by automobile and real estate stocks. Rupee weakens by over 18 paisa against the dollar to stay above the 95 mark. Crude oil prices slip after oil lobby OPEC and allies announce plans to raise its output targets from August, marks fifth straight monthly increase as shipping activity around the Hormuz Strait starts recovering gradually. Brent crude trading near $72 a barrel, well off its wartime highs. From FMCG to fashion to paints, consumption companies see an uptick in sales. Dabur expects double-digit growth. Godrej Consumer beats its own guidance. Nykaa, Senco Gold and Asian Paints are also seeing green shoots. India's automobile industry defends the 20% blending on ethanol with petrol. Executives from Maruti, Hero Motor and Toyota say even older vehicles can run safely under E20 fuel despite public concerns over fuel efficiency and engine safety. Red alert in Mumbai as heavy rain disrupts normal life. 6 people, including 5 children, killed in a 4-story shanty collapse in Mankud. A section of the 7,000 crore rupee Mumbai-Pune expressway crumbles in just 9 weeks. At least 13 people have died in Mumbai over the last 4 days. Millions thronged the streets of Tehran for the funeral procession of slain former Iranian Supreme Leader Ayatollah Khamenei. State TV shows 3 of his sons praying beside his coffin. However, Mujtaba, the son who succeeded him as Iran's new Supreme Leader, did not make an appearance. Home prices at a decadal low in China. Data shows that resale home prices fell by nearly 1%. In 88 out of 100 large Chinese cities, there has been a 22% drop in new constructions in the first 5 months of this year. South Korea's most valuable company, SK Hynix, hopes to ride the AI wave on Wall Street, launches a $28 billion Nasdaq listing. The company will go public this Friday. FIFA allows US striker Balogun to play against Belgium despite a red card. This comes after President Trump called FIFA chief Infantino to review the decision, sparking a controversy at the World Cup. Erling Haaland scores twice against Brazil to power Norway into the quarterfinals. The 5-time champions' exit from the event marks their first World Cup performance in 36 years. England beat hosts Mexico on their home turf to enter the quarterfinals. Right, let's start with the markets. Dalal Street started the week on a strong note. The Nifty and Sensex closed near the day's highs, extending their winning streak to a 4th straight session. Realty and auto stocks led the rally, while IT shares came under pressure. The Nifty IT index snapped its 2-day winning run. Prashant Nair is here with the details. Prashant.
Well, in a way, it was a repeat of last week. The Nifty and the small cap index, those are the 2 areas which did the best. The mid caps did well, but of course, subpar compared to the small cap part of the index. The Nifty Bank also participating, largely led, of course, by the private bank space. Lots of earnings, trading updates for the first quarter, and HDFC Bank, of course, having an outsized impact. We'll get to the specific stocks, etc. there. But the Nifty ending above the 24,400 mark in terms of trade today. The big gains as far as the sectors are concerned, coming from the real estate index. That index was up almost 8% last week, so it continues its winning ways, 1.6 higher. The consumer and the auto indices were at the number 2 and the number 3 position, 1.5% each. On the downside, there was capital market index, which was down about 1%, and the PSU bank index was down about 0.9 odd percent as well. The large cap Nifty stocks, and how they performed really. So the gains coming through in HDFC Bank, 3.5% higher. Stocks at about 830. Hindalco was up 3%. Bajaj Auto, ONGC and Mahindra were the other 2% moves that we had. On the downside, Kotak Bank was the largest cut, 4% here. Max Healthcare was down 1.9%, and there was a TCS and a Coal India which were down about 1.5%, 1.6% as well. Now let's come to the broader market, the broader universe of names. And here, losses coming through in, by the way, advanced decline was negative, more down than up. MCX down 3%. Supriya Life Sciences, big volumes, but big price cut as well, 11% lower. Acuitas was down 5%. Max Healthcare did well last week, down 2%. There was Tejas Networks, which was down 4%. Stocks back at about 570. Aurobindo Pharma, Premier Engines, Premier Explosives was down about 5%. RR Kabil, Arvind Limited, Skipper, Axis Cades are some of the losses that we had in the broader space. On the upside, Dixon was the big mover, 7% on Dixon, 13,000 rupees, 13,300 actually. Shakti Pumps was up 8 in the morning, ended 5% higher. Welspun Corp was a big mover, 6% here. The Hitachis, GE, Vernova, CG Power, all of those did well. And many of these smaller defense names, like Paras Defense, participating. I mean, there was a, Zentech, Data Patterns, so smaller, more niche defense companies also participating. All in all, a pretty good session after what we saw last week.
Right, thank you, Prashant. And staying with the market, exchange platform NSE is expected to begin IPO roadshows this week. We learned from sources that the National Stock Exchange is likely to launch its IPO by September this year. This after NSE filed its DRHP on 17th of June, involving an entire offer for sale of 6% of NSE's paid-up capital. Right, let's talk about the defence stocks that rallied after government-approved procurement plans worth 52,000 crore rupees. The approvals are expected to create significant order opportunities for domestic defence companies, with stocks including Bharat Electronics, Bharat Dynamics, Hindustan Aeronautics and others rallying in trade. And let's talk about the top global story this evening. Thousands of people gathered in Iran for the funeral procession of late Supreme Leader Ayatollah Ali Khamenei after the two-day public farewell. Streets of Tehran were filled with people waving flags and carrying posters with images of the late leader. According to Iranian state media, officials have described the event as the largest public gathering in the country's modern history. The funeral procession was expected to last about 10 to 12 hours. Earlier, the late leader's three sons, including Mojtaba Khamenei, was seen mourning beside the coffin. The current Supreme Leader Mojtaba succeeded his father after he was killed in the joint strikes by US and Israel in February. However, he hasn't made any public appearance so far. Amid the state funeral, the Iranian embassy thanked Indian government for the participation of the official delegation as well as political and religious leaders from India. The embassy called the gesture, and I quote, a powerful expression of mutual respect, end of quote. In the oil market, Brent crude prices have eased slightly as movement in the Strait of Hormuz is recovering. Oil prices have also retreated as the Organization of Petroleum Exporting Countries has raised its oil output for August to 1.8 lakh barrels a day. This marks a fifth straight monthly increase as the cartel continues to unwind production cuts. And here's a special report on Khamenei's funeral.
As thousands of Iranians streamed into central Tehran to pay their respects on Sunday, three sons of slain leader Ayatollah Ali Khamenei were seen mourning beside his coffin. But Mojtaba Khamenei, who succeeded his father as supreme leader, did not appear. State TV showed Mustafa, Maysam and Masoud Khamenei praying behind the coffins, laid out at Tehran's Imam Khomeini Grand Mosala. The elder Khamenei and several family members were killed in an airstrike after the United States and Israel launched their war on Iran on February 28th. The Islamic Republic has organized a week of funeral ceremonies for Khamenei, with plans to take his remains to religious sites in Iraq. After lying in state indoors for senior officials and foreign dignitaries, his coffin was moved outside on Saturday. It was displayed under glass alongside those of his daughter, son-in-law, daughter-in-law, and 14-month-old granddaughter. On Sunday, thousands of mourners, including soldiers, seminary students, and civilians, filed through the mausoleum. Some waved flags and banners with promises of revenge against America and Israel. There has still been no public sighting of Mojtaba, and no images of him have been released. People close to his inner circle told Reuters his face was disfigured, and he had suffered a significant injury to one or both legs. He is said to have been injured in the attack that killed his father and other relatives. A ceasefire has paused the 4-month war. Iranian authorities say an interim agreement with Washington could bring major economic benefits, including access to frozen assets abroad and relief from some financial sanctions.
The Indian government has withdrawn the emergency curbs on natural gas supply, signaling a return to normalcy after disruptions caused by the West Asia conflict. The decision comes after LNG shipments through the Strait of Hormuz resumed, easing supply concerns. The Petroleum Ministry has now amended the natural gas order issued in 2026, withdrawing the emergency provisions that were introduced in March to prioritize gas allocation to key sectors. Right, let's talk about the big national headline. Incessant rains have disrupted normal life in Mumbai. The weather department has issued a second red alert after the monsoon showed no signs of easing over the last 4 days. Several roads are waterlogged in the city and its suburbs. Local trains are functioning, but the frequency has been restricted. Places like Virar have been cut off after trains were cancelled due to waterlogging on the railway tracks. The Mumbai airport is functioning with some delays to flights. The local civic authorities have declared holiday for schools and college today. Residents have been warned against unnecessary travel. 6 people were killed when a 4-story shanty collapsed in Mankhurd. This includes 5 children. The mayor of Mumbai termed the building as illegal. Rescue efforts continue at the site of the building collapse. 2 people are dead and 1 other is missing near Pune after a landslide. Several houses were buried in Mewal village in Pune district due to the landslide. 37 passengers were rescued from a private bus which was stranded. Another landslide on the newly constructed missing link at the Mumbai-Pune expressway has also disrupted traffic. The 7,000 crore rupee road crumbled in just 9 weeks after its inauguration.
मुंबई पुणे एक्सप्रेस वे पर जो कनेक्टिंग लिंक था वहाँ पे लैंडस्लाइड हुआ है। ये देखिए कितने बड़े-बड़े पत्थर यहाँ पर गिरे हुए हैं और इस पत्थर को और ये जो लैंडस्लाइड की जो मलबा है उसे हटाने के लिए युद्ध स्तर पर काम चल रहा है ताकि जो मिसिंग लिंक का जो टनल है जो पुणे से मुंबई की तरफ जाता है उसे सुचारू रूप से ठीक किया जा सके। बड़ा हिस्सा जो है वो गिरा हुआ है और साफ तौर पर पूरा टनल है उसको बंद किया गया है। अगर मैं दिखाना चाहूँगा साफ तौर पर देख सकते हैं कि किस तरीके से ऊपर का हिस्सा जो बना हुआ था उसे वो बारिश की वजह से जो लैंडस्लाइड हुआ था वो टूटकर नीचे गिरा हुआ है और बड़े-बड़े पत्थर आप साफ तौर पे देख सकते हैं कि किस तरीके से यहाँ पर जो मलबा है वो यहाँ पे गिरा हुआ है और पूरी कोशिश की जा रही है कि इसे अब जल्द से जल्द यहाँ से हटाया जा सके और जो टनल है उसको यहाँ से शुरू किया जा सके। बारिश बहुत ज़्यादा है इसलिए ये सब जो टीमें हैं उनको बड़ा चैलेंजेस हैं कि इस तरीके से हटाए। देखिए किस तरीके से ऊपर का जो हिस्सा है वो चारों तरफ से टूटकर नीचे गिरा हुआ है और बारिश तेज होने की वजह से बड़ा चैलेंज हो रहा है सबके लिए कि इस जगह को यहाँ से ठीक से हटाया जाए।
Heavy rains continue to wreak havoc in Mumbai metropolitan region, Konkan and other parts of Maharashtra. Total 4 incidents of landslides have been reported since last night and 1 portion of a slum collapsed in Mumbai's Mankhurd area, causing 6 deaths. Since the beginning of this particular rain episode, total 10 deaths have been reported in Mumbai so far. 3 people died due to tree uprooting incidents. 6 people died in Mankhurd's slum collapse, chawl collapse incident, and 1 person died because he fell in an open manhole. Now, BMC every year claims that it has made all the arrangements to ensure that people are safe during monsoon season, but that's not the reality. That's not what the reality is. Right now, we are on the Western Express Highway, and this is the road that goes towards Mumbai University. And this particular patch, as you can see, this was an open manhole. So they have covered it with a sheet now. Now we don't know how permanent or temporary it is. Now this particular patch was full of rocks and stones, and as you can see, the gentleman here in the frame, the moment he saw the TV news cameras, he started, I'm assuming he's from the BMC because he's claiming that he had come to do this only. So he has started removing all these stones. This barricade that you can see right now, till 5 minutes ago, it was not there. The moment they saw the TV news camera, our camera, he came into action and he's now removing all these stones. But we can imagine that given the rainfall and given the visibility issues caused by the rainfall, what kind of danger, what kind of threat these stones were posing to pedestrians, to vehicles, especially two-wheelers, auto rickshaws. So as I said, BMC every year it claims that this time the monsoon is going to be smooth, but it's not the case once again.
All right, what we'll do is on that note, we'll take a short break. Coming up next, India's automobile industry defends the 20% blending of ethanol with petrol despite public concerns over fuel efficiency and engine safety. Stay tuned. Welcome back. You're watching Business 360. In a rare show of unity, three of India's leading automakers addressed a government-hosted press conference over the weekend to defend the centre's ethanol fuel mandate amidst rising concerns. Maruti Suzuki, Hero MotoCorp and Toyota Kirloskar claim that years of testing and service data showed no evidence of widespread vehicle damage due to rollout of petrol blended with 20% ethanol. Remember, social media has been rife with allegations that use of blended petrol led to a drop in mileage and engine damage. Shivani Bajaj, who attended the press conference, joins us now. Shivani, the government trying to quell the public backlash over the ethanol mandate?
Well, yes, what began as a scattered complaints over lower mileage has now snowballed into one of the biggest public debates around India's ethanol blending program. The trigger was clearly the viral claim linking E20 petrol to vehicle damage following the remarks made in court describing E20 as an experiment, a comment that rapidly amplified public anxiety despite subsequent clarifications by the government. Since then, social media has been flooded with posts alleging engine damage, corrosion, fuel pump failures and a sharp drop in fuel efficiency, with many motorists questioning whether pre-2023 vehicles are safe to run on E20. It is against this backdrop that the country's biggest automobile manufacturers took the unusual step of jointly addressing the media over the weekend. Maruti Suzuki, Toyota, Hero MotoCorp, Hyundai and other OEMs categorically rejected claims that E20 causes engine damage or corrosion, saying the fuel has undergone years of testing by manufacturers as well as independent agencies before rollout. Maruti cited service data from over 2.84 crore vehicles across the nation, including more than 1.5 crore pre-2023 cars, to say it has found no E20 related damage, while Toyota said it has not received a single complaint directly attributable to E20 since the program began. The industry did acknowledge that E20 can reduce mileage by around 3 to 5%, but argued that the trade-off is outweighed by gains in energy security, lower crude imports and higher income for the farmers. Whether these assurances are enough to restore consumer confidence remains to be seen. For now, while the auto industry has firmly backed the government's E20 program, the storm on social media shows little sign of subsiding.
We want to give a statement of confidence that Maruti Suzuki has been fitting E10, has been making its car compliant to E10 way back before 2010, which is more than 16 years now. And when we did that, we had sufficient factors of safety that even if we use E20 fuel on those E10 cars, they are fully, they do not have any kind of issue at all in terms of either wear and tear or corrosion or any kind of impact on the life of the components that go into the car.
The E20 program is not an overnight program. There was extensive testing and certification done at all levels, whether it is the OEMs or the independent testing agencies like ARA, etc. There will be no impact, like I said, on older vehicles using E20. All vehicles that have been produced after 23 are fully compliant materially. From a fuel perspective, as per the tests, the drop in mileage is not very significant. It is in the range of, like we said internally, 3 to 4, perhaps 5%.
India's automobile dealers have reported healthy growth in June. Car sales grew by nearly 30%, hitting 4.1 lakh units. More than 18 lakh two-wheelers were also sold, clocking a growth rate of over 21%. Three-wheelers, tractors and commercial vehicles also saw robust growth, hitting their highest ever sales figure in June. All right, moving on. South Korea's most valuable company, SK Hynix, has launched its $28 billion Nasdaq listing. Rachna Dhanrajani is here with more on SK Hynix and its rapid rise to the top. Rachna.
Well, the biggest ADR offering in history kicks off today. SK Hynix, the world's second largest memory chip maker, opens book building for its Nasdaq listing with pricing on Thursday and a trading debut on Friday under the ticker SKHY. Now, the company is selling 17.79 million new shares, just 2.5% of its stock, to raise up to $29 billion. That tops Alibaba's $21.8 billion New York debut in 2014, and it is the largest overseas fundraise ever by a Korean chip maker. Now, this is not an IPO. SK Hynix already trades in Seoul. This is a second listing, giving American investors direct access to a company at the center of the AI build-out. SK Hynix controls 57% of the market for high bandwidth chips. Those are HBM. Now, these chips stacked next to every AI accelerator with NVIDIA and Google as anchor customers. And that dominance is showing up in the numbers also. Last quarter, the revenue tripled to $35.5 billion. Operating margin came in at 72%, higher than NVIDIA's. So where does the $29 billion go now? Well, it goes straight back into capacity. A mega fab cluster in Yongin, fast-tracked by 12 years, advanced packaging in Chengdu, and a $4 billion plant in Indiana. It's first in the United States. Now, this listing also isn't just about valuation. A NASDAQ ticker would unlock US index money and could close the gap with one of its biggest rivals, that's Micron. HSBC sees a 20% boost just from access, and the dominoes are lining up already. Kioxia plans its own ADR next year. Now, investors are already asking, is Samsung next? Yes, we'll have to see what happens there, but we will keep an eye out as this AI race has now reached NASDAQ.
All right, thank you, Rachna, for that. We will be in touch because all eyes are on this listing. Moving on, India's largest airline, Indigo, is seeing one of the biggest leadership transitions in its history. After a series of high-profile exits over the past few months, the airline has brought in seasoned aviation leaders from both India and overseas as it prepares for its next phase of growth. Madhiha is here to tell us what's changing. Madhiha.
Well, clearly a new top team at Indigo now. Let's start with the exits first. Former CEO Peter Albers had stepped down in March this year. Operations Control Center head Jason Herter exited in February, while Chief Human Resources Officer Sukhjit Pasricha left the airline in July. July will be his last serving month at Indigo. Now, who is filling these key leadership positions? The big one, outgoing IATA Director General and former British Airways CEO Willie Walsh is set to join the airline as its new Chief Executive Officer in August. He brings decades of experience in running global airlines as well as navigating regulatory and policy issues. His appointment is expected to strengthen Indigo's global strategy as the airline expands its international footprint. The airline has also brought back one of its own. Indigo veteran KS Bakshi has been appointed Group Head of Human Resources. Bakshi led the airline's human resources function between 2006 and 2013 and returns with deep institutional knowledge of the company. Former Air India Express CEO Alok Singh has joined as Chief Strategy and Transformation Officer. Singh is credited with leading Air India Express through a period of integration, privatization and expansion. At Indigo, he is expected to lead strategic initiatives and transformation projects as the airline prepares for a much larger global network. So why do these changes matter? The leadership transition comes months after the operational disruptions that hit Indigo in December 2025. Following its investigation, the DGCA pointed to lapses in oversight, manpower planning and roster management as contributing factors to the crisis. The appointments now signal that promoter Rahul Bhatia is putting in place a new leadership team as Indigo moves beyond that episode and shifts its focus towards transformation and international expansion.
All right, thank you, Madhiha, for that update. With that, it's a wrap on this edition of Business 360. News and updates continue right here on CNBC TV.
and welcome to Startup Street. I'm Arundhati Ramanan, and with me as always, Shruti Mishra. These are the top headlines from the startup world. Rental platform Rent-A-Mojo receives SEBI observations for its proposed IPO, which includes a 150 crore rupee fresh issue, along with an offer for sale of 2.84 crore shares. The proceeds from the issue will be used for debt repayment, lease rentals, and general corporate purposes.
Nikhil Kamat's WTF has acquired creative agency BTG, strengthening its bet on India's independent creative ecosystem. The agency will continue to operate independently while gaining access to WTF's investment and operational support.
Sachin Bansal-backed Navi plans to file for a roughly 3,000 crore rupee IPO by the March quarter and is in talks to raise a pre-IPO equity round, likely led by Process, according to a report.
Next, Bharat Ventures has unveiled a 2,000 crore rupee impact fund anchored by Suzuki Motor Corporation. The fund will invest in startups focused on financial inclusion, agriculture, supply chains, and rural development.
Google has told the Delhi High Court it cannot be required to proactively police YouTube for unauthorized court recordings, saying intermediaries are only required to act on specific court orders or government notifications.
Well, those were the headlines we've been tracking for you this evening on What's Brewing Today. Digital health platform Care has acquired AI-powered claim startup Super Claims with the promise of bringing claim approval times down from 90 minutes to under 5. More importantly, the deal aims to connect employers, hospitals, insurers and TPAs on a single AI-powered healthcare platform. To take us through the contours of the deal, joining me now are Kiran Kalakuntla, the co-founder and CEO of Care, and Bhavish Ramaswamy, the founder and CEO of Super Claims. Gentlemen, welcome to Startup Street. Kiran, let me start with you. This is a 100% acquisition of Super Claims by Care. Can you elaborate on the transaction details? What was the deal size? And what happens to the Super Claims team and leadership? And if you could also tell us what strategic gap does Super Claims fill for Care and what it's building?
Thanks, Shruti. Thanks for having us on the show. Nothing changes for Super Claims. Care has been growing phenomenally well in the corporate wellness space, in the corporate benefit space, right? And we've been helping build the primary care from an efficiency perspective, from a cashless perspective across 500 cities. Now, one of the gaps that we see, right? I mean, we've been focusing on the OPD side in terms of improving the OPD experience from an employee, employer, and insurance perspective. One of the areas that we see while we were doing a lot of reimbursement, OPD reimbursements for insurance companies and employers was IPD was an area which is also pretty important, and a lot of these claims were coming in but not fulfilled in a timely fashion, and that's where we see AI playing a huge part through image processing, right? And for us, our larger vision or mission statement is to simplify healthcare. Now, healthcare could be for employer-employee, healthcare could be for an individual who's filing a claim, and that's where we want to focus through Super Claims to process IPD, OPD claims in less than 5 minutes.
And what about the deal size, Kiran?
So that's the deal size is not public, but this is now 100% acquired. Super Claims team continues to run independently, right?
All right.
And continue to head the company and grow the company.
All right, Bhavish, coming to you now. Like Kiran mentioned, Super Claims will continue to operate independently after the acquisition. So what changes for your customers then, from insurers and TPAs to hospitals as a result of becoming part of the Care ecosystem?
So coming to our customers, nothing changes because it's the same leadership team, same operation, same product roadmap. The one thing definitely changes for our customers is faster delivery, better integrations, and better productivity. As we are now with the Care, we have access of plenty of resources so that we can ship the product way faster than before.
Okay. And also, Bhavish, your biggest claim is reducing claim approval time from 90 minutes to under 5 using AI. Help us understand what exactly the AI is doing, which parts of the claims process are being automated, and how do you ensure accuracy when decisions impact patient care and insurance payouts?
So when it comes to Super Claims, the entire claim was adjudicated by the AI only, end to end. From the patient submitting a claim to patient getting the settlement, the judgment of the case. the entire thing. So we build this product with the combination of like a 65 odd agents, which like process a claim in terms of medical necessity checks, policy checks, billing checks, everything. With like if the case was complicated, it goes to the human review. Then the judgment takes place to the end user or the hospital.
All right. Kiran, coming back to you, India's health insurers paid out, over 94,000 crore rupees in claims last year. And at that scale, even small inefficiencies become expensive. So beyond improving patient experience, how much of this is really about reducing fraud, claim leakage, and operational costs for insurers?
So there are two parts to this, right? So one is fraud waste, what we call as fraud, wastage, and abuse. Today, we see anywhere between 3 to 5% that we are able to save through AI, both on the IPD OPD front for in customers where we have deployed this, right? That's a big. I mean, when you talk about the numbers and when you take 5% of that number, that's a large saving, right? And the second part is this is not just from a savings perspective, but it also improves the customer experience, right? So today, when a claim is submitted, it goes into, there is an anxiousness for the customer in terms of what comes out, right? Whether a document is missing or how much will be paid, when will it be paid. Now, imagine if all that can happen in less than 5 minutes.
Yes.
Right. So that's customer experience is also a critical part of this entire journey.
Okay. Also, Kiran, Econ Care today serves over 2 million employees across 1,000+ organizations. Now, with super claims, you're now sort of entering the insurance technology layer as well. So does this acquisition position Econ Care as a broader healthcare infrastructure company rather than just an employee health benefits platform? What's the long-term vision for the combined platform?
You're absolutely correct, Shruti, because we started, what we've done really well is in terms of simplifying employee-employer healthcare journey, right? And now because of our ability to structure all this data, because we've been able to consolidate the entire primary care network, we are now entering into a phase where what Econ Care parent company, which is IU Technologies, is more morphing into what we call as a digital health infrastructure layer, right? But the vision is the same, right? To simplify healthcare wherever there are inefficiencies in healthcare.
All right, Bhavish, insurance claims involve highly sensitive medical data. And as AI becomes more deeply embedded in decision-making, how do you ensure transparency, explainability and regulatory compliance? Can AI truly adjudicate claims, or will human oversight always remain essential?
So one of the core pillar of the super claims is like the explainability of a claim. Whenever we adjudicate a claim, our AI always give the explanation and the reasoning behind why exactly the particular deduction has happened, why exactly the particular medical eligibility were considered, all this stuff. So we ensure 100% transparency how exactly we process a claim and everything. If the claim was red flagged and somewhat bigger complications of a case, then it definitely goes human oversight. But a majority of the claims don't need the human oversight.
Sure. One final question before I let you both go. If we fast forward 5 years, what does an ideal health insurance claim in India look like? Will patients even know, AI is working behind the scenes, or will claims become almost instantaneous, much like a UPI payment today? Kiran?
It will become instantaneous, right? In fact, today we are saying less than 5 minutes, but it could happen in microseconds, right? Okay. And the entire process could be on the phone where you upload documents and you know immediately whether that claim will be approved, how much will be approved, right? And if there's any deficiency, just like how in UPI you pay and you immediately know whether the transaction is successful or failed.
Sure. Bhavish, what about you? You agree with Kiran there?
Definitely, we agree with Kiran. Our vision is to make sure the claim adjudication happens instantaneously.
Okay. Well, on that note, it's time for me to wrap up our conversation. Many thanks, Kiran and Bhavish, for joining us on Startup Street, and wish you the very best for all your growth plans.
Thanks for having us. Take care.
Thank you.
Moving on, carpooling is no longer just about splitting fuel costs. It's fast becoming a global mobility movement. French shared mobility platform BlaBlaCar has announced its biggest international expansion in a decade, entering 20 new countries and taking its global footprint to 41 markets. At the heart of this growth story is India, now BlaBlaCar's largest carpooling market worldwide, with over 2 million monthly users and strong traction beyond the metros. So what's driving this rapid adoption, and how is AI helping the company scale globally, and what's next for the shared mobility giant? Joining us now is Nicholas Brusson, the co-founder and CEO of BlaBlaCar. Nicholas, welcome to Startup Street. You know, this is your first major global expansion in a decade, right? You've added 20 new countries in one go. Why now, and what gives you that confidence that BlaBlaCar's model can scale across such diverse markets?
Yeah, so thanks for having me. So there are two elements to it, why and why now. So to the first one, I would say we've been pretty successful in all of the markets we launched outside of Europe, right? So if you look at the last 10 years, we launched Brazil, we launched Mexico, we launched India, obviously. And what we found is that those markets outside of Europe have performed better than what we've seen in Europe. So we seem to have like a better product market fit, essentially, in those markets than we did initially in Europe. So that was the reason of like launching new markets. Now, the reason we're doing it now, and we're doing it 20 markets at the time, it's because time has changed. And now if you look at like AI as a technology, it enables you to localize your platform, to localize your content a lot faster, a lot cheaper. And that enables us to launch 20 countries in literally like a few weeks together, which was literally impossible before. We had to generate content, we had to localize content, we needed like teams on the ground. So AI is playing a role in the acceleration or the enabler behind that expansion.
You know, India is now your largest market globally, right? Surpassing every European market. What is sort of driving this explosive growth, and has India changed the way BlaBlaCar thinks about its global product and expansion strategy?
Yeah, you know, India has been interesting because the first few years when we launched 10 years ago, so between 2015 and 2019, was actually pretty slow. So somehow we thought, geez, like we don't have a good product market fit, or we're doing something wrong in India. And we could see already in 2019 sort of like things taking off. But then COVID came along, and in 2020, 2021, it was obviously very, very slow. But since 2022, we've seen this crazy acceleration. And I think it's multifactorial. You know, it's a mix of, if you look at India, you have like a growing middle class going more and more on like short holidays and vacation and weekends. If you look at car ownership, it has increased a lot over the past few years. But also if you look at the cost of driving, especially recently, it has gone up, right? The price at the pump has gone up. So if you put all of that in the balance, you end up with like a very positive equation where more and more drivers have cars, more and more drivers want to go on weekends, and they want to save on fuel, essentially. So it pushes them to share their car. And on the demand side, you have more and more people wanting to travel, doing either long commute or wanting to go for short breaks. And I think that's like the perfect equation when you have that supply that meets that new demand, and it just accelerated. And you know, a good example of that is what happened recently. I think it was on in May of this year, in 2026, where Prime Minister Modi was actually saying that, well, you need to use less fuel and you need to carpool or work from home. And it was interesting that he mentioned like carpool as a solution. So it shows how far we've gone essentially in the last 4 or 5 years, from like I would say a small unknown startup in India to something that's being mentioned by the Prime Minister.
Sure. You know, rising fuel prices may have given carpooling a boost, but do you believe this is now a permanent behavioral shift? Has shared mobility moved from being a cost-saving option to becoming a mainstream way to travel?
Yeah, you know, I think you need a spark initially so that people can discover this new behavior or this new activity. So the spark could be anything from, you know, in France in the early days, we had a strike, the train strike, and then people discovered carpooling thanks to a strike. And, you know, maybe here it's just like that boost is the petrol price increasing, and it's creating that new awareness that cost of fuel is expensive and driving is expensive, and I should share my car to save more money. But I would say today it's accelerating something that's already there, where people change their behavior, and it has become sort of mainstream essentially to share your car, and it means people do believe in this sort of trusted community we've built, where we check the ID of the users, they rate each other. So we have this very strong sort of trust layer within the community that sort of made it very normal to book a seat in someone else's car, which probably 10 years ago was something that people would think is undoable, and now it has become normal. So yes, I think there is like a clear behavioral change that we've seen in India. We've seen that in different markets. It just gets to a different scale when you talk about India because of the scale of the country.
Absolutely. And you're adding close to 2.5 lakh new drivers this year, while nearly 20 million users are already on the platform. Where do you sort of see the next phase of growth coming from? Deeper penetration in tier 2 and 3 cities, higher frequency of travel, or new use cases?
Yeah, I think first of all, it's still growing, and we don't see growth slowing down. So, what's interesting is India has become our biggest market when it comes to carpooling. So it's ahead of Brazil, ahead of France. But it's also the fastest growing, and we don't see growth going down. So I think for us, it's about a few things, like how do we accelerate to maintain that growth in the future? First of all, I think all the factors around us will fuel that growth. Again, car ownership going up, more and more people going on vacation. I think the economic development of India, the economic development of the road system, all of that essentially are positive sort of tailwind to what we do. And it's not us doing it, it's just the market evolving in our direction to some extent. Now, from a BlaBlaCar standpoint, what we need to do and what we're doing is keep on improving the product, keep on improving what I call the trust layer. Like, how do you do more and more checks, more and more ratings between users so that they feel more and more comfortable sharing with someone else? That's the key. I often say, like, we don't develop a transport network. People do that for us. We develop a trust network. That's our job. Like, how do we create that sort of trust and convenience in the product? And the other thing is, I just alluded to it, is convenience. So how do we make the product better and better in terms of like pickup location and drop-off location, so that people feel they can be picked up and dropped off closer and closer to where they really want to go? So to some extent, like long term, you would want a passenger to feel like using BlaBlaCar is almost like having a car in terms of convenience, in terms of drop-off and pickup, except you're just sharing that car with other people. So I think if we achieve that, a mix of enhanced trust and better convenience at the right price, we'll keep on seeing some acceleration.
Absolutely. And can you give us a sense of your business today? How fast are revenues growing in India, and how do you expect India, and do you expect India to become your largest revenue market as well, not just your largest by users?
Yeah, so today, I mean, just to give you a sense of scale, I mean, the company in terms of, which is not technically a revenue, but what's being transacted on the platform, which is probably like the more relevant number here, it's over 2 billion euro being transacted on the platform globally. In terms of number of passengers, if we look at last year, 2025, it was roughly 150 million passengers sort of traveling on the platform, on which India was already 20 million. So India is already sort of like a pretty big share of that. Today, I would say revenue profitability is still very much coming from Western Europe. So Western Europe is more like the mature anchor and profitability side of the business. Outside of Europe, we're more on growth mode, essentially. So we don't generate that much revenue yet from the new markets. And that's on purpose. I mean, we're just focusing, as we talked about earlier, we're really focusing on usage growth and getting to the next level before we start thinking about any type of monetization, which, of course, will come at some point.
All right, Nicholas, thank you so much for taking time out and being here with us on Startup Street. And we wish you all the best on your journey going forward.
Well, with that, it's time for us to head into a short break. But coming up next, Parirama Capital is eyeing a $250 million climate tech fund. More details on the other side. Stay tuned. Welcome back to Startup Street. Climate investor Guneet Banga is launching a new India-focused climate tech initiative with plans to raise a $250 million fund to back early-stage startups across critical sectors. He's also advocating for a 20-year fund structure to better support long-gestation climate technologies. CNBC TV 18's Aishwarya Anand speaks to Parinama Group's co-founder and managing partner on the sidelines of the ICICI Clean Air Forum 2026. Take a look.
The fund that you're planning to launch for climate tech in India.
Yeah.
Help me understand, what is the corpus that you're looking at when you do launch the fund? In the sector, what are the kind of segments that you want to bet big on? And at what stage would you be writing these checks?
I can answer some of those questions because we are still determining which sectors we'll be looking at. I will tell you that minimum size will be $250 million. We've already got, seed funding from the family, which is in right, and been having discussions with global family offices around investments. Sector-wise, I think we will be investing in the 8 sectors that the government has deemed critical, from basically inception, pre-seed, seed, Series A, and then potential Series B.
Okay, and do you have in your mind that what is the check size that you would want to start out with when you do launch the fund?
The minimum check size for an investment? Or?
For an investment, like if you're going to make an investment, what's going to be the starting point of the check
Well, it
size?
depends on the stage.
At the stage, okay.
Right. So, I mean, for an inception, somewhere between $100,000. For pre-seed, seed, $200 to $250, and for Series A, $500 million. Around that ballpark.
Okay. Okay. Fair. Now you're waiting on RBI approval for the fund. So how hard is it to set up a domestic fund in India? Is the regulatory infrastructure actually ready for this?
Well, we'll find out, won't we? We're also looking at having a Singapore feeder and a Gift City feeder and various other alternatives, so that we don't necessarily have to have the fund in India, right? Where India is just the manager. But we're also looking to change the regulations, or actually within the regulations, we can actually have a longer dated fund, right? Which I've presented to RBI and SEBI and said, it's in your rules, we can do it, because I want to have a 20-year fund, because that matches the tenor for climate tech.
Correct.
Right? A 10-year fund doesn't last the life of a company. So what is the point of raising it? Right?
True. Fair. Now, early stage climate tech is notoriously very hard to exit.
Sure.
Right? So there's long gestation period, capital intensive, policy dependent. What return profile are you going to be promising LPs, and how are you going to be de-risking that?
I don't promise. I say we have a target, right?
Okay.
And it's market standard, 8 to 12%, maybe more IRR, but also over the course of the fund, right? So investment, which is much longer term than a VC fund. I'm not promising 10x in 3 years, but I'm saying, over the long term, as companies iterate, you will get comparable returns. So it'll just take longer, and you'll have to bear the risk.
Parinama isn't a standard VC.
Nope.
It's a venture building, it's ecosystem design and strategic advisory.
Correct.
What does the impact look like on that front? Give us a sense of that.
Well, ideally, by 2030, the ecosystem we're building with the collaborative will be launching a new technology a day. So 300 technologies coming out a year, right, across the various sectors, along with our partners. Okay? That's the scale. The biggest piece will be strategic advisory and partnership, which is where we're bringing in some of the world's most advanced climate tech companies to set up in India, where they have the fundamental advantage, whether it's cost, whether it's access to resources, whether it's the marketplace is here. So, we have 2 mandates with companies which use municipal waste as an input for fuel, biofuel.
Okay.
Right? And they get paid by the government for each ton of waste that they use as an input. And these guys are going to be looking at a billion gallons of fuel each year by 2030, right? Which is a massive project. The pilot is going to be a $170 million project for one of them. The other one is about 70 odd. So $250 million pilots this year, right? And they're multi-year commitments. So the impact from that, approximately 75 billion tons of CO2 offset.
And with that, it is a wrap on this edition of Startup Street. From Shruti and me, goodbye and many thanks for watching. Stay tuned to CNBC TV 18. More news and updates continue right here.
Because I'm not giving it back. We're going to put that in the middle of the new ballroom. I'm not going to give that bell back. It looks to me like it's going to stay.
It's staying here.
Well, we'll watch the clock.
Thank you, Mr. President. So great to see you. So great to see you.
Great show this weekend. Thank you. I was down in your box. Thank you.
Looking around the room there, you see Michael Dell shaking hands with the president. There's Brad Gerstner, fresh off a squawk a few moments ago. Senator Cruz, Secretary Besson, Chair Atkins. Also from the NASDAQ, Adina Friedman, Chair and CEO, and Nelson Griggs, NASDAQ President, along with Jeff Sprecher of ICE and Len Martin of the New York Stock
Look, I think this is something that crosses a lot of party lines. I do think that we want a little bit more information because we're now hearing that perhaps SpaceX, that they might get SpaceX shares. And do you have to sell the SpaceX? And apparently people say you don't. I always thought this was going to be,
I know. But
this was just going to be index fund.
I can remember speaking to Brad Gerstner. I mean, I really, obviously Dell, very important here, years and years ago about this idea.
Yes.
And frankly thinking, all right, good luck with that. It sounds like a great idea, but getting it done. And here we are. Could be an important way for young people, as the president said, to have access to the stock market.
Right.
And create wealth over time, right? It's when you're born, you get $1,000. It's in the S&P, and then you start to have access to it starting at 18.
No, I mean, look, it's right. Are we possibly seeing a bubble? Will there be money put in right now? Because if this is as big as people are talking about, then I think you're going to see a nice S&P move. No one's talking about that. What is that, the Liberty Bell? The lock-up of the Liberty Bell?
Well, yeah, he's not giving it back, as he said. So he's going to keep that one.
I don't know. Yeah, well, is he going to say a little more, perhaps?
That is the president, of course, at the Oval, ringing this opening bell. Quick remark from him, I think.
Finish by saying, on the eve on the heels of our 250th anniversary, that this will be one of the president's most enduring legacies, and the great bounty of this will go for generations to come. It is my privilege to invite President Trump to speak after we had two firsts today. First time we've ever had the New York Stock Exchange and NASDAQ. They do a joint opening, and first time we've ever had the opening bell run in the Oval Office. So, Mr. President.
Well, this is very exciting, an amazing achievement. People, we don't know this, Michael, but people have been trying to do this for 30 years, and they were so generous. He put up, and she put up, I think she more than him, maybe. Both very much involved, but Michael and Susan put up $6,250 million, and I'm sure if I make a phone call, they'll do it again. The job they've done is incredible in life, so we want to thank you very much. Amazing, really amazing. And our friend from Micron, by the way, called me on Friday, and he said Micron's putting in $250 million, and he's done a phenomenal job. And $250 million, and many other companies and people are putting up tremendous amounts of money. And it's something I'm very proud of. Some people think it's going to go down as one of the most important things we've done during the administration. So after a truly historic weekend celebrating the 250th anniversary of America, today we're thrilled to officially launch the Trump accounts. And we had some beautiful people and speeches and tremendous crowds. We had the biggest crowd anyone's ever seen that unfortunately lightning caused it to leave. And everybody said, well, we'll do it another time. When I heard that, I said, no, we won't. Everybody had left. I said, we're not doing it another time. We're doing it on the 4th of July. And we actually started the speech on the 4th of July. We had to wait a little while, like a couple of hours, let the lightning pass. And everyone had left. And we came back, and they had 150,000 people came back from, they took their car. They're going back home to Texas. They turned their car around. They came back. You wouldn't believe it, 150. I think the 150 was more impressive than the 425 or whatever it was. It was pretty amazing. And Mount Rushmore, likewise, was so incredible. So people love our country. Our country is doing incredibly well. Strongest military in the world has been displayed with Venezuela, who we're getting along with fantastically now. We've taken hundreds of billions of dollars of oil and given them hundreds of billions. They have more money than they've ever made. And we're doing very well. We paid for the war many times over. And then Iran, we're doing actually equally as well. We're just not getting the kind of coverage that we should.
Indicated that there'll be many, many more, and it does seem to be. It does seem to be. It's going to be corporate.
Our country is strong. There's military anywhere in the world. I was with President
Jim, some thoughts about this?
Look, I think this is interesting because I usually don't do this. It's another kind of thought, but there's this move towards social. We call it Democrat socialism.
Sure.
And I wonder how much of this is not another side of the equation, which is there are a lot of really rich people, but when you talk to them, they actually admit, boy, I'd like to be able to do something. Now, David, they don't want Lenin, they don't want Marx, but they do want to do something right. And this is the opportunity. And Sanjay Mehrotra from Micron would not disagree with that. We have a lot of really rich people. Here's something they can do.
Without a doubt, and one of the positive aspects of this, of the many aspects of it that are positive, is the opportunity for the likes of a Michael Dell and many others to contribute and make specific grants for specific populations of children and or around schools or academic achievement, so that they can add to these accounts over time, so that it's not just the one lump sum at birth, but will potentially be additional funds that are added around certain milestones and certain achievements. So yeah, without a doubt, it does open that up. And
do you think it's meaningful in terms of the amount of money coming into the market, or is that
you tell me? I don't know. I mean, it's not that large, given the S&P's market cap, not that large.
Not
right.
well,
on a yearly basis, but.
No.
But not insignificant.
No, and we really, of course, don't know the numbers. We have Vlad Tenev's going to help, because I think that the actual implementation may be a little more difficult, but I really don't want to, that's forest for the trees. This is amazing. Amazing to me, because every single, as Michael Dell would tell you, like, we tried to do this and no one's really gone for it. Now, was it rammed through? I don't know. There's a lot of Democrats up there.
Your point's well taken. I think there's a lot of wealthy people in America who would love to cut a check, but are wary about how that money would get spent. Exactly. This is a much more pure way to direct your wealth to the social good. The challenge, to David's point, will be signing people up. Times did a piece last week on how the number of kids who are eligible, we're not really getting everybody. In fact, in some age groups, only a quarter of kids who are eligible are getting signed up. So that needs to happen at birth. When you get your Social Security number, you're in the hospital, bang, you're signed up for the accounts.
Yeah, we're not
get your
there
Invest
yet.
America account at the same time.
But one of the things that's good about, say, having Glad Tenant is because younger people like his app.
Yep.
And you might have fewer people fall through the cracks.
No doubt. Everybody's eligible who's born in this country. So, yes. You would hope that. And then they're creating future Mad Money viewers.
Well, I certainly hope that. I think that matters tremendously.
Yes. But you're gonna be here in 18 years, I hope.
I sure hope so.
Yeah.
And I like
so
the
you'll
idea.
be there for this class.
Look, this would help me if they have individual stocks, because I can't come out every single night and say, you know what, I really like the S&P.
Well, they will. They will. And speaking of other stocks, let's keep an eye on the broader market this morning. We do have the S&P with a gain of 1/3%, the NASDAQ more than that. When I'm taking a look at some of our biggest market cap names, Meta shares rebounding a bit after, again, what was a huge move on Wednesday, but then a bit of a retreat, as you can see it there
David,
on Thursday. But still down some 17+% for the year, and that does put it in the, well, only behind Microsoft in terms of its lack of performance this year. Those shares continue actually down again at Microsoft. And down, still hanging in there at that 20+% loss of market value for the year. But overall, what we were discussing is sort of coming to the fore a bit. AMD shares up another 4+%, Jim, this morning. For example, a bit of a rebound from that late in the week trade that was negative.
Yeah. Now, remember, the information story was about Anthropic wanting to go into business against all these companies. With Samsung, I mean, it's you can't refute it. You can't say, hey, Samsung, is your business going to go down? And you can't call Anthropic and say your business is going to go up. You can't do that. But I will say that one company whose business is going to go up is Broadcom. Because of that deal they announced with Apple this weekend. You had Hock Tan on. This is a terrific little piece of business that they're doing. They're going to do ASIC for Apple.
Yeah. And look, that stock is getting a real bounce from that as well. Tell us a little more about that then.
Well, we can't. It was just a 1-inch 8K.
Right.
So we don't have comment from Apple, and the only thing we have from Broadcom is, look, we're going to be able to expand the relationship with Apple. I thought there would be more. I think we're going to have to listen for more. It's not as important, by the way, as we haven't mentioned, Carl, the SK Hynix.
No, and the amount of money, Jim, that they're going to spend on, for example, ASML lithography, you're talking trillions of won, Korean won.
Right. Look, people don't realize that these are companies. SK and Samsung are the main ones. We're very proud here about Micron, of course.
Yep.
But SK Hynix is really the big one.
Yeah.
And now U.S. investors have an opportunity there, given.
Yeah, but do you
think the ticker will be SKHY starting Friday? This would be the second largest share sale after SpaceX.
Well, that's what I was going to mention, which is that the reason why I was talking about the Trump accounts is, are we going to run short of capital? I mean, how much money does dedicated tech money have?
Well, so far we haven't, but it is a worthwhile question.
I think it's a very worthwhile, and I'm very concerned.
Well, we focused on power. Will we not have enough power? But there are some asking, are we going to run out of money? We haven't so far. We're finding it in all sorts of places. There's plenty in money markets still.
There
Cash on the sidelines?
Yeah, it's there.
Now it's
ready to fund the next data center.
I haven't heard you say that NVIDIA is the great source of funds. No one said that.
Grabbing the headlines, but data is powering the revolution. At the heart of that transformation is NetApp, a $30 billion intelligent data infrastructure leader, helping enterprises unlock the value of their data across cloud and AI. After a landmark year driven by record financial performance and growing enterprise AI demand, CEO George Kurian believes data, not chips, will define the winners of the AI era.
When we last spoke, which was about 3 years ago, it was all about the cloud. and now it's all about AI. What do you make of this massive transformation and shift that's taking place?
I think it's built on the foundation of large-scale digital technology being available with an important couple of other ingredients. One is sophisticated computer models, and of course, the ability to harness the power of large amounts of data, which is where we come.
Your thesis on data being at the center of everything is proving right today.
Thank you. Yes. We've long held the view that in addition to talent and understanding your business or your clients deeply, data becomes the competitive moat of an industry. You know, everybody has access to the same chips, everybody has access to the same models, and the models themselves are largely trained on the same data. And so your ability as an organization to deeply understand your business, your clients and employees using your data becomes the competitive moat.
So that is the competitive moat, as you point out. But I want to understand from you, you know, it's been what, a little over 10 years for you here at NetApp. So you've seen many cycles. What is specific to this particular wave that we are seeing, the AI wave that everybody wants to get on top of? What is different this time around?
I think it has the promise of a platform shift in a broad sense. Certain industries are already experiencing that, you know, digitally intensive industries. I think for that to become a reality, the technology has to prove out its promise. I think, you know, the organizations that use the technology need to have an understanding of how the technology works. It can't just be a black box.
Yeah.
And you need to be able to change the way people and businesses fundamentally operate. So lots of promise, but lots of work to do.
You know, I started by saying that you had a landmark year. How do you build on that? How do you top on that? Because you've had a record-breaking quarter in many ways.
I think it starts with strategic clarity, which is what can you do and be the best in the world at? And that gives you the clarity of understanding, the humility to rethink your ecosystem so that you can build complementary capabilities and serve your customers really well. I think the second is customer centricity. You know, to be able to help clients, you also have to understand how to use the technology yourself. And then the third is culture. You know, we have a belief that whenever there's a transformation, that you have to understand its relevance to your business.
Yeah.
And if it is relevant, then you want to lean into it and encourage adoption. And I think in that case, trust beats policy all day long. It's much easier to have a workforce that you can trust and that loves our company and wants to do right for the company. And it encourages use and adoption versus having a big policy manual of to-dos, what to do and what.
So there is no big policy manual of a long to-do list?
No.
No? And what has it done in terms of workforce and workflow for you inside NetApp?
I think we have two perspectives on that. The first is, you know, we're trying to build an enduring institution. And I think at the fundamental heart of every institution and professional organizations is the idea of apprenticeship. And in this case, you know, we actually really believe in bringing young talent to the company because they will be the future generations. And in some ways, what has been interesting is the mentorship in this case has been reversed. You know, the new talent is much more facile with the technology than the more senior talent. And so it's really encouraging and interesting to see the new generations teaching the older ones how to use it. And so that's one view. It's sort of a long-term view of the talent pipeline and the opportunities there. And then the second is you need to be able to get people to think about the skills needed now that they have these powerful tools. So for example, it used to be in software development, the idea was that, you know, the entry-level person would write code and then would have a more senior person teach them how to review code. Now you've got an agent writing the code for you, And as an entry-level employee, you have to be able to learn how to review the code. So you have to upskill people. And then once you do that, you can see enormous power. The third thing we have done is to really measure business outcomes rather than just usage. So, you know, in software development, for example, rather than look at naive indicators like token use, we're actually seeing, hey, are people able to deliver better, higher quality code to the system? In customer support, we're measuring, do our customers actually get the information they need better, faster, easier?
You know, it's interesting that you talk about bringing young people in and how young people are a lot more agile with this technology particularly and understanding it and using it. But what does all of this now mean as far as the workforce is concerned from a jobs point of view? And I think that is what is causing a great degree of anxiety at this point in time. I mean, if you've looked at the graduating ceremonies and what's going on with tech CEOs and the kind of backlash that we're seeing at this point in time, how do you respond to that? What do you believe the workforce of the future is going to look like if we do have this hybrid model where digital labor and human labor will coexist?
I think there are broad implications, and I think it begins with having a deep understanding of the technology itself. You know, Aristotle says the most dangerous thing is the illusion of knowledge.
Yes.
And today, I think broadly based, including the tech industry, we have an illusion of how this technology works and learns and understands itself. So we've got to be able to get a lot deeper in terms of truly understanding where it is useful and where it's not. I think the second is, you know, as a member of the technology industry, we haven't always gotten it right. I think social media, remote working have been examples where the tech industry sort of highlighted the promise of something that had downstream consequences of, you know, very negative consequences, right? You know, mental health and all of these other negative consequences of those technologies. And so we need to be more balanced in our view. And then I think thirdly, you've got to make sure that we cross the digital divide. You know, this is where, particularly in India, there is an opportunity for India to lead the world, where I really believe the application of this technology to make available affordable healthcare or better food security or mitigate catastrophic risks from happening is perhaps more important than gloating about how powerful the technology is. And I think we have a responsibility to make sure that the next generation doesn't feel as much despair as they feel right now.
One of the other things that I think is now sort of becoming part of conversations is the fact that you need partners. You need to create an ecosystem. It cannot be one individual company or a few companies that are going to drive this and lead this, or it should not be left to a few companies to drive and lead this. How do you respond to that? And do you believe that will policy or regulation force the ecosystem, or is enlightened self-interest going to force this ecosystem to collaborate much more?
We've been in the data center business for a long time, and data centers are multi-vendor, and we've believed always that it's better to harness the power of collaboration and community to build a better outcome for clients. I think that's true across the globe. And I think that, you know, it probably requires a combination of regulation to protect against some of the risks, but also enlightened self-interest. You know, platforms are better when more people contribute to the value of the platform than a single controlling individual.
So, speaking of partnerships, I mean, you've done a bunch of them through the course of this year, including with Google Cloud, Nutanix, and a whole bunch of other companies as well. What's exciting at this point in time? You've got a pretty solid pipeline of launches. You've launched many products as well. What's happening on the innovation engine that has you excited?
I think it's really to help our clients use their data and to be able to deliver amazing outcomes. You know, we've been fortunate, for example, to work with the European Space Agency to map the universe, right? And I think that that work does not happen alone with us. It certainly starts with the knowledge and insight of our clients, but also the partnerships that we strike with other organizations to be able to deliver amazing breakthroughs. And I think that for us, the importance of partnerships are because it allows us to bring the world's best capabilities that we have, but also to work with other industry leaders. And the joint work brings a much better outcome.
Been very bullish on the Indian market, but how has India changed for NetApp since we last spoke, which was about 3 years ago?
In multiple ways. You know, certainly we've always believed in the talent in India. We have our largest development center, which is now close to 4,000 employees.
And you think that will continue to be the case? Because everyone's talking about, you know, the agentification of the workforce, and that would probably lead to less hiring or maybe not so much offshore work. How do you respond to that?
We think India is a great place for talent, and we are increasing our employee population there. We have highly skilled employees, and so they will be a cornerstone of our research and development organization for many, many years to come.
Okay.
I think the second is we're working with the innovation ecosystem in India, both you know, through our accelerator program, which has been very successful. It's one of the top 10 accelerator programs in the country, and we've seen both women-owned businesses as well as, you know, other innovative startups kind of learn and benefit from our experience. And so that's a contribution to the innovation ecosystem. Plus, we're working with NASSCOM around how to enhance digital literacy. And then certainly we've been privileged to work with large public institutions as well as commercial institutions to help bring capabilities to the Indian population. I think that you know, some of the large digital and mobile platforms, certainly many of the largest government agencies and the large banks and financial services institutions.
So given the opportunity, where does India figure? I mean, outside of being an incubator of innovation as well as a talent hub for you, in terms of growth in the market, where does India stack up?
We see it as one of the fastest growing IT markets in the world. We are fortunate to be the #1 share player in our segment of that market, and we are bullish. We are expanding our investments there. We are working with the local ecosystem in addition to the global ecosystem. So we're excited to be in India.
You said you're expanding your investments. Is there a number that you can share with us in terms of what we can expect?
We've grown our investment in India across all of our functions, and we'll continue to grow that. Over the last several years, we have steadily grown and outpaced the overall pace of investment in the company.
You know, one of the other factors that's weighing on decisions at this point in time is geopolitics. And I think, you know, sovereignty and what that means as far as AI is concerned is gathering momentum. And I don't think there are easy answers. There is a complex problem. How do you look at that issue today? And what will NetApp do when it comes to issues like sovereignty? Do you see that as an opportunity for you?
Yeah, I think, you know, first of all, we are hopeful that there is a uniform sort of commercial and regulatory framework for AI. We think that having a harmonious framework across the countries and across the globe makes it easier for everybody to build safer technologies while continue to bring innovation. And I think there's still work to be done there. With regard to, you know, kind of the fundamentals of how we see the ability to foster sovereignty, I think there's certainly multiple elements to that. There's data residency, which is foundational. We have done that in so many organizations around the world, and part of the partnership with Google Distributed Cloud, for example, is to facilitate data residency without having some of the concerns about, kind of my data crossing national boundaries. The second is we have tools that allow organizations to be able to go beyond data residency to maintain data sovereignty, which is the ability to use the data alongside the innovations that are being available, global set of innovations, but to use the data in compliance with national mandates. And then over time, by contributing to the ecosystem in countries like India, we think that you can bring more technologies to the world. Today, if you think about the AI ecosystem, it's primarily led by one or two countries. And I think over time, for sovereignty to become possible, you need to be able to have more countries have, kind of supply chain independence for these technologies, and we're part of helping make that happen.
Supply chain independence is a great point, but speaking of countries benefiting and also creating their own competitive moat, what will India's competitive moat be in an AI era?
I think India's greatest contribution to the world in AI is actually to lead the world in the applications of AI. You have a young population, you have a large amount of data that can be harnessed because of the role the government can play in fostering that. You have innovative, entrepreneurial, digitally savvy innovators. And I think that my hope is that India leads the world in that, making it affordable, making responsible AI be able to reach a large population. And by doing so, you can teach the world.
Will that be enough? Because the question being asked is, if you're not playing across that 5-layer cake, AI cake, will you be out of the race?
I think different countries in the world are adapting AI to their national strategies, right? So I think when you look beyond the technology itself, I think you can build a competitive moat, for example, by using AI to be the best in the world at advanced manufacturing, or using AI to build the most cost-effective pharmaceuticals. And so when you think beyond the technology industry, I think the way that you build a competitive moat is to lead the world in specific industrial applications of the technology.
So, since we're talking about the future, 10 years on, what are you most excited about now as far as NetApp is concerned? And how different do you believe NetApp is going to look in the next 5 years as you grapple with all of the stuff that AI is bringing to the table?
I think, for me, what's been encouraging is that at NetApp, we have believed in one or two long-term theses, which is that we want to help our clients harness the power of their data to unleash the competitive advantage, the innovative possibilities for their business. And that has been true over the 30-year history of the company, and especially true now.
Yeah.
I think the second is we have navigated major platform shifts and have taught the company how to lean into those shifts without fear or without the pride that comes from having succeeded in one era, and navigate.
CNBC Original Podcast.
I'm Tiny Bra, and I've come to Fuerteventura in the Spanish Canary Islands to meet one of the all-time greats of tennis, Rafa Nadal. I've been trying to get this interview for a very long time, so I was thrilled when his team invited me here to the opening of his 4th hotel. And there's so much to talk to him about: how his career on court shaped his new chapter as an investor and entrepreneur.
I built a legacy on the court, and now is the moment to build a legacy outside of the court.
how he endured secret health issues throughout his career, yet still won titles.
You're gonna go through tough times if you want to become a successful person.
And what he thinks about the next generation of tennis stars.
With Andy, with Novak, with Roger, we help each other to keep growing. And now you have two players that are better than the rest.
That's all in this conversation with Rafa Nadal. Welcome to CNBC Meets. Rafa, it's wonderful to meet you here. Thank you so much for your time because, of course, we're here in Fuerteventura for the opening of your 4th hotel for your Zell brand. You've spent your life